There's a lot going on this morning, Anna.
Yeah, absolutely. The politics story, along with the higher oil price, having that impact on bond markets, as you say. And it's at the 5-year horizon that we're up by 6-7 basis points or so, reflecting perhaps a return of inflation concerns. What does that mean for stocks? We'll keep oil stocks in focus as a result of that. Oil stocks could be certainly something that we are watching this morning with a 3% move in Brent. Defence also in focus. We've got, of course, further attacks in the Middle East, but then President Trump talking about peace in Ukraine and getting closer to that. So how does, and we've got a NATO summit, of course, taking place. So we keep an eye on what's going on with defence stocks as well. And Lufthansa is certainly worth keeping an eye on. Guy, we've got some comments coming through from Citi on that front. They've downgraded it to sell from neutral. They say that the valuation seems less compelling following the recent stock rally that we've seen in that particular aviation business. And of course, with a higher oil price, we'll watch all of the airlines.
Absolutely. That's a key factor, key input for that sector. Tech also could be another story. There's a lot going on this morning. How does it all get priced into Europe? Let's find out. Let's show you what the market's opening trades look like. The FTSE 100 is expected to be down by circa 0.5%. What is going to be the story in oil stocks this morning, I think, is going to be fascinating. We'll see exactly whether or not the market believes that this recent rally in crude is sustainable. How much further could it go? We'll watch that one carefully. So we're down by 2/3% on the FTSE 100. Elsewhere, the CAC has obviously got to price in a bit of politics as well. We'll see how the luxury sector performs this morning. And then we're going to turn to Germany and what is going on there. Plus the AEX, interestingly enough, up by 0.1%. I'm interested to see how ASML trades this morning. Didn't have a particularly good day yesterday. Do we get a bounce back? The IBEX is down by 0.5%. We'll wait for Germany. We've got a lot to price into the German market this morning. Anna, what are you seeing in terms of the sector story and the single stock story?
What I am seeing in terms of the sector story is real outperformance from energy stocks, which will come as no surprise to anybody. So with the oil price up by 3%, it is in fact the only sector in positive territory. The sector is up by 1.9%, really stands out on the European landscape this morning. We've got Repsol, Aker BP, Saipem, Eni, BP, all of these stocks are up by more than 2.5%. So the market is looking to readjust expectations around that higher oil price. And just earlier this week, we saw what these higher prices and the volatility in these prices can do for some of these businesses, the likes of Shell, for example, telling us at the beginning of this week about the gas trading successes it's been having. To the downside, we see the banking sector, and SocGen is down by 2.3%. We think about bond markets when we see the banking sector on the move decidedly in one direction or another. Deutsche Bank also down by 2%, so we wonder if we've got any read across there. But those are the two at either end of the sector picture. I was just looking at where travel and leisure had put itself, and we've got some of the airline names, yes, a little bit weaker this morning. So IAG is down by 1.9%, for example.
We're rotating out of some of the defensives, some of the pharma. You talked about pharma earlier on the show, the fact that it did relatively well in the US yesterday. Very under-owned sector recently, started to come back a little bit as we see this rotation maybe out of tech into areas that are more defensive. So you see the grocers doing well, but certainly the pharma sector has been a big beneficiary of that. That is coming under pressure this morning. Roche is the biggest points drag on the stock 600 this morning. Not down by a lot in terms of percentages or points, but that sector is significantly under pressure. You are seeing some stabilization in ASML, which I think is interesting too. Yes. After a big drop yesterday, that stock showing signs of stabilization.
And here's an interesting move, because we do have the technology, to your point about ASML, the technology sector is actually the second best performing sector in Europe today, which on the back of a 5% move lower in the Kospi, 5.3% lower on the Kospi, a bear market on the Kospi. Maybe that's not bad. And what is interesting is it is Process that is moving higher by 3% that is helping with that. This obviously has a lot of China exposure. And we've talked about the rotation into Chinese tech.
Take a look at ASML over a 2-day basis, though. And it's still down by 7%.
Yeah.
So it got battered yesterday. So today we're not bouncing, we're just stabilising. And the fact that we're not bouncing, I think, is not a particularly positive spin to put on maybe that sector.
Let's think about these markets then broadly with Christian Muller-Glissman, Goldman Sachs Asset Allocation Research Head, who we're pleased to say is with us on set this morning. Christian, very good morning to you. Let's start with thinking about where we are on the AI theme. The Kospi now in a bear market then. We've seen lots of talk about rotation recently, whether that's, I mean, we started out rotating from hyperscalers into memory stocks. Now we're selling memory stocks. Some people going back into hyperscalers, some people casting the net a lot wider, thinking about pharma, banking stocks. How are you thinking about AI and how it relates to the rest of the market at this point?
I mean, AI, and as often tech, is the most important structural trend we have. And it's the most important driver of equities and possibly portfolios now, because tech and equities are getting bigger and bigger in portfolios. But it's going through cycles. And I think it's going through cycles within the AI ecosystem. It's going through sentiment cycles. And I think that's a bit what we're dealing with here. I think you had a very cyclical element, like memory chips, all this kind of CapEx spend, take over as a driver. And as you were saying, the Mag 7, the hyperscalers actually came under pressure. They've been really underperforming. And I think that's reversing a bit right now. It got a bit extreme, like the momentum behind the semis versus the kind of software, the momentum versus semis versus the hyperscalers was getting a bit extreme. The positioning was getting a bit extreme. We looked at this, levered positioning, levered ETFs, options, retail. And I think that's reversing right now. But I think the overall structural trend around AI, in our view, is intact. And I think the hyperscalers are quite well positioned right now because they still own a lot of the infrastructure. A lot of that ecosystem is tied to them. So the big concern people currently have is, what if they cut back the AI capex? Is it really bad for the semiconductors? Probably it's not going to be great. And we have to be honest, they had like a blistering earnings growth. But it might be quite good for the hyperscalers to start talking about efficiency and to start talking about focusing on monetizing the technology rather than just spending.
Okay, so is that where we go back to? We went from hyperscalers to memory, now we go from memory back into hyperscalers, or maybe just at the margin?
I think what will happen, as always the case, in a late cycle kind of tech revolution is dispersion. I mean, the dispersion is just shocking, what you see between some of the Mag 7 even, and obviously between the different sectors. That will continue. There will be winners, there will be losers. Some companies might decide to step back a bit, kind of outsource some of their AI research, maybe give their cloud computing, their data centers away. In terms of capacity, you heard some comments on that recently. So over the next few months, and possibly longer, there will be a lot of dispersion. And I think you're right, in the very near term, I would not be surprised if the Mag 7 or the hyperscalers will trade a bit better, and if the semiconductors continue to be quite volatile.
When do the customers of all of these guys, I'm talking about the whole AI ecosystem, start to benefit? Because I'm not seeing that yet. Torsten Schlock had a nice note on this yesterday. At some point, all of the users of this stuff need to start making money from it. You need to start seeing productivity coming through. We're not there yet. It's not showing up. How long can we wait for it to show up?
Well, the sad story is it's in every technology revolution like this. When you go back in history, it usually starts with the technology coming out, a huge investment phase, which often permeates the whole economy. And then there come the doubts. And the benefits are not fast enough. The same was true with the internet, obviously. It got very extreme, though, with the internet, because a lot of the stocks that were driving the market higher were call options on the technology that didn't actually have any earnings, were unprofitable, which meant that you had a much more bubbly type market. This time around, the spending is already driving earnings, and you have less of the market cap in these call options. But eventually, what then is the risk is exactly what you said, that the benefits are not coming fast enough. I would say right now the benefits are still exploratory. I think what we see being done at our firm or at all the corporates we look at commentary at is somewhat exploratory. But the technology we all know is useful. and has multiple kind of like potential iterations that can happen. So from that perspective, we are still in that phase where it will be difficult to convince investors that the benefits are there. You see this how the companies that should adopt and benefit the most from AI are trading. We have a basket for that. These companies are not outperforming. They're not really benefiting at all from the idea that they should benefit from AI.
Are earnings expectations too high?
Listen, I think, to me, the bar is obviously high for this earnings season. I think we expect, like consensus expects for the US, 22% year-over-year earnings growth. Last quarter, we had 17. That was a big upset surprise. Our team, however, do think that the expectation is 24%. They can clear the bar, but it obviously means the surprise will be smaller. Expectations are higher. It's more difficult to actually, purely based on earnings, see an enormous amount of rally now. It's about forward guidance. It's about like, what are the companies actually saying? Are there kind of like trends? Are there certain decisions that are being made? Because often when you're late cycle, earnings revisions keep going for quite a long time, and they surprise, and there's restructuring, there's releveraging, and all of those things to some extent can keep the corporate sector going. So that's a bit the expectation, but this big kind of major earnings surprise wave linked to AI CapEx is probably closer to the end.
And Christian, what assumptions do you make about inflation, energy markets? We're seeing the latest attacks in the Middle East ripple through all of these markets with an oil price up by 3%, bond yields up. We're up by 5 basis points in Germany. We're up by 7.7 in France. Gilt markets opening, same dynamic, up by 5 basis points here. How are you thinking about the European bond market challenges as a result of this higher oil price?
Yeah, no, I mean, what we've always said to investors, not just now, but probably for the coming years, it's all about balancing innovation with risk from inflation in portfolios. Because you're not anymore in this friendly Goldilocks backdrop of anchored inflation and good earnings growth. And I think now, inflation will come back regularly. It can be linked to geopolitiks, it can be linked to bottlenecks, inefficiencies, decarbonization, demographics. But in summary, the Middle East conflict, while we're all hoping that we're at the end of it, we'll probably have the occasional flare-ups. The baseline has to be that we're through the worst and oil prices are going to be more range-bound from here. And I think what we need to watch very carefully is the long-run inflation expectations. I'm sure you've seen the 2-year break-even inflation in the US has actually gone below 2%. Just a few weeks ago. So it's actually indicating that inflation is not only not a problem, it might actually undershoot the Fed.
Do you believe that?
Listen.
Does it feel like that? Like, does the world feel like it's disinflationary at the moment?
It's a good question. I always say there's obviously measured inflation, and then there's the felt inflation. It never really feels like we live in a low inflation world, even if inflation is at 2%. But I would say that the inflation that matters for the Fed, which is influenced by shelter, which is influenced by all kinds of wage inflation metrics, there's a good chance that in the next 1 to 2 years, that will not be a problem, taking the oil price problem out. But the problem is the oil price problem will probably occasionally flare up.
Okay, nice to see you. Always great to see you stopping by here. Thank you very much. Christian Müller-Glissman, Goldman Sachs Asset Allocation Research Head. Thank you. Quick look at the core six. What are we looking at this morning? It is a really choppy market out there. Some really interesting themes developing. SML is stabilizing. We're up by 0.8%, but it got smashed yesterday. Elsewhere, there is significant weakness across the piece when it comes to most of the European space this morning, except in oil. Chloe, over to you.
Good morning, Guy. Indeed, oil is doing very well, and that's because this US-Iran deal is looking quite fragile at the moment. The US has been striking targets in Iran following attacks on ships in the Strait of Hormuz, and so this indicates that perhaps this peace agreement is not going to hold that for that long. And then we also had Shell earlier in the week signaling that it had a very profitable second quarter. So there's a lot of kind of positive sentiment around this oil industry, this oil sector, and we can see that reflected on that board here today, with Repsol in particular over in Spain up about 3% this morning. Moving on to Lufthansa, which is down this morning. The airline is down about 3% after being cut to a sell rating at Citi, with the analysts saying that the recent rally has made this valuation less compelling, and therefore they're saying to sell the stock. So we're down a little bit there. On the other hand, though, staying within that airline sector, Jet2 is doing very well this morning after earnings. We're up 9% after strong results results that came in line with expectations. It said that the summer season is looking very good, and also announced a £250 million buyback. And so we are seeing that reflected in those shares this morning very strongly. Staying in the UK, but going to a different sector with the home builders, and Vistry is down quite significantly this morning. We're down 8%. The CFO is leaving. The CEO has started this business review with the results that are set to be laid out in September, and it is really struggling under the weight of those rising costs for raw materials, and also just this lack of demand because of mortgage affordability problems. And so we are seeing this company take quite the hit this morning. It expects a pre-tax loss of £30 million, so that's not insignificant. And finally, Pirelli, the tire maker, is also down this morning, about 3%, after being cut to sell rating by Citi analysts, with the analysts saying that the year-to-date performance was very, very strong. And so this is a very similar story that they have for Lufthansa. So this valuation may be being a little bit less compelling at the moment, even though the defensive characteristics of this company are still very strong.
Chloe, thank you. Chloe Melly with those stocks that are moving this morning. Coming up, we'll be back to the defence theme. NATO agrees to billions of new defence deals to appease President Trump. We will have more details next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. 17 minutes into a session here in Europe that shows some marked weakness in some parts of the European space, on the DAX in particular. So we are weaker there. And in fact, most sectors are in negative territory. The energy space stands out as one of the areas where we're gaining because the oil price has a 76 handle, up by 2.9% on Brent. So that's one of the areas we're focused on, Guy. But of course, we have also been very focused on what's been going on in Asia and bear market on the Kospi now.
So you've got a bear market on the Kospi, but you also got this interesting rotation into Chinese tech. So Baba, which is going to be interesting to see how it trades in the States a little bit later on as well, having a really solid session. Anthony Stevens joins us now to give us his take. So here we are. We're in a Kospi bear market. I'm looking at the two-time levered SK Hynix down by circa 50%. I've got a rotation into China. What's going on?
It's quite a decent mirror of the US price action, where you saw the hyperscalers doing well and the semiconductors selling off. And that's been a trend that's kind of widened as we went into the second half. And that plays to this rotation from one half to the other. The really big winners from the first half are getting sold off to fund some of the purchases of the laggards of the first half. And in Asia, that is obviously Korea versus Hong Kong. Korea specifically, foreigners have been dumping shares for quite a while as they take profit, but now there's increasingly less profit on the table. They've been selling for 12 days straight, and now we're at $102 billion year to date. Today, we see bigger swings than ever before. Hynix was trading in an 11% range. There is a fair bit of drama intraday in the Kospi now. Yesterday, we had a limit down halt. Today, we had a sidecar to halt program trading. So the intraday volatility is also very high. If you had got me on the show at like 9 o'clock, the Kospi would have been up on the day. So it is really a rather extraordinary period of volatility in Korea, which in itself is going to constrain position size. You have Kospi vol trading above 80. For an extended period of time. That's 3 times more than, say, Hong Kong, for example, and 5 times more than the VIX, right? So if you're going to have your biggest, most high conviction positions in an 87 vol index, you will have to reduce the size of the index, size of your position. And that's what you're seeing traders in Korea do.
Yeah, quite a bit of drama in the session. Whippy is the word you often use to describe these things, Anthony, which maybe applies today as well. What about the SK Hynix ADR? Is this helping or hindering what we are seeing on the Kospi right now?
Well, it was quite a high-quality book as far as these things go, right? So there were deep tech investment thesis players in there, like situational awareness. There were properly long-only players like Bailey Gifford, and they've locked down $7 billion of the $28 to $29 billion. So from a book perspective, the book is being placed. It looks like it's multiple time oversubscribed through multiple reporting. So in terms of the ADR itself, it's quite a solid job done by the ECM desk across the street. But as a catalyst now, that's passed. So what the question the street is asking is, what else can you show me for a semi-cycle that is being debated, whether it is cyclical or structural? And that debate can only be answered on the technology front. And while that question is really up for grabs, you're going to see this extended volatility, and we're going to see every single kind of technology headline drive price action. For example, today we saw in China a rash of announcements around custom chips.
Okay, how does retail handle this in Korea? It's been a big part of the market. We're below the 50 DMA. Technicals don't look that good, but we've seen buying in this kind of pocket before. Anthony, what is the retail trade here?
Well, the retail trade is to buy at the 50-day moving average and hope that things kind of reassert themselves. They managed to do that quite successfully all the way up. The trip below the 50 DMA has been relatively short, and the last time it happened, we rallied 40% from there. So there is some decent precedent. We are very close to retracing kind of technical support on the medium term in both the Kospi and the leveraged ETF, but they need foreign support at some point to turn, and that has not occurred. We continue to see foreign selling on the downside, and as I mentioned, I think it will take fundamental or technological changes to turn foreigners around. Now, the threat of rotation hinders that. If Alibaba starts rallying 12%, Tencent starts rallying 5%, or the hyperscalers start rallying 3 to 5%, that puts a lot of burden on incremental money going into the memory trade.
Anthony, thank you very much. Bloomberg's Anthony Stevens with the latest on everything we've seen in the tech stocks and the rotations within and out of. Let us talk about the defence sector, another very newsworthy sector this week, because, of course, we're watching NATO. We are ready for any kind of news flow surrounding NATO, so we'll keep you across all of that. Now, European defence names remain on investors' radars as Trump and Zelensky plan to hold talks at the NATO summit later today. Meanwhile, the UK, France and Germany have launched a $50 billion NATO initiative to spur the development of long-range weapons without US involvement, aiming to close the gap in an area where Russia is well ahead. Jerry Doyle, Bloomberg's global defence editor, joins us now for some analysis here. And Jerry, when you look at these headlines around what's being done here around long-range weapons, Russia ahead, so there's the need to cooperate and do this. It's without the United States, and that's perhaps, to try and impress President Trump that the NATO European allies are doing something. Does it look very different to previous programs, though, that we've had on this front, or is it quite similar?
Well, a couple of years ago, a conglomerate of European countries launched an effort called ELSA to develop long-range strike weapons as well. It's not clear how that coordinates with the $50 billion program that was announced yesterday, but they both aim to do the same thing, which is close a major gap. Right now, European countries collectively operate, their long-range strike is mostly this cruise missile called Scalp and Storm Shadow in the UK. Those stocks have been heavily depleted by the Ukraine war, where many of these missiles have been donated to Ukraine for use. Meanwhile, they only have a range of a few hundred miles, whereas something like the Tomahawk or the cruise missiles that Russia routinely fires have ranges of well over 1,000 miles. So that's a gap Europe needs to fix and needs to address, and these two programs ideally would dovetail into a weapon that can close that gap.
Let's talk about the $54 billion that the Europeans are talking about spending. I bring up dollars because that feels like it's a significant currency. They're trying to spend this in Europe. How coordinated is that spending going to be? And where can we do it here in Europe? Can we satisfy all our requirements with European programs?
Well, the long-range strike aside, which I think is not clear how those programs are going to interact with each other, a lot of this other spending does feel fairly coordinated. It's looking to address what we call sort of strategic enablers, things that help militaries coordinate and magnify their combat power, things like integrated air and missile defenses, strategic airlift, in other words, planes that carry troops and hardware around, tankers to supply planes and keep them going farther, AWACS, which is airborne radar systems, ISR, which is intelligence, surveillance, reconnaissance aircraft to keep tabs on things. All of these deals address that. You have Saab making AWACS planes. You have another massive deal. TKMS is going to make 12 submarines for a NATO member, Canada. And then you also, of course, have some spending that can't be addressed by European primes, which is buying these Triton long-range maritime surveillance aircraft from Northrop Grumman. So although most of the spending is focused in Europe, there's still some areas that European companies...
But if you're a US prime right now, if you're Boeing, Lockheed, Grumman, kind of these kinds of companies, it looks like Europe is becoming a much more difficult sort of market to access.
To some extent. I think the primes in the U.S. are still going to try to, at the very least, find JVs that they can operate within Europe to make things like munitions, to make aircraft components, and things that they're already doing. So I don't think they're in danger of being completely frozen out. But from the Europeans' perspective, it makes a lot more sense to be able to generate these strategic capabilities domestically.
Jerry, great to catch up. Thank you very much indeed for your insight. Jerry Doyle joining us on the defence story. Coming up, a cooler reception from Amazon's latest bonds. It's the pushback raising questions about the limits of investor appetite for that debt. We're going to discuss that next with Paul Hovath. He is the CEO and co-founder of Orchard Global Asset Management.
Yeah, indeed. And we can think about where are we worried about this AI debt pile? Do we think it's a bubble? And if we are worried, which of the issuers are we worried about? Is it neo-clouds? Is it the more hyperscaler end of things? So we can get into that conversation.
Yeah, there's an awful lot of it. Data center debt is a big theme, and we'll talk about it next. What else do we need to worry about? That's another question we should maybe address too. That is the conversation we've got coming up. What are we, 26 minutes into the session? This is Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back. This is the opening trade, 30 minutes into today's session. Let's have a look then, Guy, at where we are on these European equity markets right now. Stocks Europe 600 down by 0.7%. If you have oil markets and you have oil stocks, then they might be doing okay today because energy names are doing well today on the back of a 3% move higher in the Brent price. So perhaps that cushions you a little bit on the FTSE 100, but as you can see, not by much, because we're still down by 0.7%. The CAC 40 down by 0.8%. The DAX down by over 1%. So we're selling most sectors today, Guy, and it's not necessarily the technology theme that we've seen weakening over in the Asia session that is leaking into the European space, but we are considerably weaker, down by 0.7% across these markets.
Let me continue with the bleakness. You've got 504 stocks down, you've got 85 stocks higher. That tells you in terms of the split what is going on. Volume's actually reasonably high this morning, which is also quite interesting. So we are selling and we're doing it on relatively high volume, certainly compared with the recent days. So this is a market that is definitely under pressure this morning. Anna said it. If you are if you're an oil producer this morning, you're having a better day. Repsol is but one example of that. You're seeing Repsol up. You've got BP, Shell. These kinds of names are also having a better day. Interestingly enough, Jet2's up as well on an update, which seems to be a little bit better than anticipated. And I show you ASML, the giant lithography company, up by 1%. That makes you feel like tech's doing well today here in Europe. I would urge you to do GIP2 if you take a look at that stock this morning, because actually on a 2-day basis, it is heavily, heavily down. It got battered yesterday. Today was stabilizing. I think 1% equals stabilization at best. Lufthansa's got a downgrade and it's got a higher fuel price this morning. Two things that you don't necessarily want to see if you're an airline. Vistry's down. We've got senior management changes at that business. And you've also got a tough outlook for the UK economy. Take a look at what is happening with the bond market this morning. You are certainly seeing European government bonds under significant pressure, and Kering down by 0.8%. This is a market that is definitely skewed to one side of the boat, Anna, and that side of the boat is the one that's maybe leaning into the water, underwater, should I say. What do you got?
Let's talk about the source of that higher oil price then, Guy. Some of the other stories we're covering this morning. The fragile ceasefire between the US and Iran is facing its biggest test yet. Washington says it has completed a round of offensive strikes against Iran. The US military said the operation was in response to attacks on 3 commercial vessels that were transiting the Strait of Hormuz. Iran's foreign ministry has responded, saying that the US actions render key parts of the ceasefire deal ineffective. It's the second day of the NATO summit in Ankara in Turkey. US President Donald Trump and other leaders are set to discuss topics ranging from Iran to support for Ukraine and the ramp up in European defense spending. And the AI rotation trade is gathering pace in Asia as investors pull money from chip makers that powered this year's rally and hunt for cheaper ways to play the tech boom. This shift pushed the Kospi index into a technical bear market after gains that made it the world's best performing major benchmark this year. Guy.
Anna, thank you very much indeed. Okay, let's give you some breaking news regarding the banking sector here in Europe. This relates to the Unicredit Commerzbank bid. Unicredit saying it has reached 47.59 in terms of the percentage stake that it now has in Commerzbank. Now, that includes some derivatives. This is as the bid process comes to a conclusion. Unicredit saying that Commerzbank shareholders tendered at approximately 17.6%. So we will watch carefully as to where we go from here. Is this over? Is this nearing a point at which we're getting to some consolidation, cross-border consolidation in Europe? Not quite there yet.
Yeah, how far can this go without the support of the German government also seems to be an important question to think about here. We are 8:33 here in London. Let's think about the AI trade from a different angle. Amazon's $25 billion bond offering drew demand of just 1.6 times the deal size. That's below US high-grade corporate average of around 4 times this year. That's according to Bloomberg compiled data. The deal lifts this year's global AI-linked debt sales to around $335 billion, yet the muted reception raises doubts about investor appetite for debt, even from the highest-rated hyperscalers. Let's think about what this tells us about appetite for debt and the AI sector. Paul Horvath is with us, CEO and co-founder of Orchard Global Asset Management. Paul, really nice to have you on set with us. Thanks for coming to see us here in London. So, I mean, when we hear these headlines around the scale of the raise that we've seen in bond markets for the AI build-out, for the data center build-out, is this a growth opportunity that you see it's advantageous to be involved in, or do you just say, no, that's not for us, we're not playing in that side of the credit markets?
Well, first of all, thank you for having me here. It's great to be here on this steamy London morning. Yeah, look, I think on the debt side, we are late stage in that trade. At Orchard Global, we were very focused on funding the early stages of what you want to call the tech boom or the AI boom. You could get very compelling data center investments. We like to do hard asset lending at Orchard. You know, 10, 12 years ago, lending to data centers, and indeed even lending to chips and chips manufacturers, that was an interesting risk reward. It doesn't surprise me that there was only 1.6 times on the Amazon, because in the U.S. and in AI debt, it's getting late stage in that trade. And really, we think, you know, if you think more broadly, more globally, if you're going to invest in tech or you're going to invest in growth like you've been seeing in the U.S., that's more of an equity play or a private equity play or indeed a venture play. Certainly the early investors, venture investors in SpaceX, are feeling pretty happy right now. So we actually are we're reducing that type of lending, getting more to more traditional, boring, you know, industries, manufacturing. And quite frankly, we're seeing a lot of opportunities more here in Europe.
Okay, and we will certainly talk about those, but just to linger for a moment on the AI build-out story. Yeah. So I know that you've stayed away from a lot of the software names because you like to lend into more asset-heavy businesses, and they're too asset-light. So in the sense, data centers, they're pretty asset-heavy. This is a different kind of tech theme, but it depends how much those assets are worth, I guess. And are you concerned about the values attached to those data centers?
Well, yeah, and the difference, it's a very good question. The difference is this: 10 years ago, when we were lending to a data center, we really weren't lending to the data center. Yes, there's assets and there's chips and so on. We were lending to, you name it, Microsoft, Google, whoever, which was taking that lease, and we could make a loan. It was secured by that 20-year commitment, by that, well, then AAA, now AA rated. Now they're saying, well, there's lots of competition. We don't, the devil is in the details in lending. So we still do that, but we are much more cautious now than we would have been 5 or 10 years ago. What do you mean by late cycle? Late cycle, here's the question, and it is we used to say the $64,000 question. Now it has to be the $64 trillion question. It is amazing. The word centibillionaire didn't even exist 10 years ago, and now we have trillionaires. I think there's something like $650 billion that has gone into the AI build-out. And there's a debate whether that's too much or too little. But we're certainly not early cycle. And, you're beginning to see structural limitations. Not only how much of this do we need, but, how much we can produce. In my home state of New Mexico, many traditional builders have just gone tools down because literally all of the electricians, all of the plumbers, all of the carpenters, they're down at the you name it data center in southern New Mexico getting paid. And it's great for them, $180 an hour, but it's kind of crowding things out. So it just feels like we've invested $650 billion. I don't think there's about to be another $650 billion invested. Okay, let's talk about civilization decline. Well, and here's what I want your viewers to understand. Europe is in and this is blinking red light type of stuff. Europe is in a structural, not cyclical, structural decline. Yeah. The rate of which and the decline of which we haven't seen for, I'm going to say decades to sound credible. Yeah. I'm going to say centuries. Right. This is, and look, as unhappy as that makes me for my European friends and family, it creates some really unique and interesting investing opportunities. If you know where and how in those companies and industries to help them manage this decline.
Right, and there's no choice in that then. So this is just about managing a decline.
Well, yeah.
I'm torn between whether I want to ask you more about those opportunities, but just to linger on what makes you so convinced about that. What are the red flashing lights?
There's two stats that I think that are, and it really relates to your breaking news. If you're a policymaker, I'm not going to take sides on who's going to win this merger. Mergers need to happen here. Consolidation needs to happen. There's not enough capital funding this, multi-$100 million, civilization. But I want to just, sometimes it's good to just take our heads off the screen, look up, and let's just look at some big picture numbers. GDP per capita. In 2000, U.S., Germany, UK, about the same. U.S. a little bit higher nominal, maybe less than now. U.S. GDP per capita is 80,000. Europe is half. It's 40,000. If Germany, one of the wealthiest countries, were a U.S. state, it'd be ranked number 48 on GDP per capita.
And this is an experience that any European visitor to America is very quickly aware of when you try and vacation there. But from your perspective then, Paul, what are the opportunities that this throws up for you?
And it really relates back to the conversation we're having before. In the U.S., there's growth. There's problems. The U.S. isn't perfect by any stretch of the imagination. But when there's growth, you want to invest, as I said before, equity, private equity, venture. Europe doesn't have growth, but it has wealth. So if you have wealth without growth, then making senior secured loans to these companies that, that have lots of downside protection if something should go wrong, because in debt, things always go wrong. They have to pay up. For an example, we made a loan, defensive sector, food processing, No matter what Iran does or where oil prices, people still need to, buy mozzarella sticks. We did that. Lots of downside protection, 60% subordination, leverage about half that you'd see in the U.S. Covenants, you have them. It's hard to get covenants in the U.S.
Yep.
So that's about half as risky as a U.S. loan. In the U.S., I'd get 2 or 3% over cost of funds.
Yep.
In Europe, I'm getting 6.
Doesn't it feel like the 1920s to you in the States, though? Doesn't it feel like that kind of exuberance that we've seen historically, that it goes too far? Europe is doing this. The US kind of does this, but then does this. Isn't there the risk that happens? Isn't that the greater threat right now?
Oh, I think that's very much the case. And I don't know, I'm a debt person. Is there more risk in the U.S. equity markets or bond markets? I'll leave that for somebody else to decide. But very much to your point, at Orchard Global, it's in the name, we are global. We can and have moved our capital around globally. So to be defensive, we're putting a lot of chips in Europe. Let me share with you.
So the reason I'm asking that question is, the conversation I'm hearing a lot of people is, how do I defend myself against the US tech bubble? Where do I put money to provide some sort of diversification? And is Europe a more stable place to put that money to work?
Europe, Northwest Europe, and asset-heavy lending is the defensive play right now.
Yeah.
Let me share a conversation I had, with the German finance minister. As you may know, I'm involved with the Munich Security Conference, and we had a roundtable with the German finance minister, and we may or may not had some of the CEOs of these banks you were talking about. And I said, look, do you want the good news or the bad news? He said, give me the good news. I said, the good news is, a disproportionately large share of any extra capital we have, we're investing in Europe, and a lot in his country, in Germany. He's like, that's great. I'm like, well, yeah, it's great for our investors, but it's not great for you because you guys are having to pay up 2 and 3 times. But getting back to the investors, yes, I unambiguously am willing to make the statement that the U.S. is looking toppy, both debt and equity markets. Europe, look, I have all 3 of my children were born right here in London. My wife is European. I love the place. And it makes me sad for future generations of Europeans. But as an investor, and that's our job, to steward people's capital, you can get great collateral packages in important industries that need capital, that have to pay up. And that's just a lot easier decision than to decide how late I go in the U.S. AI boom and bust trade.
Okay, Paul, thank you very much. Thought-provoking conversation. Paul Horvath, CEO and co-founder of Orchard Global Asset Management. Coming up on the programme, we'll think about where European politics is going, decline or not. Marine Le Pen, France's far-right leader, says she will run in France's 2027 presidential race. We will have more, and this is certainly having an impact on European government bond markets. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up
and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Let's talk politics. The French far-right leader, Marine Le Pen, heads outside the capital to La Sarthe today, alongside her protege, Jordan Bardella. It comes after the National Rally leader's embezzlement conviction was upheld, but judges handed her a reprieve on an election ban. The ruling now clears the way for Le Pen to lead her party into the next presidential election in 2027. Let's bring in Bloomberg's Caroline Conin for more. And Caroline, it seems the bond market's just waking up to this as a possibility. It's like she sounded the starting gun, I suppose, on this race for 2027.
Yes, the race has definitely kicked off last night with Marine Le Pen declaring her candidacy. And of course, the bond market is reacting at this possibility. And perhaps also the fear that we had back in 2017 when Macron was first elected of the possibility of having a runoff between the far left and the far right, Marine Le Pen versus Jean-Luc Mélenchon. That's obviously one of the scenarios. But I want to show you these papers, Les Echos front page this morning, convicted and candidate, because I want to go back to this case. Yesterday at the Court of Appeal was a very interesting development in this Le Pen saga. Remember last year she was banned for 5 years. This ban was brought down to 15 months by the Court of Appeals, 15 months that the court said she has already served. But there was one thing that could have prevented her from being a candidate, is that she has to wear an electronic bracelet for 1 year. And she had said before the verdict that she would withdraw her candidacy if she was forced to wear this electronic bracelet. But after this crisis meeting at the National Rally yesterday afternoon, she decided otherwise. She decided it was her turn to go for these presidential elections, not Jordan Bardella, not her 30-year-old heir, because she has actually one more card. She can still appeal one more time this decision to the highest court in France, Cour de Cassation, and that court is probably not going to give her its decision until the presidential election. So that means she can still campaign without wearing this electronic bracelet.
Caroline, what is the polling telling us? Because we've been waiting for this moment. Is it Bardella? Is it Le Pen?
Yeah, of course, both have been tested over the past few weeks. We'll have new polls probably over the next few days. At the moment, Le Pen is polling at more than 30% in the first round of the presidential elections in April. As you know, the elections are in 2 rounds. So versus Edouard Philippe or Gabriel Attal, the 2 former prime ministers who have officially declared their candidacy, at the moment, she would do better in the first round. It is unclear, however, if she would win against Edouard Philippe, who seems to be the best place to beat her in a possible run-up. Philippe was on TV also last night saying that he wants to avoid the wars for the French, which would be Le Pen versus Mélenchon, far right versus far left in the runoff, which he said would make be an impossible choice really for the French. But for many strategists, campaign strategists, the fact that Le Pen is a candidate rather than Bardella could actually be good news for Edouard Philippe, perhaps not such good news for Gabriel Attal, because Gabriel Attal, 37-year-old, was hoping for this kind of Gen Z battle between him and Bardella, very present on social media, very attractive to this younger part of the electorate. And in fact, we may have this battle between those two 50-year-old something. You know, Edouard Philippe is 55, Le Pen is 57, kind of going back to old politics. And that could actually be good news for Edouard Philippe to boost as well his candidacy.
Caroline, thank you very much. Caroline Conan, and appropriately, we're just seeing the French President Emmanuel Macron arriving at the NATO summit over in Ankara, in Turkey, after his very eventful visit to Syria, of course, possibly trying to put that behind him, but arriving for these talks, as we've seen other European leaders do. And the sunglasses are back. The aviators are back. We are waiting, obviously, for the big event, which is going to happen in the next few minutes, we understand, which is the comments that we're going to get from President Trump, and we will bring those to you when they happen. In the meantime, let's talk about what we are seeing in markets this morning, and one of the factors that we are certainly focusing on is what is going on with the oil price. Skylar's here. Inflation, is it back? Is this a threat? Actually, I'm surprised we're only at 76 on Brent. There's an argument that say it could be way higher than that.
I mean, absolutely. I think the main point that we're taking away from this is that the U.S. and Iran still haven't agreed on quite a lot, right? So this has come up because the U.S. wants ships to transit one way along the coast of Oman, and Iran wants ships to transit another way along the coast of Iran, so they can see who's going through and approve ships accordingly. And so that's how this has come up. But I think the market is looking through it largely because there's this expectation, probably rightly, that Trump doesn't want to escalate tensions before the midterm elections. He doesn't want oil prices significantly higher. And so, you know, it's not that big a move in the oil price. It's 6% on the week, which relative to what we had previously isn't a lot. You have a feed through to bonds because there is an implication from a central bank perspective. We know they are reacting to that, but risk assets are relatively muted reacted. Okay, so 2.4% higher on Brent. 75 is the handle now. So we're actually pulling back a little bit from that earlier response. So we see bond markets responding. Looking ahead then, Skylar, the big event, I suppose, from a pure macro perspective is the Fed minutes. I saw a piece, I think it was from Standard Chartered, talking about this being perhaps a very slimmed down version of the minutes, just as we'd seen a slimmed down statement. You know, we talked for many years about the few and the many and all of those other voices that come through in the Fed minutes. Maybe we don't get that. We're not sure, I suppose. Yeah, I mean, I think we're unsure of what we'll get. It's probably going to be slimmed down. There's going to be lots of parsing of what different Fed members are saying. I do, though, take a lot of guidance from what we got on non-farm payrolls last week in terms of the market's reaction. So it was a weaker than expected number, and you did have a bit of a dovish reshuffle. You had the dollar sell-off, but not a lot considering that CFTC positioning showed that the dollar long that we had before that print was the biggest one in 10 years, essentially. And so I think there's this bias to have higher for longer in the market, and that shift really happened at the June meeting. And yes, part of it was Warsh, but a lot of it was the SEP and the fact that you had 9 out of 18 members expecting a hike this year. And so the bias today, I think, is just, you know, you get more color on that, but it's a reminder of why we had that hawkish shift in the first place.
Korea?
Just Korea?
What are you? We're in a bear market. How did that happen?
I mean, I think you need to scale bear markets differently.
Yes.
Like when we talk about bear markets, I think you always need to add the more technical before, right? Because technically Canada was in a recession for 2 quarters of, recently, and it's not really in a recession if unemployment is still low. In the same way that you're not really in a bear market when your standard deviation moves.
So what is a bear market? What is a bear market for the Korean market?
Defining it right here on our set.
Precisely.
You have that power, Skylar.
I think it's persistent negativity. And I think what you're seeing in Korea in particular is that there's still still that kind of dip buying within retail. Yes, you may have had some profit taking post Samsung results, et cetera. That means that you have downside. But until I think you see persistent weakness over multiple days, multiple weeks, I wouldn't really call it a bear market just on the downside move that we had.
Scarlett's new definition. Persistent.
Absolutely. I like that we put technical in front of it. Then we don't have to we don't have to argue about what it is. We can just, but we do defer to you, Skylar, on this. So that's what we're looking ahead to. I mean, looking ahead to European politics. Anything else on your radar for this trading day or into the end of the week then, Skylar?
I mean, I'm really looking forward to U.S. inflation next week. I think because we had non-farm payroll, I know it's next week, but that's what I'm focusing on. This is
I mean,
kind
you
of
could
like
have said the football, but no, U.S. inflation.
Yeah, I mean, I will be watching the football this weekend, actually, surprisingly.
Okay. There is a lot of it, so it's hard to miss. Skylar, thank you very much. Skylar Montgomery-Coney from our Markets Live team with everything that is happening on these markets, and looking forward to inflation and the football. You see, that's the kind of life we lead here on the opening trade. That is it for the opening trade. The Pulse is up next. Guy's turn to do the extra hour this morning, so he'll be here with that, continuing the coverage of everything that's happening at NATO, of course. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini.
We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
President Trump set to speak any moment. This as he meets NATO allies in Turkey. We'll take you there. We'll bring you that press conference as soon as it happens. Oil rising as the US and Iran trade fire in the Gulf. Tehran says key parts of the ceasefire are now ineffective. And the AI rotation trade gathers pace as investors pull money from chip makers, pushing the Kospi into a bear market. Okay, let's talk about what the assets are telling us this morning. There's a lot of interest out there this morning in terms of the narrative and the various asset classes and how they are developing. So what you've got basically is a situation where stocks are under a little bit of pressure. You've got the bond market certainly in focus with a bit of politics thrown in here in Europe. Crude is up by 2.5%. Actually coming off its earlier highs. In many ways, we're surprised that crude isn't up more. NASDAQ futures are absolutely flat, which is interesting as well, considering what we've seen overnight in the Cosby. Okay, let's get going. Lots to talk about this morning. We're waiting for that press conference in Ankara, in Turkey, at the NATO summit. We'll come back to that in a minute. But let's talk about what we've got going on. There's various strands that are worth tying together today. So welcome to The Pulse. I'm Guy Johnson. Let's get the easy bit out of the way, and then we'll talk about what comes next. We've got a big move in the market, and we need to talk about that.
Newsmakers and market movers. This is The Pulse.
Okay. Let's talk about the markets. Let's figure out what's going on. We've got two major developing stories we're trying to figure out. One is the situation in the Gulf, US-Iran hostilities escalating. President Trump is in Turkey for the NATO conference, due to speak any moment now. Plus, we've also got a developing market story as well. So we're going to bring you the latest on the Middle East. We are going to go to Ankara, and we're going to figure out how this all falls into the market story. First up, though, you've got the NATO Secretary General, Mark Rutte, quick to respond to the US strikes on Iran, calling them, quote, absolutely necessary. The statement comes as Rutte continues to placate President Trump with new defense deals and a promise of increased defense spending. Let's go to Bloomberg's Oliver Crook, our chief Europe correspondent, who is standing by in Ankara. How big a shadow is what is happening in the Gulf right now casting over this summit, Ollie?
Yeah, invariably, Guy, it's something that you can't sort of avoid but talk about. Of course, the Europeans would like to begin to not have to deal with this issue. They'd like to sort of leave it to the President of the United States for him to be happy because, of course, one of the main issues, one of the main points of conflict between the United States and its NATO allies is their refusal to participate and to enable the United States in its strikes in Iran. And it's something we've heard repeatedly from the President of the United States, obviously, over the last couple of months in the lead up to this meeting and indeed here in Ankara as he's arrived. And we're awaiting the President of the United States to potentially make some comments now alongside Mark Rutte, the Secretary General. That is just ahead of the full and the official leaders meeting, which should kick off in the next few minutes as we've had individual leaders arriving. Emmanuel Macron just walked in the meeting in the building behind me. And again, for the European leaders, it's all about not rocking the boat with Donald Trump to try to advertise some of the things that they've done in the last 12 months from that last meeting a year ago when you'll remember they made those commitments to spend 5% of GDP on spending. And over the last 24 hours, and this has all been very sort of meticulously orchestrated by the Secretary General, Mark Rutte, you've had announcements, deals, military hardware deals. We're talking about $50 billion worth of deals over the last 24 hours at an industry event yesterday. Now we'll watch to see what we get out of this actual summit itself, what the joint communique will entail, what the language will be on Ukraine, what the language will be on Russia, and what the language will be, if any, on the question of Iran.
Ollie, what are we expecting Trump to say? He had some fairly strong language coming into this summit, talking about withdrawing troops from Europe. Is that the message we're about to get, or is it going to be different?
Well, Guy, as you know, I mean, with these summits, you can do all the planning you want to do. You can sort of anticipate the sort of agenda, and you can try to align the stars as Mark Rutte has tried to do. But, of course, the problem that you've got is that there's this wild card of Trump. We've heard now in the last few hours that he's apparently in a good mood, but a lot of these things will be governed just by how the president is feeling, how what is on his mind in that particular day. Of course, Iran, how upset he's going to be at NATO allies for not participating in those strikes. And, of course, this question about Greenland. It's come up a number of times. It came up yesterday. We had Trump reiterate the fact that he believes that the United States should be in control of Greenland. It's come up again today. The Danish Prime Minister walking in, of course, the Europeans sort of holding the line on that. But there is that sort of wild card factor, and that is, of course, what we're going to find out in the next couple of minutes as Donald Trump arrives here and potentially speaks.
Yeah, we're getting some comments from him now. Ollie, thank you very much indeed. Let me just reiterate what we're getting from the President of the United States. Iran are dirty players, he says. They are, quote, scum. Iran shot rockets at ships. That's why the US hit back. We attacked very powerfully last night again, Iran. He's speaking as this summit progresses. We don't have a shot of it yet, so we'll bring that to you as soon as we get it. We had some great meetings, but he's painting a picture of a ceasefire that certainly sounds like it's hanging by a thread. Oil, as a result, has been jumping this morning. Not by that much, but we are definitely up as hostility increases. I want to go to Abir and get her take on this. So let's go to Dubai and get Abir's take on the latest comments that we're getting from Iran. Abir Abu Omar joining us from Dubai. Trump saying we wasted a lot of time with Iran. That's the latest line we're getting. Abir, you're seeing these headlines as well. What do you make of them?
Yeah, I mean, Guy, it's just really solidifying this argument that these skirmishes that we saw overnight and into the early hours of the morning are the most serious that we've seen since this MOU was signed last month. I mean, I'm hearing the headlines from President Trump speaking in NATO now, and you can hear that the language there is also pretty serious. And look, these attacks that have happened, or the U.S. attacks where it attacked more than 80 targets in Iran overnight and into the early hours of the morning. Those are mostly weapon launchers, defense targets, is essentially a retaliation to an attack by the IRGC yesterday on tankers in the Strait of Hormuz, namely a Qatar LNG-laden ship that was passing through the Strait of Hormuz yesterday, not sticking to the routes that Iran had laid out.
So I'm going to cut you off there. I'm really sorry, but we do have this Rutte-Trump press conference taking place now. Let's listen in.
In fairness, I didn't speak to Mark about it. I think if I did, it might have been different, but we didn't need help. But I was really testing. I wanted to see whether or not they'd be there. And the answer is they were. I spoke to Germany, I spoke to France, spoke to UK, spoke to Italy, I didn't speak to Spain. Spain is a wasted cause. We don't want to do any trade business with Spain anymore, by the way. I'd like you to cut it off. Spain is a terrible partner in NATO. They don't participate. They don't pay. I don't want anything to do with Spain. Cut off all trade with Spain, please, including visits. Okay, we don't want anything to do. Watch them come running back. Oh, they'll come running back. They treat this man terribly, and this man's a good man too, great man. They're lucky they have him. But Spain doesn't agree to anything, and you shouldn't carry him. I mean, you sort of automatically carry because you're protecting an area, so they're there. So they probably figured they have to protect us, right? But we don't have to, and we don't have to trade with them. I don't want to do any more trade with them. All right? Yes, take it immediately. You don't even talk to them. They're hopeless. Bad people, because you know they have everybody else going and paying and working. In Spain, in particular Spain, there are a couple of others, but in particular Spain, they're open about it, they're hostile about it, and let's see how hostile they remain when they call up and they, please, we want to trade with you, sir, we want to trade with you, sir. They make so much money with us, and we're going to see that they make a lot less. I want no business with them. So, other than that, we're having the big meeting in a little while, and I'm going to relate my problems. Greenland is a big problem for us. And the other big problem is the fact that when we wanted them, we didn't want them badly, but we did say, if you want to join us, and they all said no. But when they could have, they weren't there for us, and we've been there for them. We spent over $1 trillion over the last short period, $1 trillion, in order to protect these countries from Russia. And has nothing to do with us. We have an ocean, but it's been a long-term thing, and they haven't treated us right. And Mark understands that. He understands that. And we're going to work something out, I think, one way or the other. But we've been treated unfairly. We pay disproportionately. We had a time when we were paying 100%. We were paying 100% of NATO, and yet a lot of the countries weren't paying anything. But there was calls made a few weeks ago. I spoke with UK, and the Prime Minister said, well, we don't want to help you now, but we'll help you when the war's over. I said, that's not good. And likewise, I spoke to Germany. They didn't want to help. Spoke to France. They didn't want to help. Nobody wanted to help. some of the very small countries want to help because they're the most vulnerable. I mean, that's the only reason they want to help. So I appreciate you being here. We're going to be going back together, many of us together. And again, I want to say, despite the fact that I'm very upset with NATO, that we pay far, far too much, billions and billions of dollars too much, because it's unfair, because we're protecting them. So we protect them, but they're not there for us. Think of it. It doesn't work. But I want to say this is a great leader. They're lucky they have him. It's their biggest asset. You want to know the truth? So, Mark, would you say a few words?
Absolutely, and thank you so much, Mr. President, dear Donald. Let me start with Iran. We discussed it last night at the presidential palace. I think what you did, degrading the nuclear capability, crucial for Israel, the region, for Europe, degrading the ballistic missile capability of Iran, crucial for Israel, for the region, for you, for the whole world. And then trying to bring this to a peaceful end. They attacking ships yesterday. I think what you did last night was absolutely necessary. It was a very strong response. And I'm with you on this. It's really important. When it comes to NATO, what you have achieved, and this is a huge win, and I just want to say this again, the last 2 years, Canada and European NATO nations spending $215 billion more in 2024 and 2025 and 2026 compared to 2024. This is staggering, 258 billion. In the meantime, almost 200,000 jobs in the US being supported by all the investments by countries in the United States in the defense industrial base, buying from the defense industrial base from the US companies. So here you see you have been able to really get them to step up, to do this. And when it comes to Iran, I know you're disappointed. We discussed it a couple of weeks ago. I would say these are isolated cases. 5,000 planes taking off from European airports in support of Epic Fury. It was Europe as one big platform of power projection for the United States, helping with Epic Fury, including countries you mentioned, Germany from day one, France, and many others. We discussed the Bucharest airport, which was closed for a couple of days for commercial traffic because you needed it for Epic Fury, and they were totally
United
fine.
Kingdom wouldn't let us use the island for 2 weeks, so we had to fly back.
No, so I'm saying you're right. There are isolated
and
cases.
Italy was very bad, having to do with their bases, as you know, and a couple of others. So
But still, generally, 5,000 is huge. And you mentioned Spain. Even you got Spain to pay 2%. They made a huge step in last year. So there's still issues we have to solve. But hey, also even Spain, I would say they got to the 2%. And I know you have a very strong relationship with the United Kingdom, the King, but also you personally always with Keir Starmer, who is now leaving office. He has now also committed to spend another $20 billion extra, 15 billion pounds on defense. So I would argue, without you in this chair, this would not have happened. It is, of course, because of Russia, but also because of you. So grab to win, it's there. You did this. It was The Hague, and now they are implementing. And on Greenland, you and I made a deal in Davos. I will make sure that that deal is step by step being implemented. That you can deploy, if you want, the Golden Dome on Greenland. You have your trilateral talks. Mark was leading them from your side with the Greenlanders and the Danes when it comes to if they would change their constitutional position in the kingdom, etc. But hey,
I mean, just so they understand, Greenland is very important for the United States, but it's not important for Denmark. In fact, when Denmark was overrun by the Nazis in less than 1 day, Hitler beat them out in 1 day, took over. They asked us to take care of Greenland. In fact, we took Greenland, and then stupidly we gave it back. We shouldn't have given it back to them because we're the ones that need it. We need it for protection of the world, not just the United States. And it's very important. It doesn't help Denmark, but it helps us. And it's very important for us. And again, they were defeated very quickly. Denmark was beaten in 1 day, less than 1 day, by the Nazis, by Hitler. And when this happened, they immediately switched it over to us. We owned it. We had it. We were taking care of it, and then we gave it back, which is, I don't know why. I wouldn't have given the Panama Canal back either, so what do I know? I certainly wouldn't have done that because China's tried to take over the Panama Canal, and that's not going to happen. So, but I just, it's interesting. I'm very unhappy with NATO, and yet this man is a great leader, and he gets it. he gets it maybe better than some of the leaders.
But also your allies get it thanks to you, and that is important. Yeah. I could not do this without you.
It's too bad Biden didn't do it, or Obama.
Hey, but you are here now.
Obama.
And you and Trump 45 and Trump 47. In total, more than $1.2 trillion. I call this the Trump trillion.
No, it's true.
$1.2 trillion extra spent by Canada and the
And I'm not only blaming NATO. They got a free ride. And
not
if
anymore.
Biden had any brain, which he didn't, he would have said, you got to pay more. And same with Obama. Two bad presidents. But they could have asked, and you would have done that too. It would have been, I mean, who knows? But who knows if they would have done
happen, and it is huge.
It should have happened years ago, and it couldn't. But Obama didn't do it, and Biden didn't do it, and frankly, Bush didn't do it either.
But you did what Eisenhower started trying to do, equalizing the Europeans.
He tried, yeah. Eisenhower tried.
And all the other presidents, none of them were successful. You're the first one. It's your win. Your win in the Hague.
That's why I like him.
And you win now.
That's why I like him.
This is true. Without you, this would not have happened. Really,
do you have any questions?
Mr. President, is the ceasefire over? Is the ceasefire done? Is the MOU dead?
It's a very interesting question. To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. We make a deal. And if I make a deal with him, we have a deal. And he goes out, he talks. We make a deal. Everyone's agreed. No nuclear weapon. We make a deal. They go outside, talk to the press. They say, we never even talked about it. There's something wrong with them. They're cuckoo. As far as I'm concerned, it's over.
So are we the talks won't resume after we get through the funeral proceedings? Does this mean that talks with Iran will not resume?
I don't care. They can talk, but I think they're wasting their time. They're a bunch of lying guys. I do my whole life. That's all I do is deals. My whole life that's how I became president. I guess that's a deal too, right? But I made a lot of money. I had a lot of great success, tremendous success. Everything I did, I was successful. And I deal with these guys, and I say, this is from a different school. They're liars. They're cheats. They're sick people. They've hurt their people. They killed 54,000 people as of now that were protesting. You know, when people say, how come they haven't taken over? They can't take over because they're dead. They killed them. Nobody's going to take over. They have no guns, and the other side has machine guns. And they're killing them. The press doesn't report it. But they're bad people. They're bad people. And frankly, I don't want to waste my time with them. Now, I'll let our wonderful negotiators keep talking if they want, but I don't see it. I don't like these people. You know that? I like him. I like the leaders. I think all of these leaders.
Great. And they love him.
I think they didn't treat the United States fairly for many years, but that's okay. But they're sane, rational, good people. Most of them. I don't like a couple of them, to be honest with you. But there are a couple I don't like much. But I like Erdogan. I'll tell you. I like President Erdogan. He rolled out the red carpet. He's terrific. You know, he could have gone into the war. A lot of people saying, like with Bibi, I like Bibi. I think Bibi was a terrific wartime prime minister. But Bibi said rough things yesterday about Turkey and Erdogan. And I said, you know, I spoke to him. I said, he could have gone into the war because he doesn't like Israel much. And he doesn't like Bibi much. And he didn't go because of me. And this is a military power. Millions of soldiers. Turkey is very strong. They have a lot of our best equipment. They're trying to get the F-35s. But he didn't go in. He wanted it. He would go in. If it weren't for me, he would have gone in. And he would have been on the other side. Even though I don't think he likes the other side either, because he happens to be very sane, and they happen to be very crazy. But so I think, you know, they treated us right. I think China treated us right. I was with President Xi, and I said, I hope you're not going to go into the war, because we don't want that. You know, he gets 50% of his oil from the Strait of Hormuz, and he gets more than 50%. And he never went into the war. He didn't supply him equipment, you know. He was great. I'm a big fan of President Xi. A lot of people say, oh, why? You know, I watched a couple of people critical of the fact that TikTok is so bad, it's so dangerous, it's so horrible, they're spreading all these rumors. And And the numbers came out yesterday. You know who's number one on TikTok? I am. I'm number one on TikTok. And all I talk about is how bad communism is, right? They say, oh, it's terrible. They're spreading, but I'm number one. And I listen to Gordon Chang. I like Gordon Chang, but he's always like negative. Oh, China's so terrible. They're so terrible. And TikTok is so terrible. But I'm number one on TikTok. I have like 4 billion views or something like that. So I don't know. People have to get the priorities straight. We have had a really good day. We're going to have another good half a day. And then I'll see you later. We'll talk to you. Thank you very much. Thank you, everybody.
Thank you.
Thank you, press. Thanks, guys.
I also will do a press.
Thank you, guys.
It will be more important.
Thank you, guys. Thank you. Thank you. Please head out this way. Hey, guys, out the door. Thank you.
Thank you, everyone. Thank you.
Good, Anna?
Okay, we're wrapping up the comments that have been made by President Trump and the NATO Secretary General Mark Rutte. Some key things to come out of that, which the oil price has responded to. The main one is the line on the bottom of the screen that you've got right now. President Trump indicating that he believes that the ceasefire with Iran is now over. Talks may continue, but he believes that the ceasefire is now over. I want to go back to Ankara to talk to our correspondent Oliver Crook, who is on the ground there. Ollie, these are very strong remarks that we've just had from the president. I'm presuming that this will overshadow this meeting that is taking place, a NATO meeting. President Trump signaling that the ceasefire with Iran is over.
Absolutely, Guy. I mean, we were talking just moments before that press conference began about this sort of capacity for Donald Trump to kind of blow up events and sort of do unexpected things. And it came as that line, literally sort of the jaw-dropping here, that basically the United States sees the ceasefire with Iran as effectively over, that it is no longer in effect. Obviously, that's what the president said. You must always take that with a great number of caveats in terms of what it means for American policy. But as far as he's concerned, he says that there's not really any point in continuing to talk with Iran, that they've wasted his time, that he thinks that the negotiators should keep talking, they can keep talking, but as far as he sees things right now, they're not going to make any forward progress. He referred to the Iranians as scum, liars, cheaters, that the conversations keep going, but the ceasefire, as far as the United States is concerned, is over. And of course, the reason Iran comes up is because it is a point of friction between the President of the United States and the allies at NATO. The other headline, until that line dropped, was that basically the United States and Trump is still very upset with NATO. And you saw Mark Rutte there in that press conference doing the High Wire Act, trying to keep the United States on board, saying that the strikes that the United States did over the last couple of days were completely necessary. But of course, that conversation entirely derailed, totally overshadowed by that line from the President of the United States that effectively he sees the ceasefire between the United States and Iran as over.
Let's just talk about the comments related to Spain and some of the other European allies as well, Ollie. One of the things that a lot of analysts were looking for into this meeting was a commitment by the United States to Article 5, to NATO, that if provoked, there would be a response. If Putin were to push, there would be a response. That didn't sound like it to me. Didn't sound like that commitment was there.
No, absolutely not, Guy. And I think that, you know what, I don't think that that's the ambition anymore from the NATO allies. I don't think they expect the President of the United States to give that full solidarity, to say the ironclad sort of Article 5. I think that Trump's sort of policy towards NATO is to keep that kind of forever ambiguous, to kind of play with it around the edges. And it has in some ways been effective if the goal has been to get NATO spending up. You know, but I don't think you're going to get that kind of comment from the United States. But, Guy, just on this issue of Spain, I think it's really interesting. I mean, what Trump is talking about, he's still very upset with Spain. Spain's unwillingness to go to that 5%. It's the only NATO member that says he won't spend that. Trump is saying that he's going to cut off visits with Spain. He's going to cut off trade with Spain. This could have huge repercussions for the European Union. The EU would be put in a sort of impossible position if the United States decided to take trade measures specifically against Spain. Of course, the EU manages all of its trade through the bloc. So if the United States were to do that, were to proceed with that, it's a threat we've had in the past from Donald Trump, but he's not effectuated it. If he does, it could blow up the entire trade deal with the European Union, that $1 trillion trade deal. I mean, there is so much to unpack from this press conference and the comments we just had from the President of the United States. Greenland is back in the conversation in a very active way, says it's still a problem. A lot of references to the Nazis and how quickly they overran Denmark, and the United States was there to take care of Greenland. They should never have given it back. And of course, Iran is sort of at the top of the agenda, but a lot to unpack there in the few minutes we heard there from Donald Trump here in Ankara, Turkey.
Absolutely. Oliver, we'll be back with you in Ankara shortly. Thank you very much indeed, Oliver Crook, at the NATO summit. Let's get a take on what we've seen in the oil price. Abir Abu Omar back with us as well. Abir, the president thinks that the ceasefire is over. Oil has spiked higher as a result of that. We are up, but it's not. The market's still not signalling. I would argue maybe this morning that we are going back to full-scale hostilities. What is the read that you're hearing?
Good morning, Guy. Yeah, look, I mean, I'm hearing those remarks at the same time you were hearing them from President Trump. Pretty strong remarks. But I think it's important, and I was watching what my colleagues have been saying in the background, and it's important to note here some caveats around this. Now, President Trump went around and did say that Iranians are scum, liars, and that as far as he's concerned, those ceasefire talks are over. But then he did say that he will let the negotiators go on with the talks if they wanted to. And so we're seeing again this back and forth in the president's own remarks about those negotiations. We still haven't heard from the Iranian side. Now, this has just happened, but earlier in the morning, we did hear from the Iranian, for example, deputy foreign minister that said that Iran's actions against the United States and allies in the region will be decisive. So Iran not backing out of this, and they're holding their ground, really. Asserting dominance over the Strait of Hormuz remains key for Iran. They've shown that over the past couple of months. They've shown that certainly over the past couple of weeks. Those attacks on the Strait of Hormuz are really a message by Iran to say that the new paradigm, or the paradigm of how things are done in the Middle East has shifted. Now, you're right, we're not seeing oil at the peak that we saw it at during the peak of the war, $125 on the barrel, but it seems like the market reaction is instantaneous, and it would be given what President Trump was just saying. But I think it's just important to caveat, while we wait for the Iranian response, that President Trump has made similar remarks before, albeit not as strong as what we've been hearing now, but we obviously will continue to monitor the situation. What the mediators will come out and say, that's another important thing, the Qataris, the Pakistanis, if they will try to get involved as soon as possible.
Yeah, and it's interesting that we should see this in the context of the fact that the funeral of Ayatollah Khamenei is still ongoing, and certainly part of the background narrative that we're watching so carefully here. A bit, just briefly before I let you go, what is the status of the attacks that we've seen this morning in the GCC? We did see Bahrain and Kuwait coming under fire. What do we know about those attacks?
Yeah, we know that they happened. We know that Iran, in the early hours of the morning here in Dubai, at least, have attacked Kuwait and Bahrain. Now, these are attacks that are similar to what has happened about a month ago when the U.S. retaliated by hitting ships in the Strait of Hormuz. Iran's choice of a target was infrastructure in Kuwait and Bahrain. We heard from Anwar Gargash in the UAE, Guy, who is a senior advisor to the UAE's president, saying that Iran doesn't look like it wants to go back to the negotiation table. I'm paraphrasing him here, and saying that Iran is essentially acting as a rogue player. And so we're really seeing the situation getting a little bit more complicated during these negotiations over the MOU that, as you just have mentioned, are suspended for the mass funeral of the late Supreme Leader. It is set to end tomorrow, and we were expecting the talks to commence afterwards, but everything just got a little bit more complicated this morning, Guy.
It certainly did. Thank you very much indeed for updating us. Abir Abu Omar joining us out of Dubai. Let's get a market perspective on all of this. Mike Bell, market strategist, head at RBC Blue Bay, joining me around the table. Should we assume a higher oil price?
I think there's certainly the risk. This has always been a pretty fragile ceasefire, and we're clearly seeing that the kind of risks around that are building. You know, we've had long US inflation break-evens, not purely because of this potential risk. But, I mean, I think when you think about it, fundamentally, why didn't the US put troops on the ground and go in and sort of really finish the job in Iran? And I think there's two reasons. One, it's clearly politically not very popular in the US to do that. And second, it was made clear during the first rounds of the conflict that Iran can strike energy assets in the region. And that fundamental truth hasn't gone away. So, you know, I think that's both of those things still make it hard for them to go in and really escalate this. But I mean, who knows? Let's see how it goes.
But it does look as if we are going to see ongoing tension, and therefore, if you're a central bank, can you look through the inflation spike that has come through from crude and the drop back down again? What assumptions do you have to make? Can you make any assumptions in terms of what you're seeing in terms of the energy price input?
I think it's probably just going to mean the central banks want to stay on hold longer.
Yep.
But I think ultimately what central bankers should be focused on is whether it's going to pass through to wages. And I think that's quite different depending on where you look, because the US labour market's holding up okay. So there is a risk that if you get higher inflation, it transmits into higher wages. The Fed, therefore, maybe need to be a bit more hawkish. In somewhere like the UK, for example, where actually they're more worried about high inflation expectations feeding through into wages, I actually think that's a much lower risk. You know, the UK labour market's pretty weak, and that therefore, as a result, you're not going to see that transmission into wage growth, even if oil prices do move.
Buy gilts, sell treasuries?
I mean, the problem with gilts is you've got the political risk here, right? So if you look at the UK economy from a fundamental perspective, it looks pretty weak. You might well be thinking there's an opportunity in gilts. But why have gilts rallied? They've rallied because the oil price fell. Obviously, the oil price is now going up.
Going back to that.
And then you've also got the Burnham risk. Who's he going to announce as Chancellor? So we prefer to sit on the sidelines with gilts at the moment. Eventually, I think there'll come an opportunity, but we think it's too early.
But if you look forward, if you assume that this is going to be a stop-start, on-off kind of scenario in the Gulf, with the talks with the Iranians, that we are going to see instances like today where the oil price moves up 4, 5, 6, like maybe more %. How do you look at investing in that kind of environment where you are going to get this choppiness? And this is a key input into a lot of economies, maybe less than it has been traditionally, but nevertheless a key input. So do you just have to assume that you're going to get that volatility and just treat it as the new normal?
Well, I think you're definitely in a world where you're going to have more persistent bond volatility, and then it depends on whether you are able to trade that. And do you have a toolkit that allows you, for example, as I say, we've had inflation break-evens, been long inflation break-evens in the US. Do you have that in your toolkit in order to be able to trade markets? Some people don't. So I think one thing is about making sure you have the toolkit that allows you to hedge some of these risks in a way that you can't by just being long traditional bonds, right? And then I think if you take a longer-term view than that, it's also just about accepting that you're going to have more inflation volatility because of these more frequent supply shocks. We've got a big El Nino coming. That could cause another supply shock. And therefore, having a portfolio that isn't just traditional bonds and stocks that can get hit at the same time by those supply shocks, maybe having some hedge funds that can diversify in that backdrop.
Okay, so you've got to figure out how to diversify. The other factor we haven't talked about is the AI trade as well, which we've seen significant volatility in as well over the last 24 hours. You've got a Cosby that is now down by 20%. Theoretically, that kind of feels like it should be in a bear market by traditional metrics, but it's the Cosby, and it's all over the shop, and there's a lot of volatility. It doesn't kind of... This feels quite normal in some respects with reference to that market. How do I... Put the volatility I'm getting in terms of the oil story, the inflation story, alongside that AI story and the volatility we're getting there. Are these, do the waves overlap? Is the danger they come at the same time? How much a threat do these two potential challenges pose to portfolios at the moment?
Well, so I do think there's some common threads in the... everything that's going on with AI is causing chip prices to go up, and therefore that's feeding through into inflation. So that's part of the reason why we had that inflation long break-even position on, because we thought it's going to feed through from higher chip prices. Now, obviously, you've got the oil risk, which will help as well. But I think they're also separate, right? So I think what concerns me about what's going on in some of the semiconductor stocks, and it's interesting that there's massive valuation discrepancies between some of the smaller semiconductor stocks and actually the two largest ones. But you've seen this phenomenal rally in semiconductors outside of the two largest stocks in the US. And then obviously you've seen a huge rally in some of those Korean names. And what concerns me is where you're seeing people using single stock leveraged ETFs, piling leverage into things that are just essentially very strong momentum trades seems pretty speculative to me. And so, I think there are risks there, and it makes sense, therefore, within emerging markets to be diversifying away from just having exposure to that semiconductor trade, looking at, for example, some of the China names that look better
Got
value.
up today, Bob. I had a good day.
And then I also think, like, if you want to own EM, look at EM debt as well. Right? I think LATAM EM debt looks quite attractive. You don't have to just own a very concentrated exposure in a few tech stocks.
So what do you think? What do you think are the? You got an oil story, an inflation story, you got a semi story, you've got a kind of leverage piled onto the latter. Where do I look for diversification? Everybody's talking to me about, oh yeah, we're getting a sort of diversification trade. People are rotating into things like pharma stocks, etc. Like, where do you think the diversification trade is? What is an absolute diversifier in these kinds of scenarios, rather than what I think is probably a lot of relative trades, i.e. everything goes down if tech comes down, everything. Where are you looking?
So I think it depends on your time horizon, right? I think that one of the big risks at the moment is there's a significant risk that we may be in an AI bubble.
Yep.
Right? And so if you look back to 2000,
yep.
What happened from 2000 onwards was basically, you know, stocks went down a lot, and then you would have been better off over a 10, 15-year view in emerging market debt and high yield and IG corporates and even just government bonds, broadly speaking, in that order. What actually does well if stocks all sell off at the same time that bonds are getting hit? Well, in that environment, you really need to be able to buy options. You need more sophisticated tools, as I was saying earlier on. So you need that kind of broader hedge fund type toolkit that allows you to hedge against an environment where both stocks and bonds go down together.
So what do you, okay, let's talk about that a little bit more. How do you do that? Is it just basically, am I prepared to give up the top 10%, the kind of the upper echelons of an upside move to protect myself on the downside? How are you thinking about structuring that option story? Is it worth giving up some upside to protect me through the downside? How wide do you think that should be? Should it be 10%? Should it be 20%? Should it be 30%? How are you thinking about structuring that?
Yeah, I think that's exactly right. You can give up some upside to provide some downside protection. You can also, so within equities, broadly, one thing about there. One could also, though, as I say, you can use inflation hedges. If the risk is that you get an inflation shock that causes stocks and bonds to go down together, then you can hedge that with inflation trades.
Right.
Which is harder to do in a traditional portfolio. Yes, you can buy energy stocks, I guess, but it's easier if you have a more sophisticated toolkit.
Are there markets that you look at? Is India? People talk to me about India being maybe a sort of an option in this space as well. That India would do well. That if you see the Cosby going down, you buy the Korean won. Are there other obvious things?
Well, I think the other thing you can do is, again, if you have that expanded toolkit. So when the first wave of this Iran crisis kicked off, we had positions long some of the emerging market commodity exporters in the debt space, and versus some of the importers. So if you've got that expanded toolkit that allows you to do relative trades within, say, EM debt, then that worked out very well for us. And it's just about
how much time are you spending thinking about this kind of stuff at the moment? Is that what the gig is right now?
It's a lot of time, we think about this every day, literally every morning.
I think about it more, I guess, is my point now. The markets feel like they're getting more extreme. Therefore, it's becoming less vanilla, more sophisticated.
I think you need that sophisticated toolkit because we're in a world where you've got high stock valuations, you've got high government debt to GDP ratios and more persistent supply shocks. And so that just traditional buy and hold government bond and some high-valued stocks isn't guaranteed to do as well as it did in the world that we enjoyed for most of the last 15 years.
It's been nice to talk to you. Thank you very much indeed for spending some time with us this morning. Mike Bell, Market Strategy Head at RBC Blue Bay. I just want to bring you back to the main headline this morning. It's come in the last sort of half an hour. It came from that Trump press conference that he held with the NATO Secretary General Mark Rutte. This is what he had to say about the Iranian ceasefire.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people, and they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them.
Okay. We've seen Brent up more, well, kind of circa 5% on the back of those comments. We've already seen some uplift in the price of crude. Let's bring in Bloomberg's managing editor for commodities and energy, Lysol Hill. We're seeing a significant repricing. Just give us your take on what is happening here and whether or not we should expect more. In some ways, it was a muted response into this.
Yeah, I mean, at the end of the day, for the oil market, the big question really is how open is the Strait of Hormuz.
Yep.
We've seen over the past few weeks since the MOU was signed, this uptick in at least observable traffic, combined with these bypass pipelines, the flow of oil out of the Gulf had been approaching pre-war levels. But the kind of key thing that we've seen is this. These two sort of parallel corridors had started to emerge, where Iran is saying the route through its own waters is the only permitted one. Everyone has to go through that, whereas the US had been defending, and we'd seen this growing uptick in traffic through the routes along the Omani coast. And Oman had been repeating kind of over again over the last few weeks. This is the only one. Everyone has to go through the route, and now we've seen them obviously try to enforce, and we've seen the result of that in terms of the strikes.
But if I look at the screen, I look at the right-hand side, I've got oil up by 6%. But if I look at the left-hand side, it's still only we're still in the 70s. We're not going back to 120. The market's basically saying, we don't think we are going to see some re-escalation, but we're not going to see massive re-escalation here. Talks are ongoing, and maybe we should focus on that.
I think that's fair. I think the other thing to keep in mind is that the world is not short of oil right now. We've seen this big flood out, both from Iranian barrels, 60 million barrels of oil since the MOU, since the US blockade was lifted. And then, of course, the rest of the Persian Gulf producers have been sending their oil out. China had pulled back. We've seen a bit of an increase in Chinese buying, I think, over the last couple of weeks, but still nowhere near what it had been before the war. And so there isn't that tension and tightness in the oil market.
What do we know about the ships going through the Strait, though?
That, I think, is a little bit early to say. There hasn't been a whole lot that, obviously, we don't know what we don't know. The ship owners have the option to go through with their transponders off, and then there's very little. But
will this stop? Do you think this will be, presumably this will be a further impediment to the insurers going, yes, you can go through, the ship owners going, yes, you can go through, the captains going, yes, we want to go through?
Surely anyone who'd had questions about whether to send their ships through. I think we've seen a lot of the stranded ships have moved out already. The big question for the oil market is coming back in to load again.
In terms of how much Iranian crude there is on the water at the moment, what do we know about that?
There is, as I said, we've seen 60 million barrels they'd exported either through the Strait as well as oil that had been stranded, sitting behind, just sort of outside the Strait of Hormuz in the Gulf of Oman behind the blockade that has been lifted since. It's on the water. Some of it is sitting in storage, but some of it is in transit.
Yeah. Do we know where it's going?
I think we don't have a lot of answers for the bulk of it, at least. China has been the natural buyer for Iranian oil, as we saw overnight, the US revoking that waiver on the sanctions. I think it's unclear how much direct impact that has at the end of the day. We're not really sure how many new buyers had been rushing to buy oil. There was a limited 60-day window. And as we say, the world is not. The buyers are not falling over themselves to find oil out there.
Lysol, great to see you. Thank you for updating us. Busy morning, certainly. Lysol Hill on what we're seeing in terms of the crude market. Up next, we'll come back to these comments, these Iranian comments that have been made by President Trump. We'll bring you more analysis from the NATO summit as well. There's plenty of European politics to focus on as well. All of that coming up next. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Okay, quick look at the markets. This is what we are seeing right now. You got crude up by nearly 6% on the back of the comments we've had from President Trump regarding the ceasefire with Iran. TI is up by a similar amount, maybe even a little bit more. We're trading at 74.51 there. The dollar is actually fairly flat, which I think is interesting in light of all of this. Where you are seeing a big reaction to this story relating to crude is at the front end of the European curves, where you are seeing some fairly substantial moves. Ignore the kind of think about what is happening here in terms of the points move, not the percent move. There, we'll unclick that box, but you are getting a big move at the front end of the European curves on the back of that. This as a reaction to what we are getting out of NATO this morning, where you are seeing some fairly big responses to what President Trump has been saying, not only on what has been said on Iran, but also what has been said relative to some of the European allies. Is this going to overshadow the summit? Well, President Trump certainly has done that, I would argue, maybe this morning in significant way. Yonela Chulan is joining us now, research officer at the Wilfred Martins Center for European Studies. Yonela, thank you very much indeed for spending some time with us. President Trump, a brief press conference and upending so much. He's talked about the Iran conflict and the ceasefire being over. To what extent will this now, do you think, overshadow everything else at that NATO summit?
I think that the Iran topic will be a very important issue on the current discussions between the heads of states and government of NATO allies. And I believe that we might also see a mentioning about Iran and some support from the Europeans for possible future ceasefire mission or maritime surveillance in the Hormuz Strait after the end of the war, because the Europeans will try to placate President Trump and offer something to show that also they are providing their weight. But at the same time, we have to keep in mind that NATO is a defense alliance, so the Europeans will be very cautious on how to approach the Iran topic, because they don't have neither the political willing nor the capacity to also start being dragged into that war.
Let's talk a little bit about what President Trump said this morning about NATO allies. Clearly very upset still with Spain, but also upset with a lot of allies regarding their lack of participation in the Iran war. If Europe was hoping for some sort of US guarantee regarding Article 5, regarding the security of Europe, do you think we've now firmly established that that will not be coming from President Trump?
I'm still optimistic that we might have that positive message and the clear message from the Trump that he is still supporting Article 5 and the U.S. are still committed to the security of Europe. But what we are seeing right now is that this Ankara summit, it's basically starting a transition within the North Atlantic Alliance, where we have this move towards NATO 3.1. NATO, which will mean basically the emergence of the European pillar of NATO, where the Europeans will take over more of the tasks, capabilities, leaderships of NATO. So we will see in the future probably less United States in NATO and more Europeans taking over the responsibility for the alliance. But it's very early to say what will happen because the discussions are just starting, but I really hope that the NATO leaders will find a way to convince President Trump for him to support the ironclad commitment to NATO and especially to Article 5, because otherwise this will be considered a big vulnerability to NATO's credibility, to its defense and deterrence posture, and this might also encourage Russia to poke NATO to see how much they can continue with their hybrid war.
Do you think there is a danger to that point? Sorry, do you think there's a danger that we get a... Sorry, carry on.
Yes, I believe that there is a realistic danger that Russia will see these tensions among the allies as a window of opportunity for them to continue with their objective to show that NATO is paper tiger, as also President Trump is saying, and showing that there is no unity among alliance and that they can, either through a hybrid attack or a conventional attack, they will create a situation at the eastern border, so basically in one of the eastern flank countries, in proving that the Article 5 it's not valid. So that's why it's very important today to show a united, coherent front and signaling from NATO leaders, including President Trump, that we have this ironclad commitment to Article 5 of NATO, that all the allies are committed to the protection of every inch of the territory of the Euro-Atlantic organization, and that any external threat to the alliance will be met with a forceful reaction.
Yonela, we're going to leave it there. Thank you very much indeed for bringing us some context. Yonela Cholan, Research Officer at the Wilfred Martins Centre for European Studies. Okay, let's wrap the show up. We are continuing to watch events unfold in Ankara, where the NATO summit is taking place. We are awaiting, I think, probably at some point, a family photo, but we are seeing live pictures coming from there right now as President Erdogan and the NATO Secretary General continue to greet their guests, and we are going to get a family photo, we think, probably within the next few minutes. A sign of unity, a show of unity, maybe. There doesn't feel like there's been much unity coming through from President Trump this morning. Oliver Crook is there for us. He is our Europe correspondent. Ollie, how are those comments from President Trump reverberating at this conference?
I mean, I think it was really a sort of jaw-dropping press conference there with the President of the United States alongside Secretary General Mark Rutte, the Secretary General of NATO. There was plenty of news to unpack as that was sort of unfurling, whether it was on Greenland, the comments on Spain, of course saying that he's very unhappy with NATO, but the bombshell came when Trump said effectively that the ceasefire with Iran is over. It's interesting, he was asked the question by a journalist, basically how he saw the MOU, if he thought the ceasefire was over, and you could see it in his eyes. He took a beat, he said, that's a very interesting question, and then, very conscious of what he was doing, saying that effectively, as far as he's concerned, the ceasefire is over. That has obviously had a large impact on the market, with oil surging and stocks selling off across the world, and it's something now that is going to dominate this conversation here in Europe and here at the NATO meeting. I mean, I was talking to a number of guests, some prime ministers, some foreign ministers, members of NATO, about what the sort of situation is Iran, how they view it, and there's a real question about if this war keeps going on in a kinetic fashion, you get into into September, you get into October, you get into November, you get into the winter, that's going to have a massive consequence here for Europe. We're still seeing the price on oil relatively muted. We haven't broken through $80 a barrel. But for the Europeans, this could be a crisis that could really rip through the entire market, rip through the entire economy. And there's, of course, no need for additional sort of headwinds for the European economy.
Is NATO stronger or weaker after that press conference?
Listen, Guy, I think that none of the sort of comments are anything that are terribly shocking apart from the sort of the Iran comments. I don't think we were ever going to get a President Donald Trump who feels sort of euphoric and great about the NATO alliance, who sort of pledges his allegiance to Article 5. That was just never going to be in the cards. For the Europeans, it was about not rocking the boat. And you saw the sort of Mark Rutte, Secretary General of NATO, his High Wire Act, basically advertising everything the Europeans have done, saying that it was thanks to Donald Trump, that it was thanks to Donald Trump that there's now effectively $1 trillion that is being spent on defense, and really trying to flatter the President of the United States. Whether or not that will be effective, we'll see at the end of this meeting and see what Trump has to say at the end of this day, expecting a press conference from there, and of course the communique, what it will contain on Russia, what it will contain on Ukraine, and of course what it will contain on Iran. And of course the very key meeting we're watching, is that one-on-one with President Trump and Zelensky, if that is not pushed entirely to the back burner at this point.
Oliver, thank you very much indeed. Ollie Crook, our Europe correspondent in Ankara. Let's wrap things up with a quick look at where we are with markets. When I got in this morning, first thing this morning, we had a positive NASDAQ futures story. You now have a sharply negative NASDAQ futures story. Take a look at the front end moves that we're getting, particularly here in Europe, actually less so in the United States. Big move at the front end. The story, though, comes and emanates from crude, which is up by, let's call it circa 6% this morning in terms of the TI and the Brent contract. That is the story now that markets are pricing in. They're pricing in higher inflation. You've also had this massive tech sell-off in Korea overnight as well. So much going on. I'm going to leave you in the capable hands of Ollie Quinn. The brief is coming up next. This is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
MOU dead?
It's a very interesting question. To me, I think it's over. I don't want to deal with them anymore.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil jumping after those comments from President Trump that the ceasefire, as far as he's concerned, is over. This after targeting 80 sites in Iran and having revoked those oil waivers. This all as NATO gathers more meetings set for a second day in the summit in Ankara. So let's take a look at markets then, because we are seeing the war trade coming back on. This after a host of actions yesterday, and on the flip side, Iran targeting Bahrain and also Kuwait. It remains to be seen whether this escalates or whether we get a pause in activities. Trump did say that the negotiators could continue negotiating. As far as he was concerned, it didn't matter. He didn't want to deal with Iranians. As you can see, it's being reflected in the oil trade. WTI, which was below 70 yesterday, right back almost at $75 a barrel just in the last little while. Brent crude headed for $80 a barrel, and European gas futures, they were up more than 4% yesterday, up another 5% today. Yields-wise, we've been rising across the board. We were above 5% at the close of the session yesterday. Right now, we're at 507.21. If you look at the two-year yield, all the way up past 4.21, and futures lower today as well, taking another leg lower after those comments just in the last half hour, by the way, from President Trump in response to a reporter's question in Ankara, Turkey. As you can see, S&P futures down 1%. Nasdaq futures pointing to a decline of more than 1.3%. This all, of course, as everything seems to be blowing up in Korea as well. We have hit a bear market, and I do want to point out that the VIX in the United States is now above 18, having jumped after those remarks. So let's get to more about that bear market and that semiconductor trade just falling off the charts. Winnie Su is in Hong Kong for us. Winnie.
Bonnie, as you just mentioned, we are seeing Asian stocks extending losses following those comments from Trump, especially with oil prices surging as well. Now, we have most of the markets in our region closed already, but when it comes to India's Nifty 50, we are seeing losses extending to about 2%, and also the volatility gauge for India also rising the most in about 4 months. Now, when it comes to elsewhere in Asia, as you just mentioned, South Korea's Kospi Index down about 5%, entering a bear territory, down about 20% from its recent peak, hit just last month. Now, this rotation away from tech is actually going into the underperformers in Asia. As you flip the board and take a look at where it's gaining today, specifically in shares listed in Hong Kong, a gauge of Chinese shares listed in Hong Kong up about 4% today, and that's being led by the gains in Alibaba, also with some optimism about its upcoming earnings as well. Back to you, Bonnie.
All right, we'll be keeping an eye on the Korean trade, obviously, but also the China trade, with investors rotating into what appears to be a cheaper AI trade as well. Now, let's get across to London. We want to get a look at what's been happening in Europe. Justina Lee is with us.
Good morning, Bonnie. It's a similarly bearish picture here in Europe, with the Stoxx Europe 600 down 1.8% and energy being the only sector that's trading up today. Now, of course, the higher oil is also rippling through the bond market here. This German 10-year bond yield is up nearly 7 or 8 basis points. And what's really interesting here is that the French bond yield is up like 11 or 12 basis points. So we can see that premium widening there. And that's because a court yesterday cleared far-right leader Marine Le Pen to run in the presidential election again. And she has said that she will do so. And I think this is reflecting the uncertainty over the political outlook at a time when there's been a lot of investor concern over the fiscal sustainability of the French government. Now, when it comes to bonds, and if we flip the board here, we can see that ultimately it comes down to expectations for what the ECB is going to do with oil still rising. And we can see here a big jump in recent days as investors increasingly price in more than one full rate hike by the end of this year, probably coming around the September time, now that it seems like the inflation outlook is worsening again, Bonnie.
Justina, thank you so much. So much to parse in today's market. Let's get straight to Turkey, where President Trump has just said in the last few minutes he believes the ceasefire is over.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them.
These comments coming after the US launched a new wave of strikes against Iran, having revoked that waiver allowing sales of Iran's oil. Bloomberg's Oliver Crook is at the NATO summit in Ankara, where those comments have just happened. Ollie, the president seems sincere. He has left a few caveats in there, like, for example, the negotiators can keep talking. And he's at the NATO summit. Will NATO leaders try to talk him down? The markets certainly think war is back on.
Yeah, this is the last thing that the NATO leaders would like to see happening in the oil market, would like to see happening in Iran. All the people I've spoken to, you know, there's been a very active conversation about what the European role is to potentially, obviously, de-escalate, to open up the Strait of Hormuz. Of course, this is all in the American sort of court because the Europeans have wanted to take no part. And in that press conference with Secretary General Mark Rutte, President Donald Trump, it was already pretty dense in news. And until that moment, that sort of bombshell, he was asked by a reporter, completely unscripted, how do you view the ceasefire? Do you think the MOU and the ceasefire are over? The president took a beat. He did think about it, and it was clear that he sort of knew the gravity of what he was saying. And he says that basically, as far as he's concerned, the ceasefire is over, that the MOU has failed. Now, the consequence for that within the markets, you've been elucidating throughout the morning here, the last couple of minutes. Of course, we have not seen the oil price go quite to that same level that we saw in the war when it was in sort of most kinetic activity, but it's certainly rising pretty precipitously. There's a real question about what comes next, what those conversations in the NATO are going to be. You know, there's a lot of important business about burden sharing, about Ukraine, about Russia, and I think the hope certainly for Zelensky, who is here, is to not be completely overshadowed now by this conversation about Iran and sort of the path forward. You know, President Donald Trump there saying that the Iranians are scum, that they're liars, that they are cheaters, that there's basically no way of working with them, and that's a very different message than what we got from the President of the United States even yesterday, where he was saying this new crop of leaders in Iran are people that we can work with. That obviously has changed in the president's mind over the last few hours.
Ollie, you mentioned that Ukraine obviously is taking a little bit of a back seat. What has been managed to be achieved up to now at the NATO summit, at least, even if the narrative moves on? And also, I want to ask you about those Greenland comments. How is Denmark reacting to that?
Yeah, I mean, Vani, there's really so much to unpack here. I mean, on the question of Ukraine, there is expected to be that bilateral meeting with the President of the United States and Volodymyr Zelensky that was originally scheduled for about 2.5 hours from now. We'll see if that goes to schedule. As we've been discussing over the last couple of days, Vani, for Zelensky, he's really seeing this opportunity of gaining momentum on the battlefield, saying that he does have cards to try to re-engage the President of the United States in the diplomatic effort, get him on his side, trying to get some of that hardware, some of that air defense. As you mentioned, he also made those comments in that press conference on Greenland, again, reiterating the problem that Greenland is a big problem. It's a big moment of dissatisfaction for the President of the United States in his relationship with NATO, that the United States needs it, Denmark doesn't need it, and he sort of went on a very sort of long diatribe there about how quickly Denmark fell to the Nazis, and that basically the United States came in, took care of Greenland, and should never have given it back. But again, Vani, I just want to flag just another risk in this conversation that we haven't really talked about, got lost in this press conference. Trump talking about Spain. Spain is the only nation that has not committed to spend 5% of its GDP on defense and NATO. This has been obviously a contentious problem, not just for the President of the United States, but a lot of other European allies. But basically Trump saying that he wants to cut off trade with Spain. He wants to cut off basically contact with summits and leaders of the Spanish. That could have huge consequences. The EU trades as a bloc in terms of the trading relationship. It is not individual. It is not bilateral. If the Trump administration does move against Spain, it's going to be a very difficult conversation for the European Union. It could blow up the entire trade agreement that currently exists between the EU and the United States that has been hard fought, took forever to put into place, and of course is worth more than $1 trillion.
True. Spain didn't allow U.S. troops use its bases either, Ollie, so I'm sure Trump had that in the back of his mind as well. Thank you so much, Chief Europe correspondent Oliver Crook. Let's get more from the Middle East now, as the situation seems to be escalating pretty quickly. Bloomberg's Abir Abu Omar joins. Abir, obviously these remarks from President Trump about the ceasefire, in his opinion, being over have just come, so we may not have a reaction from the region yet. But what did Iran target in the region overnight?
Yeah, Vonnie, so we saw a reaction on the U.S. attacks, the 80 targets in Iran. Iran did say through the deputy foreign minister earlier this morning that the retaliation by the country will be decisive. And so we saw that happening in the early hours of the morning, and then we saw President Trump making those remarks in Ankara, quite serious remarks. And it was just important to caveat that by the end of his announcement, he did say that he will let the negotiators go on with the talks. They have to come back to him. And by the negotiators, he means Steve Witkoff and Jared Kushner, who have been carrying on those talks in Qatar. That is the latest round of talks in Doha last week. And so we don't have a reaction on President Trump's remarks from the Iranian side yet, but it does look like Iran is asserting dominance when it comes to the Strait of Hormuz, particularly, Vonnie. What we saw overnight is the retaliation by the Americans when it comes to Iran's attack on the ship, the Qatar LNG-laden ship on the Strait of Hormuz yesterday. And so the U.S. thought that was unacceptable and essentially targeted some 80 targets in Iran or so, most of those weapon launchers, most of those defense targets. Another thing that's quite interesting this morning is that we understood that Pete Hegseth was going to Israel today or tomorrow, and that trip is now canceled, just being reported now. And then Iran's retaliation to the U.S. attack also came in the shape of attacking Kuwait and Bahrain, targets in the GCC that it had singled out in previous times. So we're seeing that happen again. Kuwait, just now, before I came on with you, Vonnie, saying that it intercepted 2 missiles, 13 drones in the early hours of Wednesday. No casualties, no injuries reported. But we're still seeing this tit-for-tat sort of a narrative happening again. At the heart of all of this obviously remains the Strait of Hormuz, the movement there. You've seen the instantaneous market reaction to the remarks by President Trump. We're seeing Brent crude at around $79 a barrel now. Granted, not the same levels that we saw, the 125 during the peak of the war in the region, but we're seeing movement in markets taking these threats a little bit more seriously than previous times. And it does look, Vonnie, that this is the most serious narrative escalation that we've seen since the arrival of that MOU about 3 weeks ago. We've seen skirmishes here and there in the Strait of Hormuz in GCC countries, namely Kuwait and Bahrain again, but nothing as serious, quite as serious as this. So for the time being, what we're monitoring is the reaction by Iran, and if their response to President Trump is going to be as serious as what he just laid out about 30 minutes ago or so.
Exactly, Abir, and also shipping in the Strait, right? Does it completely come to a standstill again? It hadn't come to a standstill, but it was starting to be a little bit more precarious for the ships that were in there. Abir Abu Omar, thank you for joining us from Dubai. And I just want to point out, we were watching the family photo being taken there at the NATO meeting. You saw host Viktor Orban along with the Secretary General Mark Rutte, and beside him President Donald Trump, who had said he was in a good mood. Not sure if that good mood is holding, though, after the reporter's question and President Trump effectively declaring, in his opinion, the ceasefire done. And you can see the reaction immediately in Brent crude and in WTI. Brent crude trading very close to $79 a barrel. We're back well at levels that we haven't been at for several weeks now. European gas future is up more than 5%. Now to other top stories trending on the terminal this morning. Singapore's Temasek is expanding its AI investments after its portfolio reached a record $400 billion. It plans to raise its AI allocation from 6% to as much as 15% by 2031. Temasek is also increasing its focus on the Americas. Hedge funds posted their strongest first-half run in 5 years. According to research firm Pivotal Path, the industry returned 7.2% on average through June. Tech-focused funds, though, led the gains, posting a much higher average and obviously helped by a rally in chip stocks. Maine's Democratic Party is urging Graham Plattner to withdraw immediately from the U.S. Senate race after new allegations of sexual assault. The party is looking to unseat Republican Susan Collins, the seat key to winning control of the Senate in November. Plattner's team did not respond to a request for comment. Coming up, the AI rotation trade gathering pace in Asia. We'll take a look at the winners and losers next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Investors pulling money out of chip makers and putting it into China. The shift pushing the Kospi into a technical bear market after gains that made it the world's best performing major benchmark this year. Matt Bloxham of Bloomberg Intelligence joins us now for more. So in 12 sessions, we have been reduced to a bear market in Korea, Matt, although if you've been in it from the start, you've made plenty. Is this a permanent shift now, or is it possible that Korea will pick up again?
It's a great question, and I think it all depends really on what happens next in the AI trade. I think, what we've seen this week is results essentially kind of come in with market expectations. The market has been behind the momentum in the AI business for maybe the last 6 months to 12 months, and that's kind of caught up now. And I think the results suggested that maybe at least for the near term, there isn't going to be another upward surprise in the kind of pace at which the big hyperscalers invest in AI capacity, and that's going to kind of curtail any incremental positive surprise for the likes of Samsung and SK Hynix. So I think that's kind of where we stand right now, and so in that context, it's not perhaps that surprising that investors think, okay, the momentum has moved away into other parts of the kind of AI and technology space, which is why we're seeing the shift into China, because the likes of Alibaba have been quite muted. The market expectations for those companies have been quite subdued, and that maybe there's some more value to be found there.
Yeah, so Alibaba was up more than 10%, Tencent up about 4%. Is China the new Korea, or is it going to take some time for China to catch up a little bit better to the US?
Yeah, no, the fundamental story there with China Tech is quite different. Yeah, it's not so much at the moment, at least, on the kind of hardware side. It's more on the services side. I think what we've seen with Alibaba today is some kind of positive broker notes out previewing the upcoming earnings, and that after some subdued momentum on e-commerce, both in terms of sales growth and profitability, that actually the numbers they report are going to be a little bit better than expected, and that perhaps the tide is turning in China in terms of economic activity.
All right, Matt, thank you so much. You'll be back later in the program. We have lots more to talk about in the tech sphere. Matt Bloxham of Bloomberg Intelligence. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, and it's time now for your front page news. First up, the Wall Street Journal on the Manhattan high-rise at risk of partial collapse after columns buckled and floors sagged. The building is the former headquarters of Pfizer that's being converted into apartments. A representative for one of the developers, Metroloft, says the company was working with city officials to understand the scope of the situation. Next up, the Financial Times on Marine Le Pen's decision to run for president despite judges upholding her embezzlement conviction. The FT says it's a risky bet, but it does end more than a year of uncertainty over whether she or her hand-picked successor, Jordan Bardella, would lead her party's campaign to replace President Macron. And finally, Bloomberg reporting UniCredit is moving closer to control of Commerzbank after investors tendered enough shares to raise the stake it can potentially oversee to 47.6%. We're going to stay on this story now and bring in Bloomberg's Tom Metcalf. So, Tom, what exactly was the investor reaction? Are they supportive of this move?
Yes, well, so far it's been somewhat muted. The shares of both banks not really moving too much. I mean, I think what this really establishes is Orchel is certainly playing his hand very well. Commerzbank have actually just come out and said, look, we take note of this result, but again, they're keeping to their stance that, you know, the normal investors, the retail investors, are just not participating in this. I think from UniCredit's point of view, they're like, we've got 47.6% effectively of this bank, so, you know, certainly some investors are behind our pitch. So it does seem, look, the end game's still months away, but my take would be, you know, this is a victory for Orchel. 47% is probably more than they thought they would get. They've gone up from 29% now to close to 50%. And effectively, you know, in any other world where you don't have these kind of political, regulatory, labor representatives all kind of with a big stake in the game, you would say, you know, this is UniCredit's bank effectively now. But obviously there's a lot of resistance, a lot of very powerful resistance. So, you know, the final result, the final shape of what actually happens between these two firms is still, you know, I do think still up for debate.
What about Bettina Orlopp? She's not going to give up without some kind of a fight. What happens there?
Yeah, CEO of Commerzbank, look, she has been just so consistently anti this, you know, lining up as you'd expect with Berlin, saying, you know, this is not appropriate, we're not getting a premium here, you know, let's keep Commerzbank independent. You know, certainly the relations between the two firms I would characterize as a bit frosty, you know, certainly be exchanging barbs publicly. So I think if this does start to move towards a world where effectively UniCredit is in de facto control, I don't imagine she will be CEO of Commerzbank for too much longer.
Germany doesn't love this either, Tom, and we'll have to continue to monitor the situation because Germany will certainly have a response at some point as well. Tom, thank you for all your reporting. That is Bloomberg's Tom Metcalf. Want to bring you a market check now, though, because the situation is intensifying this morning. President Trump has just made comments at the NATO summit to the effect that he believes the ceasefire with Iran is over and he doesn't want to deal with them anymore, although he is allowing negotiators continue talks should they wish. It had an immediate impact on markets, which were already jittery after the 80 strikes that the U.S. made on Iran overnight and after the U.S. had revoked those oil sanctions waivers. So crude in New York, above $75 a barrel. Brent headed towards 80. We have futures lower. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. We're seeing a big market reaction after President Trump says, in his opinion, the ceasefire is over between the U.S. and Iran. Oil spiking, futures pointed lower. This as the NATO summit continues in Ankara. We're going to have coverage throughout the day from that NATO summit. We're also watching tech as Korea enters a bear market 12 days after hitting peak. So let's get to those markets now. We are seeing oil rise more than 6% apiece for Brent and WTI. We're headed towards $80 a barrel on Brent just after these comments made less than an hour ago in response to a reporter's question after President Trump and Mark Rutte were speaking at the NATO conference. The reporter asked if the MOU was still live, and the president said he believes the ceasefire is a waste of time and is over. He doesn't want to talk to the Iranians, though he did acknowledge that the negotiators can continue to talk if they want to. He just thinks it's a waste of time. European European gas futures continuing to climb up 6%. If we take a look cross-asset-wise, you'll see S&P futures, which were already lower before these comments, taking another leg down. Tech having another difficult day. And yields, which spiked yesterday, up another 2 to 3 basis points across the board. Safety trade, and of course, there's an eye or two towards the FOMC minutes coming out later on today as well. You can see VIX index spiking now too as well, although these days a spike really means, you know, up to 18 and change. Let's get to some individual market movers now. Plenty going on in the world, even without the latest developments. Chloe Melly, what have you been watching?
Good morning, Vonnie. Alibaba is up very strongly this morning as investors turn quite optimistic on its earnings, with this enthusiasm, this optimism really centered around its e-commerce activities rather than any kind of AI efforts. And this is part as well of this broader AI rotation trade that we've been seeing, where chip makers are losing out and money is being poured into internet companies like Alibaba. Moving on to US technology stocks, including Micron and SanDisk, seeing quite a lot of downside there this morning as this AI rally cools in Asia. We are seeing this spillover in the US, and we're down, as we can see, quite significantly, more than 6% for both of those. And finally, Navitas is also slumping this morning after Warp Speed filed a patent infringement lawsuit against the company. And so we are down a lot this morning on the back of that, about 9% for Navitas in pre-market trading.
Okay, a big move there. Chloe, thank you so much. Chloe Melly there, all over the tech trade. President Trump's latest remarks on the tentative US-Iran ceasefire sparking fresh concerns. Joining us now is Mark McCormick, Chief FX Strategist for BMO Capital Markets. Mark, the dollar is stronger again today. I mean, it had been strengthening once again anyway. Do you imagine that this fresh injection of jitteriness into the market over what might happen next in the Middle East will have an impact on the dollar trade?
Yeah, I think the only thing it's going to do is reinforce it. I think there's kind of two tensions in the market that you can think about right now. The market's been pricing in a Fed hike. It's been pricing in hikes by other central banks. The RBNZ hiked overnight. And that tension's kind of been met with like very positive sentiment on risk assets. So equities, like, even though there's been a couple wobbles, basically since we've been seeing the memorandum of understanding coming out, the equity markets have kind of loved that news. So that, like, coming into this, there's a positioning tension between rate hikes and risk sentiment. We've seen that correlation actually work in the dollar. It almost looks like a sandwich a bit, where on the one side you have the dollar going up as rates are going up, and then the dollar going down as risk sentiment, it turns positive. So the point that we've been highlighting is, number one, is you should be focused on rate hikes. You should be focused on higher for longer. You should be focused on the fact that central banks are turning much more focused on inflation, and that is going to be a driver of negative risk sentiment. And now this just adds to that story, where you have higher rates, and now you basically have geopolitical tensions flaring back up in Iran.
Exactly. It makes that portion of the Fed's discussion, I suppose, a little bit more obvious, right? The inflation portion. That said, we did get that week employment report. Can we just ignore it?
I think you could. I think you toss out one report, right? I think the way that we kind of look at markets is very similar. Maybe the way that markets kind of trade these concepts and the way that they're kind of thinking how central banks view them. But essentially, if you look at the data in the U.S., you have data momentum, you've got data revisions, you've also got surprises of whether or not the data comes in better than expected. All three of those indicators are running positive. So essentially, the Fed is kind of dealing what looks like an accelerating economy into Q2. And again, they haven't hit their inflation target in well over 5 years. And if you look at like core sticky versus flexible inflation, sticky inflation stuck above 3%. So again, I think what's happened is the Fed cut last year because they were worried about downside risks to the employment sector, to the labor market. Now they're worried about upside risk to inflation, and you could kind of see it, the downside risks to the labor market have disappeared. So whether or not you want to look at one report, the moving average on payrolls is running about 110,000. It's well above break evens. I think their presence has now shifted much more to inflation, which is the elephant in the room, and it's not the labor market.
Mark, many currencies, not just emerging market currencies, but I suppose particularly emerging market currencies, were just beginning to find their feet again, right? After months of turmoil thanks to the war. Now you also have very unsynchronized central banks. What does it all mean for potential turmoil in currency markets in the next month or two?
Yeah, I think that's a great point, because our view here is that there hasn't been full participation in the dollar. You could call it like a multi-phase dollar. Dollar rallied against G10, dollars rallied against EM Asia to some degree. If you look at the Korean won, it's been one of the weakest performer currencies on the year. But it hasn't strengthened against all the LATAM currencies, maybe except Chilean peso. Where I think this is going is the market's kind of like figuring out what kind of regime, what kind of state it wants to be in. Rates are becoming much more a focus for markets. A hawkish central bank, what that's doing is that's impacting EM because the rate differentials and kind of the carry story in LATAM is not as compelling because these are the most overvalued currencies. For the last couple of years, a lot of people wanted to sell the dollar because they said it's expensive. What's interesting is the dollar is no longer as expensive on our models. What we kind of see is LATAM is very expensive and Asia is very cheap. So essentially the market is basically the most overbought position in FX right now is the carry trade. So I would say the thing that I'm worried about here is this kind of feeds into EM and it starts to knock LATAM lower. Some of the favorite trades of the year, like Brazil, people have really loved Colombia. Those are, I think, positions that are at risk now. And I think the dollar strengthening on the back of higher interest rates or a stronger Fed or continued data is not a reason to buy Asia value. So value in FX is still a trap. So I think we're stuck with what feels like a broad dollar, stronger for at least the next 3 months, which we'll see the DXY touch at least 103. That's euro around 111, 110. And that's where I think things are going to start to peak out.
Wow. Okay. So the DXY right now at 101.12. So that would be quite the move. Treasuries, not the safe haven play that it would seem. Neither is gold, Mark. So why should the dollar be the safe haven?
I think part of it, right? You do not want to buy gold when real rates are going up. I think it's a very simple trade. Gold has really benefited from what people classified last year as a debasement trade. That debasement trade is kind of miraging itself as what looks like Goldilocks, which was financial conditions are easing, global growth was picking up. There was a story that as long as rates are going lower and there's a lot of political uncertainty coming from the U.S., pension funds, sovereign wealth fund, international investors are going to hedge their dollar exposure. There's been very little evidence of that outside of like the early stress period in April. But that kind of created this story around the debasement trade. And that's where gold and silver, Bitcoin, these things did really well. But basically, they were just trades where real rates are going lower and gold benefited. So I think the big thing here, again, is that positioning in gold is now kind of back to more neutral levels. But if the dollar continues to advance and it's being driven primarily by a rates factor, gold is in trouble. So there's another leg lower that gold can go. And again, very similar story with Bitcoin. These are not safe haven assets. In an environment where the Fed's hiking, U.S. equities are outperforming, even if they're more volatile, that's a dollar market.
Really briefly, Mark, we're actually back at 162.47 on the yen again. I thought it was perhaps back into safe territory. Will it be okay? I mean, will the Bank of Japan hike soon enough for those selling the yen to run for the hills?
So this is primarily the operation of the value trap in FX. People want to buy Korea, they want to buy the yen, they want to buy Taiwan, they want to buy some of these low yielding currencies. Again, I would advise this is not the time to buy FX value. There's so many things that has to happen in Japan. Number one, the Fed just has to be much more dovish. They have to say we're not hiking rates, we're going to focus on cutting rates. The economy is evolving, so there's a very, very, very low probability of moving in that direction. The other side of it is the BOJ is extremely far behind the curve, and they're basically like reinforcing fiscal dominance and fiscal policy that's coming from the government in Japan. So essentially what you're seeing is while real rates are going up in the US, they're actually going down in Japan. And our models are telling us that dollar yen should be trading at 160 to 165. I don't think we should be worried about intervention at 163. I think we should maybe be worried at intervention at 165, and we're in a 160, 165 range for a longer period of time here in dollar yen.
Mark, thank you so much. Very appreciate you joining us this morning of all mornings. Mark McCormack of BMO Capital Markets. Now to other top stories trending on the terminal this morning. Hedge funds posting their strongest first half in 5 years. According to Pivotal Path, the industry returned 7.2% on average through June, with tech-focused funds posting a much bigger return than that, helped by that rally in chip stocks. And Exxon profits jump in the second quarter, the $3.7 billion rise in profits driven by higher oil prices. Profits also boosted by gains in the company's refining and chemical businesses. Coming up, President Trump scheduled to meet more NATO leaders after just saying this hour the ceasefire with Iran is over in his opinion. More on that next.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them.
President Trump calling the U.S.-Iran ceasefire a waste of time there, and his comments coming after Washington struck more than 80 sites in Iran in retaliation for attacks against commercial shipping in the Strait of Hormuz. Kate Ackley of Bloomberg Government joins us now from Washington. These comments caught the market at least by surprise, Kate, even though we had movement overnight, right? Those 80 attacks and also, you know, the revoking of the sanctions waiver. Is it possible that President Trump could be reeled in, that perhaps his people will say, okay, that's enough now, or what happens next?
Right. There's a lot of uncertainty, and as you've seen with the oil and gas prices, there's a lot of volatility that's been, you know, connected to this conflict with Iran. NATO officials, you know, President Trump is there in Turkey for these, you know, this NATO summit. NATO officials did say, you know, that Iran was violating the ceasefire. So there is some, you know, maybe international agreement. But it certainly puts more uncertainty, you know, globally, but also here as we're, you know, focusing on the U.S. midterm elections that are coming up, where affordability Oil and gas prices have been, main talking points, especially for Democrats. Republicans have been concerned about when the price of gas was rising because of the conflict there in Iran. So a lot of uncertainty, both, here in the United States as well as abroad.
Yeah, and gasoline prices are not back to where they were before the war started. Also, as you point out, he may have felt emboldened by his reception at NATO. The leaders were very, very welcoming of him, and Mark Rutte in particular, saying very nice things to President Trump about him. Domestically, I want to point to a story. Obamacare premiums, Kate, are poised for a second straight double-digit jump. We're just seeing this coming out now, that it's another 14% on top of a 20% jump. Does that mean fewer people will be insured?
Most likely. I mean, that's what we saw this year. Congress was not able to come to an agreement to renew these premium subsidies that had been in place, during the COVID era. So people saw, people on the Obamacare program saw their premiums really go up. I think it was something like 20% this year. And yes, our reporting has been that, people have dropped out of the program. They have not been able to afford it, and so they don't sign up for this year, and then that could happen again next year too, with premiums to be going up double digits yet again. This is something that Democrats, especially on the campaign trail, have talked about. It fits in with their message on affordability. Healthcare affordability is something that people on both sides of the aisle are talking about. Obviously, constituents, voters in America have seen rising health prices because of this, but also other reasons as well.
And it's a vicious cycle. The fewer healthier people that sign up, then the more expensive premiums become, of course. Kate, thank you so much. Kate Ackley of Bloomberg Government in Washington. Oil extending gains amid mounting tensions between Washington and Tehran. The U.S. had also walked back that waiver allowing new sales of Iranian oil. Bloomberg's Mitchell Furman joins us now. Mitch, we're headed towards 80 on Brent, 75 on WTI. Does this reflect the reality of the situation, that things may be escalating, the strait may be starting to close again, and Iran should not be selling oil anymore, to U.S. partners at least?
Yeah, well, the ceasefire, the tentative ceasefire ending brings traffic through the Strait of Hormuz back into question. This comes after yesterday's was the biggest attack since that tentative ceasefire came into effect last month. The ships hit in the Strait of Hormuz include 2 large oil tankers and 1 Qatari gas carrier. So now the question becomes, what will traffic look like through the strait?
Had it resumed fully, Mitch? I mean, how many tankers were we seeing going through the strait? And did the attack in the last day or two, the small number of attacks that we have seen, were they causing shippers to second guess their plans?
Yeah, I mean, there had been a trickle of ships coming through Hormuz in recent weeks. It had increased a little bit since that tentative ceasefire went into effect last month. It all kind of varied based on companies and ship owners' risk appetites. We saw a lot of the Western large oil companies be kind of the most hesitant, and a lot of this also revolves around insurance and how willing insurance companies are to insure these ships.
Mitch, where were we on refilling inventories and stockpiles and so on? It felt like things were really coming to a conclusion, and that countries and sovereigns and companies could start refilling those tanks. Did we get anywhere with that?
Yeah, no, refilling is definitely a longer-term question. Especially, China has been the big one for a lot of oil market watchers to follow, as their massive inventories have, a lot of folks are seeing those draw down a bit. Obviously, there was the coordinated International Energy Agency drawdown. So countries are still, stocks have been dwindling globally, and the refilling, likely won't happen until this the Strait of Hormuz really reopens.
All right, Mitch, thank you so much. We'll be keeping our eye trained on the oil markets. Bloomberg's Mitchell Furman. Turning to tech, because of course that's firmly in investors' radars as well. Today, the AI rotation trade gathering pace overnight in Asia, with investors pulling out of Korean chip makers and actually turning to Chinese tech stocks, sending shares of Alibaba, for example, higher, but also Tencent. Matt Bloxham of Bloomberg Intelligence joins. So briefly, Matt, we are now in a bear market in Korea. Is it a permanent situation, or do we see some buying again?
I think that kind of largely depends on what happens next in the whole kind of AI demand story. You know, I think what we saw this week with the Samsung results was that the market's largely caught up with where demand is, have been massively behind for a few months. And the numbers were a little bit ahead, but not much ahead. So I think the view now is that, okay, difficult to see where the next upside surprise comes from. And so whilst we're in that kind of pause, the momentum shifts to kind of more underloved parts of the tech market. And that's why we've seen the kind of swing into Alibaba and some more interest in Chinese tech stocks out in the Hang Seng. I think there's been obviously issues recently about kind of muted demand in China, particularly for e-commerce, but some of the kind of preview notes coming out from brokers, particularly for Alibaba, suggest that actually there might be some improving momentum, both in terms of revenue and profit for that company, and that perhaps investors have undercooked their appreciation of the value that's there in some of these big China tech stocks.
Yeah, and just looking for something cheaper, right? Almost anything is cheaper these days than some of the stocks in the Kospi. Now, we're also hearing that OpenAI is set to release its most advanced model widely now on Thursday. So we have 3 tiers, Sol, Terra, and Luna, and apparently they can sell it to anybody. The government has pulled back, according to Axios. How is the model performing that we know of? Is it doing better than other models?
Yeah, I've not personally kind of seen too many kind of hard stats yet, but I think this is a kind of a positive development for OpenAI, and I think kind of more broadly for the US large language model developers, including Anthropic, because obviously we had that surprise move recently from the US government putting a block on Mythos, and the fact that companies are now able to kind of work with the US administration to actually get models approved and out there for commercial use is encouraging. I think for OpenAI, this definitely kind of helps them to maybe establish some fresh momentum relative to Anthropic. So yeah, overall I think an encouraging move.
All right, Matt, thank you so much. Never a dull moment. Matt Bloxham of Bloomberg Intelligence. Coming up, we're going to set you up for what's going to be a difficult trading day next. This is Bloomberg.
Most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at some of what's ahead today. President Trump expected to speak in the 9 a.m. hour from the NATO summit. We also get June's FOMC minutes out at 2 p.m. Eastern. And then earnings from Levi Strauss coming after the market. But of course, all eyes are going to be on so many things today, from potential escalation in the Middle East after President Trump declared the ceasefire pretty much dead as far as he was concerned. He said that negotiators could continue negotiating, but ultimately they'd have to come back to him. And he feels like the whole thing is a waste of time. He spoke after speaking with Mark Rutte in Ankara at the NATO conference. And this is your picture following those remarks. Oil really reacting. We're put on $5 or $6 on WTI. We're headed towards 80 on Brent, although we're obviously well off our peaks. European gas futures higher, and futures pointed lower, though they were thanks to the chip trade. Anyway.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
is still long-term leadership, but it's changing within.
You have investors sort of hopscotching back and forth between these themes.
We're going to continue to see these mini pockets of rotation.
This kind of digestion is completely normal, and frankly, we'd argue it's healthy.
Overall, it's still constructive for the entire AI trade.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, shaking up the bull market. Crude bouncing. President Trump says the ceasefire with Iran is over. Investors rotating out of chips, sending South Korea into a bear market as Amazon's $25 billion debt offering is receiving a cool reception. The test for sentiment is building.
There have been three cylinders of the rally so far this year. The first is inflation has peaked and is going lower, which potentially releases some of the pressure on the Fed. The second is that semiconductors are in endless demand and that a lot of the buyers are insatiable and price insensitive. And the third is that investors have insatiable demand for debt and investing in all things related to AI. All three of those being really challenged today with oil prices, with what's going on with semis, as well as this question of just what the tolerance is of bond investors.
Well, let's start with crude, and we can begin there. So a 6% move on crude, higher, WTI and Brent, and a 10 basis point move at the front end of European curves. That's the difference this morning, how the US bond market is responding to this development and how the European bond market is responding to this development. You'll see US 2s up 3, German 2s up 10. UK 2's up 11. There's a sense that one central bank is more likely to respond to this than another.
And Christine Lagarde hasn't really put that to bed with some of the ambiguous commentary. You could argue that Europe is in a much more difficult situation considering that they have a much more direct inflationary input. The U.S. is an oil price producer. But that said, a real question here as you start to see the front end start to tick up, are we seeing, especially after the labor market report last week, not stagflation, no one's going to ever accuse the stag in the story in the United States, but still a bit of a toxic brew heading into the July meeting.
2s at 420, 10s approaching 460, 30s stateside, comfortably through 5% now at the long end of the curve. Let's talk about this debt market. Amazon coming to market, offering at least $25 billion of debt. The reception was pretty cool. And they offered a concession as well. There was some real weakening, and you saw that weakening in other debt from other tech companies as well in the secondary market. I'm not going to say it was a full-blown pushback from this debt market, but just a little bit of one, something to take note of.
Thank goodness, after more than $100 billion of debt from Amazon so far this year, there is a sense of a bit of discretion. This is no wholesale kind of abandonment of Amazon. Nonetheless, the fact that it was only twice oversubscribed versus 5 times oversubscribed from the deal from Amazon earlier this year, the fact that credit default swaps on Amazon are reaching some of the highest levels going back as long as that contract is, gives you a sense of how people are hedging against risk. Key question, why are they raising so much money? And ultimately, people say they have the cash, but why not raise it when they can? Again, all pointing to, is this the peak in borrowing conditions for some of these AI companies?
We're calling it the supply monster, and you're seeing it on the debt and the equity side. This was the debt story. In a few days' time, you'll see it on the equity side. SK Hynix coming to the US market, tapping capital markets here stateside. On the equity side of things for $28 billion. Speaking of South Korea, bear market. South Korea down 20%. Since late June. We've got the semis in America down 16% over the same period. It's difficult to make a big deal of that when you're up by more than 70% year to date on both the Philadelphia Semiconductor Index and the Kospi in South Korea.
I was going to say, this is the most yawn-worthy correction that you've ever seen, simply because people are like, well, what else is new? Kospi goes up really fast and it goes down really fast. Nonetheless, the fact that Samsung came out blowing out expectations yesterday with earnings, and their shares still were down about 9%, gives you a sense that this is a sort of indiscriminate selling and raises a question about whether the momentum trade is over. In other words, did the sort of parabolic move up, as Jonathan Krinsky say, have more to fall on the way down? Does it have to reverse?
What do we always say? You can learn something from the earnings. You can learn something from how the market responds to them. We learned something from how the market responds to those earnings on Samsung just yesterday. Equity futures this morning, we're down 1.5 on the NASDAQ. On the S&P, we're down by 1 whole percentage point. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research. As President Trump says the ceasefire is over, we'll speak to the former Deputy National Security Advisor, Victoria Coates, as the U.S. blocks the sale of Iranian crude. And Tom Forte, as Amazon's latest AI debt binge draws a muted response. We begin this hour with our top story. The U.S. and Iran trading fresh strikes. The president says the ceasefire is over.
To me, I think it's over. I don't want to deal with them anymore. They're scum. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
Anne-Marie is travelling with the president in Ankara, Turkey, and joins us now for more. Good morning, Anne-Marie.
Good morning, John. Well, you heard it there from the President of the United States, basically saying for him, this ceasefire is over, though gave a little bit of a window potentially for his negotiators to continue talking to the Iranians. But he said that it has been a waste of time. And using some hot rhetoric, he called the Iranians, quote, scum and, quote, cuckoo when he talked about what is going on right now with the regime. Now, Jonathan, all of this stems from what happened yesterday. It started with Iran targeting 3 vessels. One of them was a Qatari LNG vessel. Another was a Saudi vessel. So the United States, in turn, had airstrikes targeting 80 facilities, strategic facilities for the Iranian regime. On top of that, revoking the waiver for that general license for the regime to be able to sell oil products on the open market. Iran has returned fire to some assets the United States has in Kuwait and Bahrain, and we are basically back to a kinetic war. And that is why today, all of the focus at this NATO meeting in Ankara, Turkey, will be squarely focused on Iran. The NATO Secretary General this morning did say that he thought what the U.S. did was a necessary step.
Brent crude up 6% this morning, Anne-Marie. The good news, I guess, is we're not at triple digits. The story of the week, though, the story of the last month, is that Iran has repeatedly tested the patience of the president, and the president has looked the other way. Anne-Marie, at this NATO summit, why has the president chosen this moment at this time to start paying attention again?
Well, I think the Iranian regime is going to have this conversation about whether the defiance they want to have in the Strait of Hormuz is worth the cost of those oil sales, and potentially the president taking this moment could be for a number of reasons. One, they went after serious allies of the United States in the region, a Qatari LNG vessels. Qatar, of course, is the key mediator in all of this agreement, as well as a Saudi vessel. At the same time, with the president making the strike now in Ankara, Turkey, he's really proving potentially the United States point of view to the alliance that more is going to be needed to secure the Strait of Hormuz. And already we heard from the host country, Turkey's President Erdogan, saying that they're willing to go help the United States in terms of trying to clear out the Strait of Hormuz. Remember, when it comes to the energy price shock, which we saw gas futures in Europe spike yesterday, oil, of course, obviously jumping today, this is a bigger problem for Europe, given how vulnerable they are to energy price spikes. And at the same time, this administration does not think Europe has been helpful at all when it's come to the conflict.
Anne-Marie, appreciate the time. We'll catch up with AMH throughout this morning. The latest out of Ankara at the NATO summit, the latest in the crude market. Brent pushing 80, 79 right now. WTI around 75. Equity futures down about 1% on the S&P. On the Nasdaq, we're down by about 1.5. Joining us to discuss, I'm pleased to say that Ed Yardeni of Yardeni Research joins us now for more. Ed, welcome back to the program, my friend. So I've been conditioned to ignore this situation. I wake up this morning, I want to ignore the situation. Can I ignore the latest situation in the Middle East?
No, absolutely not. I mean, this is a geopolitical crisis that just won't go away, won't end. The ceasefire, according to the president, is over, and he's clearly in a position to know and in a position to end it. So we're back to square one in some ways, back to where we were in March. I think both sides are testing one another. I think the president is demonstrating to the Iranians that while they may have obviously a significant impact on flows through the strait, he can shut off their oil to the rest of the world. The unsettling development here, I think, is it may very well be that Iran is basically out of control, that the Revolutionary Guard is not going along with whoever is quote-unquote on the moderate side, moderate being that they'd like the ceasefire to continue and they'd like to come up with some sort of agreement. But the president made it pretty clear that it's very frustrating, if not impossible, to negotiate with the other side. And so clearly we can't ignore this.
At this point, Ed, it is sort of surprising, as John was mentioning, that oil prices aren't even higher if the truce really is over. Though the pace of increase is pretty notable. The two-day increase for both Brent and WTI is the most since at least April. And you see just sort of this surge upward. Is there a trigger point, either in the pace of increase or the level, that could make you rethink even the broadening out trade in U.S. equities?
Lisa, the honest answer is I don't know. Nobody knows for sure. So we are all watching the price action in the marketplace, particularly in the oil market. And I think what we're seeing is we're being reminded constantly here that there was a bear market in oil before the war started at the end of February. The bear market actually started when Russia invaded Ukraine. We had a big spike there, and ever since then we've been on a significant downtrend until this war started. So that kind of, and it certainly, everybody was surprised by how quickly the price of oil came down. And I think that just reflects that over in China, they really adopted electric vehicles. And on top of that, their economy is really very weak. And on top of all that, the United States has looked the other way as the Russians have been selling more oil to China and India and other countries. And meanwhile, we've been exporting a lot of oil to Japan and South Korea. So put it all together, and the underlying fundamentals for oil are actually bearish, but they're certainly not bearish in the short term here with the end of the ceasefire.
The volatility that we're seeing, Ed, though, just highlights how much inflationary pressures are coming from myriad places and seem to be persistent, even when you want to say, look, there's potentially a glut because of all of these release valves that you talked about. At what point do you think that this market is underpricing the risk of inflation running a bit hotter, putting pressure, yes, on the Fed, but potentially pressuring certain profit margins for companies that are facing a pretty wearied consumer?
Well, before the June meeting of the FOMC, we thought that the Fed was going to pivot fairly significantly from an easing stance back in April to a tightening stance in June, and that's exactly what happened. The big surprise to me was that Kevin Warsh turned out to be among the hawks, because he had, when he interviewed for the job, he certainly sounded dovish. Now the Fed seems to be pretty much all aligned with the idea that price stability is much more important than the labor market. Labor market seems to be stable, but you know, all bets could be off here depending on what happens with the Middle East. You know, the consumer's been doing just great, but if we get another spike in gasoline prices, there may be some kind of geopolitical fatigue. And meanwhile, the market has run into AI fatigue. And you know, as I saw in your brief cuts for all the strategists that you had interviewed recently, everybody was talking about rotation. I was talking about rotation out of the AI trade into companies that we know something about, and we know their future more than we do the AI companies. And that was the Dow Jones, that was the Russell 2000. But now we're all back to, as I said, square one in some ways with regards to the Middle East, and that's become the main focus. And you're right, the inflation concerns are back in play, and as a result of that, the Fed is back in play. Not only is the Fed pivoted to tightening, but they may actually have to tighten.
This is the three-punch combination right now to sentiment, Ed. It's not just the situation in energy, to your point.
Correct.
It's how you fold that into the outlook for interest rates. And the third point is this rotation, quite vicious rotation away from the high flyers in this equity market right now. Lisa Shallard of Morgan Stanley was pretty scathing in the last 24 hours. She said, while many investors are waiting for AI capex to actually slow before reducing semiconductor exposure, given what is implied about the sustainability of future growth, we're taking profits now. Ed, you were there too. And I just want an updated thought from you about where that chip trade stands now, given the 16% move we've had just in a few weeks.
Yeah, well, clearly we did have a tremendous rally in the semiconductors, and that, of course, led the way up for the stock market. But the fact of the matter is, it's not a FOMO melt-up. It's been a FEMO melt-up. FOMO means fear of missing out, which typically leads to very elevated valuation multiples, which basically is a valuation-led melt-up. This has been an earnings-led melt-up, and I'd rather have an earnings-led melt-up. I think there's less downside than there is in a FOMO melt-up, and I think it presents more of a opportunity in the market, because the fact of the matter is earnings have really justified the rally in semiconductors, and it's not just expectations, but its expectation is based on actual reality. So I would view this sell-off more as an opportunity than a reason to panic. But right now, we're seeing not so much panic, just massive profit-taking because there have been massive profits.
So, Ed, you went there. When did you start buying these chips, these chip names that have been beaten up in just a few weeks?
Well, I think we're getting pretty close because these things move. You know, they don't kind of do things in a leisure fashion. They go up very quickly. They go down very quickly. And so I think there's an opportunity starting right now. But I say that with some hesitation, given that I don't really know. Nobody really knows how this latest end of the ceasefire plays out. And so the war is not over is the bottom line here. And the stock market is working on discounting that idea.
The energy market as well. Ed, thank you, sir. Ed Giardini there. If you had any research, the stock market down by, let's call it 1% on the S&P, negative 1.5 on the Nasdaq. Let's get you up to speed. Tons of news this morning. With your latest in the Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. In South Korea, the Kospi down more than 5% in the session, falling into a technical bear market. The index has dropped more than 20% since last month's highs as the AI rotation trade accelerates. The Kospi went from peak to the bear market in just 12 sessions. Demand for Amazon's latest $25 billion bond sale reaching $62 billion. That's about half the orders it attracted for an offering back in March, a potential signal of investor fatigue around AI-linked debt. And in sports, Switzerland advancing to the World Cup quarterfinals after beating Colombia 4-3 in a shootout. And Argentina making a late comeback to beat Egypt 3-2. The two will meet on Saturday in Kansas City, Missouri. Argentina looking to win back-to-back World Cup titles. That's your Bloomberg Brief. John.
Vonnie, thank you. That is the best 30 minutes of football I've seen in the last 20 years.
Salah versus Messi, and suddenly the Argentinian comeback.
Just wild.
Unbelievable.
Did you watch it yesterday?
3 goals in what, how many minutes?
20 minutes
Yeah,
or something.
20 minutes. It was unbelievable.
Phenomenal. Goosebumps.
Yeah, I mean,
watching that.
That was going down in the classic pantheon of World Cup games.
Without a doubt. And I'm excited to say there's more to come in the next 2 weeks. Equity futures right now pulling back. Energy pushing higher. Up next on the program, the Iran ceasefire collapses.
To me, I think it's over. I don't want to deal with them anymore, with this scum. As far as I'm concerned, it's over.
Up next, we'll catch up with the former Deputy National Security Advisor, Victoria Coates. Live from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
So this is what we're waking up to this morning. We're down on the S&P, on the Nasdaq, on the Russell. I should caution up front, this is not just about Iran, it's also a pretty vicious tech rotation that we can cover throughout this morning. The Nasdaq is down by 1.4%, but the Iran effect is clear. In the bond market, yields are higher, bleeding higher across the curve, and bleeding higher worldwide. 2 stateside up 3, over in Europe up double digits at the front end of the curve as we start to recalibrate bets around tightening monetary policy from here, given this move that we're seeing in crude, Brent and WTI. Brent and WTI pushing higher by 5 to 6 percentage points throughout this morning. Brent at 78, WTI at 74. Under surveillance this morning, the Iran ceasefire collapses.
To me, I think it's over. I don't want to deal with them anymore, this scum. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
So here's the latest this morning. The president saying the tentative truce is over following a fresh round of strikes between the US and Iran as the renewed hostilities send crude higher. Joining us now to discuss, the former Deputy National Security Advisor, Victoria Coates. Victoria, great to get you back on the program in a moment like this one. What's your initial reaction to the developments this morning?
Well, good morning, Jonathan. Yes, I think this is going to be a really important moment, and the ball is in the Iranians' court. They're the ones who decided yesterday. They're supposed to be on some sort of a break for the funeral of the supreme leader, but instead they started shelling ships that were in Omani territorial waters. They weren't even close to Iran. They were going through the strait on the western side, close to Oman, and got shelled. As we were just reporting, it sounds like one ship from Saudi Arabia was hit. And so all this is going to do is isolate Iran further. The president struck them very hard last night. We have reports of some 80 strikes being taken, which is just going to damage their economy further, weaken them further. But if they want to keep this up, we are, as the United States, perfectly prepared to continue these strikes against their critical infrastructure. It's just going to make it all the harder to rebuild Iran afterwards. But, this is their decision.
Victoria, we're all trying to work out how to interpret the comments from the president. It's always difficult, as you know. You've worked alongside him in his first term. Do you consider this the end of negotiations or just the messy part of negotiations?
No, I mean, I think you can take him very much at his word that he has given diplomacy every chance. He's put his top people on it, invested a lot of his own personal time, and wanted to get to a diplomatic resolution. As he said repeatedly, you're dealing with 90 million people here. Iran is a large country. He doesn't want to do damage to the people of Iran. He wants the regime to not get a nuclear weapon. But if they won't do that in a reasonable way, as has been offered to them, he's also demonstrated that he is willing to use the overwhelming might of the United States military to get to the outcome he wants.
Meanwhile, we also saw that the U.S. barred all additional sales of Iranian oil starting after yesterday, and that was part of the key economic tenet of this MOU, this Memorandum of Understanding. What's the path of travel to salvage anything in this ceasefire going forward? Or do you see this ultimately as simply just being an escalatory move that continues indefinitely?
No, the revocation of the waiver, Lisa, is a major step because Iran's economy is already on, at best, life support. I think World Bank projects them to contract by some 6% this year. That's not growth, that's contraction. So they're already looking at a very, very grim picture, and selling 100 million barrels a day to China was kind of their only last source of income, and now that's going to be cut off. And China is buying more and more from Russia. I don't think they want to be liable for United States sanctions. And heck, we can sell them more oil if they need it, on licit market prices. I'm fine with that. But that's going to be one more piece in the Iranians' really very desperate economic picture, that they're not going to be able to access any currency. They're going to be doing very, very little trade. Again, this is their choice. The administration had offered this as a demonstration of good faith to try to get to the nuclear deal that we want. They've forfeited that. So now there's not going to be any additional trade.
How high is the bar to send troops into the region? We had talked about that a couple of months ago, then that seemed to be off the table. Is it back on?
I don't think it's necessary in this case. I mean, I think that we've already done a lot of the major damage that needed to be done to Iran economically and then physically. And so it seems to me that we don't need a larger troop presence. We do have a number of folks in the region right now to support Operation Epic Fury, but it seems to me unlikely that we're going to see a major escalation in terms of ground troops.
Victoria, always good to see you. No doubt we'll be talking again soon. Victoria Coates there on the latest development in the Middle East as the president says the ceasefire with Iran is over. Crude is high by 6%. The good news, and we've repeated this, we were at triple digits. We were north of 100 and now we're back down to the 70s. At one point, we're threatening to break into the 60s. The tough part, I think, for investors, they've been conditioned to ignore this. Because if you were too bearish for too long, you missed out on a 90% move higher in chip stocks in the second quarter. The problem they got this morning is chip stocks have started to cut the other way.
Well, and also people have underestimated how much supply has come online from other places to fill the gap, not to mention the fact that China has really restricted its use of oil. So all of these aspects coming together to say oil trading seems to be a losing proposition. That said, are we going to see a sort of slow grind up as this does continue? And that is the risk, and Ed Yardeni really was sounding that note earlier.
It's difficult to unpack the equity move this morning because it's so much more than just about Iran, with equity futures down across the board and the NASDAQ down by 1.5%. Up next, we'll catch up with Tom Fordy of Maxim Group as Amazon's latest debt sale gets a very cold reception.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Check out the scores this morning. We're down by 0.9 on the S&P. We're down by 1.3 on the Nasdaq 100. Worth pointing out, still around 1% from all-time highs as of the close yesterday on the S&P 500, about 1.3% away. Within this index, though, vicious rotation away from chips. The chip sector, the semis, the Philadelphia Semiconductor Index down some 15 to 16% from the highs of June. Worth also pointing out that we were higher by almost 19% through Q2, so we just had a record quarter. That move away, upsetting the tech trade just a little bit, and you can see it this morning with the Nasdaq down another 1.3%. There's another wrinkle, though, today. The ceasefire, we're told, with Iran is over, and crude is rallying. Check out Brent, check out WTI. Brent pushing 80, up to 78, up by more than 5% on the session. Likewise on WTI. What's intriguing, though, is how this story is playing out in the bond market. Let's just bring up the front end of the yield curve in the US, Germany, and the UK. That's three different central banks with two very different ways of looking at this moment. Twos in America up only 3 basis points, up 10 in Germany, up 11 to 12 basis points in the UK. The ECB and the Bank of England seen as more sensitive to this energy shock if we get a repeat than, say, the US.
We've heard commentary recently as Monday, edifying that belief that you can see in markets. Isabel Schnabel, an ECB board member, came out on Monday and said that the Eurozone's economy is not back to the state that it was before the Iranian war. There still is a need potentially to tighten policy as a result of inflationary inputs from this oil price increase. You're not hearing the same kind of definitive commentary out of the Federal Reserve. In fact, you're not hearing any definitive commentary out of the Federal Reserve. Still, it is data dependency and a question of what the drivers are in a less oil-sensitive economy, which is the United States.
Two different reaction functions. One is clear, validated and reinforced by the move we've seen from the ECB. The other one right now is a bit murky, going into testimony from Kevin Walsh next week.
It is purposely murky because this is a no forward guidance Federal Reserve. That said, the commentary that we have heard from Fed officials does represent a concern about inflation having run too high for too long, more than 5 years. It doesn't necessarily suggest action, though, not the same way that ECB officials
You can make the argument, I think, this morning that in the last 24 hours, the debt offering from Amazon has had a bigger effect on the US bond market than this energy move this morning on Brent and WTI. We'll come back to that story in just a moment. As we count you down to the cash open, 3 hours away, a lot can change. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. The memory chip trade is back under pressure this morning as investors pull away from risk assets amid the conflict with Iran. And as of yesterday, these names, Micron, Western Digital, and SanDisk, have entered bear market territory. And unlike other pullbacks that investors have quickly bought, this one has stuck. So that means that SK Hynix's listing on Friday is gearing up to be more of a test than a celebration of the AI trade. Meanwhile, it's no surprise that as oil surges, we are seeing the energy stocks, some of the lonely winners in the market, with names like Exxon and Chevron up more than 2%, as President Trump says the ceasefire with Iran is now over. So investors are once again pricing in the risk that any disruption to supply will keep oil prices elevated. And we end on another rare winner in the market, and that is Alibaba. Shares are up nearly 10% in the pre-market as investors like what they hear from a pre-earnings update from the company, suggesting profitability in its e-commerce business is holding up better than expected, and that AI demand is continuing to drive strong cloud growth. It's also catching a lift from investors rotating away in Asia from the high flyers, the Samsungs, the SK Hynixes of the world, and into Chinese tech as a cheaper way to play the AI boom. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, the president saying the ceasefire with Iran is over.
To me, I think it's over. I don't want to deal with them anymore. They're scum. It's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
The comments following a new wave of US strikes against Iran and the revoking of a waiver allowing the country to sell its crude. Crude this morning of 5%. Elsewhere, South Korea's Kospi index rocked by major volatility as the AI sell-off deepens. The Kospi entering a bear market, down 20% from record highs reached only last month. Whipsawed from peak to trough in just 12 sessions. And finally, Amazon's latest debt offering, drawing softer than expected demand, seeing about $41 billion in final orders, well below the year's average for high-grade bonds. The tech giant now reportedly saying it won't issue any more debt this year.
Yeah, all it needed was more than $100 billion of debt. Now it's good. Look, just to put this into perspective, there's been about $335 billion of AI-linked corporate debt that's been issued so far this year. Amazon accounts for almost 1/3 of that. So it gives you a sense of how much they have been hoovering up cash at this moment where borrowing conditions have been good. What are they using it for? Are people fatiguing? Sure. You could see credit spreads widening. You could see that the oversubscription, which you always raise questions about, wasn't necessarily there. Nonetheless, it does also highlight that maybe we're reaching the end. Nonetheless, that open tap market seems to be closing just a little bit when it comes to debt investors' appetites.
They offered concessions and demand still wasn't great, and you saw the weakness in other debt from other tech companies in the secondary market. What does it speak to? Are we testing the limits of demand for this kind of debt? I would say we're testing the limit of demand for this kind of debt at this yield level, and that's what that market is telling you, that if you want to make these kind of issues going forward from here, you're going to pay for it.
There's going to be a bit more speculation embedded in some of the understanding of what these issuances are, considering how much money is being raised and what they're buying into, which is indefinite. I mean, it's always indefinite, but it's even more indefinite. Adding to this, there's supply coming from other places, and you hinted at this. How much was the Amazon debt sale crowding out treasuries? Well, today, how much will treasury issuance crowd out some of that corporate bond issuance, and how much will be left over? There's going to be $39 billion of 10-year notes sold today, $22 billion of 30 years. Tomorrow, how much appetite's left?
Torsten Slok, Apollo, this is what he said. The hyperscalers are issuing so much IG corporate debt that this is crowding out demand for US treasuries. We've heard it from Apollo. We've heard it from BlackRock too, by the way. We've heard it from a number of investors that the issuance that we're seeing from the hyperscalers will be at the expense of treasuries. And this is the issue that you've got in the treasury market. You've ignored the supply story for a long time because you weren't seeing much competition from elsewhere, not just on the debt side, but also on the equity side. By the way, things have changed on both the debt side. They have changed markedly on the equity side as well. That's additional supply, cross-asset.
Which is why, even when you say, okay, the Fed could potentially tighten rates, do you like the long end of the yield curve? You ask one bond investor after another, maybe, we're not sure, because the dynamics get pretty tricky when you look at all the debt being issued.
Let's talk about Amazon. Tom Forte of Maxim Group maintaining a buy rating on the stock. He has a 315 price target. He writes the following: Amazon is best positioned among the mega cap stocks to capitalize on AI-related opportunities. Tom joins us now for more. Tom, welcome. You cover the stock, but you follow the bond market. What did you make of that auction in the last 24 hours?
Yeah, so I think about Jonathan, good morning. So I think about the 1.6 times demand for the deal offering, down for 4 on average earlier this year. And I do think it's consistent with my view that the AI trade has gone from uber bullish to a bullish bearish combination with still a bullish bias. I think you're seeing some concerns, not just from investors, but for consumers on the AI build out. And I think it suggests perhaps that in the future, for the hyperscalers, they may have to pay higher interest rates if they continue to fund their AI investments with debt.
Tom, do you think that Amazon is alone in saying that they don't need to raise more money this year in the debt markets? Or do you think that they just satiated their demand with more than $100 billion front-loaded in the year, and the others are going to have to face a much more tepid market?
I do think Amazon was early in raising its debt capacity or the need for capital. So in that regard, I do think it perhaps may be alone, Lisa, as far as requiring debt later this year. The company does generate significant free cash flow. And I think that if you looked at it, they had $123 billion in cash and short-term investments and $66 billion in debt as of the March quarter before this offering. The good news is, though, Amazon has shown an ability to flex its investment spending, flex it up, flex it down. So I think that the good news here is they're seeing the returns on investment they're hoping to see on their AI investments, which is why they're moving forward with all that debt issuance. But if they weren't to see it, then I do think they could scale back that investment spend. $200 billion this year becomes materially lower next year. So I am confident in Amazon's ability to manage its capital needs well.
I want to build on that, Tom. The idea that if tepid demand in the debt market potentially could affect capital spending plans by the likes of Amazon. Do you see that the additional hesitance on the part of bond investors could constrain hyperscalers' ability to pay an indefinite amount for semiconductors, say? Does this edify what we're seeing in the semiconductor space with the sell-off?
I guess the way that I look at it, Lisa, is the higher memory costs making it more expensive for the hyperscalers' CapEx efforts. You see in the case of Amazon, though, they essentially maintained that $200 billion outlook despite the higher memory costs. So now we may be looking at conditions where you have higher memory costs and higher interest costs, which just makes it ultimately more expensive for the hyperscalers, assuming that they continue to like the demand and continue to keep that investment ramp going. So at this point in time, Lisa, I'm not overly concerned that you'll see a softness in chip sales as a result of potentially higher interest rates and less investor demand for these bonds.
So, Tom, ultimately for these companies, there are two different ways of looking at things. Either you can pull back on spending or find new things to buy. You cover Apple too. They're looking to find new things to buy within China. What do you make of the latest pivot potentially on the horizon?
So I think for Apple, it's been interesting to see how well they've navigated the slow rollout of AI for Apple. And I'll be looking forward to see how John Ternus handles that when he comes in September. They do seem to have done well, Jonathan, in their ability to capitalize on Google's Gemini to support Siri. As far as advancements in China for Apple, something I guess I'm continuing to monitor.
Are they going to look at buying Chinese hardware, Tom, to sell their product in China? Is that going to be the story for them to try and manage the margins a bit?
I think it may be a situation where I'm curious to see if they work with Alibaba or who they work with in China to advance their AI-related efforts in China. They did talk at their developers conference about challenges, regulatory challenges in both Europe and China when it comes to rolling out AI there. As far as buying incremental Chinese hardware, I guess it's something that I'm going to continue to monitor.
How much, Tom, do you view Apple's announcement that it was going to look to Broadcom for more U.S.-made chips and potentially its own chips as a way of placating some of the concern coming from either the administration or investors about its supply chain?
So, Lisa, when I think about March earnings and when I look forward to June earnings, there was a lot of conversation about tariff refunds or tariff rebates. And for Apple, they enthusiastically indicated that they would take all the tariff refunds and reinvest them in the U.S. So I am not surprised by that commentary from Apple about ramping its U.S. investment spending and potentially doing some of that with refunds on tariffs.
Hey, Tom, it's good to see you. Thank you, buddy. Tom Forty there.
Thank you.
Of Maxim Group on both Amazon and on Apple. Apple, of course, has not spent anything like what we're seeing coming from other companies, including Amazon. How sensitive are they to the pushback that you're receiving from the debt market? How sensitive is Meta to the pushback you've received from the equity market? That's my question at the moment.
Last year, it didn't seem that sensitive because it was an existential crisis to try to amass as much capacity as possible and as much in terms of resources as possible. Now you see a sort of rationalization of the spending around artificial intelligence. You see increasingly cutbacks around the edges as people offset the spending. You have people restricted their token use. Token maxing is now, is something very different. Gives it a different feel, and it seems like people are looking at the practicality of this, not just sort of the hopes and dreams.
Things have shifted. That's upset the chips trade, that's for sure. It's why we're down by about 16% in just a couple of weeks. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. NATO considering skipping next year's annual summit. Sources telling us here at Bloomberg the meeting scheduled for Albania could be postponed to avoid creating another platform for President Donald Trump to disparage allies. SpaceX AI and Cursor are planning to launch their first jointly developed AI model as soon as today. The information reporting the model is expected to process information quickly enough to compete with products from Anthropic and OpenAI. Now an update on the compromised New York City housing project under construction in Midtown Manhattan. New York City's buildings commissioner telling the New York Times, quote, "The building is stable and he feels confident in the emergency plan in place." That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the program, betting on AI.
We are bound overall by AI.
The demand for AI is only going to go up.
This market is just beholden by tech and AI.
What does it mean for demand for the US dollar? George Saravelos of Deutsche Bank joins us next. Live from New York City, you're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Equity softer this Wednesday morning. Good morning to you all. We're down by 0.8 on the S&P. On the Nasdaq, we're down by 1.13. We're bouncing off the lows just a little bit. Still down about 1 percentage point on the Russell 2000. The move in crude setting the tone for the market this morning, not just in the US, but worldwide. Up by about 5% on Brent to 78. WTI to around 74. That's having a different impact across fixed income. If you look at the front end of the yield curve, and we've done this all morning, just comparing the US to the UK and Germany right now, the bigger move is in Europe. There's just a take, really validated and reinforced by recent action from central banks like the ECB, that those central banks in the UK, in Europe, will be far more sensitive to this move in crude than we will be at the Federal Reserve. So we reset on Tuesday to 420. In the US, in Germany, it's a push higher by 9 basis points. In the UK, it's a push higher by close to 11.
And it's edified, frankly, by commentary coming out of Europe with a lot of central bankers saying, look, this is a clear problem, and the more that oil prices remain elevated, the more we're going to be forced to respond. Key question is, we don't have a sense of what the reaction function is for the Federal Reserve. So later this month, we're going to get a better sense of exactly how willing they are to actually tighten rather than just simply job on the market, which is what they've been doing for a while.
Well, let's talk about what it means for the FX market as well. Under surveillance this morning, betting on AI.
We are bound overall by AI.
AI in the markets, it is the dominant feature.
The demand for AI is only going to go up.
This investment cycle isn't slowing. This market is just beholden by tech and AI.
So here's the latest this morning. Massive spending on the AI build-out, pulling international investors into the American market. SK Hynix preparing to debut on the Nasdaq this coming Friday. George Stanovelos of Deutsche Bank writing, the dollar will be the predominant beneficiary of future AI income streams. George joins us now for more. George, welcome. This is kind of off the beaten trail, so to speak. A lot of people aren't focused on this right now. George, are you suggesting that this US dollar will become more leveraged to this AI story?
I think that's absolutely what's been going on, John. I mean, if you look at the last 12 months and you look at the funding of the U.S. current account deficit, which is one of the accepted weaknesses of the U.S., it's now that funding has massively shifted towards being funded via equity inflows. So it used to be the treasury market that was the destination of dollar-based investors. And now it's all going into equities, of course, all powered by the AI rally. And that in and of itself is creating very different vulnerabilities for the US, depending, of course, on your view on where AI is going.
George, does it make it more volatile? Is that the story? How does the character of the currency change with that in mind?
I think if you look at the last 10 or 15 years, the dollar has had this safe haven property. So during periods of risk aversion, it's been rallying. Now, of course, these sources of risk aversion have usually come from the rest of the world, whether it was the Russia invasion, the COVID crisis. But I do think if you're in an environment where the source of risk aversion is a de-rating for whatever reason of tech and AI valuations, you could very well see an environment where the dollar weakens. So in that sense, the correlations would flip. Actually, if you go back to the 2000s, when the dot-com bubble unwound, you did see a period where equities were going down and the dollar was weakening at the same time. Now, I'm not suggesting that would necessarily take place this time around, but it does change the source of vulnerability for the dollar compared to what it was.
If there was a derating of AI-related names across the world, but particularly in the United States, what would the dollar derate against? What would it weaken versus, considering the fact that a lot of the Asian currencies are just as tied to the AI trade?
Well, it's a very interesting question, because if you look at Korea, for example, which has been one of the huge beneficiaries, the currency is actually weakened at the same time because investors have been forced to sell some of those underlying equity holdings to reduce allocations. So it's not intuitive what the reaction would be for some of those Asia currencies. But what I would say, Liza, is for things such as the euro, which in general have not been beneficiary of those inflows, we would expect the euro to strengthen against the dollar in the event we do see an AI derating. And I think it's precisely for that reason that I would identify the risks around the dollar as being quite fairly balanced, given these AI risks as they relate to the financing of the deficit.
We're also dealing with an oil-related risk. And we've been talking about how the reaction function is very different in Europe than, say, the United States, a greater likelihood of tightening by the ECB, by the Bank of England, in response to higher oil prices. Does that make the euro more valuable or less valuable based on the potential hit to growth for the future?
So I think to start with, again, you look at the market reaction this morning and you see a much larger reaction in the European front end compared to the US. And I think that's valid. If you look at Sintra last week, the major ECB conference that took place in Portugal, again, the entire framing of the reaction function of these central banks is around scenarios of the energy price. So it does make sense the market is a lot more sensitive to that. I think the currency transmission, it runs through the real rate channel. So if the only reason these central banks are hiking is because inflation is moving higher, not necessarily as supportive for the currency. We saw that in 2022, of course, where despite the hikes, the euro weakened. But I would say a big difference this time is that growth in Europe is a lot more resilient. If you strip out all the noise around the Irish GDP numbers, which tend to move up and down by 10 to 20%, Europe has been pretty resilient, which is something Lagarde had spoken to. And if that allows growth expectations to hold in, more recently, actually just a few days ago, we had some major reform announcements out of Germany. So we would expect some sentiment uplift there. I think the negative currency impact because of the growth downgrade would certainly be much less.
George, how live do you think these July meetings are? How live are they? In a few weeks' time, the ECB meets, the Federal Reserve does too. Are they live meetings?
So in Europe, I would say probably not, but I need to be careful with what I'm saying because it all also depends on the oil price. We probably need to see a much, much larger reversal in the oil price for the European meetings of central banks to be live. I think the Fed is a more open question. As you alluded to, the reaction function is still quite uncertain. When I was last on the show, I did say that Walsh would have quite a tough job of navigating that first meeting. And he did do a very good job in the sense of reinforcing Fed credibility, but without giving us a more precise understanding of the reaction function. So I'd say the Fed is a bigger question mark, and it would also be highly dependent on the CPI number we're getting next week.
I don't want to get you in trouble with Mark Wall, George, but let's just play this out. Let's just say crude is where it's at right now and these tensions haven't been resolved. Is that ECB meeting a live one?
So we do have one more hike in September, and I think given that the level of oil prices as they currently are, that's probably quite fair. It's interesting, Lagarde sounded a bit more dovish last week in Sintra, but then again, the oil price was a bit lower there. I think as things stand, you'd probably need the oil price, and when I mention oil price, I'm talking about the entirety of the curve, 2 to 3 years out, being closer to $70 for the ECB rate hike of September to be less likely.
Okay, George, appreciate it. Thank you, buddy. George Saravelis there of Deutsche Bank, who, of course, works alongside Mark Wald, who makes their interest rate decision over at the ECB. So they're looking for September. Do you get some pull forward if this problem doesn't get resolved in the next few weeks?
It would seem that it would have to be a pretty significant spike upward in terms of the oil prices, and what that threshold is TBD. I think the more interesting point actually is what the Fed does, and then what the reaction is in markets, because you do have people playing around with the idea of rate hikes this year by the Federal Reserve. July doesn't seem to be on the table, though. I mean, it's not the labor market that's overheating based on the report that we got last week. It isn't necessarily massive inflationary pressures that are accelerating beyond oil. So these are the reasons why people are saying, wait for the task forces, wait until after you've really gotten your seat warm, and then maybe you can make a decision.
We're going to have a big family fight in July. The words of Kevin Walsh.
Yeah, sounds like fun.
Right?
I can't wait to get the meeting minutes today. Maybe we get a sense of just how big that family fight's going to be.
How short are those minutes going to be?
Exactly.
Yeah, look out for that. Later on this afternoon, we talked.
We talked. It happened.
Several officials also talked.
They said the.
Coming up next, Dan Greenhouse of Solis, Samantha Dada, Goldman Sachs, Vishal Kanduja of Morgan Stanley, and a whole lot more as we cover the latest developments out of the Middle East. The second hour of Bloomberg Surveillance up next.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them. You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time. Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The
economy is still strong.
The economy is proving somewhat more resilient than a lot of people expected.
It's really about the inflation data.
We have signs of disinflation in the economy.
We could get a little bit more, I don't know, easing, but hikes coming out.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures pulling back 0.9 on the S&P. We're down by 1 full percentage point on the NASDAQ. Yields bleeding high worldwide. Stateside, 2s, 10s, and 30s look like this. Yields up across the curve. 2s up by 2 to 3 basis points. 420 this morning. Close to 460 on 10s, through 5% on 30s. Off the back of this move in crude. Crude higher on WTI and Brent, higher by around 5% this morning. 78 on Brent, WTI at 74. The president says the ceasefire is over.
And it has been cracking. I mean, yesterday you got this sense and you got the news that the U.S. was removing some of those waivers that allowed Iran to sell some of its crudes that would prevent them once again starting today. And then today, ceasefire is over after subsequent attacks. I'm looking at the two-day move in Brent crude. It is the biggest two-day move since March 18th of this year. That is when the initial conflict was beginning. We're up more than 8%. It just raises this question, how much further does it have to go to really upset the risk appetite markets and make people pay attention after trying to ignore the story and hoping it would just go away?
I think that's the story still this morning for many investors, hoping that they can still ignore this story. Can't ignore the front end of the yield curve worldwide right now. On 2 stateside, not a big move, up by a couple of basis points. In the UK and Germany, up by around 10. There is a question, I think an important question, over the next few weeks. How live are these central bank meetings at the Federal Reserve and the ECB in the next 2 weeks?
Investors seem to be suggesting it potentially is more live over in Europe simply because the commentary has pointed them in that direction. I keep going back to what Isabel Schnabel in commentary on Monday said. Does the decline in oil prices mean that we are back to the pre-war situation? I don't think so. The peace deal is fragile. Gas prices still around 40% higher than before the war. They might have to still tighten. You have this kind of rhetoric. You have a big blank question mark coming from the Federal Reserve at the same time that the U.S. economy is a whole lot stronger. A big question mark. At the same time, we don't know the reaction function from the Fed, and there's going to be a family fight.
I'm not sure if it's a moment to get super bearish, but you can just see how things are building. Got the move in crude, a bounce back again. Still in the 70s, that's okay. The 80s, it gets worse. The 90s, it gets even worse. I think that's obvious. You start to price in the prospect of firmer monetary policy, hikes maybe from the Fed and elsewhere, at a time when we're seeing a pretty vicious rotation develop in tech as well.
I keep going back to what analysts said earlier this year, that the worst case scenario for central banks is not oil prices going to $150 a barrel. It's potentially $70, $80, $90 a barrel, where you won't necessarily get demand destruction, but you will get higher input prices that filter through the economy, which to some degree is what you've seen so far. If this persists, even if it isn't a massive increase, does that potentially increase the chance of rate hikes without necessarily surging to astronomical levels?
Nasdaq futures this morning down by 1.3. The S&P through much of this morning down about 1 percentage point. Coming up this hour, we'll catch up with Dan Greenhouse of Solace, with investors rotating out of chip stocks. Samantha Dada, Goldman Sachs, as fresh strikes against Iran has crude spiking, and Vishal Kundudra of Morgan Stanley on the wave of big tech debt flooding the U.S. market. We begin this hour with stocks heading lower as AI spending concerns are sparking a rotation away from the chip sector. Dan Greenhouse of Solace writing the following: the idea of broadening out has merit. If I look at the S&P but ignore tech and comm services, we're regularly hitting new highs for the first time since February. Dan joins us now for more. Dan, good morning. Good to see you.
Good to see you, sir.
The word we often hear is healthy. It's a healthy rotation. What would make it unhealthy?
Wow. I'm not sure anyone's ever asked me that before. Listen, I don't know. The argument I've made in the past is I don't know that I need rotation for rotation's sake. There's always been this issue several quarters ago. Can the market survive if the Mag 7 don't go up? And my position at the time was unequivocally the answer is no. Mathematically, that would be really difficult for the rest of the market to compensate for the Mag 7, given how large they are mathematically in the index. And yet, that's more or less exactly what's happened.
The new question is, can the market survive in the chip sector?
Yeah.
Starts to sink.
Well, I think the answer, that answer I would have said and will say is yes. Now, that said, the best question, since we keep inceptioning ourselves higher here, the best question is, can the market survive if the AI trade in general falters? And the answer to that, I would have said, will say, and will always argue, is no. That is driving, as we've talked about, and everyone does, materials, utilities, industrials, et cetera, et cetera. If that falters, I think we've got a real problem on our hands. Until then, it's just, as someone said, the water sloshing around in the pool without any coming over the edge.
Is there a sign that perhaps it is not necessarily coming to an end, but fading slightly in the imagination, certainly of debt investors? Does Amazon's debt sale yesterday and the tepid demand relative to what it has been signal some warning signs that potentially this could be waning?
Yeah, listen, I think it's certainly not as good if the issue was 7 times, 10 times oversubscribed, sure. But listen, the IG market is now, the listed IG market is now 10 trillion in size. Tech is still a relatively small portion of it. There's ample room for these companies to increase issuance. All of these companies, as we've discussed ad nauseum, have very low leverage ratios, less than a turn, in some cases less than half a turn, except for Oracle, which has a couple of turns of leverage. So I don't think that's necessarily an impediment right now. But that said, when you have these small indications here and there, the Meta announcement about selling compute capacity, they start to accumulate at some point. The issue as an investor that you have is, when does it end? When is this trade over? That's obviously nearly impossible to ascertain in advance. It's probably more likely you're going to get it right 3 months later. But I don't think enough has happened as of yet for the average investor. And as a reminder, Solus, we don't invest in large cap tech. It's not what we do. But I don't think the average investor can look at what's happened thus far, should look at what's happened thus far, and conclude this is coming to an end.
Does the softening in demand for Amazon signal something about the AI trade, or does it signal something about the desire for debt at a time when everyone is flooding the market, not just tech companies, but also governments?
No, I don't think that's an issue. I don't think that's an issue. The global bond markets, global oats, treasuries, et cetera, I see no particular signs of stress. IG spreads are 75. High yield spreads are, forget inside 300, inside of 275. I don't see anything that says there's any issues really anywhere other than the typical idiosyncratic issues that permeate the lower end of the high yield market. I don't think that's an issue. I think just maybe there was something with the issue that didn't generate an enormous amount of interest. But I wouldn't, again, read too much into it. These things happen from time to time, that it's not super oversubscribed. But again, let's forget, getting back to the rotation comment to start, when we X out, forget the Mag 7, when you X out all of tech, when you X out all of comm services, you're making new highs on a regular basis now for that, what we'll call index, for the first time since the winter. So there's clearly a positive momentum in both debt and credit markets right now, and I wouldn't read too much in any one indicator here or there.
Before we switch back to equity, let's just stay on debt. We have seen a bit of softening in the secondaries. We've seen that. We've seen a lukewarm response to SpaceX. That wasn't well oversubscribed. In fact, that's traded pretty poorly subsequently as well. Those issues are kind of building up. And if you look at the weakest part of high yield, let's say to the triple Cs, you're starting to see that widen out a little bit. And I just wonder if that starts to migrate up in quality.
I don't think so.
Why not?
Because ultimately the economy is doing fine enough right now. I think you had a problem a couple of weeks ago where we were talking about the Federal Reserve raising interest rates, and that spooked everybody out a little bit. The 10-year backed up 355, 360. And then the lukewarm jobs report and Kevin Warsh and the Fed commentary put the kibosh on that, as we'll say. And so even though we're still pricing in 1 and change cuts or whatever it is by the end of the year, I don't think that's going to come to pass. So I wouldn't read too much into the triple C market. I mean, for anyone who trades in the triple C market knows this is not a market. It's just a bunch of companies that find themselves in not great straits, if you will. So I don't think there's...
You know why we're tracking this, though? We're getting a ton of issuance on the equity side, a ton of issuance on the debt side.
Well, a ton of issuance nominally, but relative to the size of the market.
Of course. But just trying to know the change in the wins and just picking up on individual markers and how they're accumulating. What are the markers that you would look for that would give you pause, give you concern?
Again, to me, and I'm a broken record on this, when something goes wrong with that AI trade, and by that I mean CapEx slows down, someone somewhere in some corner of this suggests that demand is even equal to supply, let alone completely exceeding it, which is what we hear from everybody. When that happens, I think you're going to have to take a wholesale you're going to have an investment committee meeting and say, is this it? Because again, industrials, materials, utilities, obviously tech and commerce, it's a huge portion of the market. I really should sit down one of these days and do an S&P XAI, which is going to be a fun exercise. I think it is driving the entirety of the market.
And that's the issue, Dan, and that's why we're talking about it, because the market response to additional debt and equity supply could set the tone for future spending.
Yeah, but then I always fall, yes, that's fair, but then I always fall back on arguably my favorite saying in the market, which is bull markets don't die of old age, the Fed kills them. And as long as you have the Fed keeping rates where they are, which depending on who you are, might be too restrictive, might not be restrictive enough, I think a Fed on hold through the end of the year, plus the continuation of those demand trends that we see, keeps this market on an upward bias, to me.
How much do you need to see profit margins start expanding dramatically at non-obviously tech companies to sort of see the productivity, to see some of the gains bearing fruit across the industry and earnings next week?
Well, we've seen index-wide profit margins grow to, let's just call it record highs in the mid-teens, let's say. I have to go back and double-check what it is on a sector basis, because I'm sure someone's watching saying, yeah, but it's all... And historically, admittedly, it has largely, if not entirely, been technology driving broad market and broad economy margin gains. So I have to go back and look sectorally. But presumably, that's going to happen. The consumer's doing fine. I just mentioned off air, I was just down at Epic Universe in Florida. I don't know, no shortage of bags holding Minions toys at Epic Universe by everyone I saw.
World Cup sold out.
World Cup, 4,000, wasn't it the most expensive ticket of all time?
Pretty crazy.
Yeah, and then there's, of course, tickets to the concerts, look at the chart of Live Nation. The consumer's doing fine. The economy's doing fine. I forgot how we got off of it. I got distracted by Epic Universe.
No worries. I mean, look, we're trying to gauge out, has there been this shift? And at the beginning of this year, especially when the conflict began in the Middle East, people were talking about tech stocks as a haven. Are they still a haven in some capacity, or has the nature of the trade changed?
Well, no, some of them are safe, if you will. But I think, listen, I think it's a good observation to make that over the last 3 months, only one S&P sector has outperformed the S&P 500, and that's technology. Month to date, granted a small sample size, they basically all have. And I'm not going to read too much into 8 days of a month or whatever, I guess we're July 8th. I'm not going to read too much into it, but that is something to observe. And there are any number of sectors that you can look at right now. Look at the hotels, Hilton and Marriott. Look at the refiners. We talk a lot about the banks doing well, but what about the non-traditional banks like State Street, Northern Trust? They're surging. The rails, UMP and CSX, the malls, the short trade of the century. Pull up a chart of SPG, certain healthcare names as we've discussed. There's a lot of stuff. It's not doing as well, it's not as large as, and so it doesn't get the attention. But there's a lot of parts of this market that are doing well that tell me that there's more going on here than just the AI trade. Now, that said, again, clearly, this is the dominant theme. It's helping drive the economy, not quite to the degree some people assert, but it's helping drive the economy. It is definitely driving the stock market, but there are other things going on. So I wouldn't, safe haven implies nothing else is going on, and I don't think that's entirely accurate.
Dan Greenhouse, Solace Alternative Asset Management. You want to stick with us?
Sure.
Get this man a coffee, all right? Let's get him to wake up a little bit. Let's get you an update on stories worldwide this morning. With your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The Trump administration lifting restrictions on OpenAI's newest model, GPT 5.6. Axios reporting the ChatGPT maker will make its most powerful model series available to the public Thursday. Microsoft is replacing OpenAI and Anthropic with its own models in software products such as Excel and Outlook. Sources telling us here at Bloomberg Microsoft's goal is to ultimately eliminate the cost of using Anthropic models. Nvidia stock is the cheapest it's been since before the AI boom kicked off. The stock falling 16% since hitting an all-time high May 14th and losing roughly $1 trillion in market value in less than 2 months. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie in about 30 minutes' time. Up next, the ceasefire is over.
To me, I think it's over. I don't want to deal with them anymore with this scum. As far as I'm concerned, it's over.
Up next, we'll get the latest from the NATO summit in Ankara, Turkey, with Bloomberg's Anne-Marie, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Stocks lower across the board here. We're down on the S&P by 0.9%, on the Nasdaq 100 down by 1.3. Big rotation out of chips. We can talk about that throughout this morning. The new wrinkle for this market developing in the crude market. WTI and Brent this morning pushing higher by around 5 percentage points. We were threatening to break into the 60s on Brent. Now all of a sudden back to 78, up by 5 to 6% this morning. WTI back in the mid-70s at 74. Under surveillance this morning, the ceasefire is over.
To me, I think it's over. I don't want to deal with them anymore, with this scum. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
So here's the latest this morning. Tensions rising between the US and Iran, with President Trump saying the tentative truce is over after launching a new wave of strikes. Anne-Marie has the latest in Ankara, Turkey at the NATO summit. Anne-Marie, the president has turned away from being tested repeatedly in the Middle East by the Iranians. What changed overnight?
Well, he decided that it was time to really strike back on the Iranian aggression. This came after Iran struck 3 ships. I think it's key to understand the countries behind these ships. One was a Qatari-led LNG tanker. Of course, they're the main mediator for all of these talks, as well as a Saudi ship. And then on top of that, the president revoked the waivers they gave to the Iranian regime and then started strikes on about 80 targets. And the Iranians have responded, going after U.S. targets in Bahrain and Kuwait. So it looks like the president said that he is not willing to continue these negotiations because he feels that it is a waste of time. They have continued to test him, and clearly this is the biggest blow-up we've seen since the signing of the Memorandum of Understanding, with the president saying that basically, according to him, it is over right now. The Iranians said parts of the Memorandum of Understanding they think are completely dead. At the same time, we should note there has been quite a pattern when it comes to the United States dealing with Iran, fits and starts when it comes to potential skirmishes as well as talks. The president said he would allow his negotiators to continue talking, even though he thought it was a waste of time.
So, Anne-Marie, that's the question. What are the consequences? What are the consequences to ending the ceasefire? Does it end up in a messy negotiation from here? Does it end up at the end of negotiations and the start of a new operation? Any kind of signal coming out of the government?
Well, at the moment, the signal is that the U.S. will take on these strikes. There haven't been anything new in terms of overnight strikes, but we've had strikes now, and the president's rhetoric, which was incredibly hot, saying the Iranians are, quote, scum, and also saying that the regime is, quote, cuckoo. So obviously the tension is very hot right now and escalated, even if we were to hang on to a very fragile ceasefire. What makes matters worse potentially as well is that the Qataris are obviously incredibly frustrated as well, given the fact that their LNG vessel was one that was targeted, even though they have been trying to play this role of mediator. So things are not good right now on the ground in the Gulf. At the same time, if we see an increase in oil prices, is that going to be enough ahead of the midterm elections for the president to say, I would like to re-engage and try to have these talks again? And also, the regime at this moment will be asking themselves the same question. Is it worth some of these attacks, aggression, and defiance in the Strait of Hormuz? Is it worth it to put all of our oil sales at risk?
Anne-Marie, thank you. AMH in Ankara, Turkey at the NATO summit following the president. What's that saying you love? Fool me once.
Yeah,
right?
I'll get it for you. Fool me once, shame on you. Fool me twice, shame on me. And right now, this market's like, we're not going to be fooled for the 8th time. So ultimately, we're not going to trade that much. Nonetheless, you are seeing the biggest hike up in price for a 2-day move going back to March when it comes to Brent crude. So clearly, people are getting a little yippy.
Dan Greenhouse, still with us. Dan, conditioned to ignore it. We want to ignore this. So many investors this morning want to ignore this. Can they ignore this?
I just want to correct the record and say the saying is, fool me once, shame on you. Fool me, you can't get fooled again. That's the famous George Bush quote. Viewers will know what I'm talking about.
Thank you very much for the correction.
Bush was kind of butchering it, right? Yes. we remember it.
Thank you. I appreciate that.
If you're not familiar, I'll send you the video.
Thank you.
We've seen the clip.
Yeah, I think there's young people watching who don't even know.
Maybe they haven't seen the clip.
And they think that you're actually correcting me, but carry on.
I'm not actually correcting. I'm not actually correcting.
Okay, all right.
Okay. This is good TV.
On the golf course, right?
What's that?
On the golf course.
Oh, on the golf course. This was right around the time he also said, that doesn't matter. We'll leave this for Politics Nation or whatever the show is called. I'm sorry. Yeah, so I think the quote I would use, the saying I would use is maybe won't get fooled again. And I say that as someone who early on in this was among the group saying there's a certain level to which inventories cannot fall. There's a certain length of time to which this cannot go, and things are going to get bad. And it got bad preliminarily and then didn't. And I think there was a real underestimating of the amount of alternative sources, the East-West Pipeline, Yanbu, et cetera, and the Fujairah pipeline, that ameliorated the worst-case outcomes. And I think the reason why oil is up only 5% this morning, granted it's one day, is I think having spoken to any number of investors over the last couple of weeks, and I'm sure you have as well, there's a sense that this whole group was telling me the sky was going to fall, and it didn't. And now I see this headline this morning. The most likely, I think the argument's going to be the most likely outcome for both of these sides, the US and Iran, is to not have this spiral out of control. They'll find some off-ramp, no matter how embarrassing it might be or difficult it might be. And so therefore, I'm not going to get too concerned in a larger sense. That's what I guess is going to happen.
Isn't that potentially the worst case scenario when it comes to central banks? Because what you get is elevated oil prices without the demand destruction that comes along with it.
Sure, except I don't know that I would call $80 Brent elevated. I mean, it's higher than it was, for sure. But from a central bank standpoint, I'm not sure I'm going to get all that more concerned about my various landscapes than I am right now. I certainly don't think the Federal Reserve is going to look at $80, or well, I should say $75 TI instead of $70 TI as some threat. They've missed their target for 5 years, as we all know. I don't think that's going to be the difference here. What you have to figure out if you're them right now is first of all, you don't want to tighten monetary policy in response to a spike in oil prices that you think is going to be temporary. And this is, by definition, temporary. Whether it's 1 month or 6 months, who knows? But
unless you're the ECB.
Well, but they
kind of do things differently over there.
Hike 100 basis points.
That's fair. But the ECB also has a single mandate. The U.S. has to worry about unemployment, et cetera. But yeah, I think you have to figure out how much of this is tariff, how much of this is demand, how much of this is idiosyncratic issues. Kevin Warsh spoke about focusing in on things like the median CPI, which I think is a perfectly legitimate argument. Thank God someone finally made it. Instead of just arbitrarily picking 2 items, food and energy, and Xing them out, why not X out the more volatile ones? So I think they're going to struggle to figure out the various components of what's driving inflation higher. I just don't think another, the famous last words, but another temporary spike in oil prices is going to be what confuses them at this point.
Have you got the Fed unchanged for the year?
Oh, I think at this point,
best guess.
I know the market's pricing in 1 and change hikes. My best guess is that they don't hike this year. I certainly don't think they're going to cut, but I don't think they're going to hike. I mean, assuming this is temporary, oil is a huge driver, obviously, of headline inflation, but it also filters through to the core. You've had gasoline prices at the pump was $4.50, now $3.80. So that from an inflation expectation standpoint is going to be helpful, and from a headline standpoint, the drop in oil prices, we've probably seen. Famous last words again, we've probably seen the peak in inflation for the year, and that's going to give them a little cover as the year progresses to be on hold.
We hope we have. Dan, it's good to see you.
My pleasure, guys.
Now watch this drive. Dan Greenhouse, Solis Investment.
Okay, you do know it.
Thank you. Coming up, Samantha Down at Goldman Sachs as oil surges on President Trump's latest threats to Iran. Plus, Yahara has your morning movers. Memory stocks falling into bear market territory. The Kospi, what a ride. The Kospi down 20% in just a few weeks.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Things are quiet to start the week. They've got progressively busier and louder. Equity futures right now in the S&P 500 pulling back by 0.9%, down by 1.4 on the Nasdaq 100. On the Russell, the small caps down by about 1.2%. Into the bond market, yields pushing higher worldwide, not just stateside. Stateside yields are higher by just a couple of basis points. Much bigger move abroad at the front end of the curve. We're seeing 10 basis point moves in places like Germany and the UK. Off the back of this move in crude, the ceasefire is over, we're told. The president's words a little bit earlier on this morning. Brent back to 78, up by 5 to 6%. Bramo WTI in the mid-70s with the Fed meeting just a few weeks away.
Yeah, how much does this have legs? And I think that's what a lot of people are grappling with. A lot of people want the story to go away. People have been hoping that we've just seen the peak in terms of oil prices and inflationary pressure. There is a question. How much does the pullback in demand from China offset this? How much does the trickle of ships still going through the Strait of Hormuz potentially offset this? How much does increased production from places like the United States Or how much are people sleeping into a potential conflict that threatens oil prices to rise substantially higher and potentially could cause central banks around the world to act?
I think many people wishing they stayed in bed this morning. Brent crude at 78. Let's get you some single names, some morning movers. You one of them? Maybe. 2 hours away from the cash
I'm
open.
refreshed.
Yahira has more. Hey, Yahira.
Hi, John. We start with the memory chip trade under pressure again this morning after, as you said, President Trump's comments on Iran. That's pushing down risk assets. And as of yesterday, these names, Micron, Western Digital, SanDisk, have entered bear market territory. And unlike other pullbacks where investors have quickly rushed in, this one has stuck, and it comes just ahead of SK Hynix's U.S. listing on Friday, and that is shaping up to be more than a test and a celebration of this AI trade. And no surprise that energy stocks are the lonely winners in this market. As crude prices rise, we are seeing Exxon as crude prices rise, we are seeing Exxon and Chevron all up about 2% in the pre-market after President Trump said the ceasefire with Iran is over. So investors now pricing the risk of supply disruptions, keeping crude prices elevated. And on the flip side, those higher crude prices are hurting the airline stocks, with United, Delta all falling in the pre-market as higher fuel costs threaten to squeeze margins and hurt the momentum these stocks have enjoyed. Airline stocks have been strong performers this year, with Delta up some 30%, nearly 30% year to date. So we'll see what they have to say when they report earnings starting next week. John?
Yara, thank you. Feels very reflexive, knee-jerk type stuff. The obvious places doing the obvious things going into earnings from Delta. Ramo, later this week.
Yeah, and a real question about how much they can potentially edify the strength that we've seen going forward if oil prices remain elevated, or can they move past this? They talk about hedging. Do they talk about the robust nature of people going to places like Epic and Orlando and the World Cup?
Demand has been absolutely amazing.
Off the charts.
Off the charts for some of these airlines. Off the charts for the likes of Delta. And our radar this morning, our top story, the president declaring an end to the ceasefire with Iran.
To me, I think it's over. I don't want to deal with them anymore. They're scum. It's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
The president's comments coming just after a fresh wave of strikes against the country. Elsewhere, the president also taking game at allies.
Spain is a terrible partner in NATO. They don't participate. They don't pay. I don't want anything to do with Spain. Cut off all trade with Spain, please, including visits.
Spain refusing to commit to a defense spending target of 5%. And finally, President Trump renewing his push for control of, guess where, of Greenland.
Greenland is very important for the United States, but it's not important for Denmark. We shouldn't have given it back to them because we're the ones that need it. We need it for protection of the world, not just the United States, and it's very important.
The Danish Prime Minister maintaining that Greenland is not for sale. Things going so well in Ankara, Turkey. There's conversations of not having a summit next year in Albania.
That's exactly what I was going to say. The conclusion for all of these comments are simply, let's not do this again, because ultimately it's going to be really awkward, potentially in a place, Albania, that is not contributing its full 5% allotment to defense. At this point, not going so well, it seems like. What is that family photo going to look like? I was looking this morning. I know we got one, and I was looking to try to see just how awkward it was. At this point, the Danish Prime Minister is saying the U.S. position on Greenland is unfortunately clear. I would not be able to defend my people without NATO. At the same time, Greenland is not for sale. Spain is a very difficult situation, and frankly, that is actually the bigger story to me, because it raises the question of how united the European continent can be when they deal with the United States as a bloc, given the splintering of some of its members and the difference in how they deal with certain other nations like China. It just creates a lot of confusion for how unified Europe really can be.
President Trump, the greatest hits from Ankara, Turkey at the NATO summit. Just amazing morning already. Crude surging then, with the president saying the ceasefire with Iran is over. This after the US launched, quote, powerful strikes and revoked a waiver allowing the sale of Iranian crude. Samantha Down at Goldman Sachs is busy again. Sam, you had a rest for a couple of weeks. Welcome back. It's good to see you. What is the supply backdrop like right now? Let's start there. That's important because that's been a major factor in the past few months. What's it look like now?
Yeah, so the last time we had a flare-up, we had a decline in the crossings through the strait. We're very likely to see that again now. But we have to also remember, when we saw the MOU being announced, we couldn't expect going from 0 to 100 directly. I think right now we shouldn't also extrapolate that this is going to go to 0 and stop altogether. So let's give it a couple of days. The president also said that negotiations continue, that he thinks is a waste of time, but they continue. So to me, that signals that this is not necessarily over. Let's see what happens with the flows. And in terms of how high the flows were, just before this latest flare-up, we saw total Persian Gulf exports reach 70% of normal. So by the way, this does include, to be fair, the reroutes, the pipeline reroutes from the region. But it was a pretty good rate of flow considering how soon it was the MOU.
Where was that flow coming from, Sam? And how material was that waiver for Iranian crude, which has now been revoked?
Yeah, so if you look where the ships are coming from, it's from everywhere in the Gulf. It's not just Saudi, it's from everybody in the region. And if we consider the Iranian sanctions, even before this whole war started, Iran was selling crude. It just wasn't selling to everybody. It wasn't selling in an unsanctioned way. So it's not obvious to me that the revocation of the license alone is going to change this dramatically. We have to see where those flows go. I think the blocking of the strait that was in place before, this is what we need to watch for. So going back to your first question, we need to watch the crossings. We need to watch how much that 70% of normal is going to fall to.
Do you have a break-even point of, say, the traffic goes up to 30% or 40% or 50%, that it would kind of even out and it would be okay, especially given your forecast, Goldman Sachs' forecast earlier this month, that potentially there could be a supply glut should there be more normalization for the Strait of Hormuz?
Yeah, that's a very good point. We're talking about flows having been around 70% of normal. And when we look at visible global oil inventories, they were starting to build. They were starting to build even though flows had not been fully normalized. And this goes back to something you guys mentioned just a minute ago, what China had been doing. And this, I think, to me, was one of the most surprising things since the deal announcement, is the fact that China oil imports in June, they kept dropping versus May. So they didn't rebound after the announcement of the MOU. And this gives the system a lot of flexibility. It makes it softer. It makes it easier to accommodate the flare-ups like what we're seeing right now.
If someone were in the markets and listening to you, you could forgive them for thinking, so you're saying I can ignore this? Are you saying that this potentially is not as disruptive of a development as it would have been treated, say, 3 months ago?
I think just like the blockade, duration matters. But I would be more concerned with refined products than I would be with crude. First, because we see this difference in terms of what China is doing. But second, because when we think of production capacity, crude production capacity, what we're hearing from the services companies is that this has not been damaged in the Gulf. So that's good news. That means that once this is resolved, production can likely go back to what it was, but the refining capacity has been damaged. So the ability of refined product output to normalize, I think, is going to take a lot longer. And already, even though, so I mentioned that China oil imports are continuing to move lower, but flights were starting to go up. Right? So mobility was starting to go up. So your consumption of refined products is going up before your production and your export of refined products. So I would worry a little bit more about gasoline and diesel and jet fuel than I would about crude right now.
So you can have a reset in crude, but you can still have elevated refined product prices.
Well, let's just think about how prices changed since the MOU announcement. So before this flare-up, we had seen crude down just about 18%. We had seen European natural gas down about, depending on the day, 5 to 9%. But crude oil products, they were down 4%. 5%. They were down the least. And I think this illustrates how tight that balance still is.
They're the things that consumers buy, and that's going to be a political problem in certain places.
I think that's exactly right. When we think about inflation, we don't buy crude oil, we buy gasoline at the pump, and the trucks buy diesel, and we fly on jet fuel.
Just a final question, Sam. Inventory levels. Clearly, they're very different now compared to where they were in late February going into the first mess. What do they look like now?
Yeah, so this is also a good point, and it goes back to the point on flexibility. On the crude side, they are not as low as what we would have expected at the beginning of the crisis. If we assume, oh, if the crisis lasts this long, it's going to go to record low levels. They didn't go to record low levels. But on the product side, the color we are receiving from market participants is that retailers indeed have very low inventory of that.
Samantha, it's good to see you. I have a feeling we'll be talking more again. Samantha Doubt there of Goldman Sachs. Got a brief rest, and here we are talking about the same issues all over again.
Well, and, you know, Yair was going over the stocks that were moving, and the usual players pop as a result, and oil majors end up doing really well. Yesterday, Exxon reported earnings. Their second quarter earnings jumped by almost $4 billion as a result of higher prices. Why is it not being reflected in the stocks? And I do wonder at what point that's going to start to get baked back into some of these names, considering that you're not going to necessarily get the natural demand destruction that you would get from higher prices. In other words, they can keep selling at a much higher price point.
Brent crude this morning up around 6%, 78.50 on Brent. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The UK, France and Germany launching a $50 billion NATO initiative to develop long-range weapons without US involvement. The program will develop strike systems to hit targets more than 2,000 kilometers away with pinpoint accuracy. French far-right leader Marine Le Pen intends to run for president even after an appellate court upheld her embezzlement conviction and ordered her to wear an electronic monitoring device. Le Pen will lodge an appeal to France's top court to delay her sentence and to allow her travel without the device. Hedge funds returning more than 7% on average through June 30th, the strongest first half performance since 2021. According to Pivotal Path, funds focused on tech led the way with a 27% average return. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the program, flooding the debt market.
The hyperscalers are issuing so much IG corporate debt. Value investing is indeed one place to hide, but it has to be value investing that's indeed protecting you against the downside risk.
Vishal Kunduzra of Morgan Stanley joins us next, live from New York City. You're watching Bloomberg TV.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. and personal finance, retirement, and wealth management on Bloomberg Money.
A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Equity futures this morning, negative by 0.7% on the S&P. On the Nasdaq right now, down by 1 full percentage point. The Russell, negative 0.85. In the bond market, yields bleeding higher. 2s, 10s, and 30s. Yields up across the curve. 2s right now around 420. 10s around 450. 5% on 30s. Pushed higher by this move in crude. The president says the ceasefire is over, but negotiations might continue. We'll try and translate that for you. We'll catch up with Anne-Marie in Ankara, Turkey in about 15 minutes' time. Brent crude at 78, WTI at 74. Big question for this program this morning, just how live is that meeting at the Federal Reserve and at the ECB, by the way, over the next few weeks?
And the answer seems to be much more likely to be live at the ECB than the Federal Reserve. But of course, the Federal Reserve is a big black box where you have no clue, considering the fact that the reaction function has been killed. Some people speculating that because the task forces are active, they're not going to make any kind of move. Nonetheless, it is going to be an increasing discussion, and currently that's what's being priced into the market.
So it's one leg of the bearish story this morning, the move in crude. The second piece of it is a vicious rotation away from chip stocks in the last couple of days. And then some debt issues in the last 24 hours that have received a bit of pushback. The latest this morning, Amazon getting a cool reception to its latest debt offering, taking AI-related debt sales this year to $335 billion US. Double, more than double, what we saw through last year. Vishal Kandudra of Morgan Stanley writing, we continue to be underweight the tech sector and don't anticipate changing that until there is further clarity on CapEx need. Vishal joins us now for more. Vishal, good morning.
Morning.
Let's go with what we got from Amazon yesterday. Bit of pushback, underwhelming, I would suggest. How would you frame that offering?
Significant pushback, significant surprise. We thought that they were done for the year, almost done for the year in terms of coming and hitting the debt markets, especially IG. This is typically the blackout period. Probably in the end of this month, beginning of next month, they have earnings, and all the AI hyperscalers do, hitting another 25 billion, saying that they're done for 2026, but then caveat being they could front load 2027 CapEx spending. So it is a moving target. And I think the loss in the shuffle was pretty significant pushback from the market, not just in terms of the amount of order books, 63 billion down to like 42, and they priced 25. But there was about 20 to 25 basis points of pushback in the long end yields. Translate that into bond points, it's about 3.5, 4 points of downside that existing bondholders took if you were a spread-based buyer. If you were a yield-based buyer, yesterday was fantastic. You got another 610, 625 coupon that you could hedge your liabilities on the other side and still get a AA type balance sheet. So again, no pushback on fundamentals, but the technicals and the clarity is needed.
I think this question is relevant to both the equity investor and the debt investor right now. That pushback that you're getting to additional supply, do you see it shaping outcomes? Will it shape the approach to CapEx from here?
Not really. So I think that is what it is. I think I compared this, and we were having a chat around the desk. This is compared to a homeowner getting a 30-year fixed 3% mortgage on the asset that's the biggest asset on their balance sheet. Money is still very cheap for these AI hyperscalers. Again, to give them a lot of credit, over the last 10 years, they've built fortresses of balance sheets. So they will have much more demand than the US Treasury for the long end debt at the moment. But the compensation will keep pushing up as debt holders like us, who are more spread-based buyers, almost run over by yield-based buyers over the last 1 year, are going to keep pushing back in terms of how much we will need in total return type portfolios rather than yield-based portfolios that we manage.
The comparison that you made to the U.S. government is a salient one, and it raises a question heading into a 10-year auction later today and a 30-year auction tomorrow. How much is the pushback that we saw for the Amazon debt issuance a pushback to AI debt issuance versus just debt issuance at large from any particular place?
A lot of that is that. And I think the overcrowding effect that we talk about, I hope some of that will show up in our equity counterparts will face the same trouble or forces back up. If you go back to U.S. Treasury issuance, 2002, I think was 22% in the U.S. aggregate, which is a benchmark that all of us follow closely. It's about 46% now. So overcrowded out corporate issuance, spreads were tighter, balance sheets were stronger, and now you're starting to see a little bit of that come back into the market where corporate issuance is starting to pick up. Also, I think we want to keep in mind that a lot of the issuance that happened by corporates post-COVID, 2020 to 2022, is coming due some of the front-end debt. So you will have the net supply or the gross supply from this refinancing is going to be $1 trillion a year for the next 3 years as well. So quite a bit of debt coming from the corporates on the other side as well. So yes, going back to your point, it's a lot of debt supply overall rather than just corporates versus treasuries.
What's safer in your view right now, the investment grade market or the high yield market? And the reason why I ask this is because the investment grade market has an increasingly long duration at a time where people view many years as being a high risk because of the nature of the moment that we're in. Yeah. High yield has a shorter term, and a lot of the companies, particularly in the high end, are actually being able to fulfill it much more quickly. Where is the risk right now?
Yeah, so it depends on what you're trying to extract out of the bond market. If you're a total return investor, go for the shorter, spreadier, higher yielding name, a BB or single B credit. Again, spreads are almost at levels that you will balk, but overall yields are extremely attractive. So you are reducing your spread duration, but increasing your DXS, duration times spread. On the other side, if you're a long-term liability manager, a AA balance sheet for 30 years, if you can lock in 610, 625 yields. Now, I think if you go on, the other hyperscalers are 7-handle yields.
Assuming it's a AA balance sheet in 30 years.
Exactly what I was thinking.
That's, I think it's a, if you look at the cash flow, you know, I think what these balance sheets have done over the last 7 to 10 years, there's quite a bit of strength that they've built up. Now, a lot of it then depends on the robustness or the durability of AI. Overall, you know, I think who are going to be the winners, who are going to be the losers. And yes, we're already seeing, I think, some of the BBB balance sheets struggle in that AI hyperscaler.
Can we finish on another AA credit, the Treasury? Crowding out is this phrase that we've heard a lot. You mentioned it as well.
Yeah.
That so much of this issuance might be at the expense of the Treasury market. Do you see it the same way?
I think we are starting to see, but I think the size of the markets are extremely different at this point, like 28, 29 trillion on the other side versus I think you're still seeing like $1.5 trillion on a gross supply basis. Net supply is much lower on the US corporate side or the global corporate side if you include the European corporates as well. I think the word is starting to come up in our investment meetings on that size, but the size differential is too significant right now to have them compared. It's like comparing US Treasury nominal market with the TIPS market. We love to talk about it, but it's 6% of the overall issuance.
Do you consider additional supply on the equity side as part of the story, though, the forces that you have to consider?
Oh my gosh,
that we're seeing on both stock and debt.
Absolutely, and us IG debt holders on the other side, we are pushing these companies to like, you guys need to tap that market too, right? AI CapEx needs to be come in, and we have much less upside in this versus the equity holders.
Do you think that's where the issuance will come from then?
We definitely think, I think post this earnings cycle, I think you'll start seeing plans for equity issuance and convertible issuance starting to be tapped.
Just imagine if we get what Meta talked about a month ago. In the FT, that report came out that Meta might do what Alphabet did and the stock sold off. In fact, you could argue that the stock has rebounded because they've not done that. In fact, they're considering doing something completely different. What if we actually started to see that? Yeah. Is that what we're underestimating here, that they might come and tap this equity market more than people believe?
Why wouldn't they? I mean, at a certain point, if the debt market is starting to get a little bit nervous, or at least the funding conditions aren't getting as good, you're going to tap the equity market. I keep going back to what the capital markets professionals that we have on the show say, the bankers. They say, markets are not sort of distinct anymore. It's a whole market solution for different companies that want to raise so much debt that it's changing the game. So it's not just looking, I need to raise this many bonds. It's, I need to finance $30 billion. How do I do it? And increasingly, you're going to have to look at equity markets and whether they are cheaper or more expensive for a potential company to borrow or to get money to raise cash than the bond market. And ultimately, that calculus will change exactly where the issuance comes.
You heard what basically Vishal just said. It was just basically, look, the hopes and dreams. You get paid for the upside in the equity market. Stop coming to us. And if you come to us, you're going to have to pay up. High yield.
And right now, that's what you're seeing with Amazon. I wonder what this means for OpenAI and Anthropic, because they're lining up IPOs, and the expectation is they'll do just what SpaceX did, which is IPO and then issue debt. So at what point will that sort of 1-2 punch for financing not have the same punch that it did, say, a few months ago?
Seen how that market responded to that SpaceX debt. How's that trading right now?
Not
SpaceX
5-7 points lower. So again, depending on what you wanted to extract out of it, you're still getting 7.5 yield on the long end. But on a total return basis, I think the bonds are down 7 points.
Vishal, it's good to see you. Thank you, buddy. Appreciate it. Vishal Kunduja there of Morgan Stanley Investment Management on the amount of debt supply we've seen, including Amazon, but elsewhere too, and equity as well. Later in the week, SK Hynix, $28 billion, tapping the U.S. equity market to raise capital.
Yeah, everybody's doing it, so why not come here? And it looks like the deepest, most liquid market will look favorably. Of course, the correction isn't a good look heading into that with the Kospi.
NASDAQ futures recovering just a bit. We're down 1% on the NASDAQ 100. Up next, we'll catch up with Tracy McMillan of Wells Fargo, Gil Luria of D.A. Davidson, Scott Cronin of Citi, the third hour of Bloomberg Surveillance. Up next.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round or the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Tech is still long-term leadership, but it's changing within.
You have investors sort of hopscotching back and forth between these themes.
We're going to continue to see these mini pockets of rotation.
This kind of digestion is completely normal, and frankly, we'd argue it's healthy.
Overall, it's still constructive for the entire AI trade.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. In your price action, the scores look like this. Down 0.75% on the S&P, recovering just a touch on the Nasdaq. We're down by a little more than 1 percentage point. In the bond market, yields a touch higher. Stateside, much higher. Worldwide, on a 2-year this morning, up a basis point or two. Twos at 420. In the UK and Germany this morning, up by double digits, up by 10 basis points. This move in crude setting the tone for this market this morning. WTI and Brent up by more than 5%. Brent at 78, WTI at 74. A question for us this morning, where does it leave these central bank meetings this week? 2 central bankers out of Europe in the last minute alone saying we've got no idea what we'll do in 2 weeks' time.
Yeah, the Bundesbank president, Joachim Nagel, coming out and saying that after today's Iran news, we're back where we began. It has a meeting-by-meeting approach, and we have no idea. He has no idea what they'll do at the July meeting, but it is appropriate to have a meeting-by-meeting approach and to take the data as it comes. So that's about as clear as mud. Isabel Schnabel, back in Monday, talked about how this pressure is going to lead them to tighten more. So if you're pricing in more potential hikes in Europe, they're giving fuel to that with some of the commentary this morning.
You've said it a number of times. Single mandate central banks far more sensitive to this move in energy. Even a back up towards, let's say, 80. For the US, different reaction function. I've got no idea what the reaction function is right now at the Federal Reserve. What on earth do you price in off the back of that?
You know, that's the reason why you're seeing a more tepid response, maybe in the front end of the US yield curve, but it's also that the US economy is less dependent on oil and gas than the European one. So it's a twofold issue. Number one, the European Bank has been a lot more clear about their mandate and their reaction function to it. But B, there is a real question given the fact that the U.S. has seen buffers and actually profited from the exports of oil that is offset to some degree and potentially offset the need for increasing prices to the degree.
You know how people feel about this moment this morning, don't you? They've just done this for like 3-4 months. They're so done with this. To see this again. And even from the president this morning, when he turns around and he says the ceasefire's over, and then says something about negotiations potentially continuing with negotiators. Like, what do you do with that?
Yeah, the idea that he's saying, in my mind, it's over. They can do what they want with that. And at the same time, you start seeing that the main economic tenet of this agreement, the waiver to the Iranian sanctions, was removed. So in other words, the ban on Iranian selling oil has been reinstated. So it does seem like the memorandum of understanding has been undermined in a more significant degree than any other time. That said, people have reshaped their understanding of the oil market, particularly with China and the response function there. And as far as markets are going, they're saying, just tell me what semiconductors are doing, tell me what the Kospi is doing, tell me what Amazon's going to do next, tell me when we can finally price in whether we've got more legs to the AI trade or not. And that's all I really care about.
I'll tell you what Amazon might not do, and that's issue more debt anytime soon.
At least not this year.
Based on the reception that got in the last 24 hours. Crude this morning then up 5%, 78 on Brent, WTI at 74. Coming up this hour, Tracy McMillan of Wells Fargo. As stocks rotate away from the chip sector, Gil Luria of D.A. Davidson on why he believes the sell-off is overblown, and Scott Kroner of Citi on the opportunities under the surface in the equity market. We begin this hour with our top story. The president saying the ceasefire with Iran is over.
To me, I think it's over. I don't want to deal with them and with this scum. It's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
Anne-Marie joins us now from the NATO summit in Ankara, Turkey. Anne-Marie, welcome back to the program. The ceasefire's over. Are the negotiations over too?
That's a great question, Jonathan. I think everyone waking up this morning is trying to understand, is this a pause, maybe a prolonged pause, or are negotiations really dead, given the fact that President, with some hot rhetoric at day 2 of the NATO summit here, saying he's pretty much done with these talks. It's a waste of his time. But he did give a window to his negotiators saying they could keep talking, even though he thought it was pretty much a waste of their time. So that's the question everyone has right now. And obviously, there are 2 parties to this. So we would have to see really, I imagine, for the United States to see evidence that Iran is truly willing to stop with some of the aggression we've seen in the Strait of Hormuz, for the president to be willing to come back to the negotiating table. You have to think at some point, is this just part of the pattern we've seen when it comes to the fits and starts, whether that's skirmishes within the Strait of Hormuz or even the negotiation talks, or is it truly over? And then where does that leave us? That's another question. Are we potentially going to see more airstrikes like we saw overnight continue? We also saw Treasury lift the waivers they had given to the Iranians to be willing to sell that crude. How long are we going to be in this new period of paralysis, really, when it comes to the tit-for-tat between Washington and Tehran?
Anne-Marie, as you know, the president has had plenty of opportunities over the last month to end this ceasefire. Repeatedly, the Iranians have tested his patience and really threatened to cross a line. The president's declared the end of ceasefire at a NATO summit in Turkey, surrounded by European members he's been incredibly disappointed with. How instructive do you think that is? Why he chose this moment, this time, in this place?
And what he's saying in public, Jonathan, we've learned he's saying behind the scenes when he met with those world leaders. You know, I think you need to take a step back and be a little bit critical or cynical, you know, in me, is looking at this as, would the President of the United States let a good crisis go to waste? In the sense that if he was waiting for a moment, as the Iranians have continued to test him, if he was waiting a moment to respond in kind to their aggression in the Strait of Hormuz, for the President of the United States, what better opportunity than when he's surrounded by NATO allies to see, one, who steps up to the plate, given the fact that Iran has been really the latest source of frustration between Washington and many of the European allies. So he would learn something from that. And potentially, two, to show the Europeans that this issue, even though they're in the middle of these nuclear negotiations, isn't exactly going away, given the fact that the president will say the regime has changed. It is still the same sort of regime, different management, but has the same sort of directive. So this is the opportunity the president potentially used to show the European alliance and the NATO allies that the United States actually can't do this alone, and they're going to have to be willing to step up. And this is now really overtaking the talks that are happening today.
Anne-Marie, we'll talk about the energy story with you in about 30 minutes' time, so stay close. Anne-Marie with the latest at the NATO summit. For the equity market, we've been covering this all morning. It's not just the shock in energy over the last several months and the bounce we're seeing so far this morning. It's the firming up of rate hike bets at certain places like, say, the ECB, and a big rotation within the equity market. Here's the view on Wall Street this morning. Tracy McMillan of Wells Fargo writing the following: the equity rotation amid strong earnings growth is healthy. Still, headwinds likely prevent a straight line higher in the S&P. Energy, gold and metals prices are not done rising. Tracy joins us now for more. Tracy, oil is not done bouncing. It's up 5% so far this morning. That's the bad news. The good news is nowhere near triple digits. We've had that big reset over the last month. Tracy, the recent developments this morning, do they change your view on this equity market?
Good morning, John. So when I wrote that yesterday, I wasn't expecting a large portion of that rise to occur overnight, but we do have a price target of $85 a barrel on oil at the end of this year. So we think there's probably some more upside to oil as we move through the rest of this year. It doesn't necessarily change our opinion on equities or fixed income, but it just reinforces the fact that there are still geopolitical risks out there, and the market needs to take them seriously.
Earlier this year, Tracy, the response to geopolitical risk seemed to be to hide out in the AI stocks. At what point has that dynamic changed, given how high the valuations have flown with some of those names, the rotation underway, and how people seem to want to see a broadening out, and yet how much of that is predicated on the disinflation and the calm persisting in the Middle East?
Yeah, so we do think that the AI trade will continue to find support in earnings and in margins, but investors are being cautious ahead of the earnings season. So if we fail to see the kind of spectacular earnings that we saw last quarter, then that could be a problem, certainly for those stocks and for the broadening out, which includes sectors that are ancillary to the AI trade, but we think that we will see support there over the coming quarters, and that can keep that trade alive. So we're favorable information technology, but would buy on pullbacks. We're also favorable on utilities and materials for the role they play.
Tracy, we've been talking, and John started the show talking about this three-pronged threat to the risk rally that we've seen, whether it's questions around stickier inflation due to oil, whether it's questions around the rotation away from semiconductors, or questions about the debt that is seeing a bit of a tepid response from debt investors. We saw that from Amazon. From your perspective, have you seen a tone shift that makes you nervous?
So it doesn't necessarily make us nervous. In fact, as we wrote, we think that the rotation is a healthy rotation, and the tone has certainly shifted from what we were seeing at the height of earnings season. But again, it's good for investors to question valuations. It's good for investors to look for other areas of the market that might provide better performance as we move through the coming months. We do think the summer is going to be volatile, and that will give investors the opportunity to reposition their portfolios.
I was thinking of you and the team in the last couple of days, Tracy, because the banks trade is starting to work, and it was a core overweight, big piece of your outlook coming into this year. Record highs for the S&P 500 banks just a week out from the earnings, Tracy. Why is that trade starting to work just beyond, say, Morgan Stanley and Goldman Sachs?
Yeah, it's starting to work really, especially for the larger banks. They're benefiting from increased portfolio management fees. They're benefiting from investment banking fees. And we also think that they will benefit as we see a steepening in the yield curve. That's yet to come, but we still think that that is part of their story. Deregulation is also part of their story. So we continue to have a most favorable viewpoint on financials.
Tracy, appreciate it. Thank you. Tracy McMillan there of Wells Fargo. Next Tuesday, the financials, a handful of them, like 5, all reporting on the same morning, including, of course, JP Morgan.
Yeah, how much of a read will we actually get? What I really want to know is the pipeline and whether it has shrunk at all as some of the pushback has increased with some of the debt issuances. Have you seen the opportunity decline in some capacity as a lot of these companies see the reception that Amazon got? Or is this essentially still a wide open market? That might really set the tone.
I don't see them backing off. Do you? Do you see them backing off?
I don't see anyone saying that this isn't worth it. And right now, it's just about which financing is cheaper. Question is, how much do markets start to converge? Do equity markets and bond markets start to push back at the same time, really pressuring both levers of the financing curve?
We'll catch up with Ed Ludlow in just a moment, and Ed called it a race for capital. And we asked the question, when does it become a competition for capital? And I think you can make the argument now, based on the moves we saw yesterday in the secondary market and the reception that Amazon got, the reception that SpaceX got, the move you saw in treasuries, that increasingly this is becoming a competition now for capital. And there are trade-offs, and you will have to compensate investors accordingly.
And right now you can see that competition broadening out. The New York Times reporting that Blue Origin just raised $10 billion to a north of $100 billion valuation. It just highlights how much every company is, oh, you can raise money for space? Hey, we can throw our hat in the ring. And essentially that's what's happening.
Features this morning recovering. We were down by about 1% on the S&P 500 when this show went live. This morning we're down by 0.5, so we cut those losses in half as we get closer to the opening bell. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The Trump administration lifting restrictions on OpenAI's newest model, GPT 5.6. Axios reporting the ChatGPT maker will make its most powerful model series available to the public Thursday. Microsoft is replacing OpenAI and Anthropic with its own models in software products such as Excel and Outlook. Sources telling us here at Bloomberg, Microsoft's goal is to ultimately eliminate the cost of using Anthropic models. In sports, Switzerland advancing to the World Cup quarterfinals after beating Colombia 4-3 in a shootout. And Argentina making a late comeback to beat Egypt 3-2. The two will meet on Saturday in Kansas City, Missouri. Argentina looking to win back-to-back World Cup titles. And that is your Bloomberg Brief, John.
Vonnie, thank you. Thank you for the update. More from Vonnie in about 30 minutes' time. Up next, the Morning Calls Plus. Gil Luria of D.A. Davidson on why the sell-off in chips might be overblown. A 16% move lower off the highs of June. We'll catch up with Gil in just a moment. Live from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This has been an earnings-led melt-up, and I'd rather have an earnings-led melt-up. I think there's less downside than there is in a FOMO melt-up. The fact of the matter is earnings have really justified the rally in semiconductors, and it's not just expectations, but it's expectations based on actual reality. I would view this sell-off more as an opportunity than a reason to panic.
That was if you had any research. It's kind of amazing, isn't it, that we had this close to 90% rally in Q2 for semis, a record quarterly rally for many of those names, and yet valuations for most of those names didn't actually go up for many of them. In fact, valuations came down because earnings were so powerful.
Samsung's a perfect example. And by the way, Samsung shares rapidly sold off after these earnings. A 19-fold surge year over year when it comes to profits, driven by just how much demand there has been for the memory parts, the memory chips tied to AI. And yet, crickets, or worse than crickets. It raises a question, how do we even understand valuation at a time of a hyperbolic move, of something where it does go to the moon? That, I think, is what the market's grappling with.
The bubble is not in the price, maybe it's in the earnings. This is something that I heard from Liz Ann Saunders of Charles Schwab. Not a statement, a question, and something worth considering. How durable, how sustainable is this earnings story at so many of these names?
Memory tends to be a cyclical story because ultimately people produce more and then all of a sudden there's a glut, and at some point that's going to lead to lower prices. The problem is, for a lot of people, is that you don't have visibility as to when that kind of glut moment is going to continue, and right now people are trying to build as much as they possibly can, and there seems to be insatiable demand. That's the reason why we keep asking, at what point does some of the pushback from debt investors lead to a reduction in CapEx and a potential pullback in the profitability for some of these chip companies?
These earnings are the consequence of what we have called a major wealth transfer from the big spenders to the chip players, and they are going to the debt market now, to the equity market, to raise capital, to keep that spending up, just as the market is starting to push back just a little bit on the margin in debt, in equity. We'll get to that in a moment. Equity futures right now in the S&P down by 0.5. We were down 1 percentage point earlier on this morning, so as the session grows older, things improve just a little bit. On the Nasdaq, we are lower by 0.8%. The opening bell 1 hour and about 11 minutes away. That's the price action. Here are the morning calls. First up, Evercore raising its price target on Dow to 500, citing increasing positivity around the company's AI build-out. Your second call from Morgan Stanley, trimming its price target on Alibaba to 180, expecting cloud acceleration to beat market expectations. That stock is up this morning by 9%. And finally, TD Cowen cutting its price target on Amazon to 340, seeing faster growth for AWS and expanding margins in North America. Yet still this morning, that name is down by 0.9. Let's stick with Amazon, the tech giant, facing a cool reception to its latest debt offering as companies look to fuel AI spending. Ed Ludlow has the latest. Ed, good morning, buddy. Good morning. What was the latest for you, the reaction that you and the team had to that very cool reception to that debt offering?
Yeah, a little bit of AI debt fatigue. You know, just think about how it played out. Peak order book, $62 billion, and then pricing tightened and it netted out of $41 billion of demand. They were easily able to raise the $25 billion, sell $25 billion worth of bonds. And like Amazon's done $107 billion of bonds over the last 12 months. In this case, $25 billion is 1.6 times oversubscribed. The average in US IG over the last period, 4x. Think about like Amazon in March, 3x, Alphabet, Meta, and Oracle. So like there had to be some kind of concession made, but they easily raised the capital. They easily did the deal. And I think if you read a lot of the strategist reaction, like the expectation is they will just come back again next year. Maybe this was a little bit about pull forward of their financing for 2027. Maybe it wasn't, but it's just interesting, the reception to this, when you take it in aggregate of all the activity that Amazon in particular has driven over a 12-month period.
Joe, the tech guy, we're the capital markets people.
Yeah.
And I'm looking at capital markets. Lisa and I, throughout this morning, looking at the pushback we're getting on both equity and debt whenever a company looks to raise capital or actively raises capital.
Yeah.
And we're asking the question, will that shape CapEx intentions? Now, from a capital markets perspective, you'd have to ask that question. It's an obvious one. But from your perspective, do you think we're underestimating the desire to push forward from this and keep raising capital and keep spending?
Well, the thing that we don't talk about as much is, why is capital expenditure going to go up? It's not because there's like more stuff. It's always framed in the context of demand. So we're going to build more data centers because we need the compute power to facilitate all the demands run AI workloads. Yes, in part that's true. But capital expenditures also go up because the cost of building those things is higher. It's not just memory chips that are driving up inflation on the data center side. We have labor and construction inflation. That is just true out in the world. So that's kind of what's interesting. And how you guys framed what happened with the Samsung post-earnings reaction in the markets is absolutely spot on. Nothing has fundamentally changed in the memory chip market in the last 48 hours. Exactly the same. The thing is that the market's kind of saying, I think a lot of this future AI growth had already been priced in. You talked about that record quarter and where valuations netted out. It's kind of interesting to say, we kind of knew this, right? We know what the state of the world is. But I think we should talk more about like the cost of doing business for these AI companies is greater, not necessarily they're pricing their own CapEx growth based on demand at this point.
Prices are going up. Ed, it's good to see you. Looking forward to the show. Bloomberg Tech, a few hours away with Ed Radlow. Chip stocks then struggling to find a firmer footing over the last few days. Gil Luria of D.A. Davidson pushing back, saying the market being on edge about the AI trade is not an indication prospects for semi companies have changed at all. Gil joins us now for more. Gil, welcome, sir. Let's get into it then. Why is the narrative shifting?
Because that's what it does, right? So 6 months ago, anything in AI was great and AI was going to take over the world and software companies were useless and everybody bought the SMH and sold the IGV. And now, for whatever reason, the pendulum is swinging back and people are buying IGV and selling SMH. There's not a lot more to it than that. There's a tremendous flow of news and data points, but none of those has really indicated there's a change in demand. The conversation you were just having, this is mostly driven by demand. We are using the AI tools more. They are getting a lot better all the time and seem to be continuing to get better. You pointed out OpenAI doesn't even have its latest model out yet. Models are getting better. We're using them more. We need more tokens. Demand is up. That's why everybody's building data centers. None of that's changed. Just sentiment, just selling the news, just the pendulum swinging back. And that creates opportunities because there's a lot of dislocation in semis. There's semi stocks that are too expensive regardless of what happened. Your Intel, your Cerebras. There's semi stocks that are trading as if we're already past the peak. Your NVIDIA, your Micron, and that's where the opportunities are. Buying NVIDIA at a sub-market multiple, buying Micron at 7 times earnings, if we're using AI at all next year, those two stocks are very well priced right now.
Do you think it's fair, though, Gil, to say that we've seen peak profit margins based on the pushback from some of the hyperscalers and cost?
Percent margins for NVIDIA may stay stable in the 70s. Percent margins for Micron may not be higher than the high 80s. They may settle down somewhere in the 80s. But the top line growth means that that's still very significant earnings growth. Back to the conversation you were...
Too bullish.
What's that?
Kill the mic. He's too bullish. Gil, tell us what your top pick is right now then. Pick up the pieces. Where would you go?
So on the semi side, it is Micron and NVIDIA. On the software side, it's Palantir and Microsoft. Those two are the orchestration layer for AI. So companies are not going to build directly on Anthropic and OpenAI because they're going to have their plug pulled on them, just like happened a couple of weeks ago. So they're going to want to build their business on top of an orchestration layer, a part of the stack that allows you to switch models. And that's what Microsoft already does for us with Copilot, and that's what Palantir does for their customers. Those two will also introduce more open source models, which will help companies manage their expenses.
Hey, Gil, thank you, buddy. Appreciate it. Well framed.
Thank you.
The bull case from Gil Luria of D.A. Davidson. Up next, the latest on energy. The latest from the NATO summit in Ankara, Turkey, with Bloomberg's Anne-Marie.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
As the clock gets further away from the Asian and European session and closer towards the start of the opening bell stateside, equities do recover. We're down by just 0.5% on the S&P 500, down by 3/4 on the Nasdaq. The tech story, a big piece of this, and it will be a big focus for us into the opening bell. In the bond market, yields were higher by 2-3 basis points, now up just by 1, not even at the front end of the curve at 419. Crude was up by about 6%, now up by about 4. Brent and WTI. Brent crude this morning, 77, up 4.3. Similar move on WTI at 73. This move is settling down just a bit as we get closer to the cash open stateside.
We've had a lot of investors in this show. Not one of them has come out and said we're selling everything. Not one of them has said, actually, we're a little bit concerned that this is actually going a little bit too far and that risk sentiment is completely upended. In fact, more of them are coming out, whether it's Tracy McMillan or others, saying, honestly, it opens up opportunities. We just heard Gil Luria talking about how this is an incredible buying opportunity for NVIDIA and Micron and others. And you just start wondering, Is it sort of that U.S. investors are predisposed to be optimistic, or is it that investors are just so conditioned to be bullish in a market that has only gone in one way this year?
It's a correction, but a healthy correction.
Obviously.
We had an 80 to 90% move on chips. We've had a 15 to 16% move lower. Okay.
What's healthy about that?
A rotation within equities, not a rotation out of equities.
Rotation from sugar?
You know how this works. You know how this works, right? Things are okay.
I know, that's what a lot of people are saying. And they're saying if you look at yesterday, we saw the hyperscalers actually gain value. You saw equal weight continue to perform better, lose less than the rest of the index. All of this pointing to a healthy move. Key question is going to be how far this oil rally goes and whether it does upend expectations, not only for central bank tightening, but for the profitability of some of the other companies, the 493, or, you know, whatever number it is now, that potentially have gotten left behind.
That opening bound just around the corner. 60 minutes away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing the chip trade under pressure this morning, but as you said, the risk-off mood is settling down. But as of yesterday, these names, Micron, SanDisk, and Western Digital, all entered bear market territory. And what has been different is that other times during pullbacks, investors have been quick to rush in, but this time it has stuck, and it comes just as SK Hynix gets ready to list on Friday on the NASDAQ, so it will be a real test for investor appetite for memory. Turning to oil, of course, that is surging due to President Trump's comments on Iran, and that is helping to lift the energy stocks, though they are trimming their gains. ExxonMobil, Chevron now up just under 2% in the pre-market after President Trump said the ceasefire with Iran is over and expressed disdain over toward Iranian officials. So that caused investors to once again price in the risk that any disruption to supply could keep energy prices elevated. Though, as you said, we haven't seen the outsized moves that we saw earlier in the conflict. And a legal showdown is brewing between two chip makers, and that is why we're seeing Nvidia shares falling just under 5% in the pre-market after its rival Wolfspeed filed a patent infringement lawsuit alleging that a broad range of its products violate 5 of its patents. Nvidia disputes the allegations and says it plans to vigorously defend itself, though this one as well is trimming its losses. John?
Yahira, thank you. Thank you for this morning. Some of the morning movers, the single names to look for going into the cash open. Let's turn back to our top story. The president saying the ceasefire with Iran is over, sending crude higher by 4%.
We have to also remember when we saw the MOU being announced, we couldn't expect going from 0 to 100 directly. I think right now we shouldn't also extrapolate that this is going to go to 0 and stop altogether.
Anne-Marie is traveling with the president in Ankara, Turkey, and joins us now for more. Anne-Marie, the energy piece of this is critical. What is the setup now in this moment compared to where we were several months ago?
Well, even, Jonathan, where we are just 24 hours ago, you have naval forces, U.S. naval forces, basically saying the threat level now in the Strait of Hormuz has moved from substantial to severe. So where we were with the signing of the MOU, you have vessels now, once again, having to question whether or not they should traverse the strait. We did see some movement following those attacks yesterday by the Iranians on 3 vessels. But when it comes to LNG vessels, those have basically stopped. So now if you are a company and you're thinking about doing this, you need to weigh, is it worth the risk right now, given the recent escalation over the past 24 hours? And if you decide to do so, which route do you take? If you decide to go on the route that the U.S. forces are backing, that really hugs the Omani coast, well, potentially you're going to have the backing of the U.S., but that is the route that we have seen more aggression from the IRGC. Then potentially you can go on the route that's more of the middle of the strait, but the issue there, of course, is you have to get approval from Tehran, and that could put you at the crossfires of the United States. So this is potentially going to be the problem. As we saw an uptick of more vessels since the signing of the MOU in June, potentially is that going to start to trickle down now, given what we've seen, and the president right here in Turkey saying he thinks it's been a waste of time in terms of the negotiations, and at the moment he thinks the ceasefire is pretty much over.
Anne-Marie, you got to the heart of it, though. That's the issue. It's not about whether you transit the Strait of Hormuz. It's how you transit the Strait of Hormuz. And if you choose to hug the coast of Oman, then Iran's going to make life difficult for you because Iran has other ideas. They want you to go through their desired path so they can charge you a fee. Isn't that ultimately what's up for debate right now?
Absolutely, and that's an international waterway. So the United States, the Saudi Arabia, the UAE are not, the Europeans, Qatar are not going to sign up for that. And this is where the problem is. Iran is still trying to have that control over the Strait of Hormuz by making it incredibly difficult for ship owners to go through the route that's U.S.-backed closer to Oman. And then if you go the safer route, potentially when it comes to the regime, then you need their approval. And in the end, that would mean that Iran is still having this control over the Strait of Hormuz, deciding who gets to go through and potentially most likely charging fees to be able to allow that passage.
Anne-Marie, before you go, this summit now consumed by this single issue. Today was meant to be about something else. I have no doubt the Europeans wanted to make it about Ukraine. Where's that issue now?
Well, we're waiting for the president to sit down with President Volodymyr Zelensky. The agenda is definitely behind here in Ankara. Ukraine was supposed to be top of the agenda today, as well as defense spending, making sure NATO 3.0 actually happens and all of these countries start hitting 5% of GDP targets to be spent on defense. This is still going to be an incredibly important meeting. I spoke to the Finnish president yesterday, Alexander Stubb, and he said NATO should be able to deliver, and he hopes they could deliver more Patriot defense missiles right now for Ukraine. You've seen some of these fresh strikes from Russia on the eve of this summit that Ukraine has not been able to defend. There's been one issue that has been floating around for months, potentially a license agreement that Ukraine will be able to produce this at home in country. And I imagine Zelensky is going to ask the president for that sign off today. We'll have to wait and see what comes out of that bilateral meeting as we wait for them to sit down.
Anne-Marie, it's good to see you. Always good to catch up in Ankara, Turkey, following the NATO summit and the moves of the President of the United States. For 4 years plus now, the NATO summits have been consumed by supply-side shocks, which have reshaped energy markets and informed us all on where central banks might turn. It was Ukraine and these aggressive rate hikes we had coming out of the pandemic, and now we're playing the same game in Europe with a war in Iran.
Yeah, it seems like the solution to all of the potential animosity between the members of NATO and this question that is existential about just supply is simply not to have a 2027 NATO meeting, which seems to be what's on the table right now, to possibly stave off some of the awkward moments.
Why would you?
I mean, I don't disagree. I mean, at a certain point, what's getting accomplished? I mean, you do have this pledge of NATO members to support Ukraine until 2027, but ultimately, what have we actually accomplished other than some of the highlights that you played in terms of igniting tensions for Greenland, with Spain, and potentially with Iran with the end of the ceasefire?
We had an energy shock in Ukraine coming out of the pandemic. Everyone hiked rates. We had an energy shock in Iran this year, and the ECB hiked rates. In 2 weeks' time, there's another ECB meeting. In a few weeks' time, there's another Fed meeting. Mike McKee is on the ground in Jackson Hole, which is an interesting place to be right now, Mike, because in a few months' time, there's going to be a massive focus on where you are. Mike, walk us through what you're doing and how this conversation might change again into this meeting.
Well, basically, this is the Teton Economic Outlook meeting. It's people from Wall Street and economists talking about what they think is going to happen. And of course, by dinner time last night, after all the headlines of the Iran attacks, everyone was up in the air about what was going to happen next. And nobody really had a good idea about where the markets are going, where the oil markets are going. This is another one of those situations where they just have to sit and wait, which is kind of the situation that the Fed finds itself in. You know, we get the Fed minutes today of Kevin Warsh's first meeting, and that's going to be a little difficult to decipher because the problem with the minutes has always been that they're 3 weeks old, so it's looking backwards. And now we seem to be in the same position that we were when they had their meeting 3 weeks ago. Oil prices going up, the conflict increasing, and what they do about it, we don't know. So I guess the question today with the minutes is, did Kevin Warsh make any changes in the format of the minutes, or did they take out anything that might be construed as forward guidance?
Mike, you nailed it. Typically, we talk about the power of the pen. What about the power of the edit button, the power of the eraser? How much power does the chair have to massage the minutes?
The chair has power by tradition, but not by statute or anything like that. Basically, what happens is after the meeting, the minutes get written up by the staff of the Fed and then circulated to all of the bank presidents and governors for their comments. It gets edited, and then, you know, after 3 weeks, it gets put out after all of them vote, what they call a notation vote, just basically, is it okay with you? if there were any dissents, that would be interesting. But it's also true that probably Kevin Warsh doesn't have a lot of time, because he'd only been there for a short period of time, to make any significant changes. However, we know he doesn't like forward guidance. And so there are usually sentences in there about members thought that perhaps there was no reason to raise interest rates now, but it could be happening later. That kind of stuff might disappear. So that'll be what Wall Street is watching right now, to see what how the minutes might change, as opposed to how policy might change.
Mike, before you go, you're in Jackson Hole. Is Kevin Warsh going to Jackson Hole in about 6 weeks' time?
Well, we don't know for sure. The Fed never confirms it until the last minute, but we assume he is. But I think this year, people might be disappointed in his appearance if they're thinking he's going to make any big monetary policy pronouncements. Since he doesn't like forward guidance, he may return to the tradition here of just basically commenting on what the subject of the meeting is, rather than anything in particular about what the Fed's going to do going forward.
Interesting. We'll see. Mike McKee, thank you. Appreciate it. Enjoy yourself, Mike. Mike gets the good trips, doesn't he?
He always gets these beautiful places.
It's not bad, is it? Jackson Hole once, Jackson Hole twice.
I mean, honestly, it is interesting to see the choice. You know, it's sort of Sintra in Europe, which is a little bit more built up, and it's more the rugged sort of classic Americana with grizzly bears out in the Grand Tetons. Look, you asked a good question, which is, will he show up, and then what will he actually say?
Yeah.
And at a certain point, if he doesn't give, and I'm talking about Governor Warsh, Fed Chair Warsh, if he doesn't give his view of exactly how he sees inflation or how he sees the employment market or anything at all to guide markets, markets are going to take a real response from that. I mean, at a certain point, he has to give some commentary because he's had enough time to say something. Ultimately, it goes down to, he said he would only say something when he had something to say.
Yep.
If he never has anything to say, people in markets are going to take the job for him, and they're going to run with it. And the people who do have something to say are going to suck the oxygen out of the room.
In the meantime, maybe that's what he wants. You know, maybe he's happy with where markets are priced at the moment. Certainly hasn't pushed back. And that ultimately is the problem. The less you speak, the more weight people put on the things you do say. So he goes over to Sintra, Portugal, and states the obvious, that inflation expectations have come in over the last few weeks. I mean, that's just stating the obvious. But people say, oh, he chose to say that. Didn't say much else. Why did he choose to say that?
I saw the headline come across, and then I saw the bond move reaction.
Right.
And I was thinking, who could objectively look at the price action and not say that? At a certain point, you start to wonder whether that is the indication, or whether that is what he wants, whether he's trying to avoid the hot seat with President Trump, whether, you know, we get any insight into these conversations. I don't know that we're going to get much insight into the family fight this afternoon.
2 p.m. Eastern Time, Fed minutes drop. Look out for that this afternoon. Let's get you an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Maine's Democratic Party urging Graham Plattner to immediately withdraw from the U.S. Senate race following allegations of sexual assault. The party vowing Plattner will have no role in selecting his replacement, accusing his campaign of trying to influence the process. In New York City, officials are reopening some streets around a compromised Manhattan high-rise. Emergency crews are working to stabilize the structure. The building was evacuated Tuesday after construction workers reported buckling columns and sagging floors. Blue Origin is said to be raising $10 billion at a $130 billion valuation, excluding new funds. The New York Times reporting founder Jeff Bezos is contributing $2 billion to this latest round of funding. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update, and thanks for this morning. Up next, we'll set you up for the day and the week ahead. Plus, we'll catch up with Scott Croner of Citi as the rotation in stocks opens the door to what he sees as new opportunities.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The best question is, can the market survive if the AI trade in general falters? And the answer to that, I would have said, will say, and will always argue, is no. Until then, it's just the water sloshing around in the pool without any coming over the edge.
A rotation within the market, not out of the equity market. Dan Greenhouse of Solace doing his best to ask himself his own questions a little bit earlier on this morning on the equity market, right?
He did a great job asking himself his own questions. As far as the sloshing around water, yes, although the bathtub is getting bigger and bigger and it's unclear whether there is enough water to go in. A lot of people are saying, yes, it is. And then a lot of hyperscalers and semiconductor companies are saying, hold my beer and let's raise some more.
Equity futures this morning, negative by 0.5 on the S&P, recovering on the NASDAQ. We were down by more than 1% earlier. We're now down by 0.7. In the bond market, talked lots about this move in yields, not stateside, but worldwide. Up by not even a basis point on a 2-year in the US, but up to close to double digits earlier on this morning in the UK and Germany. In the oil market, that sets the tone for the market earlier on this morning. We're up by 4%, 73 on WTI, Brent crude at 77. Looking ahead, the day and the week ahead looks like this. Later this morning, the president holding a press conference from NATO, so look out for any comments regarding Iran coming out of that. At 2 p.m., the Fed releasing the minutes of its latest meeting. Now, typically, maybe you wouldn't be that interested in Fed meeting minutes, but this is the first edit for Kevin Walsh, new Fed chair. Be interested to see what kind of edit we get from the man at the top of the Fed.
People sat in chairs, they spoke, they looked at each other, coffee was had. Thank you.
Right, just one page.
That's it. That's the whole statement.
I'll be opening the PDF a little bit later on this afternoon. Looking ahead to tomorrow, another round of jobless claims on Friday, earnings from Delta, and a much-anticipated SK Hynix ADR trading debut stateside. Look out for that. That company raising $28 billion. Let's talk about the equity market and the tech trade. Stocks pushing lower this morning into the opening bell. Equities already unwinding the tech trade and now facing the collapse of the US-Iran ceasefire. Scott Cronin of Citi writing, until we get some fundamental clarity, especially around the AI build-out, we suspect rotation and choppiness will linger. However, we believe this creates an opportunity for less crowded trades. Scott joins us now for more. Scott, welcome, sir. It's always good to hear from you. Recently downgrading tech, so I think that's where we should start. Why the move away from tech?
Well, I think it's pretty clear. The way we were looking at it is that the setup with the strength that we saw in Q2 on the memory storage component of the semiconductor space really began to set up for a face-off. Where is this going to lead us as the hyperscalers have to contend with the influence of rising input costs into their CapEx calculations? What this did, in our view, is set up a situation where The strength we saw in Q2 for that semi-hardware component, we felt was somewhat unsustainable relative to where the hyperscalers' CapEx considerations are right now.
Scott, with that in mind, is
opportunity for the software component of this to be a sort of a tertiary beneficiary of some of the pressure we're seeing now on semis and the hyperscalers.
Scott, how do we get to 8,100 without the participation of the tech behemoths?
Yeah, you know, it's a really good question, Lisa. So when you look at this, the Mag 7, and I would say first up front that we think the Mag 7 construct is dead. We think it's gone. We've gone to Mag 8, and we could probably go to 9 or 10 if we really wanted to in terms of the way some of these memory semiconductor-related companies have appreciated of late. But the path here really requires two things. Number one, you need the broadening effect to kick in. That other half of the market that's not attached to AI, that's more traditionally macro and economically sensitive driven, we think that is where there's opportunity right now. But number two, to your point, the Mag 7 coming back to the construct I think is dead, is essentially traded roughly flat year to date, and that's 40% of the index. So we do have a setup here. We're going into the second half, and we got roughly 6 months to go. Is this broadening effect to take hold on one hand as we wind down Iran, which I know is back in the news flow this morning, but as oil prices fade, we think that takes pressure off of inflation. But then as you go further into the year, we do think there's opportunity for the AI trade, once it digests a lot of these issues that we're contending with currently, to kick back in, and the combination of the two is how we get that sort of mid to upper single digit move into the end of the year.
Scott, you mentioned the Iran situation, and we are seeing a flare up this morning. At what point would oil prices rise to a point where you would think that the broadening out trade was threatened, that this thesis of disinflation into the end of the year truly gets undermined?
Yeah, I'm not sure there's a magical level here, Lisa, but what I would say is that, obviously with oil sub 70, we were feeling pretty good about our broadening play, right? And I still think that's our base case. We're a day or two into the conflict sort of reasserting itself, so we'll need to let this play out. But I'd say if there's a line in the sand on oil prices that we've been drawing, it's probably around that $80 level that really begins to kind of clip the thesis for us.
Not too far away right now. Scott, it's good to see you. Thanks for the update. Thank you, sir. Scott Cronin there of Citi, downgrading tech recently, but still looking for a market to end the year at 8,100 on the S&P. In many ways, you asked the right question, which is, can you get to 8,100 if the tech story is not participating in quite the same way?
And the answer is, well, the tech story will eventually participate. First, there'll be the broadening out, and then you might see some of the tech stories start to perform. Of course, the idea of the Mag 7 story being dead is something that an increasing number of people are coming around to, and frankly, what we're seeing right now with a real distinguishing between the hyperscalers and the semiconductor names and a whole host of others.
Happening right now in Ankara, Turkey, this development at the moment, the president in a bilateral meeting right now with the Ukrainian leader saying it's a great honor to meet with Zelensky and that the two have developed a good relationship. The tone for this meeting very different to the tone in the Oval just a few years back.
Yeah, and I believe that Volodymyr Zelensky has been seen wearing a suit around the NATO meetings. He's learned his lesson when it comes to discussing anything with President Trump. There will be a real question about what materials, what weapons, what types of aircraft is the U.S. willing to supply to Ukraine, and what kind of promises will be made in tandem with other NATO members as other NATO's members pledge to support Ukraine through 2027.
Such a crazy moment for this market right now, for geopolitics to reassert itself. In many ways, the chip rally started, not despite, but because of the war in Iran. It focused people's minds on the things that were working. Chips absolutely ripped. Now it reasserts itself just as chips start to roll over following a 90% move. It's an odd one.
Are valuations too high for tech names to be the haven that they were at the onset of the Iran conflict? And ultimately, the answer is, we don't know, because we've heard about it all morning. Some people saying, yes, it still is. Other people saying, it's more complicated now. This is a maturing story.
Coming up tomorrow, we'll catch up with Bob Elliott of Unlimited Funds. We'll speak to David Lebovitz of JP Morgan, Vito Spaduto of RBC, Michelle Weaver of Morgan Stanley. All of that and more coming up tomorrow. With equities recovering just a little bit, we're down on the S&P by 0.5. From New York City this morning, good morning. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
Oil higher, stocks down, geopolitics back in the headlines. 30 minutes until the start of cash equity trading. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up, President Trump declares the Iran ceasefire over after the U.S. launched fresh strikes.
Brent spiking as a handful of oil carriers do appear to be continuing through the Strait of Hormuz.
And those tensions create another headwind for the AI trade as selling continues.
All right, well, it's going to be hour by hour today, but at least for now, let's take a look at some individual stocks to watch. Iran tensions obviously adding a new layer of risk to the AI trade, which is already under pressure and undergoing that rotation from memory stocks in particular, but also hyperscalers to the broader market. So do keep an eye out for dip buyers. Futures have paired losses this morning, though we are seeing plenty of red on the screen.
Yeah, none of those chip makers are catching a bid. Even though the recent selling, it's about geopolitics. And when we tend to get these headlines with oil higher, Bonnie, this is what you get in energy stocks. So they are climbing. There's uncertainty over the Strait of Hormuz, so we start to see higher prices. At one point, we're up more than 5% for oil. That's started to pare down, though. We're still not even at $80 a barrel for Brent crude, but still Exxon, Chevron, Occidental, all up at least 1.4%. Meanwhile, President Trump, he is currently at the NATO summit in Ankara, Turkey. Here's the president speaking earlier.
To me, I think it's over. I don't want to deal with them anymore. They're scum. It's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
President Trump currently meeting with Ukraine's President Volodymyr Zelensky, and he has just said in these comments that the US will probably strike Iran again tonight. That's after the 80 targets that were attempted to be struck overnight last night. Joining us now from Ankara is Bloomberg Chief Europe correspondent Oliver Crook. Ollie, were any of these comments to the effect that the ceasefire is over in his opinion, etc., planned by the president, or were they just in response to reporters' questions? And you know, what happens next?
Yeah, they were certainly off script. I mean, this came at a moment when he was sitting alongside the Secretary General of NATO, Mark Rutte, who had really carefully choreographed really everything about the summit. He laid the groundwork sort of in the weeks coming up. He teed up that entire press conference in order to say favorable things about the president, about the alliance, to really have it be a slam dunk in order to keep the United States on side. He took a question from reporters. Reporters asked him how what the status of the memorandum of understanding with Iran was. Does he consider the ceasefire to be over? The president really, he paused there. He took a beat. And he said, yes, we believe that the ceasefire is now over and that effectively he does not want to engage in the conversation with Iran anymore. He said that there should be continued negotiations, that they can continue talking, but at the end of the day, that it is the president's decision. And as far as he's concerned, it's a waste of time to continue speaking to Iran. He referred to them as scum, liars, cheaters. And this is all a very different tone than we heard from the president of the United States just yesterday when he was saying that this now third crop of leaders in Iran after the U.S. had killed basically the last two regimes, as Trump likes to say, were more reasonable people they could work with. That obviously opinion changed over the last few hours and overnight from the President of the United States.
Well, it also maybe changed from 3 weeks ago when he said the peace deal equated to an unconditional surrender for Iran. Oliver, if we can just hover on what you mentioned, that negotiations are still ongoing, even if Trump is now expressing, to put it lightly, skepticism on those negotiations. What could they possibly look like, considering the tone that the president is now taking?
Well, I think, Danny, this is the difficult thing for anybody who's trying to interpret this within the markets, for other countries, you know, who have been in the room sitting across from Trump and having these discussions over the last few hours. It's always the same thing, right? It's translating the pronouncements of the President of the United States into U.S. policy. Obviously, the market has not taken everything that Trump has just said totally literally. Otherwise, oil would be back up at a much higher rate. We're still more or less below $80 a barrel the last time I checked. So I think at the moment, there's a sense that we're not taking it entirely literally. But again, it's very difficult to sort of predict. For these the leaders that are here, 32 of them of the NATO countries convened here to deal with other issues, to deal with spending, and of course Volodymyr Zelensky, who's sitting next to the President of the United States right now. The interest is to try to get the United States re-engaged with that war, with the war in Russia. We heard from the President there, speaking alongside Zelensky, a much more positive tone than we've heard from the President when it comes to dealing with Zelensky. And Zelensky, I think, really senses the opportunity that's in the air. The focus of the Americans potentially moving away from Iran, potentially re-engaging with Russia in a very different President Zelensky than there was sitting there 18 months ago next to the President in the Oval Office, one that is now holding cards, who's got that massive loan from the Europeans, wants to get some air defense, but really wants to re-enlist the President of the United States, this time on Zelensky's terms.
Oliver, thank you so much for your coverage there at the NATO summit. Looking forward to catching up later. That's Bloomberg's Oliver Crook in Ankara, Turkey. So stocks are falling with the Middle East back in focus, but I mean, not even 1%. But it is notable that tech continues to underperform. After underperforming yesterday, AI rotation, we're trading out of memory chip makers, and at the same time, hyperscalers too. Let's discuss with Bloomberg Tech host Ed Ludlow. Ed, I mean, it feels divorced from geopolitical headlines, even though it is selling off at the same time. We're looking at, after the best quarter ever for semis, they have trading now at the lowest levels in about a month. It feels like something is kind of breaking down. Does any of it, do you feel, fundamental?
Yeah, I mean, there is risk-off sentiment, right, in the market this morning, and you have to take kind of a global look at it because the spillover yesterday came from the Asian session. And that was just about how much of future AI growth was already priced into chip stocks after an incredible quarter. Nothing has fundamentally changed. In tech right now, whether you guys want to talk about the memory cycle or Amazon's bond story, the fundamentals of those, nothing's changed, right? From when I touched down in New York City Sunday night, everything's the same. There is some math to be done. One interesting thing about the way memory chips have traded and continue to trade here is we haven't said the words SK Hynix since I've been in town. On Friday, that's the next sort of test and catalyst for US investor attitude towards what's happening. But, you know, Samsung, as the case study, was a stock that was up 150% before the sell-off. And what's more interesting is probably to look at it at a valuations perspective. Like all of these stocks, memory in particular, but there's a great story on the Bloomberg about where Nvidia's at right now. cheap.
Didn't participate. So you talk about the SK Hynix offering, right? Is there any suggestion that there won't be appetite for this given the last 12 sessions that we've seen in Korea, going into a bear market and so on? Even though we know there's going to be phenomenal profit out of these companies for the next several quarters.
I mean, like, you know, whether it's the execs or the bankers, you always have a little bit of regret on timing, right? It's astonishing timing for this week to be this week, but it's an oversubscribed book. You know, SK Hynix trades at from a valuation perspective, a discount to Micron and Samsung, its peers, but it has 57% of the high bandwidth memory market. You know, the main thing right now that we're all obsessed about in the AI build out. So, you know, it'd be really interesting. Part of the logic, right, it's not just to raise capital to expand capacity. $28 billion is a lot of money, but it's also this sort of sentiment that the American investors kind of get the AI story a bit more and the structural what's going on in the Korean market has been astonishing, but you know, that bit that the US investor, it's not just that they can get access to an equity that fund managers around the world are closed to right now through Korean markets, it's that they know the memory story. They've done their homework for the last 18 months. They've watched, excuse me, our programs where we've talked about high bandwidth memory a lot. It's been real fun.
It would be funny if the US gave it back, right? If the US started to...
Yeah, I mean, there's a technical thing which is fungibility, right? So with ADRs, the good example is TSMC. The ADRs trade at a premium to the Taiwanese shares. One reason is it's not straightforward to exchange one US share for one Korean share, and so in SK's case, so that's a bit of an unknown, but yeah.
Ed, we'll talk to you again in a little bit. That is Bloomberg Tech's Ed Ludlow. Joining us now is Threadneedle Venture founder Anne Berry. And just on the chip trade, we'll get to the war in just a moment. Would you be interested in participating in SK Hynix's offering this week, given what we've seen in the last few days? Would it make any difference to you that we've seen a big sell-off?
I think we're all going to end up participating in it anyway. This is another one of these, of all of these big tech offerings. It's going to end up in our index funds no matter what. But I think from a fundamental basis, this is one that I would. I think, interestingly, the SK Hynix story hasn't had as much focus over the last 18 months as perhaps it ought to have done. And the fact that there is some arbitrage in the valuation, the fact that when you do look at it on a forward multiple basis, some of its peers are trading at double. This is an opportunity. So, you know, I will end up participating. It's inevitable. I'm happy to do so.
I just wonder what you make of a day like today when we call the ceasefire off. Oil rises at one point more than 5%. Now it is up 5.3%, but it's not even at $80 a barrel. Yields are barely moving higher, something like a couple basis points, 1.6 basis points to be precise. Stocks are kind of selling off, and the thing that is selling off the most is tech, which used to be kind of like this nice little safety blanket when we had geopolitical concerns. I mean, what do you even make of a day like today, which in years past could have led to a bigger and more steep sell-off?
But we've had lots of days like today, right, over the last 18 months. We've had days like today when trade was starting to go into turmoil, when we were having tariffs being announced, when we were trying to figure out how companies were going to deal with it and how nations were going to counter some of the US tariffs then being placed on them. So I think the underlying thread is, does the market believe that this is going to be a permanent state? And I think as with trade, as with the tariff volatility, we're seeing that now the market's saying no, this will settle at some point in a place that it can stomach. And until it gets there, I think the market is trying to tamper its reactions as much as possible.
All right, and we have much more to cover. Please stick around with us. That's Threadneedle Venture founder Anne Berry. Some breaking economic news. We want to mention the IMF just issuing an update to the World Economic Outlook report. It is leaving its global growth forecast largely unchanged for this year, saying that the boom in AI is helping to offset the fallout from the conflict in the Middle East, which itself might be growing. We're going to get the details of the updated World Economic Outlook in the next hour with Picha Koev-Brooks, the woman behind the report. A check on your markets this morning, 20 minutes ago until we start trading. And again, as we mentioned, we're not even down 1% despite the U.S. military targeting 80 to some targets in Iran. Trump saying that the ceasefire is effectively off, expressing skepticism about talks. Bond yields only up 1 basis point, but we are back above 4.5% for your 10-year yields as Brent crude, $78 a barrel at 5.3%, Fani.
Exactly. And Danny, you know, we are just starting to price in this escalation. It's going to be interesting to see how we trade and also how Iran responds, because we're not quite sure exactly what Iran has made of these particular comments that have just come out from the NATO summit in the last few hours. All right, we are going to keep talking about this, though, and also to our guest, Anne Berry. We'll also have the opening bell coming up for you in just a few moments.
Let's first get a look at some of the other movers on our radar this morning. Fertilizer and chemical stocks climbing as renewed global tensions could lead to strained demand.
Travel and leisure stocks getting hammered over the prospect of higher fuel costs for longer.
And Alibaba surging on earnings optimism and investor appetite for Chinese stocks. Those ADRs up 9%. At the same time, President Trump is still meeting with Ukrainian President Vladimir Zelensky. The president mentioning that the U.S. will probably strike Iran again on Wednesday. That bilateral will continue along with a likely press conference coming from the president in the next hour or so. You can watch this on Live Go on your terminal. This is Bloomberg Open Interest.
Hard question.
When will we end this war?
That's a good question. I don't think I've ever answered that question. I've been asking that question.
Mr. President, what's the status of a trade deal between the U.S. and Ukraine? What's the
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheets.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Every trading day, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now to high interest, to look at what's making headlines around the world. The Fed's June meeting minutes out today at 2 p.m. New York time. The release is expected to show stronger support for rate hikes if inflation stays above target. Policymakers were increasingly focused on restoring price stability, with nearly half favoring at least one hike this year. The minutes also providing the first detailed look at Kevin Warsh's leadership of the Fed. New York City reopening some streets around the former Pfizer building in Midtown after emergency crews stabilized a damaged section of the high-rise. The apartment conversion project was evacuated when workers found buckling columns and sagging floors. No injuries were reported, and officials say the damage appears contained. NATO is considering skipping its 2027 Leaders Summit as officials look to avoid another public clash with President Trump. The alliance is also wary of spotlighting host Albania, which is one of NATO's lowest defense spenders. Officials say it's still undecided whether the summit will happen next year or be delayed. Danny.
Bonnie, thank you very much. Turning back to markets this morning, which again are falling. but nothing dramatic, not down, even down 1% as yields only move higher by less than 2 basis points. Let's bring back in Threadneedle Ventures founder Ann Barry. And we were just talking about this idea that it is difficult to trade because these things turn on a dime. That doesn't mean there aren't longer term repercussions, though, of continued uncertainty in the Middle East. What are you looking at for follow-throughs, things that you can actually trade and be sustainable and not need to worry about whether a tweet from the president will upend your trade?
Well, you can keep trading through oil, of course, because that is the commodities are used to this kind of volatility. There are ways to navigate through it, but there are longer-term repercussions. Even if the situation gets resolved, there are going to be longer-term consequences. And one area that I look at, and this is sort of tech amidst all of this, is before the Middle Eastern conflict broke out, there was a large fiber optic cable laying program that was happening, being laid through the Strait of Hormuz to connect the Middle East data centers and having a sort of digital corridor. That is completely on pause. And when you have this kind of question mark around, does peace mean peace? Is it going to be sustainable? These are real implications. Now, there are some winners from this. This is where the Starlinks of the world and satellite internet connectivity steps up and says this is a great opportunity for us. But on the other hand, you've got these big cable companies where now you've got a huge addressable market that's sort of gone away sort of indefinitely. So there are longer term repercussions when you cut through it all.
So would you be buying those satellite companies and those Starlink and Starlink type
I'm in it, Bonnie, I'm in it. I was in there at the IPO. It was sort of an experiment. I wanted to see if I would get allocation through Fidelity. And
you were successful?
And I was successful, which was stunning to me. So I'm in it. But I do think this is the kind of situation which shows that's why the demand for satellite communications is going to be insatiable.
The fundamentals are clear, but we still go back and, Vonnie brought this up, the supply question.
Yeah.
SpaceX enters the NASDAQ 100 yesterday, and it gets an addition of pop of 1%, nothing that huge. We're going to get the big offering from SK Hynix coming to market too. Is there an imbalance that's emerging with all of the supply coming to market? And does that concern you at all, even if you believe in the fundamental story?
There is liquidity there. And I think, look, the SpaceX example, joining the NASDAQ 100 resulted in it being down by the stock was down by the end of the day.
Yeah.
To your point, there was a pop, but then it got reversed. So the fundamentals are being looked at because in that case, the technical inflow is overridden by the fact that there is concern about SpaceX's valuation. The other thing I would say that which was interesting to me, it was down despite all of these Wall Street analysts coming out with price targets way ahead where it's trading currently. So it does suggest that there is some kind of this profit taking that's happening, there's portfolio rebalancing that's happening. To SK Hynix, will that replace something like a Samsung in someone's portfolio because they're taking profits for Samsung but saying I still need to get exposure, I don't want to be cut out of the AI trade, I'm going to get FOMO. So I think you're seeing a shuffling of the deck chairs in some respects.
And I mean, we're only sort of 6 hours into this new phase of what might be a war again. How do you think about pricing it back in, given that it might be way worse this time around? If the strait closes again, and if the president doesn't see a way to, back down a little bit, and if things escalate again, well, oil tanks are already at bottom, right? And we were already at wit's end, and that's one of the reasons why it got priced out so quickly and why the president backed down so quickly. What happens if it escalates now?
If it escalates, if you're sitting on energy stocks, you're going to do pretty well, which, by the way, I bought in when Venezuela was happening into the likes of Chevron and Phillips 66, and I held them. So I think this is the kind of time where if it's going to be a long-lasting conflict, certain kinds of areas are, I think, ripe for further investment. Defense is one of them. I was very surprised when President Trump got elected that the typical Trump trade was to go long defense. And for a long time, we didn't see a pop in those stocks. We've seen them, but not to the extent people expected. I've added defense. I will continue to add. Things like the Lockheed Martin deal this week by Ultramarine shows that there is a next wave of M&A that is coming. So I'm leaning into that.
So those are all longer term plays, but what would you do in the immediate term? I mean, could we be facing a crisis in some corners of the market?
Yeah, well, in the immediate term, back to the point of volatility, I don't trade through immediate term panic. The way I try to think about it is if there is a crack in the market, which, by the way, I think is long overdue, if this is the catalyst for it, that to me is the time to go in and add.
Wait, can you talk about that? Why is it long overdue? Why do we need something that looks like a correction?
Because I think the kinds of valuations that we have seen, not everywhere, if we look at software, if we look at some of the chip players, you would look at the multiples there and say these valuations are justified because there's still multiples that seem to make sense relative to historical levels, particularly on a forward basis. Earnings season has shown that season in and season out. But there are other parts of the market, I think, that have really benefited by too much, by sort of an expectation that the AI impact will continue to spread beyond it. So reason number one is I don't think all the valuations have been justified. Reason number two is when you take a big step back, and it's sort of what you said at the top, in any other market, the kind of geopolitical uncertainty that we have seen over the last 12 months would have had enormous ramifications, and the bearish corrections would have been dramatically larger than we've seen. That tells us this is sentiment-driven, in many cases, keeping us at the top. And I worry about that because it won't last forever.
The thing I keep struggling with, and I'm sure I've brought this up to you, because I talk about it with Matt all the time, is something like a Micron price-to-earnings ratio that I'm just pulled it up now. It's still underneath 6.5.
Forward.
Yes. Forward earnings.
Yes.
That still feels incredibly low.
Yes.
Is that also something that needs to correct, or is this thing fairly priced?
Well, no, because I think if that's low, to your point, I think that's where people would say that is fairly priced. They would also say, I've had such a great run-up, I want to take some profits, right? So I think you've got those two countervailing forces. But I think there are other parts of this market that you look at, you know, there is still real uncertainty around some of these software names, right? There is still not consensus around which of those are going to survive and which are not. There's still not a complete understanding. I happen to believe that cybersecurity stocks continue to be pretty good value. Others would say, actually, no, the risk continues to be there. So look, differences of opinion make a market. But I worry if you look at the overall levels here that there are some areas of euphoria.
Right. Is sticking with us, Anne Berry there, Threadneedle Ventures, and she will be with us through the opening bells. Meantime, President Trump is meeting with Ukraine President Volodymyr Zelensky. Trump also says the U.S. is going to give Ukraine a license to make Patriot missiles. Trump has also been saying he'll likely order more strikes on Iran tonight. He's expected to give a news conference in the next hour, and we'll continue to monitor both the bilats and obviously the news conference for headlines. Meeting at live go on your terminal. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Minutes to play for until your opening bell. We continue to decline 0.6% for the S&P, 0.8 for the NASDAQ. Chip makers, after their best quarter ever, are now trading at a one-month low. How things changed. We're back to selling the news after Samsung earnings, and those losses continue to tumble along with momentum itself. 10-year yields, we are above 4.5%, 4.5671 to be exactly precise. As the price of oil moves higher, $78 a barrel, we continue to monitor the latest out of NATO, with Trump on a bilat with Vladimir Zelensky, the Ukrainian president, saying that they might strike Iran yet again on Wednesday. We'll keep you up to date of any headlines as they come. Your opening bell right on the other side of this break.
Take them out. They have desalinization plants. We'll take them out if we have to. I hate to do that. That's probably the one I would like not to do least.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Seconds until the start of trading. You're watching Bloomberg Open Interest. I'm Danny Berger. Just give you an update on NATO. The president has been talking, saying that he might be forced to strike desalinization plants or take over Karg Island, that they will be striking Iran, and there's nothing Iran can do about it. I just share that context because, 1, we should all know it, and 2, look at what markets are doing. We're still only down 0.6% for both the NASDAQ and the S&P. The Dow down even more steep. Usually the Dow had been able to hold up along with the equal-weighted index, but it's this broad risk-off we are witnessing, but not a huge risk-off. Oil, though, is higher by more than 5%. I'm ringing the opening bell. Brad Jacobs and the team at QXO, they have officially closed their acquisition of TopBuild, a really acquisitive company. Been super interesting to watch Brad and all he's been doing, and we, of course, invite him for Bloomberg Deals. Down at the NASDAQ, we have the MLS, Major League Soccer, American Soccer, ringing the opening bell. They probably would have been a bit more happy if Team USA was still in the World Cup, but you see some representation from the New York Red Bulls. Someone was wearing that scarf, so that's pretty cool. The World Cup has taught us that soccer, football, whatever you call it, is awesome. It's a great sport, and so hopefully the MLS gets more love. Let's look at some of the stocks at the open. Energy stocks as you'd imagine, as the price of oil moves higher, so too do these. Exxon, Chevron, Occidental, all up in the case of Oxy, up 2.8%. Again, it's that uncertainty over the Strait of Hormuz. Recall, all of this started with ships being struck in the Strait, and then the U.S. Treasury revoking their waiver to exempt Iranian oil exports, and now this threat from the president. Vani.
All right, U.S.-Iran tensions, Danny, adding a new layer of risk to the AI trade, which was already undergoing a rotation from hyperscaler and memory stocks to the broader markets.
Yeah, so you can see their SanDisk somehow still up. Intel down 1%. Let's continue the conversation. Still with us is Threadneedle Ventures founder Ann Berry. Again, like this market is so hard to discern, especially with the chip trade. So when we get to Friday and we get SK Hynix coming in, I was mentioning this before, that all of a sudden you get into this market, more ETFs come in, leverage ETFs. Yes. You've seen that happen in South Korea, where there's been kind of this like frenzy around it, and deleveraging seems to start to cause a sell-off in itself. I wonder what you make of those, what you make of them as investments, and if it's something that concerns you when these strange like market structure products come in.
So yes, yes, and yes, right? So I personally don't trade in leverage ETFs. I've grown up with leverage. I'm a private equity person by background, so I have awareness of the benefits of leverage, but I've also got caution. And I think in markets like this with the volatility picking up, that's where leverage should get more frightening for folks. So, you know, you've seen in South Korea that the rise of some of these leverage products, because the level of sort of local exposure, the desire to get exposure has been enormous. I think to do it here, where there's a lot of different ways to play the chip trade, I stay away from it.
Yeah, I mean, it's a difficult day to be a trader, right? You don't know which way the world is going right now. You also don't know if this is a permanent shift out of hyperscalers and memory stocks, given that they are plenty good companies. They are margin-rich companies, right? And they're producing profit after profit, quarter after quarter after quarter. But we still don't really know what the end game is and what the AI solution is going to be. Is there a possibility, Anne, that any of the hyperscalers or any of the users turns around and says, look, you know, we're doubling back on our strategy. We're changing things up a little bit. We might take a one-time write-down, and that everything folds.
Write-down is one thing, and I think for that to happen would cause real concern in the market, because that was a write-down is a real admission that all the capital that you've spent is absolutely not going to return the kind of yield that was anticipated. The return on investment's not going to be there, and worse than that, that you'd signed up to something which didn't exist, right? That's the implication of a write-down. I think that would be really quite a difficult thing for the market to absorb. I think there's a milder version of that which is completely plausible, and we've seen versions of it already at points, which is a slowdown in some of this capital expenditure or a commitment to keep it, but we see it sort of coming in sort of choppier waves as these businesses say, we're going to take a look, we're going to see what the return is, we're going to take stock, see if it's the latest technology, and sort of tweak the speed of deployment. So I can still see commitment to overall capital budgets over some multi-year period of time, but I can see deployment getting a little bit choppier. When it comes to some of this sell-off, look, there's one thing I would say is we're coming up to earnings season, we're not really in it yet. And so what I suspect is happening a little bit is folks are, again, taking profits, keep cash to buy the dip if you think it's coming, and then we're going to see trading activity pick up again once these earnings really start to hit. I think Samsung was the beginning. We're going to see more of it. We're not in peak earnings season by any stretch of the imagination.
Well, you might have answered my question there, because maybe the market gets more optimistic, but I wonder if in the meantime, if it does feel like there's a pushback to the spending, and I'm thinking specifically of Amazon, comes to market yesterday, $25 billion of a bond offering. Its demand is something like 2 times that size, which obviously is still great and good for Amazon. It gets its funding, but on average, those types of IG offerings have been 4 times the demand of the size it is. Are we starting to see just a slight pushback and maybe some slight headwinds for these companies to be able to tap markets for the CapEx that they want to spend?
Well, we've also seen that bond offering come on the back of another enormous bond offering from SpaceX, right? So I think there's a little bit here too, which there's a lot of investment opportunity coming from similar or adjacent pockets. Look, 2 times oversubscribed at this time of the year in particular is pretty good. They got the pricing that they wanted.
Bad, right?
It's not bad. This is usually, people would typically say on the street, don't go out over July 4th, right? Don't go out over
to be fair,
Labor
though,
Day.
some other companies that were due to come to the market today have backed off because of Amazon and because of the developments we're seeing in the Strait of Hormuz as well.
And we've seen that in the IPO market too. There's one business I'm invested in, which is in the drone area, which was considering, coming out and IPOing and said, look, with SpaceX happening, just sit it out until we know what Anthropic's doing. Let's just wait and see. And that's a tough moment for people to navigate because conventional wisdom is you go when the IPO window is open, right? The FOMO, the idea that you might miss getting that capital hit is very difficult. But these are such sufficient drawdowns on liquidity that people are having to be more cautious.
The Russell 2000, Anne, is it having its moment, and how long will it last?
I think we need to see through this earnings season just how widely earnings improvement actually spreads. It's been pretty choppy in the Russell 2000. We need to see some consistency.
And then there's also the issue of what interest rates do too, which I'm sure it impacts small caps as well. When you look at a day like today, I should just mention Trump, in speaking with the bilat with Vladimir Zelensky, says the U.S. may reimpose the Hormuz blockade only for Iran. Oil markets not reacting. They're still up some 5%. But considering that oil prices are stuck in this range, they've drifted down, now they're drifting back higher. Are you assuming that we get something of interest rate hikes, or what are you assuming, and how does that change your investment outlook?
I'm not assuming an interest rate hike. I mean, for all of the concern, and I do see it around inflation, it's actually been pretty steady, all things considered. And I just don't think that there's going to be the appetite for a rate hike to put at risk what's going on with the labor markets, number one. This is still a dual mandate Fed. Number two, I do think that there is some anticipation that there'll be productivity improvements to mitigate some inflation risk over the longer term. I think Kevin Warsh is going to want to wait and see a little bit on that front before he does anything too hasty. A reversal in course to a rate hike can't be underestimated in terms of the kind of message it was sent to the markets. They've got to be super high conviction at the Fed before they go there.
Anne, were you concerned at all about the employment situation after the jobs report?
I find with the I have been concerned about the job situation by sector, Bonnie. When I take a look at what is going on with AI, and I look at some of the businesses I work with, and I look at where there has been appetite to reduce headcount, I do think that there's a real secular risk to some parts of the labor market. In the aggregate, it looks as though we still have a pretty robust labor market. I do think that there is risk to it.
All right, and we're gonna have to end it there. Thank you so much for spending the morning with us. We really appreciate it. Always such a joy. Anne Barry of Threadneedle Ventures. Let's get your check on equity markets 8 minutes into your trading day, and we are moving lower by 0.5%. We have seen previous days, like yesterday, where the majority of stocks were up, even though we were moving lower. That's not the case today. Most things are moving lower. The things that were supporting us yesterday were really the safety stocks, things like Staples, for example. It's going to be energy that does well today, alongside Broadcom. And interesting to see some of these chip makers are doing okay too. Broadcom reaching a deal with Apple in the tens of billions on producing new chips from them here in these United States. So Applied Materials, Western Digital, Lam Research, those chip stocks doing well after the Philadelphia Semiconductor Index reaching a 1-month low. Again, you can see some energy is in there too after the price of oil moves higher. To the downside, it's the hyperscalers. They're still struggling to find a bid. Microsoft, Amazon, Meta, Apple, Tesla, the Mag 7 all down in the losing column along with some of the financials. Let's take a look at the sectors. As I mentioned, energy having a good day with the price of oil moving up 5%. It is the only sector that is moving higher. All the other groups are moving lower, being led by materials and consumer discretion alongside financials. Vani.
Well, Danny, coming up next, Estonia's Prime Minister joins us live from the NATO summit in Ankara. President Trump also expected to hold a news conference as he calls off the ceasefire with Iran, or at least says that he believes it's over, and threatens to strike Iran again tonight, potentially. Says the U.S. may reimpose a Hormuz blockade, but only for Iran. We'll bring you all of that as soon as we have the news conference. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom. It's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It is time now for our top calls. Some of the analyst action in focus this morning. First up, Bath & Body Works getting downgraded to a sell at Goldman Sachs, which says the brand is losing momentum with shoppers, especially younger consumers. The firm also warns that selling through Amazon and Ulta couldn't put consumers away from its brick-and-mortar Bath & Body Works stores, down 5.6% there. Next up, Dollar Tree getting upgraded by both Raymond James and Goldman Sachs. Raymond James pointing to easing headwinds and stronger earnings potential. Goldman Sachs citing improving consumer sentiment and the chance for tariff refunds. And finally, Alcoa getting downgraded at Morgan Stanley. Still higher, though. The firm sees aluminum prices falling as new supply pushes the market into a surplus, hurting earnings for Alcoa given its high exposure to metals prices. Danny.
More on commodity markets and oil, with Brent surging above $77 a barrel after the president said that the tentative ceasefire with Iran is over. He said talks would continue, but expressed skepticism on their usefulness. He also threatened to strike Iran again tonight and said that the U.S. may reimpose Hormuz's blockade, but only for Iran. Joining us now is oil reporter Mia Gindis. Mia, it's maybe important to even think about where we stand in the Strait of Hormuz before we talk about the price. Are ships still traversing it now, even with Iran having striked ships in the Strait of Hormuz and the president saying what he has been?
Yeah, thank you so much for having me. I mean, there's definitely a lot of tough choices facing ship owners that are hoping to traverse the Strait of Hormuz at the moment. Even before we saw the retaliatory strikes, the U.S. against Iran, the traffic through the Hormuz was not at pre-war levels, right? So we hadn't totally recovered. As a ship owner, the choices that you're facing at the moment are: do I want to pay a toll, right? Do I even want to take on the danger of crossing the Hormuz, given the attacks that we've seen over the past few days? Do I want to go via the Omani corridor that's supported by the U.S., or do I want to go on the Iranian side? So it's unclear, really, how ship owners will proceed, following the strikes that we've seen overnight. We're hearing from shipping executives that a lot are choosing to go via the Iranian side to sort of avoid angering officials and the attacks that we've seen over the past few days, but we'll really be monitoring traffic going through the Hormuz along with the market.
Yeah, and I mean, if the sanctions waivers were rolled back, then ship owners won't want to be doing that either, because they won't want to be going against the sanctions that the U.S. has imposed. So at what point do ship owners drop anchor again and strand people in the strait or just outside the Strait of Hormuz, Mia?
We're seeing not the same amount of traffic that we've seen prior to the war, right? And I think that's due to just a mass confusion among the shipping industry about what to do next. So one thing that has changed substantially since the last time the U.S. has struck Iran is that these ships that actually were stranded in the Persian Gulf during the last few months have managed to exit, right? So at the moment, the oil complex is thinking, okay, we have a cushion, and that's going to last us for the next few, weeks to months. And once that sort of cushion wears down again, I think ship owners will have a lot of other considerations.
All right, Mia, thank you so much for joining. Really appreciate your time. That's Bloomberg's Mia Gindis. And coming up next, Estonia's Prime Minister is going to be joining us from the NATO summit in Ankara. You're watching Bloomberg Open Interest.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
It is Bloomberg Open Interest, and we are about 20 minutes into your trading day. The losses for these equity indexes are starting to pair. At one point during the futures trade, we were down nearly 1%. Interestingly, we do have a fire alarm, it seems off, going on. Hopefully you can't hear that. I can hear it in my ear, and it's quite annoying. But in the meantime, it is also red flashing for these equity indexes. Interesting to see the Russell is down. Typically, what we have seen is the Dow and the Russell have been outperforming the S&P and NASDAQ because it's been a lot of the chip stocks that have been declining. This time, though, it is a general risk-off. The only sector that is doing better is energy this morning. Meanwhile, the Bloomberg dollar spot, that is little change, but this really big over-allocation to being long dollar at this moment. Brent crude, that is higher by nearly 5%. But I would just note, look, we're under $78 a barrel this morning. So yes, there is this concern about traffic through the Strait of Hormuz. The president saying that they would indeed be blockading the Strait of Hormuz, at least thinking about it again, specifically when it comes to Iranian vessels. By the way, I'm so sorry to the audience out there if you can hear our fire drill alarm. I'm pretty sure it is just a fire drill, nothing to panic about over here. Apologies for that. NVIDIA, those shares are moving higher along with the chip makers. Again, the chip makers had their best quarter ever, and then on Monday they have somewhat of a rally. On Tuesday, we undo that rally plus more to trade at the lowest level in a month. It is ping pong for these chip makers. Good luck catching up, and we're still doing things like selling Samsung after their earnings. Samsung coming out with the really stellar earnings, and yet we sell. But today, we are buying, so good luck wrapping your heads around that. Amazon, those shares are moving lower, down 0.9%. Just one thing to note, we were talking about Ann Berry with this earlier. Amazon comes out with another monster bond offering, $25 billion, only 2 times oversubscribed, which, yeah, sounds nice and cushy, but typically the average is 4 times, so maybe a little bit of reticence coming off of there. And then finally, Carnival and American Airlines, those are falling as the price of oil moves higher. Vonnie.
All right, Danny, it is an incredible market action today. We're seeing, as you've been saying, just the energy complex and the infotech complex barely higher, everything else lower, though not to the extent that you might imagine given the amount of challenges that this market has been facing. We are obviously seeing the energy complex rise on these headlines from the president. No one knows what that is going to amount to, though, beyond the fact that we've already had 80 strikes on Iran and a reversal of the sanctions waiver. So let's get into some of the details now with Bloomberg macro strategist Michael Ball. Michael, the VIX over 18, is that signaling anything to us right now beyond the fact that there's a few jitters out there about maybe the war escalating again and chips selling off?
Yeah, I mean, 18 is not really alarming, and obviously oil now is already off the highs from sort of the morning. So it's showing that there is some worries, but again, you know, the larger thought is here that Trump does want to de-escalate. He does want gas prices lower into the midterms. This is, again, his tactic to escalate, to de-escalate. So, you know, markets are moving through. We're getting ready for the earnings season. We have minutes today. We have other things that we're looking at. But again, this is what is the forefront, and clearly higher oil vol means higher rate vol. Higher rate vol has been very negative for risk sentiment and for equities, so people are wary of this, you know, spiking higher again.
Still, one conversation you and I had that I've actually been thinking about a lot is energy markets and how much demand there actually is out there for oil, because the experts had been proven wrong. They came out and said this is going to be cataclysmic to have the Strait of Hormuz blocked, and yet again the president's talking about blocking the Strait of Hormuz, and oil, yeah, 5%, but barely reacts to it. It's still under $80 a barrel. Michael, do we just need less oil than we originally thought, and does that put a ceiling on prices?
Well, funny enough, we can thank China. China's done a great job of actually electrifying its whole economy and moving away from oil, especially at the product level, as being so sensitive. So they've been the major marginal difference there, with them not coming back into the market now for months as far as refilling sort of their reserves and being an active buyer of the, you know, the extra kind of marginal barrel out there. So right now there's just more supply, even with only about 70% of the Gulf sort of getting out through all the workarounds and through the Strait. It just hasn't been a real issue. And again, this has surprised the whole entire market.
Yeah, but the thing is, everyone said that it would have been a massive issue if the whole thing had just even lasted a week or two longer, right? That we avoided the catastrophe just by seconds, if not days. This time around, we may not be so lucky if wells are already basically empty.
Right, and it's tale of two cities, right? We've finally seen skew and the tightness now sort of in the front end of barrels of Brent and WTI. But the product market itself has been much worse. So there's a tale of two cities where there's enough oil barrels, but there's still a kind of tightness in products, whether it's diesel, jet fuel, and gasoline. So to your point, we were getting close to that, where then it was suddenly going to hit the oil market much harder. But, you know, because eventually the trickle through from the product tightness would hit the oil market, and that never really occurred. I don't know exactly, to your point, like, you know, how close we were, because the reserve story is always a little bit more obscure as well.
By the way, good job talking through that fire alarm.
Yeah, we are having a couple things going on here on the floor right now.
I can barely hear myself think, so I'm very impressed. You can give such an eloquent thought in the middle of it. Look, the other event that I feel like has been completely ignored today, and maybe for a good reason, and maybe you can tell us the reason, is we're going to get FOMC minutes later today with a Fed chair who does not want to give forward guidance, who has cut the statement in half. Are you expecting anything? Could it be market moving, or is it going to be much the same where they try not to really show their hand?
Yeah, market's still having trouble trying to decide whether a shorter message of less communication is hawkish or dovish. I think the expectations are the minutes will be shorter. I think right now, with all the moving parts, not only just oil, but also the economy trying to reaccelerate and whether or not that's going to take, is really going to make these sort of a little bit more outdated. And again, we're waiting and waiting, sort of September still being seen as the really first live, and we're waiting for some of these task force and more communication, although it'll be more limited, obviously, from Walsh to give us more of a hint of where he's leaning.
Bond market isn't waiting, Michael. I mean, yields are up yesterday by several basis points, another few today. I mean, that front end is at over 420 now.
It is, but it's been moving around a lot, to your point. I think this goes back to the oil volatility hitting rate volatility and the front end still being undecided. But yeah, you're right. I mean, the 5-year, the curve steepened again. We're back at the steep levels that we saw prior to the FOMC when we had that big flattening move. So you're right. But again, we are still contained. I think the concern is none of this in the last 24 hours is going to change central bank policy globally, let alone the Fed. And overall, the risk sentiment has been picking up on a reacceleration growth bid, which has helped the rotation out of AI, which, as we know, got frothy and sort of saw the momentum trade come off. So that's really what a lot of the traders I'm talking to are focused on. Do we actually go back really quickly? Do we go back now into AI to hide out from maybe more macro shocks from oil?
That's a good point. We'll see if that happens. Michael, thank you so much for joining us. Michael Ball, macro strategist here at Bloomberg. Coming up in the next hour, we have more from NATO. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Sherry Preston. President Trump is again threatening to destroy Iran's civilian infrastructure and to take over the country's oil terminal, Karg Island. His comments coming after the president said this of the Iranians negotiating a ceasefire deal.
They're sick people. They're led by sick people. And they're vicious, violent people.
He said as far as he was concerned, the memorandum of understanding was over. ABC's Rachel Scott is at the NATO summit in Turkey.
This morning, oil prices rising as the president casts doubt on future negotiations.
Now, I'll let our wonderful negotiators keep talking if they want, but I don't see it.
And he continued to blast NATO allies who refused to help with the war he waged in the Middle East.
Officials in New York City say the building on Manhattan's east side that started to wobble as columns began to bend has now been stabilized. ABC's Aaron Katersky's on the scene. He actually says overnight workmen installed steel columns and expressed confidence in the building that it's no longer in risk of imminent collapse, but is not yet fully stable. And once again, they will determine how those columns failed in a long-term fix. They're still watching it overnight. Security remains tight as questions resume in Provo, Utah. The man accused of killing Charlie Kirk continues a preliminary hearing. Here's ABC's Alex Stone.
I'm looking around at rooftops. There are sharpshooters on the rooftops all around this courthouse. There are tactical teams up on the rooftops around the courthouse. Because of what this case is, they're looking for any threat. Tyler Robinson is brought in every day in an armored motorcade with armored vehicles.
More pressure on Graham Plattner, the main Democrat running for Senate, to drop out of the race amid fresh allegations of sexual misconduct. He has denied them and has until Monday to decide whether he will quit. After that deadline, it'll be his name on the ballot. You're listening to ABC News. For a new trial in a suburban Dallas killing that some have been protesting. Here's ABC's Jim Ryan.
A jury didn't buy the argument that Carmelo Anthony was acting in self-defense when he stabbed Austin Metcalf to death during a rain delay in a track meet. It convicted him and sentenced him to 35 years in prison. Anthony has a new team of lawyers who claim misconduct by prosecutors during the trial and by the judge afterward. Those attorneys have asked for a new trial and a new judge to preside over it. Jim Ryan, ABC News in Dallas-Fort Worth.
Whale of a time for a group of New Jersey firefighters off the coast over the weekend when their boat encountered some trouble on the high seas. ABC's Rhiannon Nally has the story.
Fire Chief Eric Wall and his crew coming back from a 4th of July security detail on Saturday when their boat was suddenly struck by what was believed to be a surfacing humpback whale.
I opened up the engine hatch and looked below, and to my surprise, there was a big hole in the back wall of the boat.
Cody Binkley racing his boat to the scene.
By the time we heard the call for help and got to them, the boat went from them being on deck and leaning towards the rear to those guys having to bail out.
Saying the boat sank within a minute.
All the people and the whale, as well as those in the whales in a pod nearby, were fine. May was an expensive month for the airlines. New federal government numbers show they spent nearly $6.7 billion on jet fuel alone, 84% higher than 1 year ago. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube. We're streaming live on Bloomberg.com as well. This is the Bloomberg Intelligence Program. Scarlett Fu and Paul Sweeney with you. Coming up, we're going to check in with Tyler Kendall, Bloomberg News Washington correspondent, get the latest reporting coming out of the NATO summit. She's down in D.C. Mike McGlone, senior commodities strategist from Bloomberg Intelligence. He'll give us what's going on in the oil market. It's higher. Adam Phillips, Managing Director of Investments at EP Wealth Advisors, will give us his thoughts on these markets. Mandeep Singh, Global Head of Tech Research at Bloomberg Intelligence. We got a lot of stuff to talk to him about there. NVIDIA's $1 trillion slide since valuation to pre-AI boom levels. I thought NVIDIA was the bomb for AI. I guess that's playing out a little bit here, so we'll get the latest. Right now, let's get a Bloomberg Business Flash. We do that with John Tucker.
All right, guys, this flash brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. All right, so the major averages all lower. So much for that rotation yesterday with the Dow now down 461 points. Let's start with the best performing industry group in the S&P 500. No surprise, energy, as the price of crude soars. You have Brent crude right now, 78.11 a barrel. That's a 5.3% pop for crude oil, the international benchmark. Information technology also seeing a rise today, and that is home to, the semiconductors, actually seeing some relief for semis. The Philadelphia Stock Exchange Semiconductor Index, the SOX, up right now 1.4%. Applied Materials, that stock is up just about 2%. Not so for some of the hyperscalers. The Mag 7 Index, the Bloomberg Mag 7 Index, down just over 1%. Meantime, with respect to the Iran war, Ed Yardeni at Yardeni Research says, you know what, investors are kind of back to square one.
This is a geopolitical crisis that just won't go away, won't end. The ceasefire, according to the president, is over, and he's clearly in a position to know and in a position to end it.
The S&P 500 right now, 34 points lower, down just about 0.5%, 7468 on the index. Again, the Dow, after yesterday's record close, down 509 points, 52,424. And the NASDAQ Composite Index, down 87 points. It's a decline right now of 0.3%. This was a great read in Business Week. At least I thought it. So, and for anybody who's out there on the weekends on their 10-speed, dressed up like whatever they're dressed up like.
Yeah, like the Tour de France guys.
Only one of the 23 teams in the Tour de France this year is using components from Campanella. Remember that name?
Yeah.
A legendary Italian supplier that once dominated the business. It was the standard among cyclists and prominently featured in one of the greatest films of all time.
Oh,
Breaking Away.
Yes.
Remember that?
Okay,
It was
You
like
are saying
low-budget
things that
film.
I don't know about at all.
Oh, come on. That's what they said. You're too young for
What are
us
you talking
sometimes.
about?
Campanella's decline parallels a devastating decline in its business. Anyway, read it in Business Week because it's very cool.
They're still going to do the Tour de France this summer with the heat wave,
Yeah,
the way it is.
they're doing it right now.
It's insane.
Just without this Italian company that was a hallmark of the cycling
More power to the folks who are actually cycling up
industry.
those hills.
Remember that film? And like he was so into it, and the Italians, he renamed his cat Fellini.
What year is this film, John Tucker?
Way back when.
It's Kevin Costner's like one of his first films.
Kevin Costner was in it?
No, was it Kevin Costner?
No, was it?
It was the breakout film for.
Oh yeah, maybe I'm wrong.
You know the actor.
I don't know.
Kevin Costner's big moment was No Way Out.
Yeah, that was a good one too. All right, John Tucker, you got us completely off the rails here, so we appreciate that. John Tucker with the news flash.
Movies from a certain year.
Movies from a certain year back in the day. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John is reporting, we've got a sell-off in the market here. Let's take a look at some of the stocks on the move today, and we can do that with Avalon Purnell. She's an equity reporter for Bloomberg News. Dennis Quaid,
that's right.
Okay.
Sorry.
Very
Avalon, what do you got
different
for us?
from
Help us
Kevin
out
Costner.
Well, we can go ahead and start off with United Airlines. That's ticker UAL, currently slipping about 3.2%, and that's after President Trump said earlier today that the Iran ceasefire is over and potential strikes could happen as soon as tonight. Jet fuel is responsible for nearly 30% of an airline's costs, so it is also going to be very important. Next week, United Airlines will be reporting earnings to see if investors will get any greater clarity on what those costs will be looking like in guidance.
I used to think airlines hedged, but they don't.
Once upon a time they did.
Okay.
Yeah, but they don't anymore. I think Delta still owns a refinery.
Right, that's
if I remember correctly.
Okay.
All right, let's talk about a restaurant that I know is really, really affordable in Japan and maybe a little bit less so in the U.S.
Yes, Kura Sushi, that's tickers KRUS, currently dipping about 1.5%, though earlier it was down as much as 11%. And that's after the restaurant operator slashed its sales forecast for the full year and also reported third quarter comparable sales that fell short of Wall Street's expectations. And for those unfamiliar, Kura Sushi does have like a conveyor belt of sushi.
Oh, that's right. Do we have them here in New York?
Yes, there's one in Flushing.
Okay.
Yeah.
There's one in the suburbs where I live.
I'm not going to Flushing. What suburbs do you live in?
In Westchester,
Okay.
Scarsdale.
All right. There's one in London near the Bloomberg office.
Very popular in social media. But management saying that definitely the oil prices are pushing customers to just stay home as opposed to going out for a fun group eating experience here. And the print is obviously leading to price targets across the street. Though also interesting to note that this stock was also one of the most shorted ahead of their earnings, with nearly 22% of its shares being sold short.
Okay, interesting reaction then. All right, next up.
Community Health, that's ticker CYH, currently down about 6.2%, most intraday since April. And that's after Barclays downgraded the hospital operator to underweight from equal weight. Part of the issue is just broader uncertainty for hospitals as regulatory headwinds add to that long-term uncertainty. The analyst also writing that Community Health shares have rebounded since those June lows, which may actually give investors a window for some profit taking, especially given longer-term uncertainty.
All right, Avalon, thank you so much. Avalon Purnell is one of our Bloomberg News equity reporters, and for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. That's available on Apple Podcasts, Spotify, or anywhere you listen. So the big news today is that, according to President Trump, the Iran ceasefire, it's over.
It's over, okay.
It's a waste of time. These are the comments that we heard this morning, and oil prices are climbing in response. So, of course, we need to check in with our Tyler Kendall. She is our Bloomberg Washington correspondent joining us from our D.C. bureau. Tyler, give us some context around these remarks from the president on the ceasefire being seemingly over following some attacks.
Yeah, Scarlett, I mean, this comes against the backdrop of what really has been the worst flare-up in fighting since the Memorandum of Understanding was signed last month. It does come in response to what were attacks last night after Iranian aggression in the Strait of Hormuz. Over the last 24 hours, we saw Iran target at least 3 oil tankers in the strait that appeared to be using that corridor that the U.S. is coordinating and hugs the coast of Oman as more vessels are trying to transit through the strait that way instead of taking that route that would put them closer to Iran's shores. Now, President Trump is saying that we could see some additional strikes as soon as tonight. He said that he wouldn't be giving Iran that much notice, but we should also point out that it hasn't just been an escalation when it comes to kinetic action, but we also saw the U.S. Treasury Department yesterday move to lift that waiver that had granted Iran the ability to sell its crude to market. That is now going to put on the economic squeeze on Iran, considering that was supposed to be one of those incentives during this 60-day ceasefire negotiation period to get Iran to the table. So a lot of fast-moving headlines, but Scarlett and Paul, even as President Trump says that in his view he thinks the ceasefire is basically over, he also left open the door for further negotiations. We know this White House has prioritized diplomacy. He said that he'd still allow his negotiators to talk. He just personally thinks, according to the president, that it's not worth their time.
Have we heard anything official from the Iranian side?
We had heard from, not since President Trump's comments this morning, I don't believe, unless any headlines are crossing now, but we had heard from Iran in the wake of the U.S. revoking that waiver, as well as the U.S. Attacks overnight that targeted in one part more than 60 IRGC fast boats, that they felt that the ceasefire was over. Iran has been making it very clear that they feel that as part of this memorandum of understanding, they would be able to maintain some control over the Strait of Hormuz. That's been one of perhaps the most largest sticking point between the two sides, and where we've really gotten that conflicting messaging, because the U.S. says that was never part of any deal, but Iran has repeatedly tried to say that in this agreement they were given authority over parts of the strait. How this resolves at this point remains to be seen. Very clear that escalation is on the table, but Iran itself has really been threatening commercial shippers, though for the most part, Satellite imagery is still showing us that those ships are transiting through, but it has definitely raised that hesitancy and that concern, considering that we saw at least these 3 tankers, including one from Qatar, a main mediator in this conflict, be targeted within the last few days.
And again, this is why you see WTI up at almost $75 a barrel and Brent now approaching $79 a barrel. Tyler, there's also a report that NATO may skip a summit next year. They just won't gather.
Just don't want to deal with it.
Is that it? They just don't want to deal with it? They don't want to deal with President Trump?
That would be pretty remarkable if this is actually what comes through. It is preliminary reporting, but it is very telling that this conversation is even happening just because of how much a shadow President Trump's dismay with the NATO alliance is currently casting over this gathering. We heard President Trump very publicly say the only reason he was at this year's summit is because it's being hosted by Turkey, and he didn't want to disrespect the Turkish president, so that is why he ultimately came over. The reason why next year's summit could really be hanging in the balance here is because it's being hosted in Albania, which has been falling short of those defense spending commitments. Not to throw too many numbers out at you, but we know that the goal the White House wants to see NATO partners reach is 5% of GDP on military spending by 2035. Some allies have made some sizable moves towards that goal. Our analysts at Bloomberg Economics say that the top 5 European economies are now hovering around 2.5%, which is up about half a percentage point from when President Trump took office. That is considered to be movement, but many of these other countries aren't on track to meet that higher threshold, and that includes Albania, and that may just further fray those tensions, considering that is really a focal point of President Trump's criticism against the alliance during the gathering this week.
Kicking the can down the road or just avoiding the problem. That works well for me. So I don't know, maybe it'll work well for NATO just to avoid the whole thing. Tyler Kendall, thank you so much. We really appreciate your reporting. Tyler Kendall, Bloomberg Washington correspondent. She's based down there in D.C., but yeah, I don't know.
I mean, so much of this is in flux. And speaking of being in flux, we're still waiting for the president to speak. He's going to host a news conference. I mean, it's already been humdinger of a day so far.
Right. So we're waiting for that. And he's also potentially having another bilateral meeting, which we may cover as well. So a lot of news being made over there in Turkey. Ankara, as Tom Keene pointed out, about 300 miles east of Istanbul. So haven't been to that part of the world.
No, I've gone to Istanbul.
Have you? I would love to go there.
Very cool.
Yeah, it looks very cool. Okay, we'll see how that. I'll put that on the list. We got the S&P down 45 points, the Dow off 630 points. That's 1.2%, and the Nasdaq's off 100 points. That's 0.4%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Oil is jumping right now after President Trump said basically the tentative ceasefire with Iran is over. His word. Energy, not surprisingly, the best performing major industry group right now in the S&P 500. As we see Brent crude up close to 7%, 79.05 a barrel right now. Semiconductor stocks making something of a rebound. Shares of Applied Materials, they are up 2%. Best performing stock in the S&P 500, that belongs to Broadcom. That is close to 5% higher in today's trading. The Philadelphia Stock Exchange Semiconductor Index, the SOX, right now 1.4% higher. And shares of NVIDIA, they've had kind of a terrible run lately. Right now they're up just 0.2%. As far as yields, the 2-year is up 2 basis points, 4.21. The 10 is up 3 basis points at 4.58. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney, we're live here. All right, we're here in the Bloomberg Interactive Broker Studio. Right now, we're going to go over to Turkey. There's a bilateral meeting taking place with President Trump, and we will go to that right now. Let's take a listen.
Lawyers and doctors. It had one of the great cultures of any country, not just Middle East. And then it went through this terrible period of time. But it's a country that a lot of people are very proud of, and they're proud of the job he's done. Thank you very much, Mr. President. Would you like to say something?
في الحقيقة نحن حققنا إنجاز كبير في تحرير سوريا وإسقاط النظام السابق.
We have made a great achievement in the toppling of the former regime.
وكما ذكر فخامة الرئيس خلال سنة ونصف حققنا إنجاز كبير في توحيد البلاد ووضع على السكة الصحيحة من التنمية والاقتصاد.
And as President Trump said, in a year and a half, we made an achievement in bringing the country together, unifying the country and put it back on track.
هذا بفضل الشعب القوي، الشعب السوري اللي تكلم عنه فخامة الرئيس ترامب.
Of course, this is due to our strong people, the Syrian people.
We're listening to Syrian President Ahmed al-Shara speaking from the NATO summit as he participates in a bilateral meeting with President Trump. Let's listen in.
The decision that President Trump has taken by lifting the sanctions of Syria.
وأيضا مساعدة كل الأصدقاء المحبين في المنطقة من تركيا من دول الخليج من كل المنطقة.
As well as the help of friendly countries and the loving countries in the region, Turkey and other countries in our neighborhood.
الشعب السوري يشكر جميعا الرئيس ترامب.
The entire Syrian people thanks President Trump.
Thank you.
Thank you very much. Proud of you. Do you have any questions?
Mr. President, are you going to remove Syria from the state sponsor of terrorism list?
I think I will, yeah. I think I will. Why wouldn't I? He's done a great job. Maybe he would have brought that up in a little while, but that's a good question, yeah. Any problems with that? I think we should. Yeah, I will.
Do you still want Syria to help with Hezbollah in Lebanon?
They could help. We'll find out. I think we're making a lot of progress.
Mr. President,
they could help.
Mr. President,
they would do a very good job.
Prime Minister Netanyahu has been critical of aspects of your relationship in the last couple of days with President Erdogan of Turkey. He said that Erdogan has imperial ambitions on neighboring countries, presumably including Syria.
Well, he hasn't been involved with Syria. If you think, he hasn't been involved with Israel at all. And he's left it alone. I wouldn't say he's a friend, because he's not a friend of, as you know, of Netanyahu, of Bibi. They don't get along, I think. But, for me, he's been great. Look, Turkey's been fantastic and a fantastic ally. They're also a NATO country. And Israel, we've done, no president's done as much for Israel as I have. Nobody even close. If you look at, just look at all the things with Jerusalem, all the different things that we've done. The Golan Heights, I did things, nobody has ever done anything for Israel like me. And we've made tremendous progress. And we've made a lot of progress with Iran, too. Wiped out their military, but they should have been done 47 years ago.
And if I could, do you think that that Prime Minister Netanyahu should be reelected? There's an election coming in Israel, or would you like to see new blood?
I can tell you this: he's been a great wartime president. We worked at Prime Minister. So we worked with each other very closely, and we went through a very big thing. We did a big thing together. And in my opinion, he's been a great wartime prime minister. I don't know anything about his politics. I'm not sure. I would think he should be popular because he did a very good job. We had and have a very good relationship. But he was a great wartime prime minister.
President Trump,
If you had other prime ministers, you know what? They wouldn't be in Israel right now. You know that? They wouldn't be. It would have been blown to pieces by Iran. If you had a weak prime minister, you wouldn't have. And if you had a different president, I guarantee there wouldn't be an Israel. Israel wouldn't exist today if you didn't have me as president.
President Trump, you said data from the Energy Information Administration revealed that U.S. crude oil production set a new record in the month of April under your leadership.
That's right.
Why is it important to keep hitting numbers like this at this moment in time? Why is it important that you were able to get this done and keep it on this trajectory?
Well, when we decided to do this, it's called the denuclearization of Iran. We have to do it. We have to have. They're never going to have a nuclear weapon, and they admit they're never going to have it. But they behave badly. Always behave badly. There's something wrong with them. But when we did this, we thought oil would go much higher, and it didn't go very high. And now it's coming way down, and you're going to see oil drop very low. Now, maybe we'll do some other things that could lift it a little bit, but I don't think it's going to lift it a lot at all. I think oil is coming down. There's tremendous amounts of oil. Scott, what would you say about that?
Yes, so record production under President Trump in his first term. Now in his second term, the U.S. is an energy superpower. It's why we weathered the conflict better than anyone else. And just this weekend, Bloomberg wrote that there is an oil glut out there. And we think that safe, secure American oil maybe even should trade at a premium to the rest of the world.
So we have, if you add it up, you take Saudi Arabia and take Russia, two big oil producers, we do more than twice as much. We do more than, so think of it, Saudi Arabia, Russia put together, we do more oil, and that's not including Venezuela. It's pretty amazing. Right? And this all happened during my term. We started it at first term. Biden blew it because he had no idea what he was doing. But we are producing more oil right now than Saudi Arabia and Russia combined by almost double. Okay, any other questions?
Mr. President.
Yes. Yes, ma'am.
You said that dealing with the Iranians is a waste of time. How do you plan to get the nuclear material and the nuclear assurances that you want?
Well, we've already got the nuclear material because it's so far underground, nobody's going to be able to get it except us because we have the equipment that can get it. But I call it the nuclear dust. The nuclear material is so far down underneath the mountain, and now that's been determined, that it would take massive machinery that we have that no other country has.
Mr. President, so you have no plans to go in, boots on the ground?
Why would I go in now? I'd go in when they're completely either eliminated or whatever happened, or an agreement's made.
Mr. President,
yes.
if you cut off trade with Spain, does that mean that you're going to have to renegotiate a trade agreement with the EU?
With who?
With the EU. With the EU, any past agreements you already have?
We're going to see what happens with the EU. You know, they've treated us very badly for years, and they took advantages. Look, we're very close to those countries, right? And to everybody in the EU. The problem is they took advantage of the United States for years. It's like him. They took advantage of Syria. He's bringing it back. And I'm bringing the United States back. We have the greatest economy we've ever had. We have the biggest investment. 19.2 trillion is being invested right now in the United States. 3 trillion was the record. Under Biden and under the past administration, they had less than $1 trillion for 4 years. We have 19.2 trillion in 12 months. Think of that. We have the largest amount of money being invested in a country in history. Pretty amazing. 19.2 trillion with a T. So, and they're building factories all over the country. I think yesterday Toyota announced they're leaving Mexico. And they're coming, I'm not that Mexico's thrilled about it, but they're leaving Mexico and they're coming to the United States to build what will be, I believe, the largest automobile plant either in the world or at least in this country.
Mr. President, on oil prices today. A domestic question. You announced on Truth Social a couple days ago that Walmart was cutting the price per pound beef by 15%. How big of a deal is that for American customers this summer?
So Walmart has agreed to cut their prices very substantially because things are going down. We're getting it down. We inherited very high prices. We inherited the highest prices in the history of our country, or 48 years to be exact, but I don't believe that. I think it's in history. So under Biden, they had tremendous inflation. Under the Democrats, we had tremendous inflation, record-setting inflation. And now, inflation is way down. Everything is great. We have, the prices are coming down, but we inherited, you know, they talk about they use different words to describe it. They had very high prices. The prices are coming down. And when the oil comes, you know, the oil is coming way down. The oil dropped by 50% in the last month. And when that comes down, it brings everything else down. No, it's affordability. And they came up with the word affordability. You know, like, I take over, I'm there for one day, and they say, affordability, affordability. I said, I've been here for one. Remember with the eggs, the first day or 2 days later, I have my first news, and they talked about eggs. They said the eggs have gone up 5 times. I've been in office for one day. And I said, well, we'll have to do something. In fact, they told me not to order eggs for the Easter egg hunt at the White House. I should use plastic. I said, we're not doing that. And by the time we came, that was a couple of months later, that happened, and we ordered thousands of eggs. And right now, eggs are way down. The prices are way down, and they're coming down further. So they made up a phony word that they used. They said affordability. They're the ones that caused the affordability prices. I didn't, but I brought it down. And the oil is coming down very big.
Mr. President, Brent crude is up slightly today on the announcement
that because we hit them. Anytime we hit them, it goes up a little bit, $2.
Is that what you mean? Is that what you meant when you said that we might see oil prices lift a little in response
to? Yeah, $2, very little. It's down from, let's say, $135 down to $69. It's dropping, and everything else drops. As oil goes, so goes everything else. But anytime if we hit Iran, oil goes up a little bit. It's all right.
Mr. President, do you think Israel...
We're de-nuking it, all right? We're de-nuking Iran. They're not going to have a nuclear weapon. All right, one more question.
Sir, do you think Israel should withdraw troops from southern Lebanon?
Well, I talked to Bibi about that. Yeah, I think they're going to. I think they want to. I don't think it's a question of me. I think it's a question they want to. And they're getting along with Lebanon. They're signing deals with Lebanon. First time ever. Marco, talk about that if you'd like.
Yeah, we have an agreement that, and it calls, that's the goal at the end. Obviously, Israel's concerned about their security. But the president did a great job bringing those two countries together for the first time.
It's a big thing. First time in many years, right? So we have a deal with Israel and Lebanon. And, yeah, they'll leave. And I think it's going to work out very well. But we're here for this because Syria has turned around as fast as I've ever seen. Well, actually, I turned the United States around very fast, too. I inherited from a man who was not smart, not a smart person. We inherited from the man where they were running this country so badly with the open borders. Think of it, 25 million people allowed into our country. And that includes 11,888 murderers, most of whom murdered more than one person, okay? We got most of them out, or we have them in jail, and we've done a great job. Washington, D.C. now is considered one of the safest cities in the country. If he came to Washington, D.C. a year and a half ago, he'd fear for his life, even though he never feared for his life before, because it was very dangerous. But somehow his territory might have even been a little more dangerous. I joke because, you know, he comes from a rough environment. Would you say that's right, Tom Barrett? It's sort of funny to think. I don't think he'd be too concerned with Washington a year and a half. But we had a very, very unsafe Washington, D.C., and now it's one of the safest cities in the country. We put the military in. Washington went from being an unsafe to one of the safest cities, and crime is down 94%. We don't play games. And we removed over 5,000 career criminals, many of whom came in through the open borders of Joe Biden. We did the same thing with Memphis, Tennessee. We did the same thing with, in Louisiana. You have to speak to the governor. Because New Orleans, the crime rate is down 78% in a little while. And they had the best Mardi Gras they've ever had. So We're doing a good job, and he's done a great job too. And I thank you very much. Thank you very much.
Thank you, guys. Thank you, press. Thank you. Thank you, guys.
That was President Trump wrapping up a bilateral meeting with Syria President Ahmed al-Shara from the NATO summit. During his remarks, he said that the U.S. will remove Syria from the terrorism sanctions list. He also talked about how oil prices may get a little bit of a lift given the fact that he has called off the interim peace ceasefire with Iran, and he says oil is coming down very big, although at the moment we see oil rising. So let's hand things over to John Tucker for a check on markets and the Bloomberg Business Flash.
Okay, we'll start there. The flare-up in geopolitical risk driving stocks lower, bond yields rising, and, as you mentioned, Scarlett, oil climbing, as President Trump said the ceasefire with Iran may be over, also noting the U.S. would probably launch further strikes. Tracy McMillian at Wells Fargo says the geopolitical risk back in the spotlight again for investors.
There's probably some more upside to oil as we move through the rest of this year. It doesn't necessarily change our opinion on equities or fixed income, but it just reinforces the fact that there are still geopolitical risks out there.
Brent right now up 7.5%, so 79.72 a barrel. S&P 500 50 points lower. That's down 0.7% at 74.53. And energy, the best performing major industry group in the S&P 500. The Dow, after yesterday's rotation and after Monday's record close, right now down 675 points. That's a decline of 1.3%. And the Nasdaq Composite Index down 0.5%. Again, the inflation concerns back in play, and as a result of that, the Fed back in play. The two-year yield right now, which more policy reactive, that's up close to 3 basis points, 4.21. The 10-year is up 3 basis points at 4.58. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get back to these markets. As John was just reporting, we do have a little bit of a sell-off today. Let's check in with a professional here, Adam Phillips. He's a managing director at EP Wealth Advisors. He joins us in studio. He's based out there in Torrance, California. And when I'm out in that part of the world, you know where I go? The Blue Water Grill, Redondo Beach.
Sounds good.
They love me there. So, Adam, thanks so much for joining us here, coming in from L.A. here. What's the conversation you're having with your clients these days? We seem to be hitting all-time highs every day, despite the crosswinds out there.
Yeah, Paul. Well, I think the big question for them is how much further can markets go here? Are we at risk of some kind of a pullback, knowing that we're still facing all of these headline risks? We've seen before the news in the Middle East and from President Trump over the last 24 hours or so, we had seen oil prices come down, gas prices come down. They are still almost 30% above where they were before the conflict began in late February. And so inflation is still very much top of mind, and they're just trying to reconcile how is this market performing so well in spite of all the risks that they're facing.
Right, and we're talking about some pretty big risks, but the market has done very well climbing this wall of worry. I want to get from you your thoughts on the memory rally and where that goes, because this is now a part of the market that is seeing a structural boom in demand. And we know it's very, very cyclical. At some point, it's going to come back down again. And I wonder whether we're starting to see some of that emerge.
I think what you're seeing is some of these memory names are dealing with gravity right now, right? They have had such an incredible run. A number of these memory names are now officially in a bear market, but they're still, Micron's still up over 200% on the year. So one could argue there's still a little bit more that they can give back here, still trading as a group about 30% above their 200-day moving average. So I think a lot of the run has been justified, and it's just a reflection of the supply and demand imbalance within these chip names. But that being said, we know they're cyclical, and we know that it is heavily reliant on this AI trade continuing. And I think that I don't see a reason for that to end just yet or abruptly, but we know that at some point it will start to slow.
Adam, when I talk to registered investment advisors like yourself, I'm often surprised that alternative investments, there's demand from individual clients for alternative investments. How do you frame that conversation with your clients?
Absolutely. Well, when we talk about a diversified portfolio, the traditional Public investments are, you got your fixed income, you got your equities. Alternatives are certainly part of that conversation, but it's a conversation that we really take on a client-by-client basis. Alternatives, they do serve as a diversifier in a portfolio. They can provide yield enhancement, potentially return enhancement, depending on where you're looking within alternatives. But the conversation we have with clients is the bogey that we're trying to hit is that rate of return that's required to make your financial plan successful. That's it. If someone's financial plan is successful without alts, then why introduce that type of complexity? Right. You really do take on a lot of unique risks when it comes to alternatives, like liquidity or less liquidity, and I think that's something that a lot of investors are starting to realize.
How do bonds fit into your portfolio? Specifically, I'm curious about credit, given that so many big AI companies or AI adjacent companies are selling debt, and if the goal is to be diversified and not to have all your eggs in one basket, going to credit means you're going to get a lot of exposure to tech.
Absolutely, and for that reason, we are generally looking at when we're investing in in funds, we're looking at active managers, so that we aren't just going into the largest names and automatically picking up that new issuance, because we know that that is a big story today. When we're talking about fixed income, we do think that fixed income still has a purpose in portfolios. We're looking at yields right now, which are very attractive. We know that starting yields do explain the majority of your long-term returns when it comes to fixed income. So fixed income still has a purpose. We are underweight government, we are overweight credit, but we want to be mindful that AI, you're investing in AI, whether you're generally in equities or fixed income right now. You need to be very mindful of that. These are still very high credit quality companies, and so we're really focused on nominal yields, acknowledging that spreads are fairly tight, but that's okay right here.
I guess next week we're going to kick off earnings in earnest with JP Morgan, some of the other banks here. Tough act to follow after the first quarter, where earnings were just so strong. What are you guys looking for? What's the conversation you're having with your clients?
Absolutely. Look, it's all about earnings right now. We know that we're coming off a great quarter. We're looking at over 20% earnings growth this quarter and over the upcoming quarters as well. At some point, that will slow down. What we need to see right now is follow through and these companies meeting these lofty expectations. And it's also these earnings season is always important to hear not just how companies did, but what they're seeing going forward. Are they starting to see some payoff from their use of AI or their investments in AI? I think that's going to become increasingly important. But look, this AI theme in earnings is so critical right now to moving to driving the next leg of the stock market rally. The reason for that is that the big story in the first quarter and the second quarter, it was really about stimulus. We don't have the one big beautiful bill anymore to rely upon, especially if gas prices do continue to move higher here as they've done over the last 24 hours or so. In addition to that, we don't expect the Fed to cut rates. And so we're not going to get that monetary policy or fiscal policy support. It really needs to be about earnings here.
It really needs to be about earnings, but I wonder how much oil will play a part into it, because up until today, the idea was that oil is now going to be a tailwind for a lot of these companies. And if there's going to be a resumption in the war, that removes one of the positive talking points for a lot of company management.
That's right. Well, look, and we do see a lot of earnings still, even if you take oil out of the picture, a lot of it is really dependent on artificial intelligence. Look, whether we like it or not, when we're talking to clients, a lot of them they're concerned about artificial intelligence. I think they like what they're seeing in their stock portfolio, but they also worry about the negatives, the potential job displacement. And so we're telling them, look, you like it or not, we need AI right now. It is the main driver of the economy. It's also the main driver of earnings. And so I think that's really, really important here as we look to this next quarter of earnings season. We're looking for artificial intelligence broadly to account for well more than half of earnings. And so I think it does go beyond energy, although that is important.
What are the questions you're getting most from your clients these days? Are they saying, I got to be in SpaceX, I got to be in AI, I don't want to be in AI? What's kind of the questions you're getting?
There's certainly a lot of questions around SpaceX and these upcoming IPOs, and for the most part, we have not participated. We are focused. If you focus on growth at a reasonable price, GARP, sure, companies like that have attractive growth potential. I don't think there's anything really reasonable about the price. And so we're not in a rush to get into those types of names. And that's what we're advising our clients to do the same, is just let's just stay put, be prudent about it. But I think the question is more so, are we in another AI bubble? And they're seeing all this new issuance, they're seeing these companies, their valuations swell. Now, obviously, NVIDIA is one that has shed $1 trillion in market cap, but they do know that this is the dominant theme right now, and so they're asking, is this just a repeat of what we saw in the early 2000s? And we're saying no, but at the same time, we're saying this is why you want to be diversified. And we are very, I always say to clients that I speak to, we have the luxury of being able to look different than the benchmark. We are benchmark aware, but we don't need to be bullied by the benchmark and own benchmark weights. We want to go into those names we have conviction in, but do it in a reasonable and prudent way so that you're not overexposed to a theme.
What is your most out of consensus idea?
I'd say our most out of consensus idea right now is underweight technology. We have a fairly healthy underweight to technology right now, closer to low 30s compared to the index, which is closer to 37%. And I think that there's different ways of expressing a view on AI and getting that exposure. You could do it in industrials, you could do it in utilities and all these other areas. But technology is one where we do have an underweight, and I'd say that's fairly out of consensus.
Is that a concentration risk issue?
Yes, yeah, exactly right. I think that's a reflection of wanting to own what we consider healthy weightings or allocations to some of the hyperscalers, some of those large names that are associated with the trade, but not wanting to get over our skis either.
All right, what's a gallon of gas in LA these days?
It's still got a 5 handle.
Does it?
Yep, yep.
Wow, okay.
I know, forget premium. We didn't even ask about premium.
No, that's what Matt Miller does, and it's like $6 a gallon.
He's nuts, but he's a car guy. We're not car people, so you know that it hits differently with us.
How far do you have to drive to get to an In-N-Out burger from your house?
Fortunately, not too far.
See, these are the important questions.
I think you hit on it, Paul. Yeah, it's I'm fortunate to live just a couple miles away.
Well, any question to someone based in LA has to do with driving, no matter what.
Yes, yeah. My son, who's been out there for years, is like, you know, you don't get used to it. I mean, it's just, you know, it's just you got to drive everywhere. You can't walk down the corner and get a bottle of.
It's hard making plans too, because
it's hard making. He said it's hard meeting new people because you have to.
Sure.
You just
Shuttle
can't walk
yourself
down
out.
on the block and see people. So anyway, all right. So that's our LA talk there. Adam Phillips, thanks so much for joining us. Thanks for sticking around. Appreciate it. Adam Phillips almost got bumped by President Trump, but he survives. So that's good for him. Adam Phillips, Managing Director, EP Wealth Advisors, based out there in Torrance, California. Good part of the world there as well. What are you looking at in the market here today, Scarlett?
Well, we've got the FOMC minutes coming out at 2 p.m. today.
Only Michael McKee looks at those.
I know, but it's interesting because it is the first minutes from an FOMC meeting helmed by Kevin Warsh, the new Fed chair. And we know he didn't say a whole lot, or I should say the committee didn't say a whole lot in the statement.
Right.
So it'll be interesting to take a deep dive into the minutes to see what the conversation, the debate was like there. He's talked a lot about family food fights, or a good old-fashioned family fight, meaning, you know, they debate internally about things. I wonder how much of it gets revealed through the minutes, or maybe none of it, and we'll just kind of be left wondering, which seems to be the way he wants to keep it, you know, at arm's length from everyone.
Okay, so maybe sitting on the beach today, I'll read the minutes, whatever.
Unlikely, Paul.
Probably unlikely.
Yeah.
Unlikely there. S&P down 65 points. The Dow off 750 points. That's 1.4%. The Nasdaq's off about 200 points. That's 0.75%. Oil higher by 7%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, streaming live at Bloomberg.com as well here. Looking at the NASDAQ 100, it's down 0.6% here today, but the Dow's off 1.3%. Let's talk a little technology. Why not? Mandeep Singh, Global Tech Research Head from Bloomberg Intelligence. He joins us here. So I'm seeing this Bloomberg News story. NVIDIA's stock is at its cheapest it's been since before the AI boom after losing roughly $1 trillion in market value over the less than 2 months. What's going on there? Taking some profits? What are we doing?
Taking profits. And look, I think when it comes to the chip space, we've heard quite a few announcements in the last few months, both from the hyperscalers ramping up their efforts, whether it's Amazon or Microsoft. So it's not just Google TPUs anymore. Meta, all these hyperscalers are focused more on the inference side of things, which is where you're generating most of your revenue if you're focused on AI. And they've left the training market to NVIDIA, but when it comes to inferencing specifically, you've got more competition. Even OpenAI and Anthropic are looking to make their own chips. Now, the timeline for this is all, 2-3 years out. There will be nothing imminent in terms of, something that can compete with NVIDIA, but the market is anticipatory in that sense, and the fact that everyone is looking to build their own chips is a sign that there will be more competition for NVIDIA down the line.
That makes it sound like it's easy for them to make their own chips. They partner up with someone and they just make it. It can't be that easy, is it?
Can't be that easy, which is why the timelines are already 2 years out. There's nothing that I could say over the next 6 months, there will be a competitor to NVIDIA or Google TPUs. Google TPU is what is inspiring all these companies to build their own chips, because they've seen Google has released 8 versions of their own chip, and the Anthropic models, which are the best-in-class models, were trained on Google TPUs, and also they use Google TPUs for inferencing for the most part. So now they have started to use NVIDIA, but your best model out there wasn't using NVIDIA. And so from that perspective, there's a case to be made that there could be potentially more competition given what Google has accomplished over the years.
The AI rotation trade is gathering pace in Asia as investors pull money from chip makers and hunt for cheaper ways to play the technology boom. What are the cheaper ways to play the technology boom? Might just go buy a utility company?
I don't think so. Look, I think right now we are in that risk-off sentiment when it comes to the AI infrastructure trade. People seem to be panicking, and whenever something like this happens, there's indiscriminate selling of all AI infrastructure names. People don't try to sort things out, or this company, like memory, for example. I mean, all their earnings, whether it's Samsung or Micron, these are companies that have the highest margins they've ever had, shown incredible pricing power, and their customers are looking to lock in the pricing at this point because they don't want to pay higher prices 3 months from now. So in terms of pricing power, if there's any sector that has the best pricing power right now, it's memory. And so from that perspective, I don't see a reason why you would want to, sell these companies, especially companies with pricing power, with margin expansion, with probably the best margins they ever had, just because you feel, they're hitting peak earnings. I don't see that as a reason.
We were talking about NVIDIA earlier. NVIDIA shares have shot up. They're now up about 0.9% from being in the red. And this is on a headline from The Information, which is a tech publication saying that China will let its top AI companies buy some NVIDIA H200 chips. This is the lower grade NVIDIA AI chips, right, Mandeep?
Yes.
Okay.
This is the Hopper, not the nerfed version, but the version that probably they were allowed to sell in China.
Right.
And the U.S. companies have the better versions available to them.
So it's a downgraded version from what NVIDIA offers to the U.S. customer, but the U.S. government has allowed NVIDIA to sell to China. China just didn't allow its own companies to buy these chips up until now.
Correct.
Easy come, easy go. China can turn on permission and turn off permission like a switch, right? I mean, that's the risk here.
That's a risk. And look, when it comes to the Chinese open source models, so far what we have seen from them is they are probably 6 to 9 months behind when it comes to the capabilities of the models. And even though they didn't have access to the latest NVIDIA chips, at the end of the day, these chips are deployed on a cloud somewhere. And that cloud may not be in China, but the customers could be these Chinese model companies. So from that perspective, there is that aspect around accessing the compute wherever it's available on the cloud, and that may go beyond the geographic boundaries.
30 seconds. SK Hynix, they want to do a $28 billion equity offering here in the U.S. to trade Friday. Is that going to happen?
I think so, yes.
That's a tough tape to sell that into.
Yeah, but look, I think investors who believe in this memory cycle, that it's going to be durable and long, they will want a piece of it.
All right, there's a tweet out there and citing Reuters, and Reuters is saying SK Hynix to close $28 billion ADR book build on Wednesday after oversubscription there.
Wait, closing books on Wednesday. Pricing will be Thursday. The stock the ADR begins trading in New York on Friday.
That's my understanding. That's how it would roll. 28 billion, that's large. Mandeep Singh, thank you so much. Appreciate that. Mandeep is a global tech research head for Bloomberg Intelligence, coming into the office, not taking the summer off like some of those folks in BI tend to do.
Not naming names.
Not naming names. They know who they are. S&P down 59 points, 0.8%. The Dow's off 750, 1.4%, and the Nasdaq off 175, that's 0.7%. Yields higher, and WTI crude oil up 7%. Now trading north of $75 per barrel. Iranians are saying they will close the Strait of Hormuz if they are struck militarily by the U.S. That's just out. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What's renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Scarlett Fu, Paul Sweeney, and John Tucker. We've got a lot to get to this hour, including a news conference from the president at the NATO summit in Ankara. So we'll bring you there when that happens. Tyler Kendall is our Bloomberg News Washington correspondent. She's going to set us up with some context there, especially as President Trump says that the ceasefire may be over. Robert Schiffman is our senior tech credit analyst here at Bloomberg Intelligence. He's going to talk about the Amazon debt sale. It points to a $300 billion CapEx path. This upcoming earnings season will be less about earnings and more about CapEx spend and what companies announce on that front. Terry Spath, founder and CIO at Zuma Wealth, will join us to talk about her outlook on the markets as we see the Nasdaq underperforming the broader market. All that coming up in the next hour, but first let's go now to John Tucker for Bloomberg Business Flash.
All right, guys, risk off, as President Trump said the tentative ceasefire with Iran has ended, and not surprisingly, energy stocks, they're rallying after those remarks. Some of the rotation is back, with consumer staples second best performing major industry group in the S&P 500 right now, and semiconductors getting a bit of a lift. The Philadelphia Stock Exchange Semiconductor Index, that is up just about 0.8% right now. Dan Greenhouse at Solus Alternative Management, he's closely watching the AI trade.
Can the market survive if the AI trade in general falters? And the answer to that, I would have said, will say, and will always argue, is no. That is driving, as we've talked about, and everyone does, materials, utilities, industrials, et cetera, et cetera.
S&P 500, 60 points lower. That's down 0.8%, 74.42 on the index. The Dow down 784 points. That's a decline of 1.5%. And the Nasdaq 100 is down 200 points. That is down just about 0.7%. I'll do this again. Scarlett mentioned earlier, China is going to let the top AI companies buy some of the NVIDIA H200 chips. That's according to the information. So shares of NVIDIA right now 1% higher in today's session. Gen Z not my generation.
Don't look at me.
Obsessed, apparently, with Love Island USA. So the reality dating show has become one of the streaming successes of the year. It's a Peacock series about 30 singles living in a tropical villa. They credit their success to the interactive format, viewers getting a say in the outcome.
Oh, God. It's like the Truman Show.
Yes.
That's like ridiculous. Well, whatever. I'm not going to comment. Have you seen it?
No.
Okay.
I'm not Gen Z, though.
Oh, sure you are.
No,
aren't you?
no. Gen
Well,
X.
what are we? Like Gen what?
I'm year last of the baby boomer generation. December
Tail end of
63.
baby boomer.
December 63.
Yeah.
Are you a boomer or are you Gen X?
What's 62? I don't know. Like, I'm just old.
Yeah,
That's
same
all. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg
I'm just old.
Business Flash, Scarlett and Paul.
All right, John. Thank you so much.
Feeling every day of it.
What was that movie you were talking about?
Oh, Breaking Away. Come on.
Yeah, 1979. Never heard of it.
You weren't even born, were you? No.
No comment.
Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. As John was just mentioning, stocks selling off here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, thanks for having me. And one name that's been on my screen all morning is American Airlines, continuing to move lower, now down nearly 6%. Of course, we have crude oil back on the rise after President Donald Trump's latest threats toward Iran. And American is one of the stocks that is the most vulnerable, even among the airlines. For a while there, analysts expected this company to lose money this year on an adjusted basis back when oil was at or above $100 a barrel. Things have gotten a little bit more optimistic as prices have come down. Wall Street now expects about $0.50 per share of profit, but things could really change quickly if there's any serious escalation, if there's a return to fighting, and critically a return to a closure of the Strait of Hormuz. This stock, ticker AAL, had been up double digits on the year as of yesterday after rebounding from that war sell-off, but you know, the latest comments from the president today really raining on that parade.
Yeah, just taking a look at the index that tracks the airlines, the NYSE ARCA Airline Index down 4.1% on the day. All right, let's talk about Broadcom, ticker AVGO, which goes back to Broadcom's acquisition of Avago Technologies. It always kind of trips me up.
Yes, well, Broadcom, they're having a better day, up about 4.5% and contributing on a points basis about half of the gain in the Philadelphia Semiconductor Index that we've seen. Some of that is the company's deal with Apple to make chips. We got some financial details from Apple this morning. That deal is supposed to be worth more than $30 billion, and it will include the iPhone maker helping Broadcom upgrade a Colorado production facility. I was also just chatting with Steve Sosnick, the chief strategist over at Interactive Brokers. He says there's some sort of reflexive dip buying going on in semis, maybe actually related to what we're seeing in the Middle East. The semiconductor trade really worked while the Strait of Hormuz was closed, while other stocks were hurting. And so some traders, that's what Steve Sosnick was telling me, are reverting to that playbook.
All right, Bath and Body Works.
Yes, Bath and Body Works, the retailer, that's ticker BBWI, down more than 6% after Goldman Sachs warned that their strategy risks disrupting this treasure hunt experience, as they call it, that's really important for their sales that they offer to consumers in their stores. Goldman cut the recommendation on the fragrance and candle seller to sell from neutral. And what they pointed to was these agreements that Bath and Body Works is reaching to sell through third parties like Amazon, like Ulta Beauty. That's all well and good on its own. But if customers go to these third parties to refill things that they're out of, they're not in a Bath and Body Works store. They can't see something that's new, something that's on sale, and make an impulse purchase, something that really helps sales. Goldman also took a look at conversation on Reddit about the company. They said there's less conversation on the whole than you'd expect this time of year, and some complaints about the shopping experience. So potentially a sign consumers are souring on the name.
Yeah, if you see it all over Amazon and Ulta, there's no reason to step foot into the store anymore, right? You can always get it on sale somewhere else. That's the thinking, at least. All right, Matthew, thank you so much. Matthew Griffin, Bloomberg News reporter here. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's go over to Washington, D.C. Tyler Kendall, our Washington correspondent, is there with us now. And Tyler, we're waiting for President Trump to begin speaking at a news conference from NATO. What are the headlines out of NATO Day 2 so far?
I mean, Scarlett, just from the last time that we spoke within the last hour, we've gotten so many more, which at this point is pointing towards escalation, including from Iran. Iranian state TV saying that the country is now threatening to completely close down the Strait of Hormuz if the U.S. does follow through with a threat that we heard from President Trump earlier today, that the U.S. will likely strike Iran again tonight, because the backdrop here is that we have seen really a stalling in the diplomatic efforts amid aggression by Iran in the Strait of Hormuz. Over the last few days, at least 3 commercial tankers have been targeted as they tried to transit through the waterway, in part because they were using that route to get some closer to the coast of Oman and further away from Iran. And Iran so far has been trying to maintain its grip over the strait. Fox News now reporting moments ago that the U.S. military has reiterated that it stands ready to re-implement its naval blockade. So we're going to have to see how this ultimately develops, whether or not this is strong rhetoric trying to push Iran back to the negotiating table, or if we're going to see a resuming when it comes to kinetic action, considering overnight we did see this wave of attacks by the U.S. in response to the Iranian action, which included the U.S. targeting at least 60 IRGC fast boats that are near the waterway. It is very clear that President Trump has made clear that his patience at this point is wearing thin.
And here's the quote from on Bloomberg News reporting here from this morning. Quote, we hit them very hard last night, Trump said Wednesday on the sidelines of the NATO summit in Ankara, Turkey. Quote, probably hit them hard again tonight. And that's kind of what the market's reacting to. But what we've seen in the past, Tyler, is this is a president who's very sensitive to moves in financial markets. WTI crude oil extends its gains, and this is a Bloomberg News headline. Brent crude rises above $80 a barrel. He's got to have some folks whispering in his ear saying, listen, this rhetoric from today is really impacting financial markets. Is there a possibility, as prepared remarks today, he may walk that back a little bit?
Yeah, there's always that potential, Paul, and you're right. He was even asked about oil prices earlier today. As we seen him about the conflict, he's sort of brushed it off, at least publicly, saying that he thinks over the long term that they will come down because the U.S. will be successful when it comes to Iran. But no doubt there is this frustration that the diplomatic efforts for getting Iran to the negotiating table has just been mounting over the past few weeks. I mean, we didn't even make it 60 days into the ceasefire extension before we saw the U.S. yesterday move to revoke that waiver for Iran to sell its crude to market. That really signals to us that the U.S. is pulling away some of those incentives that they thought could get Iran to make some serious concessions when it comes to curbs on its nuclear program, and leaves us big questions on exactly where we go from here, because President Trump, in his words, says that the ceasefire is over. Does that mean that we see a serious escalation when it comes to combat military operations, or is this perhaps a tactic to try to show Iran that the economic squeeze will come back into play if they don't stop their aggression when it comes to the Strait of Hormuz?
Tyler, what will you be listening for when the president begins speaking shortly?
Well, exactly what the red line is in terms of whether he would pull negotiators away. Scarlett, he did say that he wasn't going to prevent his team from engaging in diplomatic efforts. He just personally doesn't think that it's going to be worth their time. That is going to open up questions here on the timeline, which will then raise questions in the U.S. Congress. Are we resuming military action? What does that mean for any potential war powers resolutions down the line? The second thread, of course, that we've been following here is what does all of this mean when it comes to Ukraine, because the hope had been among our European allies that if the conflict in Iran had eased, if we saw a firmer ceasefire put in place, that could renew focus on Ukraine. Amid this morning, the president suggesting that Ukraine will be able to get those licenses to make critical Patriot missile interceptors, that a recent wave of attacks by Russia in the last few weeks have really exposed those gaps in Ukraine's air defense systems. Will he make firmer commitments when it comes to security security guarantees related to Ukraine, or is this escalation with Iran going to completely change the narrative at this point of the NATO summit?
Tyler, thank you so much for joining us. We really appreciate it. Tyler Kendall, Bloomberg Washington correspondent for Bloomberg News down in our Washington, D.C. studio. One of the big stories, obviously, in capital markets over the last really a couple of months has just been the issuance of investment-grade debt by technology companies associated with their AI capital spending plans. The most recent deal was Amazon coming with a big deal, $25 billion. That's issuing more than $60 billion across currencies, just recently. Rob Schiffman, he's been on fire on this stuff, way ahead of it. Senior tech credit analyst for Bloomberg Intelligence. Amazon, just talk to us. That's the most recent deal, Rob. Just give us a sense of how that was received in the marketplace and how the market's thinking about some of these tech players that have really become big issuers.
Sure. If you read Bloomberg News, it reads like it was received terribly. And quite frankly, I don't think that was the case. When they've actually issued almost $100 billion of debt this year across currencies. When you issue that much paper, every time you do a deal, you need to pay a little bit more. So new issue concessions on this were higher than traditionally. That being said, they were probably about 10 or 15 beeps higher. And when you're talking about a company that's raising 30-year money at spreads over treasuries at 110 basis points, quite frankly, it's just a rounding error. The ability to raise $25 billion in a couple of hours, I don't care if it's oversubscribed by 2 times or 5 times. Amazon could raise as much money as they want, whenever they want. They just might have to pay a little bit more.
So that paying a little bit more, you're attributing it to the fact that they've already raised quite a bit of money. And I think you're referring to the big bond sale they did in Canada, the Loonie offering last month. Or is it that maybe sentiment has turned a little bit? I think that's what we're trying to get at.
Yeah, no, I don't think sentiment has turned. Actually, doing alternative currencies, non-dollar currencies, is actually good from a U.S. dollar trading perspective, because for every dollar that they issue that is in alternative currencies, they don't have to do in U.S. dollars. What starts to happen is large money managers just get full on the name. Amazon has about $200 billion of debt outstanding now, and these are large positions. So to incentivize people to take on more, you just have to pay a little bit more. But what I'm saying is the overall cost of borrowing for them from a spread perspective is still somewhat tiny. So yes, sentiment is getting a little bit weaker. That happens when you have record issuance, and it's likely to continue. Also, Amazon's not ruling out they're going to be back in the markets later this year. That said, if they did an Alphabet-style equity deal and raised $75, $85 billion of equity next month, I think you're going to see spreads tighter. And in fact, with all this Middle East news, it's actually somewhat mildly positive for credit spreads. What happens is yields end up going higher, so the bid from the buy side, particularly out the curve, goes up. You can basically buy the same names at the same or tighter spreads, but higher yields. So you're seeing some of that today. So Amazon is tighter today, and even names like SpaceX are trading tighter today. So this concept that the large hyperscalers are not going to be able to raise as much money as we say that they're going to need, I think that's just sort of a misnomer because it cost them a little bit more this time than it did last time.
You mentioned SpaceX, and Tom follows those bonds. Tom Keene follows those bonds, and he's been noting that they've been trading lower relative. Talk to us about how they've been trading and why.
Well, it's the nomenclature is important. So lowers, are you talking about spreads or are you talking about price, right? Because it's the opposite. So, spreads on the break widen 20 to 25 basis points. And now they've settled in, a nickel or so tighter. So they're in a much more narrow trading range. Again, I think that these basis point moves are reasonably small, and they're not telling a story that I think we see across news, which is news knows bad news sells, and they put out the sky is falling. And quite frankly, it just isn't. There's a deep bid for SpaceX bonds, there's a bid for Oracle bonds, and there's a bid for these AA hyperscaler bonds. It's just at a little bit of an incremental cost over what historically they had paid. And it makes sense. Part of the SpaceX issue is that they're going to come back, and they're going to come back again and again and again. And people just need to position that, if you're a triple B name, where should you be trading? Well, they're trading inside of where Oracle is. So all of a sudden, I think Oracle levels, which are, 30, 40 wider, create a backstop where I think SpaceX might be going.
All right, good stuff.
Robert Schiffman, he is the guy to go to here on all things tech credit. He's our senior tech credit analyst at Bloomberg Intelligence, talking to us about the Amazon bond offering, $25 billion in credit. Demand hit $62 billion. Final orders, however, dropped to about $41 billion. But as Robert points out, still much, much more than what was on offer. All right, we have a lot coming up here. We have stocks right around session lows as oil prices continue to move higher. Brent is now up 8%. WTI at $75 a barrel. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, the spike in oil prices and higher bond yields helping drive stocks lower right now. President Trump did raise the pressure on Iran by threatening to strike again tonight, reimpose a blockade on the nation, and take over the Island oil terminal. Energy, best performing major industry group in the S&P 500. Occidental Petroleum, that's the best performing single stock in the S&P 500. It's up right now 5.5%. And then you have Broadcom shares up over 4% right now. Apple plans to spend more than $30 billion with Broadcom in the next 5 years to ramp up its investment in U.S.-made chips. S&P 500, 70 points lower, down just about 1% at 7432. The Dow Jones Industrial Average down 770 points, and the NASDAQ 100 down 309 points. That's a 1% decline. The 10-year yield now is up 4 basis points at 4.59%. The 2-year yield 3 basis points higher at 4.22%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate it. Markets are down. We got Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. As John was just reporting, markets are showing lower here this morning. Let's go to a professional here. Terry Spath, founder and CIO of Zuma Wealth, based in Malibu, California. Another Southern California person. Man, what must be something going on out there. Terry, thanks so much for joining us here. What are the conversations you have with your clients here? Because a lot of folks talk about this wall of worry, but boy, the market seems to climb it just fine.
Yeah, they really do. Hi, Paul. Hi, Scarlett. It's always great to be on with you guys, especially on a day like today when we've got some pretty heavy headline news that have come through. And I think that that's a perfect example for our thesis for this year and what we learned from last year, which is that, you know, for U.S. stocks, it's not the market's ability to shrug. It is the market's ability to shrug off news. You know, the bull market's been remarkably resilient despite the wall of worries, as you mentioned. And if there's something we really learned in 2025 and that has carried into 2026 and certainly into today, is that many investors can often underestimate the market's ability to absorb bad news, and that creates opportunities, whether it's tariffs or geopolitical conflicts or sticky inflation or questions about Fed Reserve policy. That's all created periodic sell-offs, and yet the underlying trend has remained constructive. So rather than focusing on every headline, what we're really encouraging our clients and investors and listeners to this show to do is to watch whether the market continues to be able to make higher highs and higher lows, because stock markets don't require perfect news. They require the ability to withstand bad news. And I'll just say that the next test and our focus now isn't whether there will be volatility. We know there will be. The real test is whether earnings continue to validate today's valuations. And that's where the focus is for us. And we really see the burden of proof right now on the bears in this market.
Okay, I'm glad you bring up earnings, because at the end of it, that's what everyone says is driving the incredible performance of U.S. equities despite all the macro concerns, which is earnings growth has been spectacular. So within earnings, with JP Morgan and the big banks set to report results starting next Tuesday, what is the data point that you will be listening for? Is it simply earnings growth year over year, the beat rate for companies? I mean, they always underpromise and overdeliver. Is it margins? What will you be watching for to determine the durability of earnings growth?
Well, really all of those things, because everything is funneling into earnings for us at this point, whether it's higher rates, whether it's valuations, whether it's news out there in the latest headlines. Is it going to impact earnings? Because going forward, that's what's going to drive markets, and we think that that deserves the most attention. And the reason for that is because valuations are, you know, they deserve attention. There's pockets of exuberance, and we think valuations are full, but not excessive. But the test is going to come down to whether earnings come through at levels that are expected, whether the outlook for the rest of the year is going to be robust. And we think that, you know, that to the extent that that is the case, everything coming down into earnings and strong outlook for the rest of the year, that's what's going to drive stock prices higher. So it's all of those things that you mentioned. Everything that has to do with earnings is what we're focusing on right now, because if there's something that can derail the market in the back half of 2026, it's going to be missing any of those numbers. That's really where our worry is and our focus. So it's going to go from, you know, will AI spending pay off? Will management teams be able to talk about evidence that their earnings, that their productivity is improving, that their margins are expanding, that customer adoption is strong for their AI spend? All of those billions that they're getting spent, keeping up with that is what is, all those factors are what we want to focus on in the next couple of weeks.
What's your call on this Federal Reserve? I mean, yes, you're correct. The focus should be and is on earnings, but how about the Fed? It doesn't seem like the Fed's going to do much here, at least in the near term.
They're not. It's interesting, since Warsh took over, we've been seeing a little bit more volatility. I think that can be the case when a Fed chair takes over. There tends to be a higher period of volatility. So we'll be looking forward to those minutes that are coming out later this week. We don't think that the markets need falling rates in order to be strong this year, but they do need stable expectations. So we've seen that stocks can do well with higher interest rates, provided economic growth remains positive, inflation's contained, corporate profits continue to grow. But again, the market has to earn its returns from here. So higher rates are a risk, but only if we see them hurting corporate balance sheets, denting consumer spending, pressuring earnings. And that hasn't happened. So, higher rates do matter. They do. But the question is whether they become restrictive enough to materially slow profits. And we really haven't seen that yet. And so, again, we think the second half is going to be driven by earnings growth. But we are watching the interest rate picture as we've got this new Fed in place and with higher oil prices as we're seeing today.
You sound very optimistic, or fairly optimistic, given the market's ability to really focus on the fundamentals. What worries you, Terry? What could trip this up?
Yeah, we are bullish. However, we are always worried. I do lose sleep on a regular basis. We put the risks in 3 buckets for the back half of 2026: fundamentals, policy, and sentiment. And in our view, maybe it's not a surprise, fundamentals matter the most. So elections matter, but it's earnings that really matter. So if there's a big disappointment, either this earnings season or throughout the rest of the year, we think that the market's priced in a healthy earnings growth. So if the market begins to lose confidence in that earnings outlook, that's the biggest risk that we're paying attention to at this stage of the game.
Terry, what's the fixed income sleeve in your portfolio here for a lot of your clients?
Yeah, I'm glad you brought that up. I think that there's a lot of risk in the market and a lot of love for certain sectors, and we think that you need to sleep a little bit at night, and we think that there's a place for a safety net in your portfolio. So we do like safer treasury bonds. We do like that yields are a little bit more productive for our clients right now, and we do have holdings in high-yield corporate bonds. While spreads are on the tight side, we still think that the risk return there is something that makes sense and can provide some more steadiness in a client portfolio. So everything from treasuries to high-yield corporate bonds deserve a place in a client portfolio right now.
All right, Terry, thank you so much for joining us today. Terry Spath is founder and CIO of Zuma Wealth, joining us from Malibu, California, sounding fairly bullish on this market, which has endured quite a few hits, but continues to move higher. At the moment, it is moving lower, and that's mainly as a knee-jerk reaction to the surge in oil prices. Oil has extended its advance, WTI trading above $75 a barrel, Brent now just shy of $80 a barrel once again. Let's bring in Mike McGlone. He is our senior commodity strategist here at Bloomberg Intelligence. And Mike, this is all on headlines out of President Trump saying that the ceasefire with Iran basically is over as far as he's concerned. This might be negotiating tactics, just kind of a stance to get what he needs to or wants to, because, Mike, the story for oil up until this morning has been we've shifted from scarcity to one where there seems to be more than enough supply.
Well, exactly, Scarlett, because what we did is we accelerated pre-existing trends of the Western Hemisphere supply surplus, most notably U.S. and Canada. And that's going to kick in. That's really going to matter by the rest of the year. Right now, we're seeing on the screen is, it's really hard to figure out what's going to happen in Iran with Mr. Trump. We do know his no motivation for midterm elections. But the key thing to point out is right now, that price on this screen of WTI is $75 a barrel. That was first traded in 2006 and 2007. That's 20 years ago. Exactly. It's not a a commodity that stays up. And the key question I think all traders are looking at right now is, can it stay above 80? What's it going to take to stay above 80? Something shocking, but we just get a normal little detente, which is what Trump means. It's going to head back down to 50 or lower. But the key thing I want to point out about today is there's a lot of good information being drawn from today's trade, and that is it's really reiterating my views that we probably put in a potential opportunity of a lifetime to sell gold and precious metals at the beginning of the year and to sell cryptos last year. Because what you're seeing happening so far in the day is, okay, S&P 500 is down 1%, but gold is down 2%, and cryptos and Bitcoin is down 3%. It's telling you where it's going to go, I think.
Dumb question of the day. Does anybody invest in oil, or do they just trade it?
Well, there you go. Investing in oil is really a bad thing. And you have USO. It goes down over time, Paul. That's what I'd love to point out to commodity people is, okay, you can invest it, and sometimes it's okay when you have it in backwardation, but typically you have to pay storage. The best way to typically invest in highly elastic commodities like energy is through things like the XLE, ETFs, and actually equities. Now, maybe in precious metals, it's good to invest in it. Historically, gold has been the best investment, but it put in a peak in Q1 that I look at it as that might have been a chance to sell a lifetime, and it's starting to show that even like things like in cryptos, people try to invest in, and then you learn the lessons of things that don't have income and earnings, and that's what's happening now. And just as our previous guest said, earnings are great in the stock market, but it's a question of how long that can last.
Given all the headlines that are swirling around oil right now, is there anything that an organization like OPEC Plus can say or do that changes the trajectory of oil?
Scarlett, I'm sure they're going to try the same things, but the number one thing is between our president and Iran right now. How they work that out, the last thing we want to see is tankers and things maybe getting hit by projectiles from Iran. That would be quite disturbing, and I think that's what the market's fearing. But again, you have to look at the price. Last year's high in crude oil was 80, and right now we're 75. And we all know the average cost of production in this country is around 55. We're the incremental producer. What does that mean for the producers in the U.S. and Canada and Argentina and maybe even UAE? And it just means they're going to bring in more supply. You know what Landman's doing.
Yep, absolutely. I'm all over that. Mike McClellan, Senior Commodity Strategist for Bloomberg Intelligence. Give us some thoughts on oil rising here. Again, WTI crude oil up about 7.5% here, $75.70. And Brent, $80, right back to it. So you bring a little tension back into the marketplace, and these are the levels we see. We're still waiting President Trump for comments from Turkey. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Energy stocks rallying while airlines and cruise lines, heavily dependent on energy prices, they're sliding. This comes after President Trump, of course, said a tentative ceasefire with Iran is, in his words, over. Valero and Phillips 66 best performing stock in the S&P 500 right now. According to the information, China easing restrictions on U.S. technology, it will allow some of their companies to buy a limited number of H200 chips from NVIDIA. NVIDIA shares right now up just about 0.25%. We have seen some market rotation, but Liz Ann Saunders of Charles Schwab says, you know what, on that front, proceed with caution.
I think for your average, particularly individual investor, trying to trade around that and anticipate what the next shift from a sector rotation standpoint is going to be, I think that's a fool's errand.
Right now, the S&P 500, 66 points lower. That's down 0.9%, 74.37 on the index. The Dow down 700, well, let's call it 801 points right now. The NASDAQ 100 down 259 points. That's down 0.9%. On the yield front, with the rise in energy prices, inflation back in play, 2-year, more policy reactive there. That's up 4 basis points at 4.23%. The 10-year yield, 4 basis points higher. That is up 4.59%. FanDuel says Monday's World Cup showdown between the U.S. and Belgium actually generated the highest number of active bettors and betting volume of any soccer match ever on the site. So it surged 72% from what was wagered on the first U.S. match of the tournament. A lot of betting on soccer. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. You can bet I was kind of bored.
John Tucker, thank you so much. Betting on soccer, betting on John Tucker liking soccer, or betting on the Fed. It's all part of what we do every day here. And of course, for those who are betting on the Fed, they're hoping to get more of an understanding into how the central bank, and in particular the new Fed chair, is thinking about policy going forward. Let's bring in Danielle DiMartino-Booth. She's CEO and Chief Strategist at QI Research, of course, with her years of experience at the Dallas Fed before that. She's in studio with us now. And Danielle, we are going to get the minutes from the FOMC decision in June at 2 p.m. today. Normally, this is kind of like not a huge moving event, but this one should be interesting because it'll be something that maybe tells us a little bit more about the inner discussions at the Federal Reserve.
We can hope. We have to remember, in December 2008, Janet Yellen said in the FOMC transcripts, quote, we could also consider using the FOMC minutes to provide quantitative information on our expectations, end quote. And so since then, a lot of Fed chairs, including herself, chose to use the minutes as kind of a 3 weeks later, if the market didn't get what the intent was of the statement, let's throw a few things into the minutes. Of course, Kevin Warsh would be highly aware of that. And so it's going to be interesting to see, therefore, if the minutes are as abbreviated as the statement. I mean, we can't know. But we do know that even though like a corporate board of directors meeting minutes would be just truly a timestamp, a transcription of what occurred at the meeting, that's not the case with FOMC minutes.
They fill in the blanks a little bit.
They can. They have in the past. I mean, Powell did it a few times, and you were very aware of, wait a minute, that's not what it sounded like 3 weeks ago. So, but if the minutes say less, like the statement
That's
said,
telling.
Less. To me, that's telling too, because again, he's trying to restrict communications. When he was over in Portugal last week, they tried to get him to provide forward guidance, and does this mean there's going to be a rate hike in July? And he was like, not falling for that either. So he's very, very determined, I would say, to lessen communications if and when possible. I've never seen this little Fed speak ever after a meeting. This few Fed speakers.
Right. Well, I guess we heard from Mr. Warsh recently in Portugal, and then before that at the Fed meeting. What were your takeaways from those two opportunities there?
Well, it was almost as if he had made an act of Congress happen. Like he took away the second mandate because 99% of his comments were focused on price stability. It was as if the employment mandate didn't even exist, outside of the fact that he said non-farm payrolls are irrelevant until their third revision being when the quarterly census of employment and wages are released. Of course, we know with the QCEW data in hand, which is more than 95% of U.S. employers, so it's the hard data that checks the survey soft data of non-farm payrolls and all the imputations in it, the birth death models, the seasonality, blah, blah, blah. So we know that in the first, second, and third quarters of 2025, the U.S. economy lost jobs, period. 3 quarters in a row we lost jobs. That goes beyond the definition of a recession. But the fact that he mentioned the third revision basically left traders in the dark for the first time for a non-farm payroll Thursday last week, because he negated the importance of them. And he got rid of the dual mandate without a single congressional vote. Bless him.
I mean, what would make him pay attention to the labor part of the equation? I know waiting until the third revision of the jobs report means you're months,
18 months
later on.
Right.
Yeah, a year and a half later on. But like, what would a monthly jobs report or anecdotal headlines do to get his attention?
So he's got a task force for that, right? So he's looking at alternative data sources, and he's been very forthright in saying he's looking for alternative data sources. He's going to name all the members of these task forces. It was very strategic in my mind that he didn't bring outsiders in to these task forces until after that press conference, and then the hires started to happen. But
who is he bringing in? Do we know?
We know he's bringing in an individual, I think, is it Charles Schwab's granddaughter from Treasury, who worked for Besant.
Academics, practitioners, do we know?
No, he's much... Mervyn King was probably the biggest headliner of them all. And Mervyn King is not a proponent of forward guidance going too far. And he's certainly not been an advocate of thousands of Fed speakers every other day trying to hog the airwaves. So he's the one that's going to be charged with communications. To your question, Scarlett, my wondering is are we going to see Indeed.com? Are we going to see Linked Up? Are we going to start to hear and see Challenger hiring series? Things we're not accustomed to the Fed paying attention to in order to track the labor market better. Are we going to see Trueflation? It's on the terminal every day. Trueflation, in fact, they just rolled out what they call the Warsh trimmed mean Trueflation. So it'll be fascinating, I think, to see named, if there's a press conference, by the way, in July. There's no dots to plot. There's no dot plot to plot. To ponder. So he actually said we're meeting in 4 weeks, but he's not promising a press conference after.
What is his ability? You've worked in the Fed before in Dallas. What is the ability to affect meaningful change in just how the Fed operates? Different data sources, communication strategies. How much leeway is there for a chairman?
Very, very little. The Fed staff in Washington, D.C. is the power base, if you will. They see district bank presidents as being something of a revolving door. We're talking about lifetime academics here. On the staff in Washington, D.C. They see Fed chairs come and go. As far as they're concerned, they're the glue that holds everything together, and they can push back on his trying to use alternative data sources. They can give it to a junior analyst to work on, because in many ways they control part of the narrative because of the presentations that are made over those 2-day Fed meetings. So he has to get the Fed staff in Washington, D.C. on board, and he has to have a really good handle as well on 140 Liberty and the markets desk at the New York Fed. Of course, that's a permanent voter as well.
Where has he surprised you, or how has he surprised you so far in his tenure?
He surprised me most in reining in, I don't know how he's doing it, reining in district bank presidents' speeches.
All the Fed speak that we normally get.
That we would normally get. When I was there, you would have to run a speech up the totem pole to PR in Washington, D.C. You couldn't just blast out with a speech of any kind. But, as Elizabeth Warren has brought attention to, as Waller is casting it out, the district banks are under siege right now for being a bloated bureaucracy. And I'm kind of surprised that they're playing along as nicely as they are.
So what are your expectations for Mr. Warsh? Do you think he'll have success in some of the plans he wants to do in terms of maybe slimming down the Fed, reducing the bureaucracy, changing how they operate a little bit?
Possibly. I mean, I think the biggest blanks to be filled in, there's a task force for it, is the balance sheet. And, you know, Treasury Secretary Besson has a lot that he could announce a massive buyback of off-the-run treasuries out on the curve. He could be more forthright in taking charge of the tenures in the Treasury market. You know, Warsh could accelerate the roll-off of mortgage-backed securities. He certainly never believed in that. And if there wasn't an entire one of 5 task force devoted to the balance sheet, that's where I think he could possibly affect the most change. And if he has absolutely no, let's just say he gets punched in the face like Jay Powell did with the liquidity crisis in 2018 late, how is he going to react?
Right.
Will he care about a 20% correction in the stock market? Because if it doesn't bleed into the credit market, that's a very viable question to ask.
These task force, to a lot of people, feel like it's the exact opposite of a Doge type of move. You're adding another, arguably, layer into a already bloated bureaucracy. Is that how it's perceived by market participants, or?
I think market participants, A, are largely in the dark, but B, are cognizant of who is going to be leading up these task forces. If they're outsiders, then you're talking about the opposite of building up a bureaucracy. And I think that is going to be the real litmus test, is who is going to be manning these.
Interesting.
Could you bring someone in from BlackRock?
Yeah.
On the balance sheet task force, a practitioner, outsider. I mean, again, it's going to depend on who is in these positions. And it's also going to depend on, you know, the continued unraveling. Last night we had Barclays put a gate up with their private credit fund. So they had about 10% requests for redemptions. That was reduced to 5%. If that comes unglued and it bleeds into public credit markets, Warsh's latitude is reduced greatly.
Has he set a time frame for effecting
by the end of the year? He was very specific about that.
All right, so we'll know sooner.
And he's also said, you know, the other thing that was not very noticed in Portugal was he was like, you know, the dot plot's going to be around for now. I mean, the implication is we might get September, we might not get the next dot plot following the September meeting. We just don't know, because it seems to me that everything is up.
Okay. Doesn't he know we have a function on the Bloomberg terminal just for the dots? DOTS go. He can't get rid of it.
Yeah, but now you need to create 5 task force.
I know.
Functions.
I'm sure they're working on it somewhere. Danielle, thank you so much for joining us. Danielle DiMartino Booth. She's the CEO and Chief Strategist at QI Research, joining us live here in our Bloomberg Interactive Broker studio. Let's move over to the tech space here. Apple, chip deal with Broadcom, expected to exceed $30 billion. Big move for Broadcom, big move for Apple. Let's check in with Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence. Anurag, talk to us about this Apple deal.
So when you look at it, at first when we heard about this deal a couple of days ago, we thought this would be something new, but it seems a little bit like, similar smaller chips that they have been buying from Broadcom for a while. But I think the big portion is they are being built in the U.S. or being manufactured in the U.S. And I think that's really the big difference here because, as we know, most of these parts do come from Asia. So this is the first part of, the commitment Tim Cook has made to President Trump that he's going to be buying more products in the U.S. So I think that's the angle that's more important. Now, it is important from Broadcom's point of view because Broadcom did make the modem for the iPhone, and Apple's been in-housing that particular piece. Now, that was not good it was a big overhang for Broadcom for a while, but this deal for them says Apple's still going to them for other chips and other parts. So it's a good deal more so for Broadcom, and for Apple, it's basically telling the President Trump that we are buying more products in the U.S.
And Broadcom stock is up 3.5% today, up about 11% year to date. And over the trailing 12 months, up about 41%. So it's been well received by the marketplace here. So how does Apple think about its supply chain these days? They've been working so hard since the pandemic, and then with President Trump's pressures to kind of rejigger its supply chain. Where are we in that process now, Anurag?
So, though I think they are doing the right thing in terms of if you look at bill of materials of any product, of any big phone, the chip is a very expensive part of it. I don't think you can logically think about them trying to assemble the phone. That's a very, very low cost product somewhere in the US because it's not mathematically economical for them. Let them do that portion somewhere in Asia where they have the scale, low cost labor, and the factories are already set up. But the expensive parts can be made in the US if we have funding from the government, if there are bigger factories that do that kind of stuff. So that I think they're going about it the right way. We've also heard from Mark Gurman that there is a possibility that Apple may work with Broadcom to do some AI server chips. That's going to be actually a very expensive chip if they actually go out and do that. And that can be done in the US also. So looking at the right part of the supply chain, the more expensive parts being built, I think that's the right way to look at it.
What do we know of the role of Tim Cook these days? What is he doing, and kind of what's the focus for him going forward, do you think?
I think going forward, it's I think very clear in the announcement that he's going to make that he's going to be, making sure taking care of some of the government affairs, which to me means attending dinners both in China and in the U.S. with the respective presidents, or basically wherever the president wants him to go, he will tag along. I mean, I think that's really something that even in the first 3 months of President Trump's, inauguration, he was not happy that Tim Cook was not in one of the particular functions. But since then, he's been seen everywhere. So I think that's going to be his legacy and work going forward.
And it's hugely valuable, no question about it. That's the way a lot of CEOs have come to the conclusion that's the best way to deal with this administration. Any latest thoughts here on Microsoft? It goes to that whole AI as a competitive threat to software broadly defined. And I can get it for some companies, but boy, it doesn't ring true for Microsoft. They just seem to have too big of a moat, but that's not what the market's saying.
I think the market's a little bit worried about CapEx. We published a note yesterday saying that maybe they need to lighten up a little bit on that narrative, because if you look at the valuation gap now, it's trading at less than 20 times earnings, and that was not the case. I think the valuation's down almost 39-40% over the last 12 months. And I think a lot has to do with the money they're going to spend. By our calculation, they're going to hit closer to $190 billion by calendar 2026. That's about 54% of revenue. And that number is going to go up next year. So you have to really think that do you really need to spend that much money down the road, especially when you have a very profitable software business? It's okay to give back on a little bit of revenue growth, but boy, you do want to keep that free cash flow going, because that's what some of the investors are looking for.
Yet, we had your credit colleague on earlier today, Rob Schiffman from Bloomberg Intelligence, and he's basically saying, hey, my market's wide open. These guys can keep issuing debt and build as much as they want.
The thing is, it's okay for Google to do it because they have their own chips.
Yep.
Amazon, it has its own chip. I like that. Microsoft is still behind in that chip war. If Microsoft is able to come up with its own chip and create a data center where they don't need to go out and pay the NVIDIA tax, it's okay. But right now, Microsoft chip is not at that level that customers are running to them and say, well, give me your AI workload, but on your chip. So if you have to go buy NVIDIA chips, which is sometimes half of the CapEx goes to NVIDIA, then you have to really think about why are you doing that?
30 seconds left. Do they have the ability? Do you think they'll get their own chip at any time soon?
Oh, they have their own chip and it's working, but it's not doesn't have the same customer preference as what we saw with Google TPUs or with Amazon.
Okay, very good. We'll keep an eye on that one. Stock down 20% year to date. Anurag Rana, senior technology analyst for Bloomberg Intelligence, based out there in Chicago. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121 across the globe. It is the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Balance of Power with Joe Matthew is coming up in just a moment. The S&P down 71 points. That's about 0.9%. The Dow's off 800 points, 1.5%. The NASDAQ off 260 points. That's 1% here. Yields higher. 10-year Treasury yields up 4 basis points, 4.59%. WTI crude oil up 7.7% to just under $76 per barrel. And Brent crude above $80 per barrel on some of the comments from President Trump from Turkey. More Bloomberg coming up right now.
from Washington, D.C., this is Balance of Power with Joe Matthew.
The ceasefire is off. Welcome to the Wednesday edition as President Trump delivers that message from the NATO summit in Turkey after Iran attacked ships in the Strait and the U.S. responded with heavy strikes late yesterday. We're going to get the latest here on what could be a return to full-out war from the president himself. We got a 2-minute warning a short time ago from Ankara, where President Trump is going to be holding forth in a news conference with reporters who have been waiting some time now for his arrival. He is set to be at the podium in just a moment. You're going to hear this unfold live and unfiltered here on Bloomberg Radio. Thanks for being with us. The president has already spoken multiple times today and has made a lot of news. Yes, the ceasefire over, in his words, as he spoke on the sidelines of a meeting with President Zelensky of Ukraine. Let's listen.
To me, I think it's over. I don't want to deal with them anymore. They're scum. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. As far as I'm concerned, it's over.
President Trump also meeting with NATO Secretary General Mark Rutte, referring to the Iranians as liars, cheats, and sick people. Scum, he called them. He said, I will let our wonderful negotiators keep talking if they want, but I don't see it. Now, this, of course, is not the only issue that is percolating at the NATO summit in Ankara. There have been many questions, of course, about the U.S. policy regarding Ukraine, and we have breaking news there as well. As you heard introduced, an idea introduced on this program at this time yesterday, when we spoke with Melinda Herring from the Atlantic Council, the idea of licensing Ukraine to be able to make the Patriot interceptor missiles that it needs so badly. That has happened. And when President Trump was asked about a reciprocal deal in which the United States would license drone technology from Ukraine, he also suggested that that would be considered, if not something that will definitely happen. We'll hear questions likely about both of these here in the offing with President Trump in Ankara, knowing that, of course, the markets are responding to the news from Iran. And we can take a look quickly at the visceral reaction that we've seen in the stock market as well as the energy markets, with oil prices kicking higher here. Crude oil futures in New York, WTI approaching $76 a barrel, now up almost 8%. Exacerbated by the U.S. decision yesterday that we already talked about to remove waivers, to withdraw waivers for Iran to sell its oil. Brent crude also higher, now above $80 a barrel, some 9%. While we're waiting for the president, he could walk out any moment. We're told there's a 2-minute warning. We want to check in with Charlie Pellet, who's got his eyes on the markets as well, with a more than 700-point drop in the Dow. Charlie, what else are you looking at?
Right now, looking at oil, Joe Matthew, you hit the nail on the head. The big story today. Sometimes you look at a quote on the Bloomberg and you say, is that right? Of course it's right. When you look at West Texas Intermediate crude up 7.7% right now. WTI 75.86 a barrel. Barrel of Brent 80.29. It is higher now by 8.2%. So oil certainly driving sentiment today. We are looking at a sell-off here. The SOX continues to slump down another 0.1%. The VIX back above 18. Stocks lower across the board. S&P right now down 67, drop there of 0.9%. Dow Industrials down 781, closing in on 800, drop there of 1.5%. Nasdaq down 0.9%. All of this with the 10-year now at 4.59%. The 2-year 4.23%. The 30-year 5.08%. And spot gold down 1.7%. 4,036 on the precious metal. So again, worth recapping, repeating on West Texas Intermediate crude, looking at a 7.7% gain now, 75.87 a barrel. Oil surging after President Trump said a tentative ceasefire with Iran is over, reigniting geopolitical risk premium in prices. Barrel of Brent above 80, 80.18, up today by 8.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right. Great, Charlie. Thank you so much. We'll get back with Charlie Pellet, as we always do, just about 15 minutes time, unless, of course, the president is going to be holding the news conference by then. We had been waiting for him to wrap up a bilateral with the leadership from Syria. That was the final bilateral meeting on the schedule, and that was to resolve into this news conference that we are now waiting for. Dial us up on YouTube. If you're listening to us on the radio, you're always welcome to watch the radio on TV. Search Bloomberg Business News Live. We've got the shot up now from the room in Ankara. 8 American flags, 4 on each side, the presidential seal on the podium, and a room full, including General Kane, who just walked in to get his seat, waiting for the president here. Charlie mentioning oil prices. This is a big story today. When you see crude oil futures jump like this, there's more to the picture, of course, and the increase we've seen in diesel today. Recalling our conversation with Tom Closa yesterday has been remarkable. Diesel futures up 13%. President Trump getting to the podium now. Let's bring you in the room in Ankara. This is live and unfiltered on Bloomberg. Stay with us on Balance of Power as we let this unfold with the President of the United States.
It's important stuff. And, you know, our team out here, well, they've all become stars, superstars, actually. But we want to thank you very much. We've had a tremendous time and I think a great success. And we just concluded a very successful NATO summit here in Turkey. And I want to thank President Erdogan, who's really a great man. He's a great leader. He's a friend of mine, been a friend of mine for a long time. He's a strong person, a very strong personality, and that's why he runs such a successful and good country, and really a great, I would say, a great country. Militarily, he's very powerful. People leave him alone. But he's really done a fantastic job. And from the moment we got off the plane, you look at the airports were beautiful. They built a new terminal for our arrival. Everything was beautiful. And so I just want to thank President Erdogan, who's done a fantastic job in Turkey. And I also want to thank NATO Secretary General Mark Rutte. Mark is an extraordinary person, smart, great leader. It's not easy leading so many leaders like that. You get a lot of leaders, and they're strong personalities, every one of them. And Mark does an unbelievable job. Couldn't find anybody better. I just want to say there was tremendous love in that room. The press got to see the sitting, but they didn't get to see the speaking. And I actually said, it's too bad the press couldn't see this, because every one of them spoke for a little while. And I spoke for a little while. And it's a lot of speeches. We kept it short, but it's too bad the press couldn't have seen what we were doing in that room, because it was very smart people, and they have a lot of good in their heart, not evil, good. And they're doing a great job for their country. The world is doing well. We have, as you know, the oil is down. We'll see whether or not we keep it down. We should keep it down. We're doing things that should have been done 47 years ago with Iran. And I just want to say that throughout my first term and over the past 18 months, the United States has led a historic effort to dramatically increase the defense spending and to have equipment that no other country in the world has. When you look at Venezuela, when you look at Iran, essentially demolished their military in a couple of weeks. They had a good military, they had a good Navy, they had 159 ships, everyone's at the bottom of the sea. They had hundreds of airplanes, they're all gone. They're all lying burned up on the runways. They were totally decimated. Their radar's gone. Everything's gone. Their leaders are gone, frankly. And their combat capability is pretty low. They have a small percentage of missiles left. They have some of the launchers, missile launchers left, call them launching pads, but most of that's been destroyed too. So we have the strongest military in the world by far. Not even close. Everybody admits it. Last year's summit in the Netherlands was great also, and we achieved an unprecedented agreement to increase the annual defense spending. And that's the benchmark, raising it from 2% to 5% of GDP, which everybody said was impossible. And now they're all thanking me, and most of the countries have agreed to it. We have a couple of that didn't, but I have a feeling they're going to. and pretty quickly. In fact, today they were very positive. One of them in particular was, I didn't think a good team player. Today was a great team player. As all of the leaders understand very well, the United States remains by far the largest contributor to NATO, monetarily and maybe otherwise, and the strongest military anywhere in the world, and they respect us as a country. Again, they didn't respect us 2 years ago. They laughed at us. NATO laughed at us. Everybody laughed at us. They don't laugh anymore. There's no more laughing. This year we invested a record $1 trillion in our armed forces, and we're going to be asking for $1.5 trillion coming up. We have the money being spent on the best equipment anywhere in the world. In the working session this morning, we discussed the progress other members are making toward the 5% target, and they're making great progress. Many of these countries are very rich, by the way. We don't have to feel sorry for them. But it doesn't mean they're properly protected. There's a big difference. Some have truly answered the call, and others are making big changes and will be answering the call. I think I can say in all cases they're going to be answering the call, and we'll be taking in over $1 trillion a year toward defense, and that's a tremendous amount of money. It's a big up. They were at 2%. They were actually at 1%. I got them to 2%. Then I wanted to get them to 5%, and we got up to 5% the last time. And they're, just again, if you could have seen the respect and the love in the room, and it's love really for the country, for our country. I don't want to say me, because you'll say, oh, he's so conceited. He's such a conceited person. But they do. I mean, they like the job I'm doing. They said, sir, we love you. These are grown people saying that. Isn't that nice? Maybe, I don't know, maybe they're trying to get to me. And in the way they did, because there was tremendous unity in that room. And I urge all nations to accelerate their plans to get the benchmark as quickly as possible. The benchmark is going to be that 5% number. That's the number it should have been for years. As a result of the commitment we achieved last year, defense spending of other NATO members surged by more than almost $150 billion in 2025, and much of that money is being spent on American-made equipment. They all want American-made equipment. We're pushing very hard to have the defense companies. They're great. We make the best equipment. The Patriots and the Tomahawks and everything we have is considered to be the best. Not by me. It's everybody wants it. I wish we made it faster, because we could sell as much as we could make. And as you know, I had Lockheed and every one of the companies, all of the companies who are Raytheon as an example, Boeing. So many of those great companies are now building plants. They had big plants, but they were using them 24/7. I said, that's not the way to do it. You have to build more plants. You don't have to just go overtime. No tax on overtime. Remember that, please? No tax on overtime. Those people are happy. But they were doing literally 24 hours to get the Tomahawks done and the Patriots done and all of the other defensive and offensive equipment done. It's the most sought after equipment in the world. You saw that with Venezuela, where they had a lot of great equipment. It wasn't ours, and it didn't work. Our equipment works, but we have to produce it faster for other countries. For everybody, including ourselves, we have to produce it faster. So we think within a year and a half max, we'll be, instead of waiting for a year or 2 years, we'll be having it on a 2-week wait, maybe a 1-week wait. That's what I want. And it'll do really well. A lot of people are, just waiting. They're waiting. They want to get this defensive equipment, maybe in particular the defensive equipment, but offensive and defense. As much of that money is being spent on American-made equipment. That's the money that the European and Canada are spending, European countries mostly, and Canada. And they're spending that with the United States, largely. And it's American-made, made in the USA, as we say. Weapons, munitions, supporting thousands of American jobs. This will increase. We have the highest number of jobs. Right now, we have the most people working in the United States that we've ever had in the history of our country. We have the biggest investment ever made, $19.2 trillion. That's 6 times more than we've ever had. Think of it, 6 times. And what did that were tariffs. Without the tariffs, I think we would have done fine, like at about 2 or 3. The last administration had much less than $1 trillion invested for 4 years. We have $19.2 trillion invested in 1 year. We haven't gone into the extra almost a half a year, 1.5 years. Those numbers won't come out for a little while. So we have 19.2 trillion, not billion, not million, trillion with a T, invested in plants and equipment that's being built all over the country. Eli Lilly is building plants, big drug, Merck, all of them, the drug companies are building. The car companies are building like crazy. In fact, as you probably saw a big announcement yesterday, Toyota is leaving Mexico and they're going to build one of the biggest car manufacturing plants in the world in Texas. That's because of the tariffs, because we don't mind if you build in Mexico, but if you build in Mexico, you have to pay 25% tariff. If you build in Japan, or if you build in any place, China is a much higher tariff. It's just 100% tariff because we don't want to lose our jobs. We don't want to have our workers lose their jobs. We have the largest number of plants being built for the most money ever in the history of our country. Car plants, AI plants, and all other plants, pharmaceutical plants, chips. We're not giving anything. All we're saying is, if you don't start, we'll give them 1.5 to 2 years to build their plant. If they don't have that, they have to pay 100%, 200%, even 250%. If they make a chip, or if they make a car, if they make pharmaceuticals. So the pharmaceutical companies are moving in at record levels. There's never been anything like what's happening. Let me put it a different way, put it here in a more broad fashion. There has never been anything like has happened with this country or any other country in the history of the world. There has never been growth. There's never been manufacturing plants being built. We have so many being built. And in the big ones, like AI, some of the AI, we let them build their own electric plants. We force them to build. We don't want it because the old grid that we have wouldn't be able to supply. They need, just as an industry, more energy than the entire country produces right now, when you think of it, which is incredible. So take all of the energy that the United States produces, and that one industry, which is so big, so powerful, it needs more than that. In fact, some people say almost double. So this was my idea. I said, you can never service that. You can't reinvigorate the grid. You can make it better, but nothing like that. You wouldn't be able to build. And we're leading China in AI, in just about everything. But we're leading China in AI. Even in TikTok, I was watching somebody say, oh, the TikTok deal, it's so bad well, because they say the deal was incredible, but they think the word that gets out is bad, except the numbers just came out, and I'm #1 on TikTok, and all I do is talk about communism, right? So it's sort of good. I used it to get elected, too. But, you have to get your word out. But the numbers came out just a little while ago, and I was #1, some ridiculous number. I never heard of numbers like that, but #1. And all these entertainers are number 27, 29. It's crazy. I don't even understand myself. But that means that my word's getting out about how great our country is, how successful our country is, and how bad communism is, and how bad these lunatics are that are running for election that don't sound good, don't think good, and don't look good. I don't see any looker. I don't see anybody with the look. You need the look, I guess. You need something, but they don't have it. And I think they'll fade fast. And it's not social democrats. This is not a social these are communists that are running. And they don't want God. They don't want successful things to happen for our country. They don't want to have a successful country. I think they're sort of crazy. As European nations rebuild their militaries, American equipment will be the largest beneficiary. The defense companies are going to be making most of that equipment. They want the American equipment because it works better. It's not a question of anything else. We make the best equipment in the world. And to that end, I provided other leaders with an update on the steps we're taking to rapidly scale up production in the United States. And they wanted to hear that because they don't really want to get it in 4 years, 5 years. They want to get it like in a week. And we'll actually be at a point like that in the not too distant future with the plants that are being built. The defense plants, it's incredible. Lockheed is building, I think, 5. Some of them are building 3, 4, or 5, and they're big ones. It's going to quadruple the output of we have with the munitions and the basic equipment itself, whether it's a Patriot or Tomahawk missile or any of the missiles that we make many missiles, different types, for different occasions. And just today at the summit, we announced $3 billion of new defense investments with U.S. companies. And Lockheed Martin will establish a world-class Patriot missile sustainment facility, a big deal in Europe. They're given a tremendous incentive by Europe to do that. All goes to the benefit of us and Europe because they're getting the best equipment. Northrop Grumman is moving forward with the sale of advanced American drone technology. We're actually the leader in drone tech. A lot of people don't know that. We have the most sophisticated drones in the world. And we're a real, I guess we're the leader, but we'll soon be the leader by many times over. And Lockheed and Rheinmetall are announcing a partnership to build the Army Tactical Missile Systems, which is a big deal. And Anduril is announcing a deal to build their new Barracuda missiles, which is a very highly sophisticated, fast missile, and we're doing that for Poland. Poland's doing very well, by the way, with a very, very good president, great president, I think. All of these agreements directly benefit the U.S. defense industry base, and what it really does is it means jobs. And again, I have to just say that when Toyota announced yesterday, I wasn't that surprised, but everybody wanted to get that. That's the largest, I think it's going to be the largest plant in the world, car plant, and they're moving into the United States. And again, they're doing that to avoid paying the tariff, because if you build your product here, you pay no tariff. If you don't, you pay a 25% tariff, depending, 35% sometimes 100%, 200%, depending on what the product is. As an example, we're doing great on steel because we charge tariffs. So now all of a sudden the steel industry, which was absolutely dead a few years ago, I revived it in my first term, pretty good. And then they blew it in the Biden term. What a shame. They just blew it right out the window. They had no idea what they were doing. And I quickly revived it at the beginning of this term, year and a half. And the steel business is through the roof. We don't even make aluminum anymore. Now we're going to have the largest aluminum plant in the world being built in Oklahoma. I love Oklahoma. 77 out of 77 counties, 3 times. And it's great. It's a great state. They're going to be building the largest aluminum plant in the entire world in Oklahoma. It's starting very soon. Over the course of the past 2 days, I had a number of excellent discussions with other leaders at the summit and held productive bilateral meetings with essentially all of them. We had dinner last night. Just about all of them were there. President Erdogan of Turkey, as well as President Zelensky, and he just came in, as you probably saw, at a little press conference, and also President al-Shara of Syria, who's doing an unbelievable job in unifying Syria. What a job he's doing. Syria was a mess with what happened with the previous government, you know that. Very dangerous place, and now it's just come together. He's done a fantastic job. People are talking about it. In every conversation, it was clear that America is back, and we're stronger and bigger and better than ever before. We have more jobs, as I said, than ever before. And we're respected again like maybe never before. We are so respected as a country. That's why I wish I told the Secretary General, Mark, I said, it's too bad the press could not see what's happening in this room. You saw the big round circle with all of the leaders of all of those countries. And I don't know, I think they should allow it. The theory is that they won't be speaking quite as freely, and it won't be quite as good, but who knows? It was amazing, actually. The unity in that room was incredible. Really a love. It was sort of pretty wild. There was a love in that room that was great. So this was a tremendously successful summit. And again, I want to thank President Erdogan, Turkey, and President, so many of the presidents, prime ministers. They were all here from NATO, the NATO countries. And in particular, we have to thank the Secretary General Mark Rutte for doing a fantastic job. He really put on a tremendous, his was just something, he's a unifier. He's a tremendous unifier. So I could take a few questions. We've done a few of these already today, so I don't think we should take too many. I don't think we should take, right? So we're going to keep it a little bit short, and I know a lot of you are going home. Some are going with me. So go ahead, please. Sir, yes. Yes. No. The gentleman right here. The very tall gentleman who's very insecure. He doesn't want to ask the question. He's a handsome guy, but he's very insecure. Go ahead. Do you want to shout it out? Give him a mic. How about giving him a mic? You shout it out.
Seems to be a strategic dead end for you. Why are you apparently unable to end the Iran war?
So I think we're doing just the opposite. The Iran war has been a tremendous military success. And, you know, I can only answer the question by saying they're not going to have a nuclear weapon. I think I was there for one reason, that Iran cannot have a nuclear weapon. I call it, we denuclearize Iran, and that's happened. They will never have a nuclear weapon. That stuff is so far down under a mountain. It's a granite mountain that collapsed on top of it. Take months to get it out. I think it's a tremendous success, Iran. And you see the oil prices are lower than they were when I started. And people like to say that, but look, they have no military left. Their Air Force is gone. As I said, their ships are gone. 159 ships are gone. They're at the bottom of the sea. Their radar is gone. Everything's gone. So when you say not a success, it's a tremendous success. The fake news likes to say how well they're doing. They're doing terribly. They have 350% inflation. When the war started, they had like 6%, 5%. They want to make a deal, but they don't know how to make a deal. And then they go around shooting ships at night. I don't like that. You know, they're dealing with very fine people. They're dealing with Steve Witkoff. They're dealing with Jared Kushner and J.D. Vance. And they're dealing with Marco and Scott. They're dealing with great people, but I don't know. I think they're a little loco. They're a little crazy. But they told us they'd like to go to the funeral of a very a person who was killed a lot of people. Khomeini killed a lot of people over the years, and there for a long time. Don't forget what we did. Should have been done 47 years ago. It could have been done any time within 40. This has gone on for, they were the bully of the Middle East. So they're a much different country. Now, in one day, all of their anti-aircraft things are gone. That doesn't mean they're not going to get a plane at some point. But all of it's gone. Everything's gone. Their leaders are gone. They had leaders, they're gone. And they had another set of leaders, they're gone. Now they have another set of leaders, they may be gone. Who knows? And you know what? I may be gone too, because I'm their number one target. It's out all over the place. I'm their number one because they're scum. That's the way they act, and that's the way they've done it for 47 years. But I'm doing what's right for the country. I'm doing really what's right for the world. They have to be stopped. And they've killed thousands, hundreds of thousands of people. They killed 52,000 protesters over the last 3 months. So when you say we're not doing well, I think we're doing phenomenally well. Our military has been incredible. Plus, we had a blockade. Did we have a blockade? Did you ever see a blockade work that way? You know, for you that said we're not doing well there. We did great in Venezuela. That was a one-day war, and they're very good military. You know, it's a very military country. We took out one of the worst human beings in the world, Maduro, and he's in jail waiting for trial. But what he did to this country was incredible, including the fact not only the drugs, but he had people pour into the country from prisons. They opened up their prisons. They allowed them to come in. We're getting them out. We're getting them all out. But we have, with the Biden open border policy, with Kamala as your border czar. Remember, she was a border czar, but she never called Border Patrol, never once, and she never went to the border. The border was a disaster. Now it's fixed. It's fixed where we have nobody, and I don't do these numbers. 0 people come in through our border, through our southern border. 0. And that's been announced now every month for the last 12 months, 0. We had millions of people come in, under 25 million people, I think more than that under Biden. And they weren't people that you want, and for the most part. They were drug dealers. They were escaped from, think of it, all the prisons, and I'm not just talking about from South America, I'm talking about from the Congo, I'm talking about from all over the world. The prisons were emptied out. They were emptied out into our country. But they had the worst murderers. We had people allowed in our country that should never, and they walked in through an open border policy. And all I'm saying is that you're lucky we won this election. Yeah, please. Go ahead. Go ahead. No, yes, go ahead. Who you with? Why don't you say your name and who you're with? It's always helpful.
Thank you, Mr. President, for doing this. Iris Tao with NTD, with a sister media with the Epoch Times.
Okay.
On communism, you've been issuing a wake-up call to Americans at home about the dangers of communism. And now you're speaking on the world stage. What's your message to people both living under communist and socialist regimes, but also people living under democracies like in Europe and America who might not have realized how close communism has come to home?
Yeah, that's a great question, actually. But look, I want to get the word out because what's forming is communism in the country. And communism's easy to sell. I would be the greatest communist in history. I'd be right up there with Lenin. I'd be as good as anybody. You've got free rent for the rest of your life. What they don't say is that you'll be living in squalor in 12 months. You've got a free house. Would anybody like to have a free house? We'll take it away from somebody. We'll give it to you. You'll have murders all over the place. Communism's a disaster. It's been proven to be for thousands of years under different names, but same thing. It's very important. And, you know, it's funny. One of the reasons I do so well with Hispanic people, I set a record, Republicans. I get great numbers for the election, helped me get elected in a landslide. The Hispanics, because a lot of them came from countries that were essentially communist. You know, whether you call them radical socialist or communist is not that much, but there's a little difference. When they say social democrats, we're social democrats, it sounds so nice. It's not nice, it's a very dangerous term. So I do talk about it, and I talk about it on TikTok, and I talk about it everywhere. I talk about it here. And you're right, it has become international, but it's never worked, and it's not going to work. What is working is the United States. So think of it, we have more jobs than we've ever had. People are making more money than they've ever made. I'm talking about workers now. I'm talking about workers. They're making higher salaries than they've ever made before. It's just the best system, and it's got flaws, but everything's going to have a little flaw, but it's been amazing. And when I watch what's happening, and I see these lowlifes getting, I mean, they're lowlifes. I watch them. I know good people. I know quality people. These are essentially lowlifes. And when I see what they're talking, I think they're very dangerous in many ways. And I've said it, and then I said, boy, that's a pretty big statement. Then I realized, you know, a couple of people said, I think you're probably right. I think this country, with this thing that's going around, is in more danger than it was during World War I, World War II. If you talk about September 11th, if you talk about Pearl Harbor, that was big danger. I think the concept of us going communist, because one thing that happens when you go communist, you never come back, never comes back. You die in squalor. You die a horrible death. You die in squalor, and it gets very evil and very nasty. Yeah, please go ahead.
Mr. President, Tyler Pager with the New York Times. Last month you said Iranian leaders were very rational people, nice people to deal with, strong people, smart people. Today you said they were scum, sick people, and being led by sick people. What changed, and do you think
I got to know them. So I've said that about a lot. Now, when you say rational, I think they're much more rational than level 1, level 2. Level 1 is gone, level 2 is gone. This is level 3. I think they are more rational, but based on their actions over the last week or two, they're not doing a service to the people. And I think more than anything else is I got to know him. And I'm not sure I want to make a deal with him. We can play games, but I'm not sure I want to make a deal. I just finished the job. Yeah, please, go ahead. Go ahead. Go ahead. Go ahead.
Thank you, Mr. President. Steve Sedgwick from CNBC. The oil markets are up today, around about 7% for WTI and Brent as well. The world is taking you at your word, sir, that the MOU is over, that the ceasefire is over. What happens next, sir? Are we on the cusp of a full-scale return to full conflict?
Well, I'll tell you what happens next. We're never going to see Iran have a nuclear weapon, because that's much more important than the numbers you're talking about. The prices of oil are dropping like a rock. Now they'll be up a little bit, and this will end very quickly. We have an oil glut right now because we got all those boats out of the Strait, and it's going to drop, and I've predicted everything. I've been right about everything, and I have been for a long time. That's how I got to be president 3 times. That's how I won 3 elections. I did very well in the second one, won it. It was a rigged election, but I've been right, and oil's coming down. Now, I have to make sure of one thing, that we don't have lunatics having control over nuclear weapons. So we have that now. There's no way they have a nuclear weapon. We have cameras, as an example, on the site that those beautiful B-2s at 1 o'clock in the morning 10 months ago blew up. They blew it up. We have cameras, that's called Space Force, if they're in space. But we have cameras that can read the badge of the person going over to a site. Mohammed something. We say it's Mohammed something is there with shovels. Well, shovels won't get you there. The biggest machinery in the world probably won't get you there, if you want to know the truth. It's way, way below. But we're watching that. And if anybody goes there, they get blown up. So nobody's going to touch that. Eventually, we'll take it. But what we do have is we have that. That's gone. If we wouldn't have had that, they would have had a nuclear weapon, and they would have wiped out Israel. If I weren't president, Israel wouldn't exist. And we did it 2 times. When the JCPOA, the Obama deal, when that was originally conceived, everything went to Iran. 1.7 billion in cash, hundreds of billions of dollars. They thought they could buy peace with these people. You can't do that. So the big thing we have is, more important than anything we can talk about, is you can't let lunatics have nuclear weapons. And we've stopped that. And that should have been stopped on a couple of other occasions, too, with different countries, but they didn't do that. Yeah, please.
Stephen Nelson from the New York Post. I'd like you to address speculation that you're leaving Ankara not in the new Air Force One because of security concerns involving Iran. You've spoken today twice about them possibly assassinating you and possibly being successful. Did that concern have something to do with
Well, I speak about it a lot because, you know, the life of a president is very dangerous. It's 5.2%. You know what a race car driver is? 1/10 of 1%. A bull rider, that looks pretty dangerous to me. It's 1/10 of 1%. No, it's 5.2% is you don't make it. You should have told me, you're an excellent reporter. You should have told me that years ago. Maybe I wouldn't have run. It's a very dangerous profession. No, I'm #1 on the kill list for Iran. They're lovely people. I'm #1. So I don't know. I can't tell you that, but I don't really care because I'm doing my job and I'm doing it, I hope, better than anybody's ever done it, because we have a country that's hot and really, really successful. But I mention it only because it's on the list. I mean, it came out. There was another list came out yesterday, and I'm #1 on. I like being #1 on TikTok better, but I'm #1 on the list for killing. Go ahead.
Hey, Sean McCreesh, New York Times. But why aren't you flying the new plane home?
Say what?
Why aren't you flying on the new Air Force One home?
It's flying to Europe, to one of the big bases, 2 or 3 of the big bases, where we can show it to the people. And we'll be going home by normal methods. But we have it going to Europe, to a couple of bases, actually 1 in particular, but it's going to go to a couple of bases, stop, so the soldiers can see it, because it's truly magnificent. Yeah, please. Go ahead. You want to go? Okay, go ahead.
Mr. President, harici media Tunç Akkoç, Türkiye.
Mr. President, it seems that the war with Iran may start again. What do you expect from your European allies?
I don't think it's going to start again. I think it's going to go very quickly. They hit a couple of ships, and so we hit them much harder. When they hit, we hit 10 times harder. You know, we hit much harder than they do. We have a lot better equipment than they do. We may even, somebody asked before, do you think you'll hit them tonight? I said, we might, yeah, we might. But when they hit, we hit, you know. It's what we use their language, we speak their language. No, I don't think so. I think anything that happens is going to be over very quickly. And we'll only make it safer, including for oil. Oil is going to be very free, very easy, and it's going to happen very fast. We have the Hormuz Strait, the boats have pulled out. I mean, there's a gusher of oil right now. We have a lot of oil. And no, anything that happens is going to happen very fast. We're not looking for long term. Okay, go ahead, Red.
Now, you said today that countries...
You're with who?
MS Now.
MS Now, that's a failing network. Why would you want to work for them? MS Now, can you imagine? They wanted to get away. They took the name NBC because they were embarrassed by it. Go ahead, let's go. When do you hear this question?
You said today that countries like Spain, Italy, and the UK were not there for the U.S. and its war with Iran. Should those countries be attacked, will the U.S. be there for them?
Well, I'll tell you what. Number one, Spain has been very bad, but, you know, Italy's been good, and almost all of the countries have been good. They just had a bad moment. They didn't help us. We didn't need the help, but if we would have wanted the help, I said, by the way, if I want help, Sir would rather remain on the sidelines, and I didn't like that answer. UK gave an answer that was sort of weirder than that. They went out. I said, would you like to help? They said, we do, but we want to wait till the war is over. This was not in the spirit of Winston Churchill. So, yeah, I mean, I'll tell you what, I can only say if there's one word that comes out of today, it's unification. I've never seen anything like it. Every one of those countries, they love us, they love each other. That was tremendous unification. It was a nice thing to say, and it was a very fair question, too. Yeah. Green? Yeah, you're wearing green, right?
Thank you, Mr. President. Eda Turul from Haber Global TV, Turkey. Mr. President, after your meeting with President Erdogan, can you tell us whether you and President Erdogan reach an understanding on Turkey's return to the F-35 program and the future of U.S.-Turkey defense cooperation? And do you believe U.S.-Turkey relations are entering a new chapter right now?
Well, I had a great relationship in my first term. You remember Pastor Brunson, and he was put in jail for 35 years, and I called. He was an evangelical hero, actually, very good man. And I called President Erdogan, and he let him out. I didn't pay anything like Obama and Biden pay billions of dollars all the time. I never paid any for anybody. I just tell him, let him out. Let him out. But in this case, I didn't say it the second way. I said it the first way. I said, look, he's a good man. He's highly respected in the evangelical, and I'd like you to let him out. And he was in my office, in the Oval Office the following day, Pastor Brunson. I had a great relationship. When Sleepy Joe Biden got in, bad things happened with a lot of things between the border. Everything was bad. We were laughed at all over the world, and we had a very bad relationship with a lot of countries. I think Turkey was one of those countries. But that changed on November 5th when we had the election. And it's one of our best relationships. We have a great relationship. And they're talking about the F-35 airplane, and it's the best plane, and everybody wants it. And we have to make a decision who we give it to. I mean, my inclination, because he stayed out of, he's not a huge fan of Bibi, and he's not a huge fan of Israel, but he stayed out of that war. He could have gone into that war very easily, and he didn't. At my request, he stayed out of that war. He's been a very good ally. I mean, Marco could tell you we have a very strong relationship with Turkey. You know, it's a very big country. It's a very powerful militarily. It's the second most powerful country in NATO. It's a NATO country. So whether or not we do that, I haven't totally made up my mind. But my inclination is to say, look, he's done everything. He's helped us in so many different ways. And you know who else has been good to us? China. China never came into the war. They get 50% of their oil from Hormuz Strait. They never came into the war. They never said, I'm going to send a ship in 5 destroyers along each side of the ship. They never did. No, President Xi's been great. Everyone's been sort of great, to be honest. You know why? Because they respect our country again. They laughed at our country. They thought we were a bunch of fools. They saw a president that couldn't talk, he couldn't walk. It was a disaster. They lost respect for our country, but now they have more respect for our country than they've ever had before. Thank you all very much. We'll see you back. Thank you very much, everybody.
There you have it, President Trump wrapping things up about 45 minutes after he began his news conference in Ankara, flanked on the stage by some of his top lieutenants, including the Secretary of State, Marco Rubio, Defense Secretary Pete Hegseth, the Treasury Secretary, Scott Bessent, Stephen Miller, his political advisor, was also on the stage as the president talked about the war with Iran, if we can call it a war. It's very unclear where we stand right now, as the president earlier today said the ceasefire was over, following the exchange of fire and U.S. attacks last evening that followed Iranian attacks on several ships in the Strait. They want to make a deal. This is a quote, but they don't know how to make a deal, he said. They're dealing with very fine people, Witkoff, Jared, J.D. Vance, Marco, and Scott. And he said, quote, they're a little loco, they're a little crazy, unquote. He also referred several times and in several different instances in this news conference with reporters from both countries, multiple countries, I should say, that he is the target of assassination attempts by Iran. He said, quote, I may be gone too because I am their #1 target. When referring to the prior leadership that had been dispatched, he said the people we're talking to might be gone. And then he said, I may be gone as well. Later saying, I'm #1 on the kill list for Iran, adding, I like being #1 on TikTok better. The president was asked repeatedly about what is coming next, what the next steps are in Iran. In most cases, he would only say that the country will never be allowed to have a nuclear weapon, and referred to oil prices, saying that they're going to try to keep them coming lower, even though they are sharply higher today. Crude oil futures in New York at last check up about 8%. Right now, WTI is up 6% above $74 a barrel. Brent crude is just shy of $80 a barrel, up 7%, both coming off their highs of the session. And we're going to get into a little bit more about what the president said when we talked to Oliver Crook, who's there traveling in Ankara with the president on behalf of Bloomberg News. But let's put a finer point on these markets right now. Charlie Pellet was watching and listening along with us, and the reaction on Wall Street since this morning's bell has been visceral. Charlie, where should we start here?
All right, now, got to begin with oil. You hit on it briefly there, but worth repeating, Joe. WTI up by 6.1%, as you correctly pointed out, off session highs. 74.78, though, where we stand on crude. We've got Brent back below 80 now, 79.12 a barrel. Does remain higher by 6.7%. So bottom line here, oil higher, stocks are lower. The SOX is gaining, up now by 1.5%. The VIX just above 17. In terms of equity markets, S&P 500 index down 37, well off session lows, down 0.5%. Dow Industrials down 637, lower now by 1.2%. Nasdaq Composite Index down 0.2%. The VIX again holding just above 17. The SOX pairs repeating, up by 1.6%. Your 10-year 4.58%. Spot gold is down 1.2%. 4,057 the ounce, while West Texas Intermediate crude up 6%, 74.71 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we do appreciate it. Thank you. Charlie Pellet will have more on the markets not too long from now, about 12 minutes away at the top of the hour, as always, 1 p.m. Eastern time. We are off our lows, but it's hard to call this a decent trade today, with a lot of concerns about rising energy prices and the way forward in Iran. Unclear after 45 minutes of hearing from the president exactly what the way forward is right now. He says they want to make a deal. They don't know how to make a deal. He also called them scum earlier today, suggesting that he would allow talks to continue, but had no expectations that they would resolve in anything better than what we have right now. Bloomberg has a big footprint on the ground right now in Ankara, and we want to spend some time with Oliver Crook, Bloomberg's Europe correspondent, who was listening and watching along with us Oliver, it's great to see you as we prepare for the sun to set in Turkey this evening. What rose to the surface for you here? The president didn't seem to have much of a vision for the way forward in Iran beyond it never having a nuclear weapon.
Yeah, exactly, Joe. I mean, the sun sets over what has felt like a marathon over the last 24 hours in terms of the news flow from the President of the United States. There's so many topics really dense in news, whether it's be talking about NATO, hitting those commitments, huge amount of news flow out of Ukraine. But of course, the thing that rose, I think, to the top for everybody, for markets, for politicians, for the leaders in the room, were his comments on Iran, the sort of unprompted comments in that sort of conversation beside Mark Rutte, who has really gone to great lengths to try to sort of orchestrate a very sort of coherent NATO meeting here, laying things out very easily for the President of the United States, laying the groundwork for weeks before the meeting. But of course, the question came during that early press conference in the day here when he was asked whether he thought the ceasefire with Iran still stood, and he said that it was effectively dead in his eyes, that there was no point in continuing the conversation with Iran. That obviously sent the oil market into a bit of a frenzy. But as you say, Joe, after this press conference, the one that really closes the day here, I don't really know where we are, whether or not it sounds like the President of the United States sort of dialed that back a little bit. He was asked about oil prices, about whether we would sort of launch back into sort of full war mode. He said he didn't think so. And again, it's very hard to sort of establish where we are. But again, I think for the participants here in NATO, for Mark Rutte, there is a massive sigh of relief. The sort of comments on NATO itself, on the alliance from the President of the United States, were very different at the end of this meeting than they were before. Before, it was all about criticism. It was about Greenland. It was about NATO not showing up in Iran. At the end, he said that the word that sort of ends the day, that really defines the day, is unification.
Oliver, great. We want to add the voice of Bloomberg White House correspondent Jeff Mason, who's with me here in Washington. Jeff, the president said, "I've predicted everything. I've been right about everything, and I have been for a long time. That's how I got to be president 3 times." Still going back to 2020. But still, if that's the case, would he have predicted this MOU falling apart? He said it's over.
Well, he's in a position to predict when he's the person who gets to decide.
I guess so.
And that's what he's doing. And yes, let's fact check 2020. He did not win the election, so that is false. As far as Iran is concerned, he's giving multiple mixed signals, which is also, I might add, sort of how he's done
That's a strategy
the entire time.
Yeah.
Yeah. But it is very difficult to read, and you can see that in a little bit in the reaction from the markets. First, he says the ceasefire is over, the deal is over. He said in this very press conference, I don't think I want a deal.
Right.
And then later in the same press conference, he said, when he was asked whether the Iran war was going to go basically back into full swing, he said, anything that happens will be quick. So what does that mean? I would also add, what does it mean for him politically? If he does get back into a longer battle, then that takes away that 60-day deadline, which was a key part of the MOU, which was going to end right as the fall campaign season was kicking off. So now all of that is up in the air as well.
Strange post from the president, and some reporters were keen to ask about why he did not travel with the brand new Air Force One, gifted by Qatar, which spent a lot of time in a hangar with the Secret Service and other protective forces going over this thing to make sure it was clean and safe for the president to use. He posted, I guess this was late last evening, or no, it was earlier this morning, as a matter of fact, 8:42 a.m., to honor our brave men and women of the military. We're sending the brand new, truly spectacular Air Force One to the United Kingdom to give them a chance to tour the aircraft. Everyone is so excited, we thought they should be the first. He goes on, Jeff, to say, for old time's sake, we'll be taking the former Air Force One from Turkey to Mildenhall, a short trip totally worth doing in order to give our great military heroes a chance to appreciate our beautiful new addition to the Air Force fleet. He was asked about this because he said repeatedly that he's the #1 kill target in Iran. Is there a concern that this plane was not actually clean and prepared to travel to the Middle East?
I don't know. I mean, I think that's a spot-on question, though. I mean, he said multiple. It was very jarring to hear him talking about
repeatedly
not being sure if he would make it. Not only because it's jarring to hear a president talk about himself perhaps being killed, especially one who has faced, as we know, multiple assassination attempts, but also because of the implications of that.
Yeah.
If any foreign actor, any actor for that matter, were to be successful in assassinating this president, that's massive, and that has massive implications for everything. for foreign policy, domestic policy, markets, safety, security.
Right.
So to just kind of muse about it openly, really, really unusual, and raises a question about the plane.
He seems to like this idea of walking away from the table. Whether Iran responds to that or takes him at his word, I guess we'll find out together. Jeff, I appreciate your coming in, as always. My good friend Jeff Mason, White House correspondent here at Bloomberg, with us in Washington. Oliver, thank you. I hope that you travel safe from Ankara. I'm Joe Matthew in the nation's capital. Kaylee Lyons is on the way in for hour 2 of Balance of Power. It's the Wednesday edition. Stocks are under pressure. Oil is on the rise, and it's all because of foreign policy, geopolitics, and what's coming out of Washington and the NATO summit in Turkey. We'll have much more ahead right here, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Stocks down and oil up as the ceasefire hits a wall. Welcome to the Wednesday edition of Balance of Power, as President Trump promises at the NATO summit in Turkey that Iran will never get its hands on a nuclear weapon. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us here on the Wednesday edition. Kaylee, it's tough to tell where we're going here. The president saying earlier that the ceasefire is over and the markets are responding.
Well, he said the ceasefire is over, and yet when asked by reporters at a press conference in Ankara just moments ago, he suggested he doesn't think the war will start again, even as he said the U.S. could very well strike Iran again tonight after we saw Central Command conducting a wide sweeping of strikes yesterday in response to Iran hitting 3 ships in the Strait of Hormuz. So if the war isn't restarting but the ceasefire is over, where does that leave us? Is it still the pursuit of a negotiated outcome? The president says he's not even sure he wants to make a deal.
Well, that's right. He says Iran wants to make a deal, but it doesn't know how, and he will allow negotiations to continue, referring to Jared Kushner and Steve Witkoff. But you're right, Kaylee, the president also floating the idea of another blockade only against Iran. We'd let other nations through the strait, and markets have been snapping on that. We saw stocks tumble at the open here. Crude oil's been up as much as 8% in New York. We're pulling off of our lows for stocks and off our highs when it comes to oil, but this has been a troubled session with no real certainty as to where we're going on his way home now on the old Air Force One.
Yeah, not the new jet that, of course, was a gift from Qatar that he rode over to Turkey. That apparently is going to Europe to be shown to people. He said it's not entirely clear what exactly is going on. He said they'd be going home the normal way.
He made many references to the fact that he is the #1 kill target for Iran in that news conference, that we know Iran has had assassination squads in this country aiming for President Trump. There are questions about whether that airplane was in fact secure enough for him to fly home at this moment, and we'll talk more about that coming up over the course of this hour. We do want to get with Aaron David Miller coming up, of course, on the latest with Iran. Kaylee, it's just unclear what comes next.
No, it's not, and the market is trying to parse through that as well. As Joe mentioned, stocks down, oil up, but let's get the finer details now as we turn to Charlie Pellet for a comprehensive look from New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Indeed, a day when you certainly want to keep it locked into Bloomberg for all of the latest developments. We got you covered. Right now, stocks lower, as you correctly pointed out. Oil is moving higher. We have got the VIX back below 17 right now. The SOX up by 1.9%. Right to the equity numbers. A flare-up in geopolitical risks driving stocks and bonds lower. Right now, we got the S&P down 34, 74.69 where we stand, down by about 0.5%. Dow Industrials well off session lows, down 634 right now, drop there of 1.2%. The Nasdaq Composite Index down 48 for Nasdaq, a drop there of 0.2%. The Bloomberg Mag 7 Index down 0.9%. And again, the SOX bears repeating, up by 1.9%. The VIX below 17. The 10-year at 4.57%, with a 2-year 4.21%. Gold down $45 the ounce to $4,060. Spot gold down 1.1%. Crude, major story today. Right now, WTI $74.45 a barrel. West Texas Intermediate crude up 5.7%. Brent had been above 80. Right now, pulling back to 78.79. A barrel of Brent crude up by 6.3%. Oil jumping after President Trump said a tentative ceasefire with Iran is over, and that is raising the prospect of a fresh round of conflict in one of the world's most important energy-producing regions. Oil stocks, certainly a mixed picture right now. ExxonMobil down 0.8%. Chevron up by 1.2%. ConocoPhillips shares higher by 1.1%. Again, recapping, S&P 500 index down 34, drop there of just about 0.5%. And again, the SOX higher by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew and Kaylee Lyons is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much indeed. As Charlie mentioned, we are now basically at $75 a barrel on WTI. Brent is nearing $80 a barrel, up 6.5% on the day, just shy of 79 as we speak on, of course, renewed hostilities in the Middle East and around the Strait of Hormuz specifically. Of course, we saw yesterday Iran striking 3 commercial vessels in the Strait of Hormuz, and in response, U.S. Central Command conducted a number of strikes against Iranian targets. And President Trump, speaking in Ankara, Turkey today, suggested that more strikes could come again tonight. While he pushed back on the idea of the war completely restarting, he also said that he views the ceasefire and the memorandum of understanding as essentially being over at this point, and that he does not have a lot of confidence in the way negotiations could move forward from here. He says he wants to finish the job in Iran. Yes, it's just not clear that a deal is going to be what finishes it. This is what the president told the press earlier today.
based on their actions over the last week or two, they're not doing a service to the people. And I think more than anything else is I got to know them. And I'm not sure I want to make a deal with them. We can play games, but I'm not sure I want to make a deal. I just finished the job.
The president adding that Iran wants to make a deal, but, quote, they don't know how to make a deal, referring to the fact that he says they're working with very fine people, Witkoff, Jared, J.D. Vance, Marco, and Scott. Kayleigh, he said, quote, they're a little loco, they're a little crazy, which is nicer than what he said earlier in the day following his bilateral with the Secretary General of NATO. The ceasefire, when he said was done at that time, the MOU, he said was dead. And he referred to the leaders of Iran as liars, cheats, and sick people. Kayleigh, he said they are scum, which makes you wonder how exactly you pick up talks from here.
Well, yeah, he suggested he will allow the negotiators you just mentioned to continue the talks, but he's not expressing much confidence in them at this point. And it is also striking, Joe, that we are now having a conversation based almost entirely around Iran in the aftermath of the president's attendance of the NATO summit on a day that it very well could have been all about Ukraine. It was not just a bilateral meeting that the president had with the NATO Secretary General, also the Syrian president and also Ukrainian President Volodymyr Zelensky, as the U.S. said it will allow the licensing of Patriot missile systems to be made inside Ukraine, knowing Ukraine has a desperate need for those. And the U.S. says, effectively right now at least, there aren't enough to go around.
And where have we heard that before? If it was 24 hours ago on this program that we heard this from the Atlantic Council, if you were with us yesterday on Balance of Power, you saw this coming. A pretty remarkable turn there, that this technology will be licensed to Ukraine. And the president was asked about the potential for a reciprocal deal for us to license Ukrainian drone technology. He was more than open to that. So that actually could end up happening. After what Melinda Herring floated here on the program yesterday, we're actually seeing it come to fruition, which could be, by the way, the biggest news that came out of this summit.
Yeah, it very well could. We also are wondering if we're going to get similar news around weaponry when it comes to Turkey in particular. The president had some very warm words for Turkey under the leadership of President Erdogan, suggested that he may like to see a return for Turkey to the F-35 program. He was pressed about that in the press conference as well.
Well, let's bring in Anne-Marie Hordern. She's made her way to Bloomberg's cameras in Ankara, having been inside the room with President Trump for that news conference that we brought you live in our last hour here on Bloomberg. Our chief political correspondent on the case as the sun sets over Ankara. Anne-Marie, there are a lot of questions, as of course you're asking as well, coming from the markets, coming from investors, coming from Americans who thought there was a ceasefire in place. Is the president serious when he says it's over?
Well, I think a lot of people left that room a little bit confused because earlier this morning, the president was very emphatic and said the ceasefire is over. They can keep talking. He thinks it's a waste of time. Hot rhetoric about the regime, saying they're, quote, scum and a bunch of they're cuckoo. Now the president, when he was pressed by reporters, he had this line where he said he doesn't think it's going to start again. I think it's going to go very quickly. They hit a couple of ships, and so we hit that much harder. On the heels of also, before that press conference in one of the bilateral meetings, says he will, quote, probably strike Iran again tonight. So are we left with a very fragile ceasefire? Are we going back to full-fledged war? It feels like we're in this moment of just a continuation of a stalemate that has tit-for-tat skirmishes, whether it's issues at the negotiating table or actual issues in the Strait of Hormuz, which is why a lot of individuals in the room and also in the financial markets are perplexed about what is the path forward when it comes to the conflict of Iran.
Well, and having heard previously from the president, including at the G7, the suggestion that you need the conflict with Iran wrapped for the president to fully turn his attention to the conflict between Russia and Ukraine. We did get news on that today, Anne-Marie, with the licensing agreement that the U.S. is going to allow Ukraine to make their own Patriot missile systems effectively. That's been overshadowed by the recent news on Iran and his recent comments.
Yeah, it was certainly overshadowed because the U.S. had strike last night on Iran, as well as lifting those OFAC waivers when it comes to Iran's ability to ship oil on the open market. That was massive news in terms of the conflict in Ukraine, and a major win for President Volodymyr Zelensky, who coming into this conflict was talking about that he was having trouble really fending off the ballistic missiles from Russia. He needs more of the defense systems. He needs the Patriot missile systems. And there's been discussion for months now whether or not the U.S. would allow Ukraine just to produce these missiles in country. And the president looked over to President Zelensky at the top of that bilateral meeting and said, I think I'm going to give you that license. Now, we need a lot more details on this. How long is it going to take to train individuals to make this? How long from start to finish could we see Ukraine actually have a Patriot defense missile? But that is a major breakthrough and something a lot of NATO countries wanted to see. I spoke with the Finnish president yesterday, Alexander Stubb. I think in the American media, he's known as one of these close allies to President Trump. An individual has gone golfing with him, and he really wanted to see and said that would be a welcome development. He really wanted to see NATO deliver on that. So that was a win for Zelensky, but a lot of wins have been really, as you mentioned, Kaylee, hanging under the radar because the conflict in Iran has overshadowed the summit.
Indeed, it has. All right, Bloomberg's Anne-Marie Hordern reporting live from Ankara. Anne-Marie, thank you, and safe travels home. Of course, as we consider the president's own travels home, is not going to be aboard the new Air Force One that was gifted to him from Qatar. He's going back on the old one, as we've noted for our audience. But we want to get more insight now into what exactly is happening between the U.S. and Iran and whether there will be a resumption of the war, which President Trump is suggesting against, as we turn to Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace and a 24-year veteran of the State Department. Aaron, welcome back to Bloomberg TV and radio. Would you call this a resumption of war if the president is saying that the MOU is dead and the ceasefire is over?
You know, at some level, and I don't know if anyone should be surprised by this. A flawed military campaign has produced a flawed memorandum of understanding, which has produced a flawed process of implementation in which the Iranians believe, probably correctly, that they have come out of a 5-month on and off war with more assets and a greater resolve to continue. So there have only been three possible outcomes to this. One, a return to full-scale war. I don't see that happening. A second is a breakthrough in negotiations, which would take weeks, if not months, to come to fruition. And then the third issue, which I think you're watching play out, a kind of new normal, which will be episodic use of economic and kinetic power by both Iran and the United States against one another. The straits, of course, remain fraught and probably will not return to the condition they were in on February 27th, February 28th. And this could go on for quite some time. I'm reminded of what the Taliban said to the Americans in Afghanistan. You may have the clock, but we have the time. And I think the Iranians actually do believe that they're in a better position to protect their core requirements. And one critical core requirement is making sure that their new rules of transit apply to the Straits of Hormuz.
What's the impact of the rhetoric, Aaron? Presumably, Steve Witkoff and Jared Kushner will get back to a table with some, whether it's direct or indirect, at some point with Iran. The president called them scum, loco, crazy, sick people. Does that resonate?
Well, I mean, look, you're now in almost the 6th day, right, of the funeral, burial of the late Ali Khamenei. Mojtaba Khamenei, his son, has not been seen. He's supposed to attend the actual burial of his father tomorrow in Mashhad. The fact that may or may not occur because of the recent uptake in kinetic activity. I mean, this guy saw his mother and his wife and at least one of his children killed during those Israeli and U.S. strikes on February 28th. What do you suppose he thinks, if in fact he is a supreme leader with confidence and control, and that's unclear right now? What do you suppose he thinks of Donald Trump and the United States? I mean, I suspect this is only going to harden their views and increase their risk readiness rather than the risk aversion when it comes to confronting the United States.
Well, so let's talk about the nuclear program as well, because we've heard the argument frequently since this conflict began that it actually may just reinforce to Iran the idea that it needs to pursue a nuclear weapon. The president in this news conference has contended that effectively Iran isn't going to be able to have a nuclear weapon because it's so buried underground, the nuclear dust, that only the United States would be able to access it in the first place, and they would just blow up anyone that tried. Is that enough to guarantee that Iran will never have a nuclear weapon?
No, it's not. I mean, capacity and knowledge are the two ingredients, and the Iranians have both. There's no question, though, that from a tactical point of view, Israeli and U.S. strikes has fundamentally degraded Iran's nuclear infrastructure and put more time on the clock. They talk about breakout time. On the eve of this war, the breakout time, that is to say, the time required for the Iranians to actually have all of the elements required to make a weapon, the fissile material, the computer modeling, miniaturizing the warhead, the delivery system, was a matter of months. I think that breakout time has now increased. It's probably well into a year plus, maybe even longer. But again, I'm reminded of the Afghan notion. You have the clock, but we have the time. This regime has endured military campaigns by the world's most powerful military, the U.S., and the region's most powerful military, the Israeli Defense Forces. Not only has it survived, but it now has a new, arguably nuclear weapon, which is weaponizing the Straits of Hormuz. That, in my judgment, in the end, will be the ultimate indicator of who, quote, won or lost this war. And frankly, the Iranians will go to extreme lengths to ensure that new rules apply to the Straits. Preferential access, prescribed routes, navigation fees, environmental fees. It'll be a protection racket to force shippers and oil exporters to pay. And, you know, Panama Canal and Suez, those are man-made transit points. They reap anywhere from, what, $4 to $10 billion a year. You're not supposed to charge tolls in a natural waterway, according to international law. But the fact is, I saw one calculation, the Iranians, if you take 130 ships on a day-to-day basis, charged at $2 million a ship, 365 days a year, I mean, we could be talking multiple billions of dollars. And the Iranian Revolutionary Guard, Islamic Revolutionary Guard Corps Navy, which is controlling this, sees this as an ATM machine for their own narrow pursuits and use. I think this is the key problem that the administration confronts. And the president is in a box, and coming from the NATO meeting, he's in a box, it seems to me, all alone. Where are the Chinese pressing the Iranians? They import 80 to 90% of the oil from the Saudis and the Iranians. Where are they? How come they're not pressing? The Europeans, frankly, have disappeared, largely because the president has criticized them and preempted them. But Trump is in a box, and again, I'll say it, he's all by himself. I just don't see how this administration gets out of this without leaving the Straits with an enormous amount of control by the Islamic Republic of Iran. And that's going to be key to the international economy for many years to come until alternate infrastructure is developed, and of course to the global oil economy.
Always great to spend some time with you, Aaron. Aaron, David Miller has the time and the clock at the Carnegie Endowment for International Peace. Thanks for being with us, as always, on Bloomberg TV and radio. We'll play this to the panel coming up next on Bloomberg. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, on an important day for geopolitics and domestic politics. The president is heading for the old Air Force One to make his way home now. Alongside Kaylee Lyons, I'm Joe Matthew.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ very much in the red as oil surges. West Texas Intermediate crude now up 5.2%, just above $74 a barrel. Barrel of Brent, $78.65, higher now by 6%. Earlier today, we did see Brent trading back above $80 a barrel. The S&P down 24, drop there of 0.3%. Stocks are falling as those U.S.-Iran jitters spur the rally in oil. Dow Industrials down 568. That is a drop of 1.1%. The NASDAQ Composite Index just about flat on the day. It is lower by 9 points, but down under 0.1%. Indeed, the NASDAQ 100 Index just turning higher. That index up now by 1 point. The Bloomberg Mag 7 Index down 0.7%. The SOX, that is the Philadelphia Stock Exchange Semiconductor Index, it is up by 2.1%. All of this with a VIX below 17, a 10-year at 4.57%, and the 2-year 4.21%. Gold down 0.9%, 4,070 the ounce. And again, West Texas Intermediate crude just above $74 a barrel, up now by 5.2%. China plans to allow some of its biggest AI companies to buy, quote, a small number of NVIDIA's H200 chips. That's according to the information, citing two people familiar with the matter. NVIDIA shares, they are gaining now. NVIDIA up by 2.6%. All of this with NVIDIA losing roughly $1 trillion in market value in less than 2 months. Recapping, S&P 500 index lower by 0.3%. Spot gold down 0.9%, and West Texas Intermediate crude $74.11 a barrel, up now by 5.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets for us. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington on Bloomberg TV and radio and on YouTube. And if you're with us on YouTube or on Bloomberg TV, we're showing you a live look now of the presidential motorcade just rolling up to Air Force One at the airport in Ankara after the conclusion of the NATO summit hosted, of course, this year by Turkey. But the plane that the president just rolled up to in the Beast is not the new Air Force One gifted to this president by Qatar, of course, painted in his preferred colors of navy blue instead of robin's egg blue. He's on the old plane for his journey home. The new one instead is going to go to Europe and apparently be showed to American troops on our European bases. Joe, he was asked about this in the press conference he gave at the conclusion of the summit, and he went to a place of security concerns and previous attempts on his life that Iran has sponsored. He suggested, I'm number one, and this is a quote, on the kill list for Iran, going on to say they're lovely people as he climbs now the stairs of Air Force One.
He said, I like being number one on TikTok better, Kaylee, and we should be careful to connect the dots on this. The president didn't speak directly to that decision to take the old Air Force One home outside of what he had already written on Truth Social. To your point, he said that it would be headed to Mildenhall Air Force Base in the UK to give our troops a tour of the aircraft. But he was repeatedly referring to the fact that he is number one on Iran's kill list. We do know that assassination squads from Iran have been in this country seeking to target the president of the United States, and it's clearly something that he is aware of, repeatedly referring to the dangers that come with this job. We have a lot to talk about with our political panel. As the president wraps this NATO summit, we turn to Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a Republican strategist and partner at Stone Court Capital. We want to get to the geopolitics involved here, guys. The president saying earlier that the ceasefire is over. But Rick, if I could just ask you about this so we don't have to come back around to it. Are you concerned to see the new Air Force One gifted by Qatar stay behind? There are worries that this may not have been clean and may not be a secure jet to carry the president home from the Middle East.
Yeah, look, I'm highly confident that, the traditional Air Force One has been hardened in a way that the new jet would not have had the time or the ability to get done. When these things are custom made for the President of the United States, at the beginning of the construction process, they can do things to really fortify the plane, which they should. When you receive a gift like that from Qatar, they're not going to strip it down and refortify it in a way that is going to reflect the kind of safety and security that the traditional Air Force One gets. So flying around the United States, you're reducing your threat level a lot. Flying overseas, I'm sure the Secret Service has said, let's stick with what we know and the defensive measures that are on board. So I think as an ounce of prevention is probably what was called for.
I see.
Well, it's incredible to consider. As I mentioned, Jeannie, at the end of an answer when questioned about the plane, the president did trail back to the threat against his life and Iran's previous desire to assassinate him. He said that he's their #1 kill target, ending his sentence with "their lovely people," after earlier suggesting that they were cuckoo,
Loco.
scum,
Yeah.
loco. To name a few, suggesting repeatedly in the last 24 hours that he doesn't necessarily think they are people that can be negotiated with. His rhetoric, Jeannie, would indicate that he is giving up on the diplomatic process. He says he's not even sure if he wants to make a deal, even as he says he doesn't think the war is going to resume outright. He still declared the Memorandum of Understanding dead. So where does that leave us?
Yeah, I have to say, I seldom say I agree with Donald Trump, but I agree with him on the MOU being dead. I also agree with what he said 3 weeks ago, when a prolonged war in the Middle East with Iran, the U.S., Israel, and extending to the Gulf states would result in an economic catastrophe for the world. And, you know, I don't think the United States is going to re-engage militarily. But there's a reason we're not going to. It's because we tried a shooting war with Iran. We lost. We tried a blockade with Iran. We lost. We ended up settling for this MOU, which flawed is an understatement of this MOU. And we're currently trying to work our way out of it. And it is dead at this point. And what's also happening, Kaylee, is you've got one of the parties to these negotiations attacking several times the mediators. In what universe can you continue a negotiation when Iran is attacking Qatar repeatedly? They haven't attacked Pakistan yet, probably because they were in air war with them a few years ago. So that suggests that Iran wants to extend this war to the Gulf states. And that is an economic catastrophe for the world. And it suggests that we are not going to see anything but a continuation of this back and forth economic, political, diplomatic, and potential military back and forth between all of these countries for the long term now, which is exactly what we should have been trying to avoid all along, which is why in February and now, none of this, what the United States and Israel did, made any sense unless we were prepared to finish the job, which means troops on the ground, and we never were.
Mm-hmm. So Jeannie brings us back to what Aaron David Miller just said, which is the new normal. And Rick Davis, you could argue, realizing that we hit Iran pretty hard last night, that if you back off here, nothing actually has changed. We've had continuous tit-for-tat strikes with Iran attacking boats, and we shoot back, all under the guise of this sort of shooting ceasefire. And nothing really in this world, other than the president's rhetoric, has changed with regard to the status of the MOU. Is that how you're looking at this?
Yes, it's very confused at this point. I applaud Donald Trump for saying that the MOU isn't enforced, because when we define success as getting a deal from Iran, it hands Iran all the leverage. I think that the president ought to rip up the MOU for good. It didn't do anything for us and did a lot for Iran. If Iran attacks ships in the Gulf, they should be responded to. There should be a guarantee by the United States to escort ships through the Strait of Hormuz to get oil out, minimizing the economic impact that Jeannie was just talking about. And if Iran resists, they should be met with serious force. Iran is the largest sponsor of state terrorism in the world, and we cannot treat them as a co-equal in a negotiation to basically get them to stop terrorizing the Gulf. And I just think that this could be a step in the right direction. I would hope that the president would rescind his invitation to his negotiators to spend time continuing to talk about an incredibly flawed agreement. Start fresh, secure the Gulf, get trade going back through there, And if they resist and try to interrupt the free flow of goods going through the Gulf, international waters, they should be handled accordingly.
Well, of course, it was the reopening of the Strait of Hormuz that the president really was seeking, and that the MOU was supposed to accomplish. And the idea that the strait may not be free and clear for the time being is what has sent oil prices higher today. But there's also the consideration of Russia as we contend with what's happening, not just in crude, but in refined products as well, like diesel. As Russia announced today that it's banning diesel exports after a number of its refineries have been hit by Ukraine. This is actually something we were discussing yesterday prior to that announcement from Russia with oil strategist Tom Kloza. This is what he told us.
The big story that's not getting covered that much are the drone strikes in Russia. You know, Russia has probably lost somewhere over 1 million barrels a day of capacity. Every week you see more large refineries in Russia set fire, and they're not going to be back anytime in 2026. It looks like Russia is going to see lower and lower refinery runs because Ukrainian drones are going to strike them. If the president really wants to impact the oil market right now, he would, basically go 24/7 and try to get a peace deal for Ukraine and Russia.
And Jeannie, President Trump did have a bilateral meeting today with the Ukrainian President Volodymyr Zelensky and said that the U.S. would be licensing Patriot missile systems for Ukraine to produce in country. Is this a sign that the president is ready to get a peace deal for Ukraine, more materially ready and more on Ukraine's side perhaps than he was?
I think it's hard to say because, of course, this has been a real sort of engagement, in my view, on the part of the president, and then a sort of lack of engagement, chastising Zelensky back and forth. So, I think this is part of the problem. Trump's way of dealing with these international issues has been to keep people on their toes, not know what to expect. But of course, that can work in some places. But in other places, it means you don't really know. Is Donald Trump going to follow through with what he says? Is he going to engage long term? And, as we step back and look at whether it's Iran, whether it's Russia, and the issue of the economic impact and the price of oil, this is where the president was right again 3 weeks ago when he talked about the catastrophe economically. This is. And it's not just the Iran, it's not just the Strait issue, it's Russia as well. And unless it is addressed in total, and that is not going to just be something United States can do independently. We need our allies. We need all of our European and NATO partners. And this is why I was happy to hear, a slightly nicer tone to NATO in this presser. But this has been a back and forth all year with the president, and it leaves us in a difficult position economically.
All right, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the both of them. Thank you so much for joining us. And as we consider Russia and that diesel export ban, yes, oil prices are moving higher today. I would point you to diesel futures, too. Right now, up about 10.5% on the session. We'll have more ahead here on Balance of Power on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks well off session lows. The Dow, the S&P, they do remain lower, but look at NASDAQ. Look at the NASDAQ 100 index. They are both in the green right now, reversing earlier losses. We begin with the NASDAQ Composite Index, up 10 right now, little changed, up under 0.1%. But the NASDAQ 100 index higher by 22 points, higher by about 0.1%. Keeping it all in context, we have got the S&P down 24 now, a drop there of 0.3%. The Dow is off by 1.1%. Meanwhile, the Bloomberg Mag 7 index down 0.6%. We do have the SOX, the Philadelphia Stock Exchange Semiconductor Index, advancing by 2.3%. This against the backdrop of the VIX, the so-called fear gauge, below 17. And right now, the 10-year, 4.57%. The big story, though, the move in oil. West Texas Intermediate crude, $73.88 a barrel. WTI up by 4.9%. Brent, $78.47 barrel of Brent, higher by 5.8%. As oil rallies, we're looking at airlines and cruise lines moving lower. This after President Trump said a tentative ceasefire with Iran is, quote, over. Among some of those cruise names, Carnival Corp down 3.8%, Royal Caribbean, little change, down under 0.1%, Norwegian down by 2.5%. So goes cruise lines as well. We've got airlines lower. UAL, United, parent of United, down 2.4%. American down 3.6%. Delta, which reports on Friday, shares of Delta down now by 2%. Recapping, West Texas Intermediate crude, $73.84 a barrel, up 4.8%. Brent back below $80 a barrel. The S&P down 27, a drop there of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kelly, that is a Bloomberg Business Flash.
All right, Charlie, we appreciate it. It's been a day for Charlie Pellet, and he'll be back coming up at the top of the hour, 2 p.m. Eastern Time, with more on the markets as we kick off Bloomberg Business Week Daily. I don't know if the dip buyers are getting at it, but as Charlie made clear, stocks are pulling off their lows. Oil's pulling back from the highs. And we want to go a little bit deeper under the hood right now with Nora Melinda, Bloomberg's markets correspondent, who is live at World Headquarters in New York. Nora, it's great to have you with us here. I'm not sure what's getting your attention, but we're seeing, obviously, slightly improved conditions from where we started the day.
Yeah, slightly improved. I was just looking at the S&P 500 earlier, just hitting a few minutes ago a session high. So we are seeing a pairing of some of those earlier declines that, of course, we saw sparked by President Donald Trump. But we are seeing in the market, materials the worst performing group in the S&P 500. The best performing group right now, though, in the S&P 500 is tech, interestingly. So we were seeing a bit of a risk off rally earlier in the session, but we are seeing some pockets of bright spots where we are potentially seeing some profit taking, maybe some dip buyers here in the market right now.
Well, especially after we saw really steep losses for a lot of the chip stocks yesterday. It's interesting to see that reversing today, Nora, but I guess that's just been the story as of late. Some days are good for the AI-oriented trade, and some days are not.
Well, Kaylee, it's been a bit of a push and pull. I honestly feel so dizzy just trying to keep up with chip makers and how investors are viewing tech right now. On the one hand, you have investors that are concerned that these companies have taken on way too much debt, and maybe we've seen a rally in tech go too fast, too far. But I mean, potentially on the other end, you have people saying that, you know, tech is the way to go and there are pockets of opportunity. But what I've been hearing from sources as well is that, you know, a richly valued market is more vulnerable to some of the negative headlines that we've been seeing. So you will expect some of these things after a strong rally as we think about the broader macro picture. Investors are all still thinking about inflation, especially with these renewed fears about energy, also supply disruptions potentially, and when we think about the Strait of Hormuz.
Interesting to see NVIDIA moving higher today. It's actually doing better than we've seen in several sessions here, up 3% as China greenlights some sales of H200 chips. Micron's getting a little bit of a bid. It was actually higher earlier and now down just a fraction of 1%. Interest rates are another story, Nora. They've been pretty sticky here and pretty stubborn when you look at the 10-year holding well above 4.5, 4.57, the 2 years at 4.21. Obviously, the long bond has been holding well over 5%. This is keeping a lid on things, huh?
Certainly, especially as we think about the bond market more broadly and how investors are thinking about it there. In the equity market, we have been seeing, of course, still double-digit gains if you look at the year-to-date scope for the NASDAQ. So as we continue to keep an eye on tech, we are still seeing strength there. So while we have been seeing these headlines that have been rattling markets here and there, you are still seeing investors pushing through and along. And what I've also been hearing from my sources is just the idea of maybe some short-term volatility, but not necessarily that reflecting on the broader landscape and outlook for the market more broadly.
All right, Bloomberg Markets correspondent Nora Melinda, thank you so much. As Nora said, markets being rattled by headlines here, specifically when they are coming from President Trump and when they are pertaining to Iran, as he declared the memorandum of understanding dead, the ceasefire over, and suggested that the U.S. could once again strike Iran tonight. So for more, we turn to the former chair of the House Financial Services Committee and former Speaker pro tem, now Bloomberg Politics contributor, Patrick McHenry. Mr. Chairman, always good to have you. As we consider this notion of resumed hostilities with Iran, even if the president suggests that we're not going back to war outright, I would imagine if you're a member of the House or someone up for re-election in the Senate and you're home right now, you're having to answer to this for your constituents, right? I would imagine that as we draw closer to the midterms, these kind of headlines only get harder for electeds to navigate.
Yes, it's uncertain for all of us watching the situation, but particularly jarring for those seeking re-election and trying to give your constituents a sense of certainty, especially about the cost of things in their life, particularly gas prices. It's very hard for an elected official to say that we're in much better shape than we otherwise should be, given the fact that the Strait of Hormuz is effectively closed. That's a very hard message, but America is in a dramatically better position than where we've been in previous generations with our oil supply and production and refining capacity here in the United States. That's a lame message to take if you're running for re-election, that things could be worse. That is never a good election year message, but that's what they have to contend with right now.
Mm-hmm. As somebody who's run for re-election a couple times, Mr. Chairman, you wonder what the mentality is going to feel like by Labor Day. And I don't know if you buy into that long-standing bit of wisdom that people start to solidify their opinions right around the beginning of September, and that's when these races start to harden, that the races start to codify themselves based on what we're seeing in the current standing in the polls. Right now, I guess everybody's on the beach, you know that, they're not paying quite as much attention. But when does $3.79 become a real problem for consumers who are starting to make decisions for November?
Well, it's currently a problem for families that are traveling this summer. This is prime travel season, prime motoring season in the United States. And
when do they connect the dots to elections?
But you're right. At Labor Day, it does solidify. Everything kind of crystallizes and feelings get locked in. And since Election Day is no longer really Election Day, once you hit the month of October, you have people voting or starting to vote across the country. That means that you basically have a month-long election day here in the United States. And so you really want to have your act together. And as an incumbent running for re-election, especially as a Republican going into a midterm, it's going to be tough. It's a very tough message. So that is when you want to have things have a smoother path forward when it comes to Iran and with energy prices. You want to see things starting to recede by then. Otherwise, it's going to lock in a very negative view for Republicans, a negative view for President Trump going into Election Day, which is really catastrophic for House Republicans especially, and some Senate races as well.
Well, I'd like to ask you about one Senate race in particular, the Senate race in Maine. We are still waiting to see what Graham Plattner's future will be if he does ultimately drop his campaign in his bid to unseat Susan Collins in the face of sexual assault allegations, which of course he denies. Mr. Chairman, if you're Susan Collins right now, is it heartening to know you may have a new opponent in a matter of weeks who isn't going to have as much time to build up support? Or did you want to run against Graham Plattner?
No, I think Senator Collins wanted to run against Graham Plattner, and the Democrats started to understand that with multiple serious allegations, and each one becoming more damning and less defensible for the Democratic Party. And as late as 3 days ago, you had Democratic operatives, especially from the socialist wing of the party, defending every bit of allegation against Graham Plattner. It's troubling for them to have to answer for that. But there's this larger divide within the Democratic Party we're going to see come to fore, which could be of benefit to Senator Collins and to Republicans generally, which is the divide within the Democratic Party between the socialist left that is ideologically fixed. They were hoping that a Graham Plattner, working class looking guy who was, went to elite boarding schools, but they've tried to write that out of his narratives. But the socialists wanted a white working class guy to make this look like instead of an elite intellectual activity from the socialists and not diverse, they were trying to show a level of diversity with this ideology that's never been evident. And so you're going to have that wing of the party versus those that really want to win with a more pragmatic view, though liberal. And those things are going to play out in coming days in Maine. And we're going to see that really open up not just what happened in New York primary elections from a few weeks ago, but to show in an additional state that you have this serious ideological divide within the party between moderates or liberals versus the very far left socialist wing of the party driven by Elizabeth Warren and Bernie Sanders.
Well, the Maine Democratic Party does not seem divided on the issue of getting Graham Plattner out of the race and keeping him out of whatever comes next. Pretty dramatic stuff, Mr. Chairman, from Devin Murphy Anderson, the executive director of the Maine Democratic Party, who was so upset about what she was hearing and overtures apparently from the Plattner campaign that she put up this video to send a very stern message. Let's watch and listen.
The Maine Democratic Party has been working around the clock to develop a process to replace our U.S. Senate nominee that is open, inclusive, transparent, and fair. The integrity of this process is just as important as the outcome, and we are committed to ensuring that Democrats across our state can have confidence in both. Unfortunately, Graham Plattner's team has repeatedly reached out to us in an attempt to put their thumb on the scale of what this process looks like.
Wow. So what do you see here, Patrick McHenry? Some sort of shotgun primary process? What could the party do in Maine to satisfy voters that they had a say in this and that Plattner's thumb was not on the scale?
Nothing. All it is show. This is what happened with Kamala Harris replacing Joe Biden after it became evident of his inability to see through a successful election against President Trump. So it's going to play out like that. Again, you're going to see theater about inclusivity and input, but the party apparatus and party rules dictate, and state law will dictate this replacement process, which is very closed circuit in the Democratic Party within Maine, just like most parties across the country. This is a closed door, effectively a closed door event, but they'll have some theater to show inclusivity. The word integrity, though, is very interesting to hear. The Democratic Party is trying to regain their sense of integrity, having done this elaborate dance to defend Graham Plattner in the hopes of gaining the Senate seat. Both parties, in fact, my friends and Republicans in Texas are doing something similar around a pretty bad Republican nominee in the Texas Senate race. So both parties are dealing with this, and these are things that parties have to deal with from time to time. And unfortunately, we're all going to be able to. Unfortunately for Democrats in Maine, they're the ones that have to go through this pretty nasty and arduous process to find a way to salvage an election in Maine.
We just got a headline crossing from the Washington Post that Plattner will be speaking about the future of his campaign tonight. So I guess we'll see if that is when a formal announcement will come. Of course, CNN had earlier reported there would be a video. I guess we will all stay tuned to find out. Mr. Chairman, thank you so much for your time. As always, the former chair of the House Financial Services Committee and now a Bloomberg Politics contributor, Patrick McHenry. And McHenry, of course, there was talking about Ken Paxton, or alluding to him, another candidate whose morality has been in question and yet is the nominee in the Senate race. But of course, there are other questions around where the lines are in politics in a modern age in which you also have a president of the United States who was found liable for sexual abuse.
That's correct. This is not going to get easier for Graham Plattner. And when he speaks tonight, of course, we'll be listening and let you know more. The Washington Post saying that the campaign team held a call this afternoon. Leadership sounded resigned to the idea that it could be ending soon. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everyone, a very good afternoon, and it is a Fed Wednesday. That's because in just a moment, we're going to get the latest Fed minutes from the fourth Fed decision of 2026. That was the first one that Kevin Warsh oversaw as Fed chair. That was on June 17th. So we are, of course, awaiting market reaction to that. I'm Carol Masser, along with Bailey Lipschultz. He is in for Tim, who is out this week. We'll see whether we get any more clarity on how the new Fed is under Kevin Warsh. For more, though, let's head to the Federal Reserve in Washington and to Tyler Kendall.
The minutes from Kevin Warsh's first meeting as Fed chair show that a few Federal Reserve officials said there was a case for raising rates, even as they decided to keep rates on hold in June, as we try to glean more insight into what caused this more hawkish shift on the committee. Keeping in mind that this was the meeting where we saw those projections basically show that there are these two equal camps that were emerging on the FOMC, as 9 members saw at least one rate hike this year, and 9 members saw no moves or a rate cut. And that was really reiterated in these minutes, reflecting the view among officials that some see higher interest rates needed, while others say that there is still a case to stay on hold. The minutes tell us that the discussion really centered around inflation risks and restoring price stability. Writing in part, quote, participants judged that the risks to the inflation outlook were tilted to the upside. They observed that both core and total inflation had moved higher, generally attributed to the increases to the lingering effects of tariffs, supply chain disruptions, and the related to the closure of the Strait of Hormuz. But then there was also this discussion around the CapEx build-out related to artificial intelligence. On that, the participants said, quote, many participants noted that ongoing strong demand for AI infrastructure would likely sustain upward pressure on prices for technology products and electricity, going on to add that some participants remarked that productivity gains associated with AI adoption would eventually reduce production costs and increase aggregate supply, which should put downward pressure on inflation, though they noted that effect would likely take time to materialize. On the labor market, participants generally saw labor remaining stable in the near term, adding that they assessed that the downside risks to achieving maximum employment had moderated a bit. Now, a huge question, of course, going into today was what would these minutes look like under a Fed chair, Kevin Warsh? And we have our answer, which is that they basically look more or less the same. All the same sections were there. We didn't really feel that they were shortened in any sense. We can say that it would take a majority of the voting members to approve the minutes. So maybe there wasn't a consensus there when it comes to what we know Kevin Warsh would like to see in terms of changes to the Fed's communication style, because Carol and Bailey, so you both know, Warsh has vowed to move the central bank away from forward guidance. That was included in this statement, with a majority of participants remarking that they saw advantages in shortening the statements after FOMC decision.
All right, great stuff as always. Great breakdown of those latest Fed minutes from our Tyler Kendall. She's outside the Federal Reserve in Washington, D.C. She is our Bloomberg News Washington correspondent. Just a quick check on the trade. Not seeing too much reaction, certainly, on the equity side of things. Maybe a little bit lower. S&P was down, Bailey, about 36 now, actually a little bit less now. It's down about 25. NASDAQ has actually turned positive. It was down about 66 points.
Yeah, it seems like a little bit of a bid right now. Just keeping an eye, looking at the 10-year right now,
Yes.
4.57%. And then also the dollar started to move higher, but now Bloomberg Dollar Index essentially unch on the day. So investors may be digesting that news, except for nothing quite new.
Yeah, it doesn't look like much movement in it overall. We're going to talk more about it in just a moment. We're going to check in with Stephanie Roth over at Wolf Research. She talks about kind of the family infighting at the last Fed meeting, so I'm looking forward to talking with her. In the meantime, we do have to get to something that we've kind of been focusing on, certainly here at Bloomberg, and we've got to start with the on-again, off-again, on-again war with Iran, or trying to make sense of what it all means. We did have President Trump warn a fragile ceasefire ceasefire with Iran may be over, so raising the prospect of an end to peace negotiations and a potential renewal of full-on fighting between the two countries. That's going on. We had strikes against Iran, a fresh round of strikes from the U.S. and revoking a waiver that allowed the sale of Iranian oil. That happened late yesterday. We saw oil prices shoot up on it yesterday, again today. And this morning at the NATO meeting in Ankara, Turkey, with Ukrainian President Zelensky in a gathering with reporters, President Trump weighed in on Iran specifically.
Based on their actions over the last week or two, they're not doing a service to the people. And I think more than anything else is I got to know them. And I'm not sure I want to make a deal with them. We can play games, but I'm not sure I want to make a deal. Let's just finish the job.
All right, that, of course, was President Trump. For those listening on radio, Secretary of State Marco Rubio behind him. That, in fact, he made some comments earlier this morning, but that was within the last hour or so as he gets ready to wrap up his trip there in Turkey. Here to read the tea leaves, we want to check in on this. Bloomberg Economics senior geoeconomics analyst Adam Fair. He's in the Bloomberg News Washington, D.C. bureau. Adam, good to have you here with Bailey and myself. What are we seeing between the United States? Does this kind of mean that there really never was a substantial peace deal between the two?
So there's no question we've seen a significant escalation in the past 24 hours. And I think, we shouldn't underemphasize the change and potential impact of the United States removing the waiver on Iranian oil, which was a key element of reaching that MOU that was signed several weeks ago between the U.S. and Iran, and theoretically put the Strait of Hormuz back on a more normal path. The strikes last night were certainly larger in scale, but they were still very much focused on the coast and going after Iranian fast boats that have been seen to be threatening ships in the Strait. And so, despite all of that, and despite the language you've heard from the president today, it seems that we've entered again kind of a familiar pattern of escalation and tit-for-tat fighting on both sides as they posture themselves in these negotiations, which certainly seem set to prolong further because of this current impasse.
Well, Adam, what can happen in the next 24 hours or even overnight? We saw how much has changed, again, from the U.S. and from Iran. And is it something where now the ball's back in Iran's court to do something to invoke further strikes from the U.S.?
So certainly Iran could choose to go after additional ships that are seen transiting through the secondary route closer to Oman that Iran does not support, that Iran feels is being used to try and avoid their control over the strait. But right now, logically, I think a lot of shippers are taking a beat and trying to see where things stand. So it's certainly possible. We haven't seen that yet. Now, the president himself said that we could see additional U.S. strikes tonight going after likely similar targets. But the question really is who's going to take the next step here, and right now we don't know. I think for many the issue is whether the U.S. and Iran will actually find a way back to the table at the end of this week.
Bottom line, I think the president made the distinction: we're not at war again, but he's not happy. Is that correct? And I wonder if it's just, it feels like we're at war if we're attacking one another.
So, certainly these tit-for-tat strikes are likely to continue. And here at Bloomberg Economics, we've long said that this was a likely scenario where Iran and the U.S. could not find a reasonable off-ramp, but neither are really interested in engaging in broad-scale fighting yet again, given the huge economic costs of doing so. And the president has said that now several times in the past several weeks about how serious those costs could have been to the U.S. and global economy. So with that in mind, and even the president's own words today, where he seemed to back off of this idea of returning to full-scale conflict, I think we're just likely to see more of the same in the coming days and weeks as the U.S. and Iran try and find a way to have the most leverage in these talks as they move forward.
In the meantime, you've got Brent crude going as high as $80 a barrel, right now up about 5.4%. WTI crude up about 4.6%, but it too was topping 76 a barrel earlier in the session. All right, Adam, thanks so much getting us up to speed. Adam Farrer, he's Bloomberg Economics senior geoeconomics analyst there in our DC News Bureau. All right, latest on the war continues to remain on the list of market risk factors, no doubt about it. Still an unknown, I think it's safe to say, as we see the back and forth continuing. So too is what maybe Kevin Warsh may do when it comes to monetary policy, although I feel like markets are getting more sure about what happens here in 2026, Bailey.
Yeah, it feels like everyone's on pause. Even when you look at rate expectations using the warp function, pricing in a hike in the coming months, but even when you talk to strategists or people who are trading FX, it seems like that's more protective positioning as opposed to really betting that higher is the next move and higher comes quickly.
All right, so let's get to it. We've got with us a guest who has called the family fight that took place 3 weeks ago. We're talking about the latest FOMC meeting. Delighted to have with us Stephanie Roth. She's chief economist at the independent sell-side research firm Wolf Research, joining us here in studio. Stephanie, it's great to have you here. The Fed minutes showing a few officials saw a case for a June rate hike. What's your read on this? What's significant, if anything, out of the minutes?
I mean, it's interesting that, you know, a few officials did want a rate hike in June. Probably no surprise, and we could perhaps, you know, guess which one of those officials they are. And, you know, otherwise it seems that they are, you know, concerned about the amount of inflation, but not overly so, and expect that inflation should be coming down, but perhaps sticky in the near term. The thing to flag is that they noted AI as notably inflationary, which is something that we're very much seeing in the data.
Yeah, no, that's what I wanted to ask, because as much as we want to talk about higher oil costs, higher gas prices, obviously the events of the last 24 hours changes that. But when we look at the bottleneck around chips and what we're seeing passed along to consumers, higher iPhone prices, higher Xbox prices, how does the cost associated with AI impact your expectations for the next 6 months, the next 12 months?
Yeah, so we estimate so far that AI is boosting core PC inflation by about 40 basis points, at least by the end of the year. Right now it's about 30 basis points. That should drift a little bit higher, especially as the Apple price increases feed into the data. Interestingly, though, BEA is making some revisions to their data at the end of September that will then cut that in roughly in half, which is not great optics, although the change makes sense. So it is certainly having an impact on the inflation data so far. Our expectation is it won't really have a material impact from here. It will kind of be this sticky price increase, similar to tariffs and the Iran war shock, which was certainly mentioned in the minutes as well. Those things should be one-time in nature. The problem is we just have had continuous shocks that have impacted inflation.
And things going on longer than we anticipated. Here we are once again talking about attacks between the U.S. and Iran. And it's interesting how the market seems to somewhat largely dismiss it. The energy markets obviously react. But, I mean, do you look through it? Do you say, okay, it's just a matter of timing before everything really calms down? Or is that still a major risk factor?
It certainly is a risk. At this moment, I think markets are trading it the right way, that this is probably not going to result in many more months worth of fighting. It might be, you know, a short period of time where this creates some pressure, and then eventually they'll probably come to some sort of agreement. Neither side really wants to go back to full-blown fighting. So our expectation is it doesn't result in oil prices rising to $100 and staying there for a while. Our expectation is it won't end up materializing into anything that's much more long-lasting, but of course the risks are to the upside.
Well, but with some of those risks, what are the biggest risks that could result in the Fed actually hiking in the next 6 months even?
Yeah, so I think the risk is very short-term. Either the Fed ends up hiking in July or September, although otherwise the window probably has passed, because it's really the next couple of months where data could remain elevated. And then the pressures that we talked about, tariffs, AI-related inflation, Iran-related inflation, those should start to fade towards the end of this year, in which case the case for a hike in this environment is probably not really there. But if we end up with the unemployment rate actually sustainably, you know, ticking back down, the most recent tick down seems to be noise. If you end up with inflation running probably about above 0.25% in the next couple of prints in core PCE terms, like that could become an issue.
Does politics play into this? And I bring it in because politics plays into it, feels like the Fed a lot. But we do have the midterms coming in. I hate to say this, but we often have this conversation around elections, midterms or otherwise. Do you think that's going to be a factor?
I genuinely think the Fed's going to be independent from that perspective.
Okay.
Trump might put some pressure on the Fed to act more dovishly than would otherwise be the case, although he seems to have given Warsh some leeway in the most recent meeting because Warsh was more hawkish.
Right.
It was possible, it was explained to him that if we come across as more hawkish, that will keep a lid on 10-year rates or longer duration rates, and therefore actually accomplishing what we want to accomplish because we have established credibility.
Speaking of independence, though, I want to ask you about within the family fight within the Fed, which I love that and how you described it. Explain that specifically, what you think is going on internally within the U.S. Central Bank.
Yeah, so this is a phrase that Warsh has repeated a number of times when he talks about his approach to the meetings. He wants to have a family fight within the members and then come across with one more united conclusion at the end of it. So it seems the days of having many dissents and it coming across as a very Fed that very much disagrees with one another, it seems that debate will happen more so in the room, and then when they come out, it'll appear to be a more united front. And that's our sense in terms of the way this will play out in the next couple of meetings, where there might be a lot more disagreement. And July and September might be meetings where you'll have more of that disagreement. In June, it seemed like very limited number of officials actually wanted to have a hike, so the need for that family fight was a little bit more modest. But in July and September, it could get a little bit more contentious.
Well, with that in mind, how does some of these Feds, going on Bloomberg, going on other competitors, talking about their expectations for this market, behind closed doors is one thing, but when Fed members are asked questions about their view on the economy, their view on interest rates, that's playing out in public, no?
Yeah, and we'll see if the communication style changes for Fed officials going forward. If there ends up being slightly fewer public statements from Fed officials, or if they're out in the media a little bit less than they have been, as Chair Warsh tries to sort of rein in the communication style a bit. So I would expect we might hear a little bit less often from some of the Fed officials in terms of their own views. Of course, we'll still hear from them, but perhaps it'll be a little bit less frequent.
No, I was going to say, I feel like that was kind of the push from Warsh, is to reevaluate how you message to the media and to the financial community. And I think that raises a valid question of what is the right way to do that.
Well, what do you think? What do you prefer? Like, I remember the day when, we focused on Alan Greenspan's briefcase to figure out what was going on. Or the Fed would surprise you with a surprise rate move before the market opened. And now it just seems like there's a lot out there that we digest. And we kind of know how the Fed and its various members, but certainly the voting members, are thinking. What do you think is better? Is it more transparency, or is it maybe hold them back a little bit, guys?
I mean, I think it's probably somewhere in the middle. I think it is confusing for investors to some extent when you continuously hear various Fed officials with very different views, and then it's hard to kind of assess what's what. That said, having very little communication will then increase a lot of volatility, and then it's hard for the market to assess what the Fed's reaction function is going to be, because you don't really know. Regardless of the market has to react to the data, but then beyond the data, then you have to think about, well, what is the Fed even going to make of this data, and that creates a lot more volatility. So perhaps a little bit less communication, but I would pare it back only modestly.
One thing I want to ask you, and you've got a piece of research out that came out July 7th, the Daily Froth, One Big Beautiful Summer, and talking about consumers, and, it's interesting. They've had a lot coming at them. Wars, higher gasoline prices, and often we have folks say, the consumer's doing well, they're spending. It depends on, again, going to the K-shaped economy, which leg you're on. From a social perspective, it matters that not everybody's doing well. We all know that. But a lot of folks say when it comes to the market or the economy, what really matters is the higher end and wealthier consumer. Is that the case, or is there some point where that lower end consumer that's struggling is really going to matter? I mean, it should matter on a social basis, but I'm just saying in terms of how you all look at it.
Yeah, I mean, and I agree with you. It's a problem that this low-end consumer has been left out of the recovery.
Not in the market for the most part.
Totally, it's a problem. That said, from a macro perspective, it doesn't really show up in the data in a big way. And you could have made this argument many times over the last couple of years. The low-end consumer, it's going to bleed into the middle-end consumer, and that's going to bring down the economy. It hasn't played out that way, because this middle to upper-end consumer is really well off, and their balance sheets are pretty good. They might complain about the level of prices, but at the end of the day, they seem to be able to spend. They've had a lot of stimulus come at them with one big beautiful bill, and the gasoline price increase hasn't been nearly enough to offset that.
All right, going to leave it there. Hey, great stuff. Thank you so much.
Thank you for having me.
Yeah, great to have you. Stephanie Roth, Chief Economist at Wolfe Research, joining us here in studio. We're going to stay on research. You know that complicated company called SpaceX?
Very familiar with it. Very familiar.
The IPO.
My favorite company.
Well, listen, it's so complicated that as the Wall Street community weighs in, and we've heard a lot of ratings and price targets, sometimes you need a couple of analysts to cover the company. We've got the duo from Clear Street. They're coming up next. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The latest Fed minutes show a few Fed officials said there was a case for raising rates, though they ultimately supported the decision to leave rates on hold. The latest minutes reflect growing concern among policymakers over inflation as worries about the labor market slightly receded. Right now, we have got the 10-year at 4.56% with the 2-year 4.20%, the 30-year above 5%, 5.06% on the 30-year. Stocks lower, but the NASDAQ 100 index just moving back into the green. Little changed. NASDAQ 100 index up under 0.1% higher now by 5 points. We've got the S&P keeping it all in context, lower by 25 on the S&P 500 index, down 0.3%. Dow Industrials now lower by 550, a drop there of just about 1%. Again, the S&P lower by 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, pushing higher, up now by 2.3%. All of this with the VIX right now holding below 17. We've got spot gold down $35 the ounce. The precious metal lower by 0.9%, 4,070 where we stand. West Texas Intermediate crude, 73.61 a barrel. WTI up now by about 4.5%. Barrel of Brent crude, 78.02. Brent crude higher now by 5.2%. China plans to allow some of its biggest AI companies to buy, quote, a small number of NVIDIA's H200 chips. That's according to the information which cites two people familiar with the matter. NVIDIA shares, they are advancing now. We got NVIDIA up by 2.9%. Again, recapping the Dow, the S&P, NASDAQ, all trading lower. NASDAQ 100 index little changed, up under 0.1%. S&P lower by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Bailey and Carol, that is a Bloomberg Business Flash.
All right, good stuff, Charlie. Thank you so much. Yes, indeed. Carol Massar along with Bailey Lipschultz in for Tim, who is out this week. Hey, we know Wall Street's been weighing in, right, when it comes to SpaceX. And there's been kind of a range of targets, some of them pretty wild.
Some of them pretty crazy. Raymond James coming out with an $800 price target. Mind you, it's at 146 right now, so
that's
room to run. Like the return, 400%. I mean, that's better than I think NVIDIA over most spans.
Which would make it, what, something like a $10 trillion?
$10 trillion company. Nothing to bat an eye at.
I think it's fascinating, right? And so we continue to hear all of these, analysts weighing in. I got to say, though, we keep thinking about this company. There are so many different moving parts. There's AI, there's the rockets, there's, of course, Starlink. It's a lot. And I've got to say, when you have a company that's got a lot of moving parts, sometimes you need a couple analysts to cover it. And that's exactly what Clear Street is doing. Two analysts, Brian Dobson, Managing Director, Senior Analyst at Clear Street. He focuses on AI and data centers. He's in studio with us, along with Greg Pendy. And he is Clear Street's Director and Equity Analyst who concentrates on space and satellite communications. And they began with a buy rating and a $217 price target. Stock right now at 146 and change. Gentlemen, welcome, welcome. So good to have you here. I've got to ask you, SpaceX is up about 10% from the IPO price of $135, down 26% from its closing high on June 16th. And the stock has hit about $225 on an intraday basis when it was kind of at its real, high overall. Why a buy rating? Is it fundamentally based? Are you guys just thinking, we're going to be patient, it's got to grow into some of its expectations and valuation? Explain it.
Yeah, I'll lead off on that one. Certainly, this is a much more attractive entry point than we had a few weeks ago. I think that throughout our coverage in disruptive technology, we cover data centers, space, rockets, and connectivity, but it's rare to cover it all in one company, right? And that's where we see a tremendous amount of synergy and earnings power as the company gets that flywheel rolling over the next few years. So yes, it's fundamentally based and it's driven by the earnings growth.
Yeah, and we also took a sum of the parts approach. We probably, we looked at the rocket business, ironically, more as a placeholder. It doesn't have much value in our $217 target. The real value...
Starlink?
Starlink is the value component, and then also the AI division is the value component. It's the rockets that allow for strong economics at Starlink. But when their rockets are roughly 60% of the payloads, just their own satellites, it becomes an intercompany exchange there. So our sum of the parts is heavily driven by strong connectivity economics and strong AI.
But when you look at the landscape, right, we've seen the companies sell IG debt, but then it quickly trades like junk. I know you guys are equity analysts, but how do you think about the cap stack? How do you think about the ability for this company to go out and raise what likely is hundreds of billions of dollars to turn some of these dreams from Elon Musk into a reality?
Yeah, well, I'm sure Greg has a few comments on this, but I'll start by saying they've proven that they can raise capital through their IPO, right? And I think that as the company starts to report quarters and show real earnings growth to the street, that's just going to reinforce that point.
Are we going to get that on August 17th when it reports?
Yeah, I think so, and I
do.
I think that management is going to take that opportunity to really fully have a full discussion with Wall Street, right? Like right now, only the banks, of which there were many, were included in the preliminary discussions leading up to the IPO. But here's a great chance for them to really articulate the earnings power of the business.
Well, just thinking about that though, in terms of earnings, that brings the lockup expiration.
That's right.
Are we looking at a pretty choppy next 6 weeks, or how are you guys thinking about that from a fundamental standpoint where we don't really know what we're going to get from earnings or any releases or announcements in the medium term?
Yeah, there could be some volatility, right? Some technical trading, because with a float this small, there's a lot of technical factors, but we see it as a positive.
Yeah, I mean, we think that the name's going to be on every fund manager's radar right now. So as the liquidity starts to open up, we think we'll start to see more of the large institutions look at the name.
Just because everybody's talking about it doesn't mean it's good. Just to be a parent for a moment. I'm just saying, like, how do we, again, Elon is one of those folks, even with EVs, there were promises, dates missed, deadlines missed. Ultimately, he did deliver. Now there's more competition. It's a different market, we know, for the EV market. Having said that, is it going to be similar in terms of that? Is that what we should expect from Elon and his team?
That's a really good point. And I think part of what you're seeing here is that Elon Musk premium. So this is the same kind of conversation, and I don't want to date myself, but it's the same kind of conversation that analysts were having around Tesla when that company came public. It's overvalued. They'll never hit the earnings growth. This is too much, right?
Yeah.
But it wasn't, right? Ultimately, he was proven correct. That stock's worked out beautifully since the IPO, and we expect a similar performance out of SpaceX.
Yeah, and I would just note that when you talk about the earnings print, the first quarter earnings print was not well received, I don't think, because of the losses in AI, despite profitability in Starlink as well as launch. But they've signed 3 very large AI deals since then, so we think they're much more well positioned to explain all 3 pillars of the business in the 2Q earnings call.
But thinking through the company's role in AI, obviously data centers and spaces, the vision, it looks a lot like a hyperscaler right now. How are you guys thinking through what Grok actually brings to the table? Is it a competitor to Anthropic and OpenAI, or is it really, right now, when you look at SpaceX, it's more ability to sell compute and partner with the Anthropics and Googles?
I mean, we think that right now that's probably the correct way to read it, right? But further down the line, data centers in space, that's a really compelling opportunity that's not at all in our numbers, right? We think that feeds into a bit of
there's a lot of ifs there.
There's a ton of ifs there, but if anyone can do it, it's SpaceX, right? Because they have the integrated rocket business. But that's not in our numbers, and it's not part of our buy rating. It's just an exciting data point.
In terms of the AI component, how much of the interest is Cursor? I mean, we have a lot of folks come on and we keep hearing people talk about this and how important this is. The AI coding startup that it bought, $60 billion in June.
Yeah, and that's one thing that we're looking for them to fully elaborate on the earnings call, right? And that's probably, I would say, the lion's share of our valuation at $217 is the AI business.
That's what I wanted to do, go through that valuation. Because, I mean, we're looking at a company with a market cap of, what, $1.9 trillion. Yeah. How much of that is that? How much of that is Starlink?
Yeah, so we had $9 for the launch business. And as we said, I think it was for the connectivity, we went 20 times our EBITDA, and then for AI, we did.
For AI, it's $113 of the $217 price target.
Well, how much of that 113 though is predicated on what's happening now versus what could happen 5 years?
The lion's share of it is predicated on what happens between now and 2030, right? And when this company announced the price that it was going public at, you had a lot of people coming out and saying, well, that's X times revenue, and that seems rather lofty. But companies aren't valued on what they did now or what they did last year, right? So I mean, you have to look at 2030, and we see really substantial growth through there.
Well, one question I need to ask, I look at the street coverage of Tesla, 29 buys, 24 holds, 9 sells. Vastly different from SpaceX, 29 buys, 5 holds, 1 sell. Do we get to a point 3 months from now, 6 months from now, where kind of the leash that Elon Musk and Brett Johnson and Gwen Shotwell have been given starts to get tightened, where analysts are forced to say, you know what, we built up this model on 2030, but that looks more like 2035 or 2040.
Yeah. So in my experience, when companies come public, managements are given a great deal of benefit of the doubt. And that's what's happening here, like many go public company managements. And then there will be starts and stops and disappointments and delays along the way, and people will change their ratings, and the coverage of the company will mature.
And Starship is the big catalyst for the stock, so we need that to kind of deliver later this year and prove its ability over the Falcon 9.
This is a really important point. Talk to us a little bit more about that, Greg.
Yeah, so there's
a lot riding on this, literally.
There is. It was mentioned as one of the biggest risks in the S1, and it will be something heavily watched for the stock. So when you look at the connectivity pillar, Starship is important because you can put significantly more satellites on that versus a Falcon 9. When you think about orbital compute, again, it really comes down to the Falcon 9 bringing down those launch costs. If you look at other names like a Planet Labs, when they're looking to do orbital compute with Google on Project Suncatcher, the biggest risk or timing that they mentioned in the white paper on Google's Suncatcher is launch costs. So a lot will be riding on that.
And it has to happen. It has to work. Otherwise, you have to kind of re-examine. How much, too, of your thinking is the expectation that SpaceX and Tesla become one company? You smile. Is that a yes?
I mean, we can't really, we don't cover Tesla, but it makes a lot of sense, right? You have a huge.
To be fair, I just got to say, if you cover anything to do with Elon, you have to be looking at all of it.
No, I agree, right?
Okay.
So you have a huge AI compute business, and you have Tesla, which gathers tons of data that can be used to train models, really sophisticated models, right? In a variety of instances, it makes
perhaps some
sense.
government data in there too. Some might say, but go ahead.
Yeah, and I would just note, Elon has a controlling stake in the vote for SpaceX. I can't speak to Tesla, so.
But does that make it easier for Tesla to acquire SpaceX or vice versa? What's the easier deal with that in mind?
I can't really speak to Tesla because I don't cover it.
But would it be a good thing for the two to get together and have Elon just put everything under the umbrella? Would you guys?
I mean, without saying too much, certainly one of the things that we really like about SpaceX is its vertical integration across these platforms, right? So to the extent that it can extend that vertical integration, I think that'll resonate and potentially drive margin.
Brian and Greg, you can say anything you want here.
we're in a safe
this
space
is a
right
safe
now.
Space.
That's really, it's just
It's
us
a
and our
safe
closest
Elon
friends.
Thank you so much. Stay in touch. Let us
Thank
know,
you very
as
much.
certainly the company is front and center for us all, and the coverage is always interesting. Brian Dobson, Managing Director, Senior Analyst at Clear Street, and Greg Pendy, he's Clear Street's Director and Equity Analyst. Of course, they do cover SpaceX. All right, when we come back, 5 weeks in, we're now in the quarterfinals. Are you watching the World Cup?
I'm sad the U.S. is out.
Everybody is. We're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Fed Wednesday, sort of. We got the latest Fed minutes, and they show a few Federal Reserve officials said there was a case for raising rates, though they ultimately supported the decision to leave rates on hold. The Dow, the S&P, NASDAQ, they're all in the red, but the NASDAQ 100 index back in the green barely. A little changed, up 3 points on the NASDAQ 100 index. The S&P is down 26, lower by 0.3%. The NASDAQ Composite Index down 20, a drop there of under 0.1%. Dow Industrials down 557 on the Dow, a drop there of 1%. The Russell 2000 Index of small cap shares hit hard. It is down now by 1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 2.2%. The VIX back below 17, and a 10-year at 4.56%. The 2-year 4.20%. Gold, 4,077 the ounce, down 0.7%. Crude is rallying. We're off session highs. WTI, 73.79 a barrel, up now by just about 4.8%. Barrel of Brent, 78.25. Brent crude up by 5.5%. Airlines and cruise lines are sliding today after President Trump said a tentative ceasefire with Iran is over. Among cruise stocks, Carnival Corp down by 3.9%. Royal Caribbean down 0.2%. Norwegian Cruise Line Holdings lower by 1.8%. As oil rises, airline stocks are declining. UAL, United Airlines, down 2.4%. American Airlines down 3.7%. And Delta, which reports on Friday, Delta shares down by 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Bailey and Carol, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Master, along with Bailey Lipschultz, in for Tim, who is off this week. And what's interesting, Tim, with his son Arlo, if I can say that, has been watching a lot of the soccer games. And
Really? He's not a
into it.
sports guy.
He's not a sports guy, but because his
American
son has
Pride,
been, his little
son?
critter,
Oh,
yeah.
okay. Well, I
Yeah,
respect
but you've
that.
been watching.
I've been watching. I'm a big fan of football, as they call it.
I know.
Was not a big fan of the result against Belgium, though.
Oh, okay.
That wasn't fun.
You weren't fun about that.
About
All right.
9 minutes into the game, I was deeply depressed, but it's fine.
Okay, well, you know more than I am because I haven't been watching. But I am kind of into it, and I love all kind of the side stories and when the president gets involved. We are, though, in the 5th week of the 2026 FIFA World Cup. Exactly 4 weeks and 95 games have already been played since the tournament began on June 11th, 2026. There is so much talk about it in the newsroom. And one of the lucky members of our team that gets to follow it all, because it's her job, is Vanessa Perdomo Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She is here in studio. Can you believe how much has already happened?
You said how many games have gone by,
It's a
and
lot.
I actually can't believe that. It's going by so fast. I mean, the final is next week. You know, it's absolutely crazy.
The crazy part is that everyone was upset about the expansion and was like, are we going to care by the time mid-July comes around? Again, dropped off a little bit with the U.S. getting taken care of, but still interested, still locked in, still sad that there's no matches today, whereas it was kind of like, oh, we'll be over it because we're America by July 3rd.
You know, it'll be interesting to see what happens with the interest now that the U.S. is out of it, but I do think there isn't any sort of fatigue, like you were saying. I think people thought the 48 teams and the expanded tournament was going to have all these upsets and things like that. But if anything, it showed that these small nations, Cape Verde, can actually compete against these really big teams. And it actually, you know, I think it grew our hearts as a soccer nation a little bit.
What is going on with soccer in the United States? How much has it grown in terms of interest and participation?
It's grown so much over, you know, these last 30 years. Obviously, the last time we hosted the World Cup in 1994, the MLS wasn't even here, and it was what spurred, you know, the creation of the MLS. Now, you know, all of the teams, we have over 5 teams in the MLS worth over $1 billion. It's a huge sport here. It's continuously growing. It's one of the most participated in youth sports, and they really expect that to have a boom after this World Cup.
Well, the one thing that I feel like everyone was discussing after the 4-1 loss to Belgium was affordability of club soccer in the U.S. and how it is not anything like what's happening in Europe. How do you think the game could develop and draw in people who can't necessarily afford $15,000 to play at the club level for a 14-year-old?
Billy, it's something that we've been paying attention to a lot on the, you know, the Business of Sports team. It's the youth sports now are private equity has come into youth sports and really privatized it in a different way. And, you know, as someone who came up in the system, and I thought my parents thought thousands of dollars were a lot at the time, and now it's even more. The biggest problem is, how can soccer become affordable? It's not like basketball and football that is kind of affordable at any sort of place in the U.S. So what U.S. soccer is trying to do is create more grants, have donations, and they're probably really leaning on donors to be able to, have equipment out in more places.
It's funny. I was asking a member of our team, Sebastian, who's from Colombia, and I'm like, why has it been such a big sport initially outside the United States? And he's like, well, all you need is a ball.
Mm-hmm.
And like the origin of how this sport kind of came to be globally, and then to see how much it costs, like for kids in the U.S., it just feels like it doesn't match up.
Right, exactly. I mean, that's the point, right? It is actually all you're supposed to need is just a ball, but for some reason in the U.S. it's become something completely different. And also, sorry to our friend Sebastian and Colombia.
He's really upset. I was going to bring that up. He was really bummed today. He was talking to me this morning. The red card and Fuller and Balogun, was that a major distraction?
I absolutely believe that it was. I think if you watch the game from start to finish, the U.S. came out absolutely distracted, and Belgium came out angry. They came out saying, okay, you want to bend the rules for this U.S. team. Everyone's still counting us out. Everyone's saying now, they have a better chance of winning. The odds flipped in their favor. And Belgium said, I don't think so. And they came out really, really hard, and our team just came out very distracted, I think.
Well, to ask you a question off of Flo, is he going to be the next star? Pulisic, poor tournament, poor showing, getting up there in age. Flo now is a household name. Yeah. The president knows who he is, and I would be willing to bet he didn't know who he was 4 days ago.
That's a good bet.
Is he the next star?
I think he absolutely is the next star. And honestly, going into the next World Cup, the 2030 World Cup, I could see him rising as a future captain of this team, because even though Christian Pulisic wasn't the captain, he was the star of this team, and he didn't perform. And the fact that he came off the field with just a sprained ankle is what we know so far. It's not a showing of what people want to see from their stars in this country. Everyone's pointing to Kobe Bryant would have never done that, certain things like that,
Yeah, go.
Well, I'm just thinking back 12 years
I'm just embarrassed.
ago.
Did I not say his first name right?
Faloren?
Yeah.
I did. Flo is his nickname.
All right, Flo, I know Flo is his nickname. I just was like,
You're good.
I'm showing my stripes or lack thereof.
Well, I'm just thinking back 12 years ago.
Foul. Sorry.
12 years ago, U.S. loses to Belgium. Tim Howard has the best game in men's history. And then the team is a letdown, truth be told, for over a decade.
Yeah.
Is that a risk with this team? Is that a risk going forward? Or are you confident, is the world and the U.S. confident that 2030 will look better?
I don't think anyone's confident anymore, actually. I think that we were really confident that they were going to be able to do something special in this World Cup because of the fact that they were playing at home. If you can't perform in front of your home audience, Seattle is a huge soccer market. They were ready. They were there. I was talking to people who were in the stadium. They said the energy before was great, but it was deflated very quickly.
It's so sad. Right?
Not fun. Well, no. I'm just trying to even think through what the upcoming matches will look like, though. Obviously, next match in Boston, outside of Boston.
My daughter's in Boston. She says it's been wild, and she said when the Scots were there, they were all putting the red hazard cones on like statues throughout Boston. She said they were wild.
Scottish fans are known to travel. They're known to travel very far and very hard for these games.
She said it was a riot in the bars.
Yeah. Oh, absolutely. I mean, I think that was one of the things that we were seeing, early on.
Well, no, I just want to ask if there's any risk of a fall off now that we have Canada, U.S., Mexico all eliminated.
All the host nations, right?
I think that there is risk of a fall off in audience. Obviously, the U.S.-Belgium game was one of the most watched U.S. soccer matches of all time. 42 million people tuned into that game across Fox and Telemundo. So there is risk, but I do think there's enough fans here. There's enough people who are interested in it. And listen, Messi's still in it.
So, I just want to ask on Messi. Sorry, I keep cutting you off. I'm so sorry.
This is like I totally bow down to you.
Very quickly, though, you bring up Messi. Concern around Egypt, whether or not match fixing is in play. Cape Verde had a couple calls go against them. Is there a risk? Is there a risk for kind of the perception of FIFA?
30 seconds. Though.
I think FIFA doesn't have to risk their reputation because they don't have the best reputation in the world anyway. So I do think that, the Egyptian Football Association did file a complaint about the officiating and all of that. But I think that FIFA wants Messi in this tournament, and if they fix it or not, that's remains to be seen.
I love it. It's like, FIFA doesn't have the greatest reputation. So just take it in stride, everybody. You rock. Vanessa, thank you so much. Vanessa Perdomo Maglione. She is, of course, Bloomberg News sports business reporter, co-host of the Business of Sports podcast. Check it out. You can find it at Bloomberg. You can find it wherever you get your podcasts. All right, when we come back, a check on trading, and I guess Our sportscaster will do more.